hole is hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola. 60 degrees in Chicago going to be today, I heard.
I know.
Really?
Crazy.
Wow.
Movember.
I'm going to leave early, maybe go for a ride.
See the sun.
You don't need the stay bill in the tank yet.
No.
Okay.
When I tell my boss that I'm going on a Zoom call, it won't be a lie. Just zoom.
Zoom, vroom, vroom.
Zoom. That's fine.
Remember the day Sassoff sat on your bike for a second? It was the most awkward thing I've ever seen in my entire life. And then he sat there and went, broom, broom.
Yeah. It's like when you take your kid to the grocery store, you put him on the thing out front, you put the quarter in, and he's like, I'm a big boy.
He hasn't been graceful sitting on many things. I mean,
No.
the horse one was.
Yeah, but luckily he didn't kill my bike. I mean, he killed a police. R.I.P. Buttercup.
Yeah.
It was Buttercup, wasn't it?
I don't remember the horse's name.
I think it was something like Buttercup.
Something, but yeah, he. Thank you for your service, police.
The good
force.
old days.
No.
Well, we showed the kick at the.
Oh yeah, at the event.
At the little going away party.
Yeah.
That was another.
Field goal.
The field goal in the alley. That was another classic.
Robbie Gold, who?
Yeah, we should put those together somewhere.
I think
the best of.
I think it's on YouTube.
Is it?
Yeah, I think so.
Sosnoff?
Yeah.
Sure.
I think it's on our YouTube channel. But how about you, Nikki? What did you get up to last night?
Not a whole lot. Nothing to.
You recuperating from Sunday?
From Sunday, yes. Which was great. Got a bunch of emails from people. We had a lot of new faces, like very recent, like couple weeks.
That's wonderful.
Months.
That's literally how we're going to be able to keep our lights on.
Yes. It was good to hear, and a lot of awesome feedback for some of the new shows and all the stuff that we're doing here. So it was good.
Yeah.
Awesome.
Yeah.
See that?
Yeah.
Were you able to make it through the day without having a Michelin-starred meal?
No, actually, I have been eating nothing but salads because we ate it was gluttonous the entire weekend. So
a bacchanal feast.
Yeah, I can feel it like in my gut. I can feel the whole thing. I feel bloated. The shirt looks a little bit tight on me. So
you start off
little inflammation
on a treadmill, little gentle incline walking.
Oh,
You'll be fine.
Yeah, it's the first time for everything.
You gotta sweat it out a little bit. Come to the sauna.
Yeah.
Ooh, that's perfect.
Yeah, there you go. We'll get you lean in no time.
Yeah.
Real easy.
I should.
You know what? There was actually a clinical study that found that first responders, like firefighters, if they go into a sauna after being on a call, it helps them get rid of some of the toxic, stuff that they're inhaling from a fire. And I was like, wow.
Beautiful property.
I did not know that. So I'm sure your wife would love it if you opened up your sauna to your local fire department.
Yeah, she's okay with that. It's true. I remember when she put makeup on the first time a first responder came to our house. Yeah.
Yes.
Mm-hmm. I remember. Yeah. Oh, speaking of that, saw a good movie last night on maybe Netflix or something like that. Firefighter, based on a true story out in California, 2018. Paradise Valley, when they had that huge
so
fire,
sad.
probably one of the most devastating fires, horrible fires. Matthew McConaughey, The Lost Bus, it's called.
All right.
A little long. All right. That's what we're going to be doing today.
Well, you're going to the birthplace of Matthew McConaughey, Austin, Texas.
Oh, see that? I didn't know that. What a segue.
That's right. I don't know that if he was born there, but he lives there. But he's from there. He's a Texas boy.
You guys gonna make it to the Salt Lick?
No, I don't think so. No.
Are you gonna do some tailgating? Gonna go to a Texas football game?
We'll probably be delayed long enough that we'll be able to go to the Texas game. But no, we don't have any games planned or anything like that.
No, Texas A&M is actually really, really good. Just I think behind my Hoosiers, but they're coming up there. I think they put out, Nikki. You could tell me the college playoff sort of rankings.
I think Texas is.
I think Ohio State was on the top, and then.
I know you're Hoosiers. Have you been to a game yet?
When do I have time to drive to
Oh,
Queens.
no, here we go. Don't ask that.
They sell out Memorial Stadium. Like, it's a football school now. Like, it's a hot ticket. And, like, you would have to stay in Indianapolis.
Probably. I remember when they were giving them away.
Right. Literally, my freshman year.
Mm-hmm. Yep. I think didn't everybody get one? Didn't you get one?
Yeah, I got a whole season pass.
Yeah, right.
Freshman year.
Well, when you usually have a crappy team, they try to fill it. They try to fill it up.
Right, because at the time when I went, we were a basketball school.
Yeah.
So,
now it's football.
Yeah.
Yep.
Crazy.
Same thing when Sasha went. Same thing. They gave us, I remember, season passes or something.
Crazy. But they're saying Kansas has like one of the best classes, Nikki, for basketball. So they're saying there's like some young kids. And
Did you ever develop a left while you were in Kansas? Did you get a left?
No,
you never developed
but that was never my game was never the scoring game.
Yeah.
You know, I was a banger. You know,
banger, set a pick.
Role player. Yeah. Set a
water.
hard pick.
Right.
Get an offensive rebound. That was the kind of thing. And dish it out.
Throwing some bows.
Yeah, throwing some bows.
Yeah.
Yeah. Kansas basketball should be good. We don't get like the top guys.
Yeah.
Like some of the like middle guys.
Oh, that's still good, but maybe then they'll stay and they won't transfer after the second period.
It's not that's not how it works anymore, though.
I know.
Like every school, it's all
Purdue, I think, has like 3 seniors, which is unheard of.
Yeah.
I don't know how many. Don't write me. But Purdue is supposed to be very good for basketball this year, so it pains me.
Don't out me.
It pains me to say, but they do
it's
have
Apple
seniors.
TV. My peeps are telling me. Sorry, not Netflix.
Oh,
Apple
there you
TV.
go. I don't have Apple TV, but my parents do. I'll check it out when I go home for Thanksgiving.
Are we finally?
Thanks, Dino.
Are we finally revolting against this streaming after Monday night's kerfuffle? Is it finally?
I mean, even JJ Watt was tweeting about
I saw
it,
that.
and he's like, he can afford it. Like,
Oh yes, I'm sure he can.
Yeah.
Because I didn't even watch the game.
I know it's crazy. I know.
Monday night game.
Because of your
I have
setup
YouTube
and
TV.
the blackout from.
I was shocked that there wasn't a deal that was made.
So I cannot believe that they haven't gotten their act together to get something going on. It's almost like I don't understand it. Like I have friends who are in real estate and they can't explain it to me. And I know this is different than what you're talking about, but they'll have properties that are vacant for years.
Sure.
Like years. Like, don't you want something in there getting some income? I know you can write it down.
Yeah, you write it down.
Come on. But I mean, at some point, you'd rather write it up. I mean, I'd rather it be profitable than keep writing it down. I mean, I just don't understand how you can't come to the deal. Like you can't come to the table and say, let's bang this thing out, get it done.
Well, ESPN and is it ABC or NBC?
ABC.
ABC.
Yes.
Those two are like 80% of the cost of streaming. Like those are the.
Not ABC, but ESPN definitely.
I think the two of them together are
Yeah.
like over half of the cost.
I believe.
Traditionally, of like.
But it was a bad deal, but we're still paying for it.
Yeah.
Like, yeah.
So, I mean.
It's horrendous.
I mean, they tried to even have like a loophole because last night there was election coverage. I'm not getting into that. But they were just trying to say, hey, people want to be able to watch, the news, ABC, for their, like on the YouTube streaming, and they still couldn't, figure it out.
Insane.
We're just get rabbit ears.
Yeah, or find your bootleg
splitter little
Yeah,
thing.
splitter
Your
thing.
neighbor borrow the cable from the neighbor.
No, he wants to get one that plugs in. That's really good to buy bootleg things that plug into your devices.
Sure.
Yes. For
no malware there. Right?
Yeah. No malware there. Like you just, it's
Masterful gambit.
Yeah, it's like injecting things right into your bloodstream. That's
right.
essentially what it is. So,
let's go.
Just be careful to all the peeps out there. The internet's a scary place.
It is a scary place for boomers. It really is. It really is. I mean, we've learned how to buy stuff on TikTok now.
Yeah.
I mean, what's next? We'll just let everybody into all of our passwords, too. Why not? Why not? Who cares?
Yikes. Well, what'd you get up to last night, Pat?
Oh, well, movie night. See, Wednesday night is the best night in the Batista household because Vinny...
Hump day.
And full moon.
Was that a hump
No, but yesterday was Tuesday night.
I'm sorry,
that's
Tuesday
true.
night is the best night. Sorry. Tuesday night is the best night for the Batista household.
Okay.
Because Vinny has conditioning at 7 and then practice at 7:40. So you drop him off, a little bit before. I'm sorry, he has practice at 6, conditioning at 6 to 7, and then practice at 7:40 to 8:40. So you got free babysitting, which really costs about $8,000 a year, not including plus, from 6 to about 9.
Oh,
yeah.
Boomer's gone wild.
Yeah. So the lights go down low, the music comes on, and we watch a movie instead.
Nice.
And then you fall asleep.
And we fall asleep on the couch.
I love that for you.
Mm-hmm. I know. Well, that was Tuesday night's a special night, and I think it is a full moon. It looked full moon.
It was a full, and you're gonna actually like this. So each moon has like a different name or whatever. But
this one's the Bat Moon.
No, almost. But I said you were gonna like this. It's the Beaver Moon.
Oh yeah, there's nothing like a beaver moon.
It comes from the indigenous people and the harvesting and all the. This is the actual astronomical name for the full moon for this month is the Beaver Moon. So it was a full beaver last night.
Wow.
That's the astronomical. That's the accuracy that I provide. I'm not joking.
I believe you.
Yeah.
I'm not
No.
lying. I believe everything you say. You kidding me? I'm not gonna fight it.
I'm being so for real right now. Although you're not gonna like this at all, but I'm gonna tell you guys anyway.
We were so getting together
because of the proliferation of like LED screens on devices like computers, tablets, all that. Women's cycles aren't synced up to the moon anymore.
Synced up to the iPhone? Is that what it is?
Yeah, we're synced up to the apps.
Oh, it's all part of Apple's grand plan.
But we would all sync up, like me and my friend, we would all like in the moon, and we were like a coven of witches. But now that doesn't happen anymore. I don't know what's wrong with me this morning, but I just feel like sharing. So
wow.
There it is. You're welcome.
There's nothing worse when you all
today.
sync up. I'm gonna say that right now. I'm glad your next generation won't have to worry about that. They'll be a little bit more independent and random. The way God intended.
Yeah, something like that. I don't know. Well, hey, we got a great show for you today. It is a terrific, it's a wonderful Wednesday.
It is. Oh, you were going to say Tuesday right ahead.
I'm discombobulated. I don't know what day it is. It is a wonderful Wednesday here at Tasty Live. A lot of great content headed your way at the top of the 8 o'clock hour on Options Jive. How Contango kills VXX.
Ooh.
Yes. A good one.
And VXX, is that volatility on volatility?
No, that's the volatility ETN, which is basically a basket of the futures contracts.
Oh, okay.
So we're talking about like drag and drift and just kind of how these products naturally drift towards zero and, how they're
split.
Yeah, they split. And ultimately, it's just a short-term trading vehicle.
Okay.
And so we're going to talk through why that is and just kind of the dynamics of it. So it should be a good one.
Exchange traded notes, ETNs.
Yes.
Thank you for clearing that up. It's just so hard to keep track of all the V's.
And there's more coming. I mean, we have all sorts of ETFs that are being launched. I know that I saw one stat recently was that there were more ETFs now than actual single name equities.
Oh, I believe that.
Now, many of them aren't traded widely. I mean,
No.
a couple of thousand shares, but it is.
But from just like a volume standpoint, there are just as many, if not more, of these random ETFs. 2x leverage, this covered call, this
inverse that,
collar this. It's all sorts of stuff.
Wow.
Buy rights, blah blah blah.
Yep. Egregious.
Also, because it is Wednesday, we got What's Your Assumption? So at 8:40, the bats are going to take a gander at some viewer-submitted trades. This is where viewers write in. They have an underlying. They have a directional bias. Obviously, massive down day in the market and into overnight last night. But then now everything's...
Until the Sosnoff tweet.
Everything's cool.
Right.
Yeah.
Yeah, we needed that.
We needed either the CNBC Market in Crisis banner, or we needed
Turmoil.
Market in Turmoil. Thank you, Nikki.
Yes.
Or we needed the Sosnoff tweet.
Yeah, that's usually like the bottom. That like
coupled with the Kramer saying that we were in a bear market too. Twitter was actually nuts last night, right? X, whatever you want to call it. I mean, we're 2-3% off of all-time highs that we just made last week.
Sure.
And you would think, they're such babies. This
generation, they're such snowflakes.
Such snowflakes, really.
I mean,
so bad.
I get that, and a lot of people at the event were like, yeah, I've been doing 0-day SPX puts just, for like the last couple of years.
Selling the night before.
YOLO.
And but a lot of the great thing about our customers is like they're like, I'm waiting to be wrong.
Sure.
Yeah.
Like I know that I know that it's coming, and I'm staying small with the positions.
That's good.
And I'm not going crazy. It's good. That's a good thing.
Because it sucks because you have all of this progress and then one bad beat, could wipe out, a lot. It's just,
Yeah.
It's-
And
That's the game we play.
Yes, exactly.
Yeah.
Yes. It's
You gotta
always
touch the stove at least once.
yes. Always about size.
Well, what's your assumption is coming? So maybe some viewers put together some wonderful insights into things that maybe aren't on your radar. That's going to be at 8:40. Then 9 o'clock, we have Jacob in the house, skinny on options math, understanding and augmenting beta. That's going to be Jacob. Bat, you love a good augmentation.
I love a good augmentation, actually.
What is this about augmenting beta?
Everybody gets an augmentation. You get an augmentation. You get an augmentation.
So this one's going to be a follow-up to yesterday's segment, which I sort of butchered because I didn't get a chance to do our pitch meeting yesterday. I was just getting back on the plane. But we're going to be talking about beta a little bit more in depth.
Okay.
To kind of follow up on what we did yesterday.
Okay, good. So he's going to clarify some. He's going to fix some things.
Yes, there were a lot of charts. There were not a lot of clarification on the charts. We,
And hey, we admit, we're operating at a super highly technical level. Sometimes it's just going to be a little dicey. So bear with us.
Yes.
What she said.
Yeah.
Yeah, this program cost you $0.
That's right.
Just be nice. That's all.
Yeah.
Then we got live from the trade desk, Quentin and Ryan. Quentin counting down all the top trending tickers over at tastytrade, and Mr. Ryan Grace probably going to give some insight now that Bitcoin's crashing.
Yeah, we got
so
a bone to pick with him.
Yeah.
Does he have a Bitcoin markets in turmoil banner?
Oh, that's true. I should
A crypto in crisis.
Crypto. Oh, that's good.
Yeah,
that's good.
We'll get the art department on it.
Yeah, you should start getting the patent on that. Put the TM on that thing.
Yeah. I'm going to get right on that. And then we had Liz and Jenny live from the floor of the SIBO. It's always electric when the ladies are live from the floor of the SIBO. Tune in for that. And also tomorrow, making their debut, Jamal and Mike are going to also be live from the floor of the SIBO starting Thursdays at 11 Central Time. So stay tuned for that. That is going to be great. But hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story, breaking news,
Across
the wire,
This
leading
just
story,
in.
top story, just in.
In today's headline. This just in.
Breaking news.
All right, everybody. Sorry. I just forgot what I was going to say. Today is a wonderful Wednesday. It is November the 5th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
What's on deck for earnings today?
Today, you've got a few that you're probably going to look at. Hood would be one of them.
Heard of them.
Qualcomm, Lyft, App, Lovin', if you like to play that, AP.
I love some apps.
You have a few. Obviously a few more. We had some last night, too, with some movers. I know you'll get to that.
All right. Hey, getting to the first headline, U.S. stocks closed sharply lower yesterday as big banks warned that equity markets could be headed for a drawdown, reflecting mounting concerns over stretched valuations. All three major U.S. stock indices slid well into negative territory after the CEOs of Morgan Stanley and Goldman Sachs stoked fears about a potential market bubble. Where do we go from here? What's volatility doing? What are you doing? It's the middle of the week now.
Volatility's been bid. It's been bid for about a week or so.
And we were like, what is it trying to tell us?
Well, now it's just under 20. So it got over 20 up to around 2065 last night. I thought it'd get into the 21-22 handle. We talked about it last week. I said yesterday on the 2:30 show with Liz, I thought we would be down 40, 50 handles on the E-mini S&Ps. I really thought we would still be down there this morning. Yeah. We got down there. I thought I needed to kind of open overnight low like that into the day. We've actually rallied back now. Volatility's come off the 2065 handle to under 20 now. Volatility's telling you it's still elevated. It's going to stay elevated. But again, we're 2 or 3% off all-time highs that we just made last week. Pump the brakes. Just be cool, fools. Just
act like you've been here.
I dabbled on some long NASDAQ here.
There are some beautiful opportunities
tiny
on
bit.
both sides of the market. What'd you do?
dabbled on some long NASDAQ here.
The micro or just regular?
Little tiny little baby starter.
The only thing I hate is the Russell's the strongest right now, but it's only we're unchanged pretty much in the overall market.
Yeah,
we'll see. But volatility's been telling you for about a week and a half, and we rallied into it, so it was not a great tell or an easy tell or anything else like that. But it was telling you, and I said it on the show, this seems like with volatility percolating, if you had any covered calls on that, maybe you change that stock into something else, just make it a long call spread at the money, take some risk off your positions, that kind of thing. Anyway. We'll see what happens.
Investors are hungrier than ever for bonds in the ETF industry amid worries over stretched valuations in the U.S. stock market. Do journalists not know another phrase? Stretched valuations in the U.S. stock market. No, but bond ETFs listed in the U.S. attracted a record $51 billion in inflows in October, with nearly $350 billion of inflows so far this year, reflecting an organic growth rate that far outpaces that of equities. What say you? Bonds.
I mean, TLT is an okay product to trade. Yeah. ZB is probably the better of the two. ZB can be is bigger, obviously. I mean, bonds are 117. They're mid-range. What they get down to, let's just call it over the last 2-3 months, 113 up to 119. They're
no vol though.
What's that? No vol. Ivy rank was 6 or 7. I think it's down to 3 or 4 now. So that's Ivy rank I'm talking about. Sure. When you look at bonds, we would talk about them. They're 9.5% monthly implied volatility. They used to be in the 16, 17, 18 handle. So volatility's really come in bonds. I think bonds are a non-event.
Yeah. What about gold? Gold held its biggest drop in more than a week after the dollar rose to the highest level since May, blunting demand. Spot bullion steadied near $39.37 an ounce.
Yeah, now back to $39.80 and change, up around $20. I mean, gold's hanging out at this 4,000 level. Yeah. I mean, if you look at it from the last week, it's had good movement. Ivy rank of 42 in there. Volatility's expanded in there. Plenty of bulls and bears to make money in there. Plenty of premium to sell in there if you're looking for that. Now you're back at $39.91. I was asking, I don't know if it was Liz or Jamal when we were doing the show, what do you think about gold? I said, you could say 4,000 is a pin here for a little while, and then we'll see if it gets its legs underneath it or if it sells off. But I've been playing for a 4,000 pin.
How about you, Nikki? You've been scalping lots of gold lately.
Yeah, I have some long delta now, but they've really taken a lot of the volatility out of gold and the skew on both sides. So into the big move in both directions, you saw skew kind of flatten out, and volatility really expand on both of the tails, and they've kind of taken that out, which goes to your point of kind of maybe this is kind of the spot where we're going to chop around. So the
velocity of the move to the upside seems to be muted now. At least the perception of it seems to be muted, and that's what
But the downside has too. Like I think there was a lot of when we had the blow off to
a lot of euphoria. And rightfully so. I mean, it went from 3,200 to 4,200 or 4,400. Without stopping. So, yeah, sure.
But we saw that put skew come into play into like the 4-2, 4-3, 4-4 handle where you typically see call skew like all the time in gold. Yep. So that has kind of come off a little bit too here. So I agree. I think it's a chop.
In other news, Bitcoin falls below $100,000 for the first time since late June. Bitcoin was last trading 5% lower on the day, but it was below $100,000 for the first time in more than 4 months as cryptocurrency holders backed off the risk on asset.
Yeah, I think overnight action, weekend action. I think Ryan actually mentioned this when he was on the show. You get a lot more volatility, like exaggerated moves lower, exaggerated moves higher. That 100,000 level in Bitcoin futures, it got down to 99.3.
Yeah, last night.
I mean, it looked ominous. Market was selling off. Even the S&Ps were down 45 or 50. Yeah. Volatility was upticking to 20, 65. But remember, you've got a lot less liquidity overnight. So you're going to get those moves exaggerated at both sides. Now, Bitcoin's flirting with 103,000. So a $4,000 move, just about a $4,000 move in Bitcoin last night. It's up 1,885 on the Bitcoin futures.
Nikki, anything happening in Ether or IBIT or Coin?
ETH.
It's actually moving more. Go ahead.
Yeah, ETH has had. I mean, into the close yesterday, ETH was down. I think the low was like 32.
Yeah, 30. Yeah, 32. 31 change, but 32.
And into the close, it dropped like another $100 or $150.
Yes.
Like it went from down like 4 or 5% on the session to down 10, 11% on the session. So you kind of saw, to your point, kind of that washout, the little bit of the volatility in the overnight session where you get kind of the exaggerated moves. It's now bounced and is basically unchanged from the open at midnight, but it's had some two-sided action.
Okay.
I mean, it seems like from my opinion, 100,000 mark and this 3,000 mark have been kind of the 3,200 mark have been kind of the spots. I mean, we've seen them kind of hit that spot, and then that's kind of the bounce zone. So maybe we see that. I mean, they gave up, Bitcoin and ETH both gave up 4 or 5 months of price action.
ETH more than Bitcoin, really.
ETH more than Bitcoin. I mean, like, that's what you expect from a correction. To your point about, like, the market as a whole down 2% and everybody's crying. That's not, Bitcoin has had a correction.
Oh, like, yeah, 10% or more.
10,
Sure.
20.
Yeah.
That's a good way to frame that,
From the highs. I mean, Bitcoin was at 125. It's at 100 now.
Yes.
That's a 20% down move.
Yes. Yep.
That's a bear market. When they call it a 20% down move bear market, there it is. I mean,
the old 10 is the new 20.
Speaking
Like
of
40 is the new
moves,
60.
yeah.
speaking of moves that hadn't been seen before,
60 is the new 40. Sorry.
Strategy stock fell to a 7-month low. Why the leveraged Bitcoin play is losing steam? Really? That's your headline? But MSTR.
Thank you for thinking. Now that you've watched the market, you know how silly that is.
Yeah, I know. But I had to put something up here because I did want to talk about MSTR. And is this finally over, this hype train for
It's
Bitcoin
up $6,
treasuries?
but I think you're going to have a lot of Ivy rank of 18 in there is really low. Markets in here are I guess okay for a stock that has 100% or 80-90% implied volatility on a monthly basis. There, how wide do you want the markets to be? 50 cents wide. Seems to be a little bit wider than I'd like to see. Maybe 30 cents wide would be better.
Yeah.
But MSTR is going to have a lot of play to it.
A lot of the volatility has come out of this. Just, I think a lot of the reason being all the spin-off products and liquidity that they have. But I will say, if you're a betting man now, and you think Bitcoin's going to be back at highs, by the end of the year or something like that, there's some convexity to MSTR. And if you're looking at like a YOLO play of out of the money call options,
Don't do it, Nikki.
this is an interesting spot to be in them because I don't know how much.
It's at yearly lows.
It's at yearly lows.
I know it's been lower, 220 or 210 or whatever. But
you got 84% implied volatility. I'm looking at the January monthly expiration. That's basically in line with what Bitcoin has been. I mean, Bitcoin implied volatility is 64%. If you look at like IBIT. So they're basically the same volatility. And we know MicroStrategy historically has been, a little bit of a vol play on Bitcoin. So if you want to be, you want to play that game, it's cheap right now.
I think IBIT had some of the busiest call and put volume of the day yesterday. And that's not usually a market leader. It's the NVIDIAs of the world, not IBIT. So we're not the only ones looking at this.
Sure.
Everybody's looking at it. And then by everyone, I mean the street.
Let's get to the earnings from last night. I know that's what everyone is waiting for. AMD reported adjusted gross margins of 54%. That's ahead of Wall Street expectations. PC chip sales jumped 46% to $2.8 billion, which was also ahead of estimates. They've received significant investments in AI hardware from companies such as OpenAI and the U.S. Department of Energy. What is AMD doing this morning?
Liz asked me last night, is AMD going to be able to save the market? I said no. I thought it would.
That's NVIDIA's job.
Right. Don't take the NVIDIA's. I thought it opened lower. It was down around $13 as the market's catching a little bit of a bid. AMD's catching a little bit of a bid too. It's down 6. So maybe it didn't save the market, but it certainly didn't kill the market.
Yeah. AMD
Well inside the expected
inside move. That's going to be a nice vol crush.
Love to see it.
Yes.
Hey, how about Supermicro? That stock dropped on slumping sales and weak earnings. Stock plummeted in extended trading, even though the company issued preliminary results last month to prepare investors for what was coming. They said, "We told y'all." The company brought in revenue of $5.02 billion versus $6 billion that was expected. Net income fell by more than half to $168 million. Yikes.
What do you think of that? I don't trade super microcomputers. What about you?
That's my little Nasdaq scoopy.
Ah, good job.
good
Eddie.
I should have held that because we're gonna be green. Vol's gonna get crushed. We'll be up.
You make it 35 handles on. It's a pretty good scalp for 15 minutes.
Supermicro. I mean,
Supermicro.
this stock. It seems like there's some nefarious things going on.
Sure.
I mean, this is always in the
Of all the nefarious things, great word by the way, to trade, this would be probably one of my last.
yeah, and it's just
But I just had to report that they had earnings.
no, I know, but it's always kind
Sure.
of a weird question mark with this company. And
Stay out of it.
it's just a
but
shame that we included in our top 500 company.
Yeah, I mean, it was a $47 stock. It's a $43 and change stock now, down around $3 or $4 on this news. IV rank of 24 was okay. Markets are okay. I mean, it's something to play defined risk, I think.
Okay. Poor Pinterest. Pinterest shares plummet 20% after the company missed earnings and then issued a weak forecast. The company said fourth quarter revenue will come in between $1.31 billion and $1.34. The company itself brought in revenue of $1.05 billion, which was in line with what was expected. Pinterest third quarter sales did grow 17% year over year, but again, it was that outlook that sent investors.
This is a big move, 15% move lower. I mean, this was a $33 stock. It's flirting with being under 27. I'd be curious to see what volatility does in here. I mean,
Might be a little short putty.
Yeah. I mean, it's going to come down from an IV rank of 60, but it might be a play here. I mean,
and we're going into holiday season. You know, all the ladies get their pins. They get all the
Dudes use Pinterest too.
That's true.
Dudes use, but it is mostly ladies. It's mostly ladies. But you know what's making me really angry about Pinterest, though, is they have pins on there that are AI. So it's like they're just setting you up for failure because you're like, you can't create this in your house because it's friggin' AI.
Right.
I don't like that.
So it's never going to look like the picture girl.
They never do.
They never do. I don't know. But anyway, poor Pinterest. But like you said, maybe some opportunity.
Maybe we'll take a look.
Yes.
Rivian beats Wall Street's Q3 expectations, and the company said they were going to maintain their guidance outlook. The EV maker said gross profit included a $130 million loss that was offset by $154 million from its joint venture with Volkswagen. Rivian brought in revenue of $1.56 billion versus $1.5 expected.
What do you think about that?
It's a $13 stock.
Yeah, it's nothing
so
to do. It's up
tough.
60 cents. It's a good move for Rivian, which, I mean, fell about 60, 70 cents yesterday prior to this news. So it's back to where it was. And if you bought the dip in there, good for you. I mean, if I said, what's Rivian doing? I would say it's a $13 stock, and that's really what it's been for the last year.
Yeah.
Overall, U.S. car sales decreased 6.5% after the EV subsidies expired. So that data came out. That data came out yesterday. So that's all car manufacturers.
gotta wait till-
Doesn't hurt GM.
Sure.
No, but you gotta
GM
wait
has
till
been-
January when I have to buy a car for Vinny to really see those numbers pop up a little bit.
IBM is cutting thousands of jobs in the fourth quarter. A 1% cut globally could impact 3,000 workers at Big Blue. The hardware software services provider said they expect the U.S. headcount to stay flat year over year. I think the stock is up small this morning.
I think this chart goes down in the chart history. I need some sort of chartist to tell me what that That is.
The breakdown to 260-ish and change.
After earnings.
Back up to 310-ish or whatever.
I don't think. I think that's got.
Do you need to call Tim Knight?
Yeah, I would love to know what that is called. It's some.
I wonder if they got whipsawed. Like, I mean, they always wait for a breakdown and a breakout. You had both. I want to know what they did.
Yeah, this was. I mean, from over a two-day move of 260, let's call it, up to
310.
10. 15.
I mean, it went up to 320, but I'm throwing at the top, throwing at the bottom.
That's an incredible.
So what are you doing IBM though now?
IB rank at 24. You know what's so bad about IBM? The markets.
Yeah, the markets stink there. I don't know
40
what
cents
happened.
wide on a stock that has a 32% IV volatility.
Why? Get it together. I don't understand.
I don't know. Citadel, get your act together.
Fix your markets. Saudi Arabia's Aramco CEO says cheap energy will turn the kingdom into a global AI data center leader. I mean, you can't fault that. Like, they literally can just, like, everyone gets a barrel of oil a day. So, like,
you get a barrel of oil.
Do whatever
get a barrel
you want.
of oil.
But Aramco disclosed in October that it will become a significant shareholder in the Saudi-backed AI company Humane. Aramco is the world's largest oil company, and they are going to, I don't know, fuel their AI
I have a new
dreams.
oil indicator. It's actually phenomenal. It's the pump prices.
Yeah.
'Cause even when oil was down to like 56 a barrel there, stayed there for, like a half a week or something like that. The prices never moved.
Because they had to go to the pumpkin spice blend.
Oh, is that what it was?
Yeah.
Signaling that oil was going to go higher, and lo and behold, it's $4 higher to 60. Now it is basically unchanged there, hanging out at $60 for the last week or so. But it's amazing how the pumps can predict oil's rally.
Here's something interesting. Apple is reportedly planning to unleash a line of cheaper MacBooks to compete with budget Chromebooks and PC. Apple doesn't market its machines as affordable, but that could be changing. Already, they're selling like a $800 laptop on Amazon, and it is just eating everybody's lunch. So if they could come out with something that's like 500, sub 500, game over. What are you doing in Apple?
It's hanging out here at 270, Ivy rank of 14. I think it's a directional play. I mean, it's going to be a market leader if the market catches a bid here. I mean, again, we're 6,800 on the SPOOs. We got to 6,950. We really have gone nowhere. So I don't know if Apple catches a bid or not, but it's going to need to if this market's going to go higher.
What are you doing in Apple, Nikki?
Don't currently have a position. Volatility is relatively low.
Sure, it's post-earnings.
Yeah, it's basically at highs. I agree with what my dad was saying of kind of a directional move there, but 26% implied volatility when you're looking like November, December. I mean, that's bottom barrel.
Mm-hmm.
Yeah.
You get more volatility in, not in.
I think there's better places to go.
The Qs are 23% implied volatility.
Yep.
So, it's basically the same implied volatility as the NASDAQ.
OpenAI yesterday announced they are launching its Sora app of AI-generated videos, now available for Android devices. It brings the popular AI app to the Google Play App Store for users in U.S., Canada, Japan, South Korea, Thailand, Taiwan, and Vietnam.
Wait a minute, they're not the same thing?
They are not the same thing. But also, you're going to have to start paying more for Sora. So you're going to have to start buying credits and stuff to make the videos. I don't like it. Do you like the AI videos, Nikki? Like, I see it more on, like, Instagram. Like, I'll see a cat video, and I'm like...
And it'll morph into, like, a human.
Yeah, no, it's just, like, real... and I'm like...
Yeah.
It's really messing with the blondes.
It should be more clearly delineated.
No, but it's really messing with the blondes, because
Okay.
my wife, Chris, was watching a video where the
This is exactly what I worry about, by the way. It's the
boomer trickery.
The boomer trickery.
Yeah.
Watching an ice skater, beautiful ice skater, she was wonderful on skates, holding a cat by the tail who had ice skates on, swinging it around and having it do like tricks and landing and everything. She's like, "This is fake, right?" I'm like, "Yes, honey."
Some stuff is not as blatantly, like, we all jest and we all
a cat
think
with
that-
skates on being pulled by a tail.
Oh, okay,
It looked
fine.
like an extra long tail too.
Right.
Yeah, it was fake.
I mean, but if you've never seen the lady with the cats that can play like the drums, like that is real, like because she's been on the WGN morning show and I know her.
Oh, if it's on the WGN morning show, then for
yeah.
sure it's real.
No, but
And everybody's
I just
seen
think
it.
everything should be clearly visibly marked if it's AI.
Yeah.
And since we're talking about
times.
animals here and stuff, rabbit ears, Richard said they work, Nick. Get yourself a pair, $20 at Target or Walmart
Best
to be able
Buy.
to watch the game.
Yeah.
Really?
Yeah.
All right.
Yep.
There you go. But his building is concrete, though. Like he's in like your walls are like.
You stick the rabbit ears outside on the balcony.
Oh,
I
classy.
find you like
classy.
walk around and find the spot.
Yeah.
Find the spot.
Then his
if you hold them,
HOA
they work even better because
Yeah.
you conduct a little
Yeah.
bit.
Then his
too.
HOA
Put
is
some
going to be on
tinfoil
his
it,
ass.
too. Yes, that's right. Put some tinfoil on it. It was good.
Hey, men are so bad at shopping that Instacart has to roll out AI. No, I'm just kidding. Please don't write me. But Instacart has launched a new suite of AI tools for grocers dubbed AI Solutions. It includes an AI shopping assistant to help with personalized meal planning, budgeting, and product recommendations for customers. I literally forget that Instacart is a publicly traded stock. Cart. Let's look at it.
Yeah, man, I haven't. You just reminded me that it was a publicly.
Well, I know Dash.
Maple Bear, right? Remember?
Oh, yeah.
Smart changed their name to Maple
Yeah.
Bear.
Well, I think they got bought out by like a.
Yeah, I know. Don't tell me.
Something.
And we weren't
Keep the
allowed
name.
to
I mean,
talk about it because Tom was like, this company's a scam.
His earnings November 10th.
Okay.
Markets are 50 cents wide. This would be a probably at the money debit spread one way or the other. Calls
Sure.
or puts depending on your bullish or bearish. Not looking to sell premium in there, even though the IB rank is 71. Very
Oh, wow.
Yeah.
I just forgot that it was a publicly traded
Me
too.
company.
Me too.
This stuff I don't know. I don't like.
The Instacart?
I think you should be shopping for your own food. You go to the grocery store,
I mean,
buy your own food
it's hard.
instead of
And
paying
I'm sorry,
a
how many
20%
kids,
premium on it.
How many kids are you in charge
They
of
do.
in your
They
house?
do. They do charge a premium for everything.
All I'm saying is, if you're strapped for cash, it's probably because of the 20%
Hike that you get.
from getting it to your door instead of walking to the grocery
Getting up
store.
off your own fat arm.
Although when I broke my leg, I used Instacart.
All right, you break your
all
leg,
right,
that's
all
fine.
right, all right.
I needed groceries
the
delivered.
Chipotle burrito that you get delivered to your house is $30 freaking. You can just go buy it for
30 now on delivery?
It's not.
on a delivery app.
on
you get
delivery.
the
It depends on
delivery
the
No, I
app.
can
and then-
tell you
If it's
exactly
surge
what it is.
price.
Yeah, go look
One
at
second.
Vinny's
Vinny, I'll
credit
go on
card
Vinny's
right now.
account. I'll tell you.
Yeah.
exactly
I
what it is.
mean,
Hold on.
you could buy a ribeye.
Are you okay?
And cook
You
it.
seem a little cranky.
No, that's
Want a
my
Snickers?
You can't buy a Wagyu ribeye for $30. I mean, you kidding me?
Netflix has sent out dozens of requests to Hollywood agents for video podcast creators. The streaming giant wants to compete even more closely with Google's YouTube, and they want video podcasts. They're making a big push for Q1, says an agency source, and they want to have a library of known shows that they launch video podcasts on the platform in early 2026. They already have like the Ringer podcast, the sports podcast, and true crime series Serial Killers, but they want even more. They want the Netflix version of Call Her Daddy or, Joe Rogan or, something, or New Heights, but on the Netflix specifically platform. So
Have you listened to Call Her Daddy?
Call Her, yeah.
Yeah?
Yeah.
I've never listened to it. I should probably listen to it.
Yeah, no, she interviews like reality show people and other things that I listen to their interviews.
Think you'll get a knock on the door one day?
What? No. What is Netflix doing?
Netflix, 1,093 and change.
It's splitting.
Basically unchanged. This has been a split take under.
I know. I'm afraid it's going to go the route of CMG.
Ooh, Netflix is the next CMG split. You don't like to see that if you're bullish, obviously.
I like that they're going to 100. I wanted them. I think it's better if they were at 200. I think they should have done a 5-to-1.
Instead of
5-to-1 instead of 10-to-1.
5-to-1 split.
When you do too big of a split, you kill all the oomph to the stock.
Yeah.
All the vibe.
Unless you have something like an Nvidia or a Tesla that has like binary built-in events to it. And Netflix, I think, is going to go the route of like CMG, or maybe even like an Apple, where it's just a less volatile stock.
Sad news to report: a UPS plane crashed yesterday around 5:15 after departing the Louisville, Kentucky airport. Sadly, seven people died. Now, that's when I pulled this headline, it was 3, and injuries continue to mount. The plane was headed to Honolulu, Hawaii. People on the ground said it looked like the left engine was engulfed in flames as the plane attempted to take off, and of course, you could see this for miles.
The video
miles around, like, yeah,
crazy. It's so sad.
I don't want to watch that.
Oh
I know,
my God,
I know.
Yeah.
But
it's horrible.
have to.
Yeah, UPS down about $2 on that news. But UPS has been on the low end of its range.
Yeah, popped on earnings.
What's that? It did.
It moved on
yes,
earnings.
it did.
I mean,
Just a couple of days ago when it popped from, I don't
85
know,
to
80-something
95.
to 100.
And the plane was an MD-11F, so this does not have anything to do with Boeing. So.
Boeing.
Yeah.
Basically unchanged today.
Yes.
It has come down a little bit. I think it had earnings middle of last week too.
I'm sure it did. Everything did.
Yeah.
Boeing went from 225 to about 190 and change, where it's sitting right now, 198.
Cava cut their full year forecast yesterday, and another warning sign for fast casual restaurants. I like how the Gen Z, or the slang for these places now, is slop bowls.
Yeah, the slop bowls.
So Cava,
I like that.
Sweet Green, Chipotle, because it's all in that.
It's funny they say that, but
Slop
then
bowl.
they shell out $40, $30.
No, I'm paying $20 for a salad, like $25 for a salad.
Yeah.
Those
It's
salads
ridiculous.
are ridiculous.
I mean, we get them for free here, and I like that.
Well, you're paying for it, believe me.
Yeah.
You can't afford
Sure,
free
no, I
sometimes.
know, but Cava was down yesterday on this news, so.
Yeah, it's down again today to 49 and 49.20, 25 or so, which will be a new low. New
Low.
CMG is even bigger of a pig, and I'm long that stock, which
And look at SG, which is Sweet Green, which you can trade, but I don't know if that's going. Yeah, no, you can still trade
I
it.
think, aren't they like taking that out?
Yeah, I think
Isn't
that's what I
somebody
thought.
buying that?
That's what I thought too.
You can have it.
Yeah.
You can have all of them. They're all.
I don't know, all the slot bowls.
Slop bowls. Brutal.
How are the options? How are the markets in Cava? Can you trade it or?
We've traded this, or I have in the past a couple times. I mean, the options aren't,
They're not great.
yeah, they're not great.
50, 60 cent wide markets,
Yeah.
and, under $50 stock.
Stock has fallen out of bed. I mean, this was too. I remember trading in like the 170.
Yeah.
Do you really?
Yeah.
Yeah.
Oh wow.
Yeah. I mean, this was a recent IPO, I believe.
Yep.
Like
Yes.
middle of last year.
Papa John's stock sank 10% yesterday on a report that Apollo withdrew its offer to take the chain private. Shares of the pizza pioneer sank 10%. The deal was supposedly valued at $64 a share. Papa John's reports earnings Thursday.
Papa John's hanging out at 43.5. The best thing about Papa John's is their
Ticker?
Their ticker.
Mm-hmm.
Easy.
Yeah.
Yeah, that's the best thing about it.
I saw something about Yum Brands.
Yeah, they might spin off Pizza Hut. I had that, but I thought I would go over time.
It's kind of a sad.
I mean, I pick Pizza Hut over Papa John's. Pizza Hut is way better than Papa John's.
We need to bring back the originality. We need
Well,
the
we
need
live
the
in
Pizza Hut.
Chicago.
You
We
know,
live
like the
in
Hut.
Chicago.
We can't. No more of these.
generic,
Gray
modern-looking,
buildings.
gray and purple.
Yeah. Give me the arches.
Right.
Give me.
Give me the
Give me the
buffet
golden
with the red
arches,
cups.
Give me the house.
Fine.
Give me
I'll take
Jack
that
in a
too.
box.
Those are gross. But
Right?
yeah, I
Yeah.
want like the stuff that's got,
Yeah.
you know, like Taco Bell with
a bell.
With the bell and
Yeah.
like the
Yeah.
tiling on the top.
Right.
Like, I don't want
Everything old is new
Nothing
again.
like this. Nothing like this.
Pizza Hut-
Burn this to the ground.
Pizza
okay?
Hut fostered my love of reading
Yeah.
with their Book It program. I would read so many books just to get pizza. Thank you, Pizza Hut.
It worked.
It did work. And then I don't know how I feel about this, but Subway is releasing 3 new holiday themed sandwiches.
Burn this to the
one
ground.
of them is called the Terhamkin. That's right, a feast, using that in quotations. Named, it's their take on the turducken. The Terhamkin is available nationwide starting Thursday, November 13th. It will be loaded with holiday meats, cranberry sauce, and stuffing. A fresh twist on Thanksgiving favorites, said the chain. Nobody asked for this.
Subway.
Wait a minute. Turkey, ham.
And chicken.
Burn it to the ground.
Ken is chicken?
Yes, chicken. Yes.
Gotcha.
Terhamkin. Yes.
Thank you.
Subway.
Because they don't have duck, so it's turducken, which is turkey
Yeah.
stuff in a duck and then a
Yeah.
chicken. But they have ham, so it's terhamkin.
Chicken. I see
Right.
what you did
Yeah,
there. I
yeah.
see what you did there. All right.
You're so pretty.
You better get to your video.
I'm gonna get to my video. I just think it's like because private equity owns Subway, and this is why I.
Yeah, but
hate
Subway's
private
always
equity.
been gross.
This video just
Subway is
made me.
horrible.
This video just made me laugh because I continue. I just love men.
Dudes
Everything
being
about
dudes.
this
Yeah.
is just a cascade in A+ decision making. Watch this.
Oh, I told you it was hard.
What do you think he was gonna?
He thought he was going to go through, yeah.
Why not test it?
What a putz!
That probably hurt. Badly.
Oh, I told you it was
It's
hard.
sounds
The
like it
glasses
hurt.
and the hat go
Yeah.
like yard sales.
That was not too unsimilar to me going over the fence.
Thank you.
Is that what
Thank
it
you.
looked
My
like?
wrist. It was a lot like that. My
You
glasses.
tried to brace the fall.
Yes, but my glasses went flying and not my hat, and that was exactly how I fell. I fell on my side and my hand. So
I love men.
Amazing.
we're gonna take a quick 90-second break and come back. We got more Tasty Live on this Wednesday, November 5th, with Confirm and Send next. We'll be back in 90 seconds. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
We are back, son. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a look at the market. And we had a good wild market last night. About 60 handle move from the lows of 67, let's just call it 50, up to around 68.10. We're 68.05, just about 2 handles off of our highs. NASDAQ up 7, has reversed from being down around 25,300. We are closer to 25,600 right now. Russell up 10 is the leader in the clubhouse. Dow up 46, but they're all basically unchanged. Maybe say the Russell is higher by a half a percentage point. That would be a decent sized move. Volatility down 10 cents to 1965. That would be the higher end of yesterday's move. I think we got up to around 1980 or so. So volatility still bid, but off of its highs last night of 2065, almost a full dollar, which would be 1,000 points in the VIX futures. Bonds down 13 after flirting with 118, which a bunch of people pointed out last night. Bonds took a nice rally up. They're now near their lows. They traded under 117, 116.29. They're sitting right at 117, back near their lows. Bitcoin up 2.5%, $2,500 to 103,500 after trading under 100,000 to 99.3 or so. We are significantly $4,500 higher than that right now. Ethereum actually on a percentage basis had a bigger move. Never got down to 3,000, got down to $3,180, let's call it. It's back to $3,380, right near its highs, up $161. That's a 5% move to the upside, but still at the low end of its range, reversing last night's move though. Oil down 29, gold up 27. Gold had a decent move also of about 60 handles top to bottom. It's up 37 right now, about 10 handles off of its highs. But again, gold kind of hanging right out at that 4,000 range. Silver up 52 cents, almost 53. That's twice as large of a move on a percentage basis as gold. Some of the stocks that had some movement last night, AMD off of its lows was down around $13. It's down around $5 right now. HIMS was also lower by about $13. It's actually up $2 now, so a big move in HIMS. Do I have that right? Did you see HIMS down?
No.
Maybe I have that wrong. I'm sorry. Oh, Humana is what I meant. I'm sorry. I looked at my notes bad, and then $13 seemed like it was wrong. Here you go. Humana down around $13. It's still down around $13. That's what happens when you write poorly. Pins, on the other hand, is down. That's the biggest move on a percentage basis, down around $6 or so. That'll be almost a 20% move in Pins. McDonald's, since it's a widely held stock, 302 is now up. It was down around $2. It's now up around $3. Amgen was up small. And Mara and Rivian also up small. NVO, you had a position on that you put on for earnings, basically unchanged.
Yeah.
All right, my friend, let's get to confirm and send, and then we'll get to a little option.
What do you think about the bonds here?
What's that?
What do you think about the bonds here?
I know you want to nibble on them. It's probably a little bit of a bid here. The problem with it, you can't sell premium in it, so you're gonna have to.
You don't think you can do like just a short put? Like
you could.
It's directional as opposed to just buying.
Sure.
And getting long.
Sure. And if you're going to trade them, you might want to even go to the November 16 options, the shorter dated options.
Oh, you want to do the okay.
Well, that's going to represent the 117 note that you're trading right now. Remember, when you're trading bonds, make sure you're trading the options that represent the bond that you're seeing on the screen, 1631. Which will roll this Friday, so just in a couple of days. So if you're going to do anything, you probably do it there.
What do you think? Like maybe the 16?
You're going to probably have to go right at the money. I mean,
I did the 16, so we traded these. We bought them back at 23 cents on the 30th. Mm-hmm. They're at 23 ticks. They're trading at 26 right now.
Uh-huh.
So they're back to kind of where we sold them.
Remember, one tick is $15.62, half the price of a bond tick. If you were trading the bond futures themselves, the options are half of that. So you get smaller by just going to the bonds themselves. That's what I would prefer because I'm the world's worst bond trader. So yeah, I would probably look at the 16 and a half puts, something like that. 26 ticks is $400 and something dollars. Yeah. So I mean, it's good. Bang for the buck.
Let's do it. And then I'm going to look at oil once the market opens, too. I think that's another one where, we've been chopping around. Maybe it's something like an iron condor, or if it goes a little bit lower, maybe do a put spread or something like that.
Awesome.
Cool. Let's do it. Confirm and send.
Viewer emails.
Yes.
I read an article that discussed cap valuations. It said the market is currently trading at a valuation not seen since 1999. I know you don't pay much attention to news, but when something this unusual comes across, they're talking about, a 25-year-old number or something like that. Do you give it some thought? The implications of the article is that when this has happened before, the next decade has negative equity concerns.
I mean, there's you're making a lot of assumptions here.
Sure.
I think any of these fundamental type looks at markets, it's great to look at this stuff in hindsight, but in the moment, it's hard to trade off that. Like, what does this mean? Do you just get full bore, short the market here because it's going to have negative returns over the next 10 years? It's hard. The point being, I think it's hard to take this sort of the next decade. What does that really mean for your trading right now? How do you put that into a trade right now?
I don't know if you can, if you look at from 1999 to the present, you're basically up 10%, which is usually what the market returns. I think this is. Yeah. You're trying to be short-term trader.
From 99 to the present, the market's 4x, 5x.
Oh, no. I'm sorry. $100 would have returned to $800. I apologize.
Yeah, it's been over any long period of time, it generally goes up and to the right.
Now, if you're going to try to market time this on valuations of stocks, I don't know. I guess go for it. But you try to look at a long-term indicator for a short-term play here.
Yeah,
I don't know.
I think it's just hard to build assumptions and trade based on this. If this is your thought, then maybe you lighten up and you wait to buy some dips.
Yep.
Tough one.
I don't know. I don't put any weight to it, is what I would say.
Next one, please.
But I like your thinking. Power is knowledge.
I'm interested in getting long Bitcoin after its recent fall. I'm just not sure what product makes the most sense. Futures, cash market, ETF. If it helps, my account is $30K.
IBIT is a nice premium play. It gets a lot of that's the Bitcoin ETF. It gets a lot of play. It's got good volatility. That would probably be my first place to go. You could certainly nibble on Bitcoin Cash. You can trade as little as you want there. You want to buy $30, $50, $152 worth of Bitcoin. You can do that in the cash. Basically, trades 24/5. That would be another place I would go. If you're trying to be strategic, maybe IBIT. What about you?
Yeah, I think IBIT's really your only option here.
On the equity side?
On the equity side, I think cash Bitcoin, if you want to set it and forget it, that's probably the way to do it. If you are trading and you're in a brokerage account, I think IBIT makes more sense for most people.
Good markets in there, a couple pennies wide.
Good markets, and you can get some leverage via options. So, the biggest problem with cash Bitcoin is that it's cash secure. There's no...
It's dead money, as we would say. It just sits there. You can't do anything with it. You don't lend it out. It just sits there. But if you're trying to set it, forget it, like you said. Might be something you want to try to get small.
Yes. IBIT, you can get some leverage via in the money call options, on a longer duration as a poor man's covered call or something like that, or just as a synthetic stock position. Rather than putting up the full cash security, you're going to, get a 25 to 50% reduction in the capital usage. So that's the way. The futures are too big. BTC is a 5-coin notional, so it's a $500,000 contract right now. So it's just too big.
For $30,000,
$200K, I think is the $200K. I think is the requirement on it, or around that. So, too big.
Too big.
So I would say IBIT.
Too big.
Next one, please. I understand we should try and stay away from less liquid underlyings with wide bid-ask differentials, but if I'm using limit orders, why does it matter? But why?
I guess it doesn't matter that much, but even a limit order might not get the best fill. I've gone over this a few times, but I'll do it real quickly. If I'm making markets in a product and fair value is $3, I'll just make a dollar wide market. We'll just make it wide. Or fair value is $30. I make it, and I'm long a lot of those options, right? I'm getting more sellers coming in. $30 is fair value. I make it, 29 and a half, 30 and a half, and you come in to buy it at mid-price at 30, which is fair value, I'm going to sell it to you at 30 because I'm long a lot of those options. If the whole crowd is not long a lot of those options, I'm going to make that market, and I want to buy them, 29 and a half, 30 and a quarter, or 29, 30 and a quarter. And you're coming in to sell those, you're going to put in an order at 29 and a half. You're actually selling at 50 cents under theoretical price, not mid-price, right? So, there's ways to skew the market when markets are very wide where you don't get the best fill, even on a limit order. I would much rather see you be defined risk, and I'd much rather see you be aggressive with your pricing in here. Wait for the stock to move. If the market has wide bid-ask, the stock has a lot of movement to it. So you stay inside the $10 at a 30 delta, it's going to be somewhere around $3. If you put an offer in at 330, you put a bid in at 290, you're probably going to get filled sometime during the day.
Yeah. Great answer.
How I would do it.
No, I don't know what I could add to that.
No need to add anything. Next one, please. I once heard on the show that multi-leg trades are easier to get filled on. This seems counterintuitive to me. Can you please explain?
Yeah, I don't know the context. I mean, I think when you think about delta, like being delta neutral is an easier fill than a directional fill.
Right.
Because typically on the other side of that trade, being delta neutral.
Think about an iron condor for a quick second. Yeah. Okay, so you've got 2 legs versus you got 4 legs, and you break it up, and you want to sell the call spread first. Call spread has delta to it. Let's just say it has 20 delta to it.
Yeah.
Because your call spread's going to have 20 delta to it.
The market maker has to hedge that.
Has to hedge it. And the stock actually has to go higher if you're selling the call spread for you to get filled.
Yeah.
And then the stock has to go lower for you to get filled on the put spread at a better price because it has delta to it.
Yeah.
You just put in an iron condor with no delta to it, it just becomes a volatility play. It just becomes a fair price play.
Yeah.
And they'll take both sides of it because it fits a portfolio.
Yeah, there's no hedging to it.
There's no hedging.
It's just one or the other.
It's
just a volatility play. And that's why that fill. I think if you're doing a naked put versus a put spread, the naked put will be an easier fill. Because it's just from a delta perspective, it's a clean
Sure,
hedge,
if you get one downtick, you go in at mid-price and you get a downtick, you'll get filled on.
Yeah, you get filled. But with a spread, you got to get filled on. It's all or nothing. And you have to get both options.
Yep.
But when you're doing both sides, whether it be a strangle or an iron condor, assuming it's delta neutral, that's an easier fill than a directional trade.
Very good, sir. Very good. We're going to take a quick 90-second break. Even the S&P just went red for a moment. They're basically unchanged, up 275. NASDAQ up 6. Russell up 9, Dow up 71, and volatility in by 6 cents, trading on its lows of 1960 for the overall night. We'll take a quick 90-second break and come back. We got an option jive next. It's Tasty Live.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. From tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
It's Options Jive. That's right, Nikki. It is time for an Option Jive. Go.
Let's do it.
How can Tango kills the radio star? How can Tango kills VXX?
VXX. Yes, this is a good one. Right. A lot of people try to trade these, so I think this is a good primer for if you are trading these. A lot of good things to know in this segment here. So, talking about VXX. VXX is the S&P 500 VIX Futures ETN, which is an exchange-traded note. So you're trading futures products via this ETF. The ETF holds futures. That's why it's an ETN versus an ETF, which is a fund which holds physical shares. So these are
it holds those VIX futures, which are /VX, which I quote every day numerous times.
Yes, those are notes. Those are contracts, not physical equities, which like SPY owns shares of
SPY.
Well, no, the underlying assets.
Oh, the underlying
assets. It doesn't track
500.
them.
Yes.
It owns physical shares. So these are notes that trade the futures. Overall, it behaves much like long VIX or VX futures positions, but it has a very high short-term correlation with the VIX. So if you're trading VXX, it moves day-to-day like the VIX on a day-to-day basis. Median reading of around 0.9 is our correlation, meaning they almost always move in the same direction in the short run. So, when you think of trading volatility and you look at a correlation, you would expect VIX and VXX to perform the same. They do on a day-to-day basis. There are things to consider, though, when you are looking to trade these products, which is what we're going to get to here. So on to the next slide. However, the long-term story looks very different. And when people are trading any of these products, I tell them to zoom out on the charts years and years. And these prices have never been traded, and we're going to get to why. But while the VIX tends to mean revert within a relatively narrow range, so we talk about this all the time of when volatility gets low, it tends to expand, and then it kind of clusters, and so on and so forth. And you can see it here for years and years and years. It's kind of clustered in ranges. You get a big pop. Sometimes it goes to lower spots, but it kind of goes in this median range of somewhere around 20. VXX consistently loses most of its value over time. Even though they move together day to day, VXX decays because of how it's built. So when you look at a chart of VXX and you look to January of 2010 and you say, wow, it was trading at 8,000 a share, it was never trading at 8,000 a share. That's just because of all the splits that happen throughout the life of these products because they go to zero. They actually would be zero if not for these splits, and we're going to get into why that is.
Very good.
So the next slide here, VXX drag, which is what pulls it down over time. The effect comes from how it's structured and what it tracks. So the drag is different from the one found in leveraged ETFs. So this is a drag because of the role of the futures contract. VXX doesn't track the VIX index itself. It tracks a rolling position in the front 2 monthly contracts of the VIX futures. So this basket changes. So at one point,
and the closer you get to expiration, it changes.
Closer to expiration, and the overall makeup of VXX and some of the other ones like UVXY have changed over the years. They used to be much more weighted towards the front contract. It's now much more spread out, and so this drag is even bigger, or it's lesser than what it was. But the upside to these products has kind of dulled because it's not really all front VIX contracts. What it means for these products is that that it's consistently selling expiring contracts and buying the next month contract, maintaining a long volatility exposure, but creating a built-in headwind over time. You're selling out of front volatility, which is typically higher than back volatility. You're selling out of the front to buy back volatility, which is typically higher than what it is in the front. That's a contango, and there's a drag to that. And we're going to talk about why this causes these prices to go down on this next slide here. Most of the time, the VIX futures curve is in contango, and this is a look at right now. So you have volatility futures, around 19.5 right now. The next contract is trading at about 20. And so you're selling the close front month contract and buying to open the new back month contract. And there's a spread there. So you're selling at 19.5 and you're buying at 20. You're losing that 50 ticks in between those two contracts. And this happens month after month for a long period of time. And the VIX futures curve is mostly in contango. So when the VIX rolls forward, it sells cheaper front month contracts, buys more expensive next month contracts, and that value loss occurs in basically each roll. Since this happens roughly 80% of the time, the effect compounds and steadily drags VXX lower. So 80% of the time, we're in contango, and so 80% of the time, there's going to be a cost to roll these futures, and so there's
that's the drag that we're talking about. So it does not make for a good long-term hold, right? I mean, if you're bullish on this, does it make for a good long-term hold if you're bearish on it?
If you're bearish on the market?
Bearish, right. Thinking VXX, no, bearish on VXX. Forget about it. I know what it does for volatility. Volatility is more mean reverting. So if it's going to have this movement to it.
Yeah, why is it the free money trade?
Yeah.
It works until it doesn't.
Sure. If you go back to slide 2 for just a quick second, I don't mean to break your rhythm here.
Yeah.
But if you go back to slide 2 for just a second, I apologize.
This is the one with the
big
VIX and the
Yeah, you'll see how it goes. Well, theoretically, slide 2, please.
Yeah, if we can. Don't do that.
Production slide 2, please. Yeah. There we go.
Oh no, this is the next
one.
That's
5.
So
that's
this
5.
Is fine. This is fine. But this goes to the point.
Go ahead.
When markets are stressed, the VIX curve flips into backwardation. Short-term futures become more expensive than the later ones. In these moments, VIX sells high and buys low, briefly gaining value as volatility spikes. So when you get into these backwardation situations, there's actually what is called a drift. So you're selling out of 28 and you're buying 26. And there's a 2-point value add that actually pumps the value of these products up from this roll versus contango, which drags them lower. And you'll see on the next slide, which will kind of show what you're talking about here. You have these very big, brief spikes, and a lot of times the things you don't consider with these is that volatility also expands. And so when you're short these products, yes, for the majority of the time, let's just say it's 80% of the time or more, the product goes down. And so, being short these in some way certainly is a quote unquote good trade. The problem becomes if you over leverage in these trades and you are not able to withstand these spikes, which can go a lot higher and a lot bigger than you expect sometimes. Like a volatility pop to 25 in the VIX futures, you're probably fine. And there's no, if you're sizing correctly, but you have to withstand the 40 or 50 VIX potential at some point here during, market sell-offs. Like if you have something major that happens and that can persist for a extended period of time. This isn't just
longer than you want.
Yeah, longer than you want. And it might not be one day. And that'll change margin requirements. That'll change the risk of the position. It doesn't, selling VIX calls or selling VXX calls those calls the volatility of those calls will expand into this move. So you get whacked on both of those aspects of the trade.
Very good.
So getting into here, so like other volatility products, VXX is extremely volatile and attracts active traders and speculators. It's designed as a short-term trading or hedging vehicle, not a buy and hold instrument. So, we typically look to these as like a long play to the upside, but on a very short duration, like 1 day, 1 week, like that's the sort of trading that you're doing here. Over longer time horizons, the drag effect dominates, eroding its value. And you can see the average returns here, they're negative daily returns. On a weekly, they're negative. On monthly, annually. If you held this, you're at zero over a 5-year period, despite, COVID and tariff tantrum and Japanese unwind, the carry trade, all sorts of huge market events. If you held VXX, you are basically zero. You've lost 98%. So it just tells you that these sort of things are meant for short-term trading.
Yes.
And from the short side, the spikes that you get are problematic.
In the markets can be quite wide. I mean, becomes a very slippery slope.
Yes.
The trade.
This slide is kind of just throwing the peeps under the bus here of basically why do these exist? They exist pretty much for just fee collection here as these products. I mean, they do hold a purpose, and if you are looking for short-term hedges, these are great. I think a lot of people get caught up in these products and others like an SQQQ or TQQQ even. Like a lot of these products, they're just not meant for long-term holding, and that's really where the problems come in. So let's jump to the last slide here. Just a couple takeaways here. So VXX is an ETN that tracks short-term VIX futures, not the VIX index itself. Those are two different things. Because the VIX futures are in contango most of the time, VXX suffers from persistent drag that erodes its value. It performs best as a short-term hedge or a speculative trade during volatility spikes, not as a long-term investment. As well as on the flip side of this, you have to be able to withstand large spikes in VXX. If you are going to take the other side of this coin and play it to go to zero, just keep in mind that things can get big. This isn't
very quickly too.
This isn't something that I think is meant for being a core position of short VXX.
This would be at best a short-term stock play in my eyes, whether you're going to buy VXX or something. But I'd much rather you do the VIX futures.
Yes.
And you can get smaller in the VIX futures too by trading the micros.
Yes.
Let's take a quick 90-second break and come back. We got more Tasty Live on basically an unchanged market, a bid in the crypto space, a bid in gold and silver. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell next.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live with the opening bell is imminent here in about 4.5 minutes. Even the S&Ps, seems like nothing's been going on here, but if you look at the overnight action, we've had about a 60 handle move. We're right there at 6,800 on the even the S&Ps, down around 275. Since we've been on the show, we've been down around 5, up around 5, thereabouts. We've had a very, very tight market. All the action was last night. NASDAQ down 30, basically unchanged. Russell and the Dow trying to lead us higher. Russell still up almost $10. That's about a third of a percentage point higher, where the even the S&Ps, the NASDAQ, and the Dow are basically unchanged, with the Dow up 26. Volatility, which just got down to 1960, catching a little bit of a bid here to 1980, up 5 cents. You can see here the action was last night when it got up to 2065. Bonds are down 15 ticks, just a skosh off of their lows. It too had action last night, almost a full point range. At its lows right now of 1630, low is 29, 1 tick lower than where we are right now, but almost a full point higher last night. Bitcoin, it too has had a huge range. Let's just call it almost $5,000, $4,000, I guess would be closer. 1,035 is the high. We're sitting just under 103,000. We got under 100,000, a 2% move to the upside so far. Ethereum, sorry, I should go to the Ethereum futures, show you a better view of that. Up 5% the last time I quoted it, up 4% right now, rounding up $125. It too was significantly lower, under 3,200. It's 33.5. Oil, you wanted to look at trading something in there, going sideways at $60 and change. IB rank at 21 is indifferent at this point. I think it warrants a trade if you don't have anything on. Gold up $32 to $39.92, hanging out at that. I don't know, is this a significant 4,000 level? I don't know, it's just a big round number, yeah. 39.92. But it too had a lot of action last night. Same thing with silver, full point move in silver. It's up almost 50 cents. That's a 1% move, mirroring gold right now. Corn, wheat, and soybeans, mixed bag of tricks. Soybeans up small, 11.24. We definitely had some earnings plays. Talked a little bit about them. You had NVO, right? And I think you did something in AMD. Am I correct?
Yeah, AMD, we have a strangle on short the 235, 250, I believe, or 270? 275, I'm sorry. 275.
Yeah.
So that should be a good one on the open here.
Yeah, it was down $13. It's only down around $7 right now, well inside the expected move, so you should get paid in there. You got a little bit of short delta or a little bit lower, so that one should work. I think you had NVO, right?
Yes, I did a little call diagonal spread there. That one will probably be down small, but that was like a little tiny. I did that at $2.40 debit. It'll probably be like $2, I would guess.
Yeah, prefer a $2 up move to a $2 down move. It was a directional bias on there, trying to buy something that looked...
I mean, this is well inside the expected move. The expected move was about $4-ish.
Yeah.
So...
Like your crab trade, even though you would have gotten it, is this a crab trade?
No, this is just a diagonal.
You said diagonal, yeah. If you did a crab trade, I'm just going to the different strategies. So if you did a crab trade in here, this would, even though you got the direction wrong, it would probably be unchanged to a small winner.
Yeah.
Maybe, because the front month would go basically to zero real close, and the back month would hold a little bit of premium to it.
Yeah.
Well, you would use twice as much buying power.
You'd be naked. You're naked an extra unit on
right, and you have risk to the upside. Here you have a much smaller. I would prefer, in this stock where you think the upside, even though you were wrong, as I was wrong, you think the upside was much larger than the downside. Crab trade really kind of
wouldn't
dicey.
be the one here.
Yeah,
that's why I did That's why I did just the diagonal spread. Mm-hmm. You have a 63% implied volatility in December. I don't think it goes much lower than that. And you sold about 150% implied volatility in the weekly. So I think on a non-move here, it's going to be a scratch.
Yep.
Maybe a small loser. I mean, I did it at 244, which basically means the 50 call, if it marks at 240, it's a scratch.
Yep.
Because the 52 strike call expiring in 2 days is going to be marked at 20 cents. So I take 70 cents in from that, and we'll see.
Bada bing, bada bop,
but this is nothing. This is like a nothing.
This is a nothing.
Tiny little trade.
And there is your opening bell, son. You've got the E-mini S&Ps down around 275, Dow down around 11, Russell up around 7. We'll let everything kind of settle in here.
Yeah.
Before we start talking about your markets here.
AMD, nothing.
AMD.
That is a nothing move. Unbelievable.
AMD is a nothing move. You are right.
Yeah. I think you're going to have to hold it a little bit for in markets to tighten up and vol to come out here. Mm-hmm. E-mini's basically unchanged here.
Beautiful.
Is today going to be another choppy day?
Ooh, certainly looks like it, doesn't it?
Yeah. Let's see what else is on my radar here. Hood's up a couple. You got gold up 4, GLD.
Mm-hmm.
Let's see.
Okie dokie. Yeah, GLD up 4 and change. That's a good move in GLD to the upside.
Mm-hmm.
Let's take a look at what's really moving in this market here. We'll go to the downside first, since that's what everybody was afraid of. Netflix down 15 last night. Netflix down 15 and change. Pins for earnings down $6. It's been sitting there 6.5.
Yeah, should we do something there?
We can take a look at it in a quick moment. Sure. AMD down 4.5, UNH down 2 and change, Microsoft down 2 and change, Apple down $1 and change. There's some big stocks here. ARM down around $1. Let's see what's moving us to the upside. MU never goes lower, up $10 and change. MU had one little blip 2 days ago, back to 2.
Yeah, I rolled out that strangle yesterday.
It was probably
good timing.
Good roll at the moment.
But that stock, MU is one of those stocks that has tormented me for pretty much my entire career. It's always one of the ones where I have some of my biggest losing positions, but it's one of those stocks where it moves, it has high implied volatility. It's something you gravitate towards, but it torments me. It really does.
I can understand that torment too. I feel your pain.
Yes,
a lot in there. So I definitely understand it. I really do. OKLO up around $5 and change. BE up $7. You're out of BE now, right?
No, I got sucked into it yesterday.
Like a moth to flame.
I actually
BE has not really had a downtick.
I can actually take the position off for a small profit if I can get filled somewhere here.
Oh, hang in there. What do you have?
I know. Every time I look at it, I'm like, the call skew here. I just got long a little micro NASDAQ here back at where I got in earlier.
Okay.
I think we get a little bit of a vol crush, a little bit of a bid here. BE is just one of the.
You did it in the 16 days, right?
I did it in the 16 days. I did a call ratio spread.
You bought the 150s, sold the 165s, and the 180s for about $1 credit. You got a 30. Trading for around a 30-cent credit rate, but markets are quite wide here. Look at this, $5.58.
You got to sit.
I think you sit.
You can't do anything there right now. So, yeah.
Open interest is good in these options, thousands on each line, but the daily volume can be anemic at time. The Russell and the Dow trying to lead us a little bit higher. Gold up $30. The E-mini S&Ps, NASDAQ trying to take us a little bit lower. Volatility basically unchanged.
Yeah, so that NVO position is basically a scratch. Just to talk through that quickly, because we talked about how so I closed that, it's a 7-cent winner on basically I'm long delta, but the stock goes down. And that happens because the 52 strike call that I sold loses it's marked at 25 cents. So, it comes in 70, 80 cents. The long option in December, the 50 strike, you lose 60 or 70 cents on that option. It nets out a small profit, even though you were long delta on the trade.
You had 30 long delta. I put the trade up there. It's trading around 249, where I think you got out around 250.
You have 30 long delta now, which is more than you had yesterday.
That's
so
right.
You probably had like 10 delta.
Sure, 10, 15.
10, 15 delta yesterday. But because that short option decays so much, you actually pick up long delta, but you're short so much short-term volatility that you didn't need the directional move. Like you were 15 long deltas and the stock's down $1, almost 2%. You would expect to lose money.
You actually made 5 or 6 cents on the trade, and you were directionally wrong.
Yes, and so it's a shot. It worked out. That's great.
You're allowed.
I'm allowed.
You're allowed to be right. It's okay at times.
Yeah.
It's not going to happen forever.
Do I close out of this AMD strangle, or do I just hold it here?
Ooh, AMD strangle. Let's take a look at
It's about $100 winner.
Completely up to you. I hate to tell you what to do. Let's take a look at AMD. 246 and change, down $4. You need a little bit of a down move. You got volatility upticking a little bit. You got even the S&Ps going a little bit lower. AMD was down around $13. Oh, you closed it. I was gonna tell you to sit.
Oh, really?
Yeah.
Wow.
Yeah, I was gonna tell you to sit.
All right.
In the overall trade.
What about rolling it?
Let's take a look.
What about going to December?
You had 8. Well, I guess you had 8 long delta. I think the stocks will go a little bit lower, so you probably did the right thing. I thought you had a short delta position. You probably had a short delta position coming in.
Yeah. What about going to like the 190, 300 in December?
Oh, you certainly could. November, a lot dicier. December with a 38% IV rank. It's come down a little bit, but still elevated in AMD.
Let's do the 200, 300. That's $50 out of the money on either side.
Okie dokie. Look at you. This is good. You're doing very good here. Very proud of you.
Thank you.
Mm-hmm. Very, very proud. Some other. What's that?
There you go.
AMD.
845. I did the 300, 200.
Got it. 300, 200 is going to give you a little bit of short delta in there, believe it or not. Even though the 200s are $45 away and the 300s are right, $55 away. And the calls are actually at a higher price, being $55 away. Let me show this to everybody. There's the trade itself. It's got 5 short deltas. You're $55 away on the calls. They're trading for $4.50, and the puts are trading for $3.90, $3.85. They're closer and they're worth less. That's definitely call skew.
What do you think about pins? You do something?
What do you do in pins?
I don't know. I just look at it
down 20%. Trading $26. I mean, if you're going to go for duration, you're going to go to December. I mean, what do you want to do here? What are you going to try to buy? The 25-27 call spread for $1, which gives you basically a 1-to-1 risk-reward ratio. I know it's trading at 86, but the markets are very wide. Here at $1.15, $1.90, I don't think you do anything.
I know. I want to look at pins and UPS. Those are both the UPS options stink right now.
UPS options are not very tradable. I agree.
Yeah.
See, here's a great example of wide markets. I'll just put it up there. We know that if you're buying a strike in the money, selling a strike out of the money, just about 1-to-1 risk-reward ratio. This should be trading at $1. The mid price is 86 cents. If you don't know how to price options, you'd be thinking, why aren't I getting filled at 86 cents? When you really are, take a look at the put spread. You can't. The markets are 70, 80 cents there.
Yeah.
See here, now the mid price is closer to 94 cents, where you're closer to where you're going to get a fill. Even the S&P's down 3, volatility unchanged.
Yeah, I was hoping, I mean, you haven't got the vol crush yet.
No,
I thought maybe there would be a little bit.
SPY IV rank of 20 is on the board in my opinion. If you're looking to do something there, you certainly can. Arm hood, you want to take a look at those?
I just took off the palette, so I did like I like doing these 1/3 ratios. Like I did a crab trade, so I bought the 190 in December, sold 3 of the November 205s against it. I did it at like a $3 debit. So you kind of
$3.37
debit,
I believe.
And I just closed at a 441 credit. So I did that yesterday that's $100 out of that trade and overnight. But it was kind of a short vol play. A little bit of short delta to it too. I mean, you
had 18 short delta. You got Palantir down $6.
Yeah. Frees up some buying power too. Get back into that if we need to. So that one's off the table too.
You want to look at an SPX trade?
You ever thought you'd see a 1/3 calendarized trade on this show?
Not something that we would do. And a lot of people ask, because I like to do them. So you're following in my footsteps. Tom did not like to do those. I like 1/2s, and a lot of people 1/3s. A lot of people would ask, why don't you just sell the naked call or naked put? And you certainly could.
Yeah.
So my answer to them is, well, I'm long that 190 call like you are, and you're short junk above it. If we slowly go higher, I make money. Where if we slowly go higher and you just sell the naked call, you probably don't make money. And if we have a large move higher, one at the expected move, if you're just short calls, you're going to lose money. If you have this 1/2 or 3 on, you're probably going to make a little bit of money because that 190 call. It's just a slower moving vehicle than just being, one side or the other.
Yeah.
That's why I like to trade it. Volatility hanging in there, down 4 cents. Are you ready to go? What's your assumption? We'll look at a couple of trades here.
Yeah, I could use some trade ideas.
Let's see. Well, you just took a bunch off. Well, not a bunch off. You took off Palantir, AMD,
NVO. We added the new AMD.
You had your NASDAQ scalp also in there.
That one's up like 20 ticks. I'm going to hold that a little longer.
Very good, very good. Let's take a quick 90-second break and come back. We got more Tasty Live after this with, what's your assumption? 10 trades from you. Let's see what you guys are thinking.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex on tastytrade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at tastylive.
I'm like the Tupac of economists, going out on top. And will I ever really be gone? Say bye to Ben Bernanke. Cry your eyes out past the hanky. Gone from the Fed, but still looks swanky. Bye-bye, Chairman Ben Bernanke. Ben Bernanke, hardly knew ya. Ben Bernanke, glad we're through ya. Sayonara, Mr. Yankee. Closing bell tolls for Ben Bernanke. Now, say hello to Janet Yellen. New blood, maybe start some selling? All around the world like a market Magellan. Hello, Janet Yellen. Janet Yellen, Professor Shady. Janet Yellen, new chair lady. Welcome in the new Miss Yellen. Different from the old, there's no telling. And I'm out, like Tupac, in a peaceful transition.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with What's Your Assumption? Even the S&P's down 8, almost 9. About as low as I've seen them since we've been on the show. NASDAQ up 46, Russell up 5, Dow down 50, volatility unchanged at 1974. And you have a ding.
I'm adding another NASDAQ.
Buying a little NASDAQ.
Second one. Little tiny little Johnny, little something.
Understood. Bought them at 32. They're 50 bid right now. So you... Nice scoopy.
Please don't give me a how does daddy do it.
Say again?
Please don't give me a how does daddy do it.
What's your assumption? What's our first trade?
We got a couple from Reddit too, which will be fun.
Oh, beautiful.
Yeah,
beautiful.
peeps from Reddit.
Yeah.
Roberto, my man. CMG, bullish. December. Free money glitch.
Oof.
Fading Dr. Jim, selling at the money put. Well, I have long stock in CMG, and CMG has done nothing but go down.
Yeah, it's a skosh off of its lows. Let's just call it on its lows.
I'm at 39, and the stock is at 31.50.
Yeah, you stink.
I stink. I hate this position. I hate CMG. I hate everything about it. It's the worst. I mean, go to a local Mexican spot and get some good food. That's what I tell you, Roberto.
That's fair. So what are you going to do?
South
You're
side.
just going to not do
I
it
also
because you already
think-
have stock, right?
I already have stock, so I'm long here. I also think these options are just not.
They're not
the juice
tradable.
is
I mean,
not
they are
worth it.
tradable. I mean, they're 2-3 cents wide, but
What are you going to do? Sell the 30 strike puts for 75 cents?
yeah, exactly. Exactly. That's all you can do. Yeah.
Yeah.
They should almost have dollar wide strikes in here. It's a pig. You're right.
They just smash Volve. I'll just move.
They did.
Yeah.
They did just smash vol. SPX
Get on your
expected-
horses. I don't know what happened. Did we get a tweet? Did we get a taco? Is the China tariffs off the table? What do we got here?
You got almost 35 handles in your NASDAQ future, too, so good job, buddy.
Oh, you telling me to take one off here?
Even the S&P's up 50 cents.
All right, I'll take one off. There we go.
Good job out of you.
Cool. Nice.
Nice little scalpy, scoopy.
Next one.
Yep, we're not going to do anything.
So we're gonna pass
You already
CMG.
have that. We're pulling for you, though.
I'm with you.
Hood for earnings.
All right.
Neutral to slightly bullish here. What should I do? Hood up 71 cents. Off of its highs of around 150, off of its lows, recent lows of 120. Kind of mid-price here. What do you think?
So I did a crab trade in here yesterday, I believe. I did this, yesterday. So I'm long the December 145 call. I'm short 2 of the 155s against in the weekly. I did this at $8 and change. It's an expensive position because you're naked the extra call and you're doing this for a debit. So it is an expensive play. But this is one where, just like the MVO trade, if you're thinking it's inside and up or inside and down, this is kind of the way I would look at it. I don't know if I'm playing for this to explode higher. It's had quite the run. So I'm playing for an inside up move here. 145, 150-ish is kind of the perfect spot, which is right at the expected move on the upside. So that's how I'm doing it. If you want to get smaller and not use as much capital, you have kind of the same thinking, you could do like the 145 in December and sell like the 150 $55 in the November monthly. That puts you right at the expected move. You could even go to like the 160. You'd use that same $8 debit, get you about 20 to 30 long deltas here. Nasdaq's rallying 40 points. God,
you have long delta in there too right now, so we are pulling for you. You're pretty neutral, I guess. You're long the D's 45, short the 55.
All right, I'm out of the Nasdaq. And it took
good job out of you. So that was the first try. Well, whatever, however you want to look at it. Yes, you two tranches. You're out of both of them.
Yeah,
nice.
Yeah, little Johnny size for a couple shekels.
Staying engaged, staying profitable is all you can do.
So I'm with you, Josh, on the neutral / slightly bullish position here.
Beautiful.
Cool. Next one, please. Volatility getting smoked.
Volatility is coming in. / ES expected move was around $34 down to 31 now.
Yes. SPX neutral, Jack in Philly, 0 DT. Perfect setup for SPX Iron Condor today. VIX sitting near 20. It was premium nice and fat, and SPX didn't even move yesterday. What do you think of this, Pops?
Oof.
We haven't done one of these in a while.
No, we haven't. I was just looking at it. If you're looking at the 0 day, what they're looking at $20 wide.
Let's do a little $10 wide.
Okay, we could do that. And where are you going to go to? They're looking at 20 delta. That's 68.40.
Yeah,
50, something like that.
Which one are you? Oh, you're looking at ES.
Oh, I'm so sorry.
I was thinking
I should go into SPX.
SPX, the 67.45, 67.35. It trades at like $1.50, and then you do the 68.15, 68.25 on the upside.
Mm-hmm.
I think that's probably the route to go. And this marked 320 is what I got filled at. We'll try and close this for like what, 60 cents?
Yeah, you're 18 delta, 23 delta. You're a little bit of short delta on the whole thing. I filled at 320.
Well, I'm actually a little bit, a little tiny.
Yeah, I mean, you're neutral.
Yeah, neutral. As neutral, 1 or 2 deltas is about as good as you can get. All right, so I'm going to put in the GTC to close this. We'll call it 260.
Volatility collapsing today. You're going to be adjusting this trade. Mm-hmm.
Yeah.
Yeah, 260.
You get a little bit more of this vol crush, and it should be good. All right, so we're in on the 0 day SPX, Jack. Thank
Beautiful
you for that one. So
good job out of you.
And those are coming on the follow page as well.
Mm-hmm.
Next one, please. Next one, please.
Please, next one.
Please, more trades. E-minis up a little.
Next one, please. Next one. Target, bullish. There we go.
There we go.
Straightforward. I like a straightforward person. Miami. What are they going to do? Straightforward and simple. Sell the 80 put. East 19.
Okay.
Sell the 80 put.
Yeah, 221-ish. 22 delta, high IV.
Mm-hmm.
Avoid. Do they have earnings coming up here? On the 19th.
Target has earnings on the 19th. Yes, one of the last ones.
I mean, 80 would be new lows here, so I kind of like this.
Target has not gotten out of his own way these days.
I'm trying to. There's not a ton of volume here.
No, Target never does.
Nobody's looking at Target.
Markets
here.
can be a little.
No, they're 15 cents wide.
Yeah, you got to put in at your own price. Target down 9 cents.
217, and that was like 10 cents above what was the mid price at that point. But I was the bid.
Yeah, it's 210, 220 here.
But it was 203, 225 while I was working my order. So put your order in higher than the mid price, you might get filled there.
That's correct. But
I'm in. Target, 80 strike put. I like it. Little small, little nothing thing. INQ. Ooh. Oof. What is this stock doing? Up a little bit today. We took this to the short side. Down 30% from the top. This is Mike in DC. Don't think it drops much more. Jade Lizard, Skewed Strangle. What's the bats play here? Ooh. What do you think?
Let's take a look at the markets in IONQ. December markets here are about 20 cents wide. IONQ has been going a little bit lower. It's at the low end of its range. Like they said, down 30% from its top.
It has earnings after the close today.
Yeah, this would definitely be
which I think is a lack of earnings. I don't think any of these companies actually make any money or have really any sort of product. I think it's kind of a science experiment.
Markets are less than desirable here too, and there's a lot of call skew. So a Jade Lizard, when you have large call skew like this, I mean, look at the 55. The 50 puts are 5 and change. The 60s are almost $6. When you have large call skew like this, call spreads trade cheap. So I don't know if a Jade Lizard fits us right here, and I don't know if really anything fits us here. These markets.
I think these are, if you're going to get some froth taken out of the market, I think these are top of the bucket.
The expected move of $6 over the next 2 days or so. Yeah. I mean, if you wanted to buy a little stock, even a partial stock,
or do like 50 shares to one call.
Yeah. If you want to do something like that, you could do something like that.
Yeah.
But I think the markets are kind of crappy in the calls, so I would probably abstain.
I'm going to pass, Mike, but thank you.
The S&P's up 19. Volatility in by 45 cents.
Yeah. Next one, please. IBIT, neutral, December, the 5068, December strangle, Nick in Ann Arbor, IVR at 66. I am with you. I'm long, so that's my position. I'm long both IBIT and ETH. So I took some pain. I'm feeling that pain. I'm ready for more November to play out. If you're looking for a trade, I think if you don't have something on, this is a prime spot to put something on, but I'm already locked and loaded here.
Gotcha. Next one, please.
I like it.
You like the thinking?
Yes.
SOUN, I've never traded this. What is it?
Soundhound.
Ah, got you. It's been mentioned to us a few times.
Yeah,
another one that's come down from around 20-ish down to 15 off its lows of around 12 in the last couple of months. Got earnings. Do they mention that? Yep, bullish for earnings on November 6th. They do have earnings coming after the market closes tomorrow. What do you think here? Expected move of $2. Looking at November options, they're okay. They're tradable. They're tradable.
They're looking at the.
I just looked at November options just to see if they were tradable. The weekly options are tradable. December options get a little bit wider, but still tradable. I think it's on the board. I think it's a tradable product.
These kind of spook me.
Spook you in which way?
I don't think they. Like this isn't like a Target. Like Target, I'm comfortable with a short put. I see targets everywhere. These are kind of the, peripheral AI plays where, they've kind of had some little bit of froth to them. I think you play these like a diagonal spread where you want to participate in the upside, go for it. I don't know if I want to be long stock in Soundhound if it opens at $5.
Sure.
Like that's the sort of thing. Like this stock, the range is 5 to 25. So in the last 52 weeks, that's the high and low.
Got it.
If the stock opens at 5, I want nothing to do with this. I want to lose $100 on this trade. That's how I look at this.
Okay, so I've got something for you for a quick second here. Something that you don't usually look at. Now you can just buy the 14 calls. There's 70 delta. You're paying 50 cents over extrinsic value to the stock. Or you can do buy 2 of the 14 calls, take a Liz and Jenny trade here, and sell 1 of the 15 calls. It really is just stock substitution. It really is a 2-day play. I mean, it's it's a $2, whatever you pay for it, that's your risk to the downside, $2.27. You've got about a $2 expected move. So instead of paying that extra 50 cents to the downside, you could do something like this. If you get filled, you're probably going to get filled closer to 230, 231, because I think the markets are a little bit wide here. Yeah. But you could do that. Defined risk trade, 2-day play.
I like that.
It's a small risk reward here on a 50-50 shot. I know it says 45%, but it really is a small 50-50 shot. Stock's up 11 cents. You got
I did the 14, 15 and a half. So I'm selling.
Oh, okay.
Yeah, it's same thing. It's same.
It is the same.
It's $2.50. That's your max risk.
Right. You're basically paying 25 cents over extrinsic value. Nothing. For 2 days.
That takes out the tail risk. You're essentially buying the 14 strike put for 2.
Right. And you just got a little bit of an uptick, and that's why it's showing mid price a little bit higher at 258. Same exact trade. Pop is the same. Your delta is basically the same. 50-50 shot, defined risk.
Yep.
I like it.
Cool.
INTC.
From Michael on Reddit. Beautiful. Okay. Bullish, December, January, call diagonal. So you're selling the 45 in the December. You're buying the 40 in January. This is a longer duration here. Feel that the market is taking a pause before moving back up. So expect Intel to get back to around $40 in the coming weeks. Don't listen to the bears. Buy the dip.
INTC already up $1, which is a pretty good sized move, 2.5% move. So I hope you did this trade yesterday. What do you think about Intel on this move?
So I have the 35-40 strangle, so I'm short a little bit of volatility in December. I don't mind adding a small amount of long delta here, especially because of the duration that you have. So if you're buying the 40 call in January, it's $3.20. If you're selling the 45 against it, you do the whole package at like $2, a little bit under $2. It's a small shot to the upside. If my strangle plays out, which is basically neutral delta, this probably plays out well for me too, because it's so cheap. That call's probably going to hold some value. You're selling, $1.20-ish on the upside. This kind of adds to what my position is. It really neutralizes my whole position because my 40.
Very good. Very good. To the in by 50 cents at 19.20.
Oh, I just lost the internet.
What are you looking to do?
The 40-45. Did that go through?
I don't. Hey.
Oh, there we go. There we
Yep.
go. Yeah, I had a little kerfuffle here.
Yeah, it's called user error.
That's right. It's me.
I'm not going to hold it against you, though.
I'm going to try and get filled on this. It's about 10 cent wide on either side. All right, I'm in. 198. I like it.
Beautiful.
Very nice. Love these trades.
Gold selling off a little bit, up 17 after being up around 30-something. The market's catching a bid. For sure, bonds are down 24 ticks. New lows down there, 116.18, trading 116.20. Bitcoin still over 103, and Ethereum still over 33.50.
Meta.
Loose
Ventures on Reddit. It's giving us a couple of good ones.
I like it.
RSI is below 23 and premiums are decent. Long combo, anyone. Okay.
Yeah, Meta's been trying to, a lot of people trying to buy Meta here, buying it on this big dip. It continues to go lower after that big move down back on October 30th or so. It's well into that 634. What do you think here? I actually have a Meta trade on. I think I'm down around 50 cents on it that I put on October 30th with a bullish delta to it. What do you think about Meta? IV rank at 24.
I like the upside play.
I do too. Markets can be a little bit tricky in here too, although they only 15 cents wide. They seem to trade by appointment.
What about a little short putty? I know it's a big product. I know it's a big boy.
I already have long delta in there on a naked short put 1x2.
Yeah.
That I have on. So
all right.
I'm gonna abstain.
All right. We're with you.
We're with you.
And we're in this.
We're pulling for you. You're gonna get it at a better price than we did.
Yes.
So
yes.
Go for it.
I like it.
Next one, please. Lilly, bearish.
This stock has gone straight up.
$23. I hope you didn't do this yesterday. Just a week or so ago, the stock was $812. It's $930. Lilly has horrible markets in it to trade. $18, $20, $28, $31.
Yeah.
I would abstain from doing anything here. I think they're looking to do Nov Dece diagonal type spread, or maybe some sort of calendar spread. Good luck with your fills.
Yeah, it's going to be an expensive one too.
I abstain from this $900 stock.
Just to put context on it, so the diagonal is going to cost you about $2,000. If you do like a 40-20 type delta position, I don't hate the trade. I agree. I think it's a little expensive. Markets are a little wide, so I think it's a pass. I am in DraftKings, which is another one of my bags. That and CMG, I might be switching to FanDuel here.
Okay.
Because this is just sick of this.
Okay. All right. You're allowed.
So I'm with you long DraftKings as well.
Okay.
Which is not fun. Not enjoying that trade.
Aww.
Thank you guys. Thank you. Next one, please.
That's it. That's it. Look at you though. You did well.
Yeah. It was a good performance. We got 7 of 10.
Yeah, not bad.
That's pretty good. Yeah.
Oh, come on. That's
70%.
Standard deviation over standard deviation, depending on how you look at standard deviation. If you're looking at both sides of it, I think you did great here.
Thank you. Yes, I think this was good. I appreciate the clap that you guys gave me afterwards. Because
they're just redeeming themselves.
Yeah,
that's all.
That was warranted.
That's all. They're just trying to redeem themselves.
Very nice. Very nice.
All right, good job out of you. Good job out of us. Let's see what the market is doing. Well, good job out of the market too. Evening S&Ps 68.19, just about 5 handles off of their highs. The Sosnoff tweet worked again. You're up about 70 handles from that low if you were following on
Nobody does it better.
Up 22. NASDAQ up 100. Russell up 20. Dow up 18. Dow up 129. Volatility in by 62 cents. Back down to 1910. Bonds are down 22. Just a few ticks off of their lows. Bitcoin hanging in there, 103.4, up around 2.33%. Ethereum up around 4%. Gold is the one that sold off a little bit, still up half a percentage point, up 22, about $10 off its highs, well off of its lows by about $30-ish. Silver up 44 cents. Net gas down small. Corn, wheat, and soybeans, a little bit of a mixed bag of tricks with soybeans a little bit higher. Let's take a look at what's moving us higher. Lilly, we just talked about, up 21. MU up 15. Spot up 12. AVGO up 11. BE up 11. Carvana up 10. Google up 6. Oakley, I saw BE up there too. Let's see what's down right now. Netflix down 9. Palantir down 7.
Smashing vol right now.
Yes, it's all
3.5%.
Yeah, it's a big move in vol for sure. UNH down 3 and change. Market just caught itself a little bit of a bid. Let's take a quick 90-second break and come back. We got more Tasty Live after this with Skinny and Options Math with my man Jacob next. We'll be back in 90 seconds. It's Tasty Live.
Grow a strong community with Tasty Trade's referral program.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
I think I've always been interested in finance. I have a degree in management and I took a lot of heavy finance classes, and I've always loved it, but I've always done passive investing. And so as I went through life, I decided that I needed to have a bit more control over my finances. I started to dabble in the options world when I opened up a brokerage account in probably 4 different companies, and none of them worked really well in terms of education until I got to Tasty. And Tasty Live in particular, because of the educational background that they tie in every single day on how to learn how to trade options. It started with the Where Do I Start series. It's outstanding. Tasty Bites, market measures, from theory to practice. I don't think there's a show that I don't like, to be honest. That education piece is highly important. I found that Tasty offered that.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means? Time for a little bit more Tasty Live. That's right, with this man, Jacob in the house, the Skinny and Options Math. How are you, Jacob?
Good morning, Tony. I am well. How are the bats today?
The bats are well. The bats are well. We're giving you applause.
Quite an excited. That was an excited intro.
That was. They're very excited for.
That's Tony's true art.
That's right. I get excited for sure. For sure.
It's why it's important to have a Labrador on the show.
Wow.
Hey,
wow.
What's wrong with that?
Nothing.
That's not a dig.
No, he is.
Labradors are great.
He is a show dog. I mean, we've been told the Batistas are show dogs, so it's
No, we are not show dog quality.
No.
You're agility dogs. You can weave between the poles and go through.
I don't even know we're agility dogs.
What were the show dogs and?
It was a show dog and a not pedigree. What was it? Well, there was mutt, which I think we were.
These are Tom's classifications for the employees. In the
yeah. They weren't show dog quality.
Yes. So we were in the mutt category.
Yes.
I think there were
purebred. It was like a
purebred.
Purebred was mutt, purebred,
but
and then
way fewer health problems. It's really an important thing to keep in mind.
Yes.
You want a
healthier.
strong, healthy dog with some good mixed genetics.
Yeah. We're a lot healthier.
Yeah. It's like trading in multiple underlyings. You want your dog's parentage to have multiple lineages.
Of course. Yeah, you gotta have a mutt portfolio. You can't have a pedigree portfolio.
If you have a purebred portfolio, that's just unreasonable risk.
Yeah, you're screwed. Your beta is going to be all out of whack.
Perfect segue.
Yes, perfect. There we go. Good job out of you, Nick.
Graceful, ease on into it. Let's talk about beta today. So after yesterday's kind of tough market measure, today we're gonna.
Thank you, Jacob. Thank you for that. Thank you for the acknowledgement of that one. That was tough.
That was when on Monday afternoon came by. It's like, we're not having the meeting to go over tomorrow's material today.
I was on a flight
for them then.
Yes.
It's gonna be a tricky one.
I didn't know I was coming guns a blazing on the first day back, but
betas a blazing.
Yeah.
So let's talk about beta. So in a tremendous confusion for people who are literate in Greek, beta is a Greek letter, but is not an option Greek. Whereas the option Greeks are mostly Greek letters, although that one that gets called Vega, the third one down there, is actually, it is a Greek letter, but it's a Greek letter nu, which is the letter N, that it just looks kind of like a V. And this is how it got used for the Vega symbol, right? Derivative with respect to volatility. They want to call it Vega, even though that's not a Greek letter. And they found a Greek letter that looks like a V, but it's a nu. But anyway, all the other option Greeks are based on the idea of you take the options value, V, and you look at its rate of change with respect to something that it depends on, right? The time till expiration, or the spot price of the underlying, or the current volatility. And right, so that lets you get a fully theoretical idea about how those things are going to move. And if you have a model, you can compute exact values. Beta, on the other hand, is a Greek letter, but is not an option Greek. It doesn't relate to options directly at all, really. It's simply about underlyings, and it's the relationship between two underlyings is what it's trying to capture. And this means that it's sort of outside of almost all the models. There's no real models that like put forward we posit this is how much correlation two underlyings are supposed to have. It's almost always the other way, where like we look at the market, we check historical data, we try to measure correlations or relationships, but there's not really a theoretical grounded way to say, how much relation should there be between, SPY and Qs, or Apple and SPY have some relation because Apple makes up a big chunk of SPY, but then that's not the whole story at all. So this places outside of most models. It depends on empiricism to try to gauge it. And then as I point out, beta by default on the platform, and when we're talking about it, we're going to use SPY as our benchmark, but you can change that benchmark freely without affecting the theory, and in the platform very easily. It's sort of a click and select. If you're really into tech stocks, maybe you want to use Qs as your benchmark, because that's possibly more for you what the market is.
Yeah, and you could change that on the portfolio page on the top, like when you have the filters there. You'll see stock, options, futures, fixed income, working, closed, P&L, grouping, which is I typically group by symbol, but then the next one will be beta weight, and it's defaulted to SPY. If you click that gear, you can change what it beta weights to. Yeah.
And you can play with it. You can beta weight to really silly things and see what happens. What happens if you beta weight to TLT?
Yes, that I don't know who would want to do that, but yes, you could.
You wouldn't want to, but it's it helps you for people who are curious in the audience who want to explore what's going on. It can give you sort of a test case, right? Don't try to trade off of your TLT betas.
Yes, I don't think.
But you can look at it just to see how it affects things.
Yes,
right. To use a very low correlation, right? TLT is a sort of the canonical example of very low correlation underlying, and so it'll have very strange beta values. Why will it have strange beta values? Well, let's go forward one. We'll sort of see where those would come from. So what's happening here? The goal of beta, right? The purpose, is to try to anticipate how much any particular underlying is going to move if you have a $1 move in the market. So the rest of the Greeks are all defined with this partial differential notation, right? The curly D thing. But this is sort of a nonsense, right? This would offend a math teacher in the audience, because the price of an underlying is not a function of the price of SPY, and these derivatives are all supposed to be taken with response to functions like that. Instead, you think of them as sort of two different series that may or may not have relations. A common way to try to check for relations is what's called a linear regression, and what that does is it takes a bunch of data points, right? So here I've got a graph, it's got 5 points on it, and it finds there will necessarily be a single line that does what's called minimally squared error, mean squared error. So you look at how far off of the line all of the dots are, you square them all so that negatives count the same as positives, and also so that big differences are sort of penalized more. And then you look at all of the possible lines and you find the one that's least. And by you, I mean a computer.
If you can use it, if you can use a computer,
right.
So I could get it.
Be able to use the computer.
Yeah.
Yes. Right. And so then this gets you a function for a line, right, where the alpha plus beta times one of them is equal to alpha plus beta times the other one plus this error term, right, and then the whole algorithm tries to minimize that epsilon error term. this is sort of I think the most intuitive way to grasp why it does what it's claiming to do, right? Because this line does the best job that we can right now. It might be the case that no line does a very good job, right? These 5 data points are pretty linear, but if you have very low correlation underlying, if you put up TLT and SPY against each other, it's just sort of a cloud. You can find the best line, but the best line won't be very good. The equivalent way you can define it, though, which is sort of nicer mathematically for doing formulas, doesn't require you to fix a line or anything, is that you scale the correlation. Remember, correlation is always between -1 and 1, right? If you have 1, it means the two things always go up together and always go down together. If you have -1, it's the opposite. If you have 0, they're possibly independent, right? Independence implies zero correlation. Zero correlation does not imply independence. It's important to keep that in mind. But that you can find how they are, and then you just scale that number by the two volatilities, right? Up by the volatility of the underlying and down by the volatility of SPY, so that you get this idea of, right, how much SPY tends to move and how much, right, if you think of volatilities, how much SPY tends to move and how much the underlying tends to move, then that ratio tells you for a move in SPY, how much do you expect a move in the underlying? And then the correlation tells you sort of how strong that relationship is. And why do we do this?
That's my question. Why are we doing this?
Why are we doing this? We're doing this because what we want to do when we're we use delta a lot to sort of tell us our exposure to any particular underlying. But you can't, if you want to know sort of your whole portfolio's degree of risk, you can't just add those up, right? If you have 10 deltas in Tesla and 30 deltas in Apple, that doesn't make 40 deltas in anything.
Right.
Right, because one of them responds to changes in Tesla, one of them responds to changes in Apple. Those are entirely different things. Right. It's like you have different denominators. You can't add them up. Since beta swaps both those, right? So beta gives you the change in Tesla per change in SPY and the change in Apple per change in SPY. Right, those are two different beta levels. Then if you weight your deltas in Tesla by Tesla's beta and you weight your deltas in Apple by Apple's beta, then all of a sudden those are both in terms of changes in SPY, so you can add them up. And this is why on the platform, it tells you your total beta weighted deltas or beta deltas up at the top, because it's going through all of your underlyings, looking at your delta in each and finding the beta for each, a historical beta, right? Because beta depends on historical data, there's always a little bit of question about like how far back do you look when you're determining a beta value. But it takes a beta value for each, your deltas in each, and sums them all up and tells you sort of your total market exposure, right? This is sort of what you think your entire portfolio to move by for a small move in SPY, which is a good way to try to judge your total risk, but it can hide an important distinction between your underlyings, and that'll be on the next slide. What beta hides? This graph's a little bit hard to make out. So there's a sort of a blue line that sort of goes along near the bottom, an orange line that follows it pretty closely, but is pretty muted, and then this green line that's very jagged and wiggly. And because it's correlation scaled by volatility, right, with the denominator of the SPY volatility, that's going to be the same between the two. But if you look at the betas between these two, they're going to be equal. That's how I constructed them. Right, one of them is a high volatility, low correlation underlying, this green one, and one of them is a high correlation, low volatility, the orange one. And these wind up having the exact same beta, so that if you have the same deltas in each of them, your beta delta is going to come out the same. But clearly, deltas in the green one are more risky than deltas in the orange one. Right, it's just that they're not more risky relative to SPY because the motions in our green underlying are largely independent of SPY. They don't notice did SPY go up or SPY go down. And because of that, even if you're sort of being mindful of your beta deltas, it's important to at least look for your underlyings. You can check either the correlation to SPY or the IV to sort of help you distinguish them into these two camps of these. What is beta not telling you? Beta might look really strong, but that's because the underlying is incredibly high volatility, even though its relationship to SPY is very low. Or it could be because the underlying is almost exactly paired with SPY, but its volatility is muted, that it doesn't move around that much. And it's important to be able to try to distinguish these. They won't show up in your total beta deltas. It, I think, matters a lot when you're trying to pick your underlyings, is to be mindful either of their particular IV or their correlation to beta. And keep in mind that if their IV is really high, then their beta is probably sort of underreporting their degree of risk, because it's saying that's their risk relative to SPY. But if their IV is really high, then they've got their own internal low correlation chunk to how much they're going to move around, and it's important to keep in mind of that.
They got a mind of their own.
They got a mind of their own, right? And this is sort of what you saw on yesterday's market measure was that in 2020, when the correlations got had a whole resettling, these historical beta values stopped being really good predictors of upcoming things. When the market's being very regular and normal, you can use your weighted deltas to have a very good anticipation for what's going to happen to you. But when things get wacky or weird, it becomes a less useful predictor, which is sort of, it's not a good sign for a predictor. It's a necessity for you remaining attentive. You can't check your beta deltas, see that they look good, and walk away from your portfolio. You should look a little bit more in depth at your positions. See sort of how much correlation your various underlyings have, or alternatively, how much volatility each of them has. Yeah.
All common sense, good stuff.
Yeah. That's the goal here. Beta is the trader's most important non-Greek letter, giving it the best guess for how an underlying will move, given a move in the SPY. To the mathematician's delight, it has equivalent definitions. This is one of the best things for mathematicians. If you have two things that seem like they're different terms, but they turn out to be exactly equal or equivalent definitions, this means that they are, on a deep level, the same thing. And this is, worth pondering, and you can switch freely back and forth between the two. It's great for theory, if not for practice. Because beta can mask meaningful distinctions between underlyings. If you supplement beta by considering and checking either the correlation or the IV, it can help you anticipate how strongly you should put your faith in those beta values. And then lastly, it's important to remain attentive even when your beta delta levels look good. Correlations are not constant over time and must be viewed with suspicion, especially after major market events. So, yesterday was just some local elections. The New York one was maybe a big deal, but mostly they're not that impactful. But after the presidential elections, you sort of want to reevaluate where you're at in terms of each. You possibly want to go through each underlying separately rather than trusting to each one's beta delta, because you don't necessarily have the same faith in correlations going forwards after a big change like that.
Very good, my friend. Good job out of you talking about beta. Go ahead.
No, I like it.
No,
I think that was perfect.
Good job. Good job, Jacob. I'm going to take a quick 90-second break and come back. We got more Tasty Live after this. You know what comes up next? Ooh, the trade desk. I think we got Quentin, we got Ryan. We'll be back in 90 seconds. Stay pale in comparison to you, Jacob, but we're going to bring them on anyway.
No, I'm pale.
Yes, Jacob, you are pale. You are pale for sure. We're going to take a quick 90
An
seconds.
Oreo we got going on here.
Yes, we do have an Oreo going on.
Some swarthy Batistas around me.
We'll be back in 90 seconds. Tasty Live. We've gone off the rails.
When the market moves, traders need to move faster. When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right. We've got this man. Yeah, it's right from the trade desk, my friend Quentin. How are you, sir?
Fellas, doing well. How's it going?
Everybody gets a clap. Everybody gets a clap from me.
Thank you very much. Thank you very much, fellas. How you doing? Markets are moving today.
Markets are moving today. Volatility is moving. It's down over 3%. Russell's the strongest of the group. Big move overnight last night.
Yeah.
I'm sure the team got some phone calls last night with the movement. Movement in cryptocurrencies all over the place too. So
yeah, markets are going, and we're seeing some two-sided action as well. You know, big down move yesterday, especially overnight into the morning. and then went up a little bit from there. And then today, got some down movement in the morning, and then up today.
Yes.
And so, markets are moving, two-sided action, fun, exciting stuff going on.
Most definitely.
Yeah. This is a trader's market. It's been like this for all year, basically.
It's been a trader's market.
Yes. You're getting big moves. A lot of single name. The moves in single names are much, and this goes to the beta segment we had with Jacob. Those moves have been much greater than what you're seeing in the ETFs, the market as a whole. A market's up 1/3%. It seems like it's kind of an inside day, and then you look at AVGO up 3.5%.
Yeah.
That's the sort of like market that you're kind of dealing with here. It's been very much bigger moves underneath the surface than what the markets are showing. And it's like that to the downside too. I mean, you got the Palantirs down 15-20% after earnings. And you feel some pain on those trades. So
Yeah, and we'll see a lot of when the individual stocks are moving more, we'll see a lot of the clients transition to that, lighten up on the ETF index positions and say, the volatility is really in some of these individual names. Rather than just the indexes, with the lower IV ranks sometimes. They've been staying bid for a little bit. But as the individual names get more, bigger moves, higher implied volatility, that's where we'll see a lot of our customers transition to make more core positions out of those, while still staying small, but more core positions out of those, rather than just your, SPY, QQQ, IWM, things like that.
Yeah.
Very nice. Good job out of you. Good job out of the team.
Yeah, thank you very much. Let's get into...
Where's everybody been hanging? Have you gotten any obscure stocks that you've been getting phone calls about or anything like that?
Yes, actually. We'll get a lot of people calling about the the metals, the rare earth metals.
Oh, MP.
We'll get things I forget some of the symbols off my head, but some of those stocks.
MP's one of them. Nick just
and
mentioned.
The platinum or the palladium.
PALL.
Palladium.
That's palladium.
Yeah, palladium. Yeah. Some of the rare earth metals. A couple of weeks ago, we saw some big up moves in those. I think they're starting to come down from their highs. But what go up must come down.
Yeah, they've kind of come off a little.
Yeah, gravity taking effect on the rare earth metals. But that's that's the more obscure things. That's what we're seeing. I mean, of course, the big tech stocks, but also people trying to take some shots, both ways actually. We see customers, with FOMO trying to see the up move, but then also as the up move was happening, we're seeing some customers want to get short. All right, this up move's a little overextended, right? Which they, seem to be right as of late, but probably was feeling some pain as well during that.
Sure.
It can make success both ways on those trades. And it's sort of when it comes to those stocks, it can be more about being right than, some of the strategic measures. But that's why, you just stay small instead.
Yeah, that's the whole key here, right? I mean, if you stay small, you can almost do anything.
Yeah, that's true.
I mean, it's so simple in its, theory, but it's so hard for people to comprehend because you always think about go big and go home kind of thing. How much can I make on this trade?
Trade once, trade huge.
Is that trade once, trade huge?
Okay.
Yeah.
Sure. Bet it all on black.
Bet it all on black.
Yeah, why not?
When you go to the casino, start the night out. I'm watching this new show, Black Rabbit. Pretty interesting.
Great.
Loves that one.
I've seen it all.
Oh,
awesome.
yeah.
I have a friend that he doesn't have a problem anymore, but had a little bit of a gambling problem. Talked to some people and figured his things out. But that was his move every time we went to the casino. The first thing he did, and it determined how he was going to bet for the rest of the night.
So if he had $1,000, just to use round numbers, he'd bet $500
on black. He would just go in there, go $500 on black.
50,
first roll,
shot, a little bit less.
First roll, and it dictated how he was going to gamble for the rest of the night.
So if he lost, he would gamble smaller?
Yeah, he just knew that he was not going to have it wasn't
mojo wasn't
the
there.
Mojo wasn't there for
because
the
of
night.
that one event.
So he wasn't going to push it. He was one of those guys.
No wonder you said he had a problem.
He had the funny thing is that those sort of people when you're with them, they always are winning. And he is somebody where every time it was he's leaving with, a lot. And it was you are like, you got a horseshoe up your tuchus somewhere. And then, you find out that, when he was by himself doing other things.
Didn't do so good.
Didn't do too well. But that was his thing. Was just one time on black, a significant part of the bankroll, and that kind of dictated how the rest of the day would go. So for you, don't do that. I would say don't do that.
Don't do that. Don't
it leads to dark
Yeah,
places and long
gotcha.
nights. Yes.
Like if it works, it's great. But if it doesn't,
I mean, and then not everything in life.
Yeah.
Yeah.
I mean,
exactly. Yeah.
Well, down the line, you start being in like shady poker rooms in basements with a bunch of Chicago cops. And things don't.
Before you know it, everybody's packing except you.
Yeah. Things don't get. They don't turn good.
Only bad things come from that.
Yes.
Yeah. It can be tough. All right, let's get to some business here. Top 20 symbols going through the system and their IVRs. Yes. We've got number 1 AMD 36, Palantir 17, Tesla 23, Nvidia 23, Meta 23. All right. That's kind of like betting on black right there. They're all 23. All right. Watch it. Number 6, iBit 57, Amazon 17, Netflix 20, GLD 38, SMCI 13, HIMS 16, Micron 52, Robinhood 32, NVO 63, Intel 35, Rivian 32, TQQQ 28, Google 25, Apple 13, and TLT 3. What's this NVO? Do they have earnings or like some sort of product?
Novo Nordisk. The jab. the skinny shot.
Okay, gotcha.
Yeah.
Gotcha.
Yeah, they're one of them. Eli Lilly, another one, obviously.
Yes.
Yeah, right.
But yes.
Okay.
Yeah.
Gotcha. Well, thank you very much, fellas. The customers, they need some care. All right. Gotta get back to work. It's a busy
Awesome.
desk
Thank
out
you so
there.
much for coming on the show. Appreciate
All
it.
right.
Back to
Thank
work
you,
for you.
fellas.
Who's our next trade desk person?
Yes.
That's right, Ryan.
All right, get the belt out.
How are you, Ryan?
Well, as a crypto investor, I'm not doing very well right now.
Oh, come on. This is par for the course.
I'm good, guys. We're going through this together. I haven't even looked at prices. I don't know what you're talking about.
104K
back
right
to
now.
104. Okay, all right. You feel good about 100 holding?
Was that like, do you get in like the fetal position like late at night? You're like 99, 99. It can't be it. It can't be it.
So more. He doesn't get in the fetal position, all right? He has a baby. He has no time for that, okay? All right, that's right. He's watching the baby in the fetal position. I thought about you last night because it was kind of the overnight move to 100,000 on Bitcoin. You talked about it last week when you were on the show, maybe earlier this week, how you get those exaggerated moves over the weekend or at least, nighttime when things are a little bit, kind of less liquid. You got that last night. That was actually the time when Tom called me. Talking about the market, the S&P's down 45. That coupled with your thought about the kind of weak liquidity market that we have, I thought it was all a BS move. What do you think? I mean, it came to fruition now. I mean, I tweeted it out. It doesn't mean anything. I'm not trying to pat myself on the back here, but I was just taking that, knowing that it's just something to make you push the button as opposed to really having any knowledge to it. But please try to validate my thinking for me.
Well, I think first and foremost, you have one of the
because I stole it from you.
Well, you have one of the most. First of all, you have one of the most powerful signals in the market. When Tom's telling you this is crashing,
it's when he gives you a day one. We missed a day
for
one.
that.
There's the Kramer indicator, right?
Yes.
I do miss that.
Is it there? I don't know. No, I kid, but yeah, I mean, you are going to at times, and you see this, and I think the more time that you spend in the market, you can almost pinpoint when after the equity market close, you're going to see some weakness, you see some continuation there, you get the auto liquidations. As we know, going back to the beginning of the month, there's a lot of leverage that was built up in the system. There's also tighter liquidity conditions right now. I mean, just think about that broadly as the government's shut down.
Yeah.
So that exaggerates some of the move here. I don't think this is fundamental in nature. More so just market structure. And yeah, I think you've got to feel pretty good that you found buyers here and you've moved back above 100,000, that big psychological level.
I don't think it's over though. I mean, although you do have volatility.
Yeah, but that's the herd sees 100 and they're like, oh, this is going to zero.
Oh, you could push. You could push, but you could see 95 soon.
Right.
But I think short term here, if you came in and you bought the dip, you feel a lot better about you're holding on to 100.
Yeah.
You're probably, maybe there's a little bit more to go.
Yeah.
But it's bearish right now, short term.
Sure. But I kind of meant, we talked about this a little bit this morning, in that all the, for all the froth talk and, the Twitter sentiment of a 2 or 3 point down move, 2 or 3% down move in the equity markets as a whole, and everybody's like, asking why we're crashing. Bitcoin has had the 20% pullback. Like when you look at markets and you say, okay, everything's a little frothy here. Bitcoin had its 20% move from high to low. It's gone from 125 to under 100. I mean, that's your quote unquote
significant move.
That's a big move. That's your correction. That's your, like bear market, right? They say if a stock's down 20%, it's a bear market. It's in bear market territory. Like it's there. Equities have not, seen that same sort of move. And so, when you talk about kind of the froth and the leverage coming out of things, crypto has kind of had that moment recently.
Oh, absolutely. And I think it explains some of the volatility for sure. I mean, 20 billion in liquidations, estimated liquidations going back at the beginning of October, another 1.3 yesterday. So that kind of takes down any of that fuel that could see that bounce back, right? This money is just getting taken out. That said, on the other side of it right now, from what I've seen, there's a ton of big perpetual short positions that have been built up. So the volatility works two ways in crypto, of course. If you start to see this trade and hold above, let's call it about where we are right now, 103, the levels that just instantly just blow out all the shorts up to 120 again could see a bounce back. Not saying that's what's going to happen, but I think what is fun about crypto, what is certainly unique about it in some ways, is just how quickly this thing moves. We forget about how small the asset class is, generally speaking.
Yeah.
And we always talk about how, it's volatile. But then it is volatile, and it's like, oh, that's what it.
Yeah, that's what we mean.
It is who we thought they were, kind of thing.
Yeah. So I think to anybody looking to try to buy dips, you have to keep that in mind too.
Yeah.
Could this bounce back up to 120? Sure. Could it trade down into the mid 80s? Sure. It might not stay there, but I think if you're looking at some levels where even if I'm going to put some orders in, let's just see. Put some sell orders in at 120, put some bids in at 90. I don't know, just throwing out numbers, but you might get filled.
Yeah, and it might be a split second. Like a lot of these moves, you get these kind of auto liquidations, and the price, the low is one tick. Like it does not stay there, bounce right back up, and that's just a function of liquidity. And again, I think to the point you're making of the market still being relatively small. I know we look at 100K Bitcoin and say that's a big number, but the market itself is relatively small. I mean, you're talking about something that's the size of what, Nvidia, like
$3 trillion market cap for the whole asset class,
for the whole thing, for everything. So I mean, Apple moves $5 and nobody bats an eye.
Sure.
That's what this move in Bitcoin is in terms of like actual notional value.
Yeah. I mean, look, these are the sorts of corrections that you often get. I'm still bullish. I think structurally you're still in that environment, but you do get these 20 to 30% pullbacks. If that is something bigger, then I do think you have to ask what's behind it, right? There's risk in this system. You have rehypothecated positions in DeFi. There's collateral that's leveraged for sure, and it's looped in some ways. But how big is that one? Right, we're not talking about an FTX. So we have some things to kind of point to understand what could break this market. Where would you see forced selling? So maybe there's something like that. But I think generally speaking, if you're playing for something bigger than a 20 to 30% pullback on Bitcoin, what's the driver there? Like what takes you down? Aside from maybe there's just a lot of leverage, but we just talked about a lot of that. I mean, that all blew up.
Yeah.
So what's the another 25% down, or what takes this thing to 50,000, I guess? And that's where it's like, all right, I'm probably content buying underneath 100 if I'm looking to get in longer term.
You're just talking about and we don't think Apple's going to go to 100, right?
No, not unless it splits.
Yeah, but it's kind of that same sort of idea of like.
But it can. I mean,
it could. Yes,
we don't play for that. We wouldn't think that. That would be a silly statement to make.
Yes.
With its implied volatility now, Bitcoin's implied volatility can be a different animal.
Yes.
Than an Apple. So I mean, Apple's a dividend-paying stock, a behemoth of a stock. Bitcoin pales in comparison. To compare the two is a little. you're making, a good analogy, but you're making a far-fetched analogy.
Oh, totally. Yes. Yeah. Bitcoin's implied vol is probably trading closer to, it's at 47% right now.
Right.
Yeah. I'll ask you too, because we were kind of talking about MicroStrategy this morning, and it's traditionally been kind of the high vol way to play Bitcoin. And right now with it at lows, you have a lot of the kind of spin-off liquidity things that have kind of dulled its volatility. But are you looking at those sort of proxy plays, like even a Coinbase or something like that, as a more leveraged way to get long Bitcoin?
Absolutely. This is how I'm structured right now. I own a bunch of spot, tiny amount, really. Own spot.
Well, a bunch is relative.
Yeah,
I mean, everybody's one investor's.
Let me
for it,
rephrase that. How my portfolio is weighted. Okay. Biggest weighting, highest weighting would be in spot.
Yes.
And then I have a bunch of call options and things like ETH, IBIT, lotto tickets in some cases, but this is a market, at least in my experience, where you want to have a couple lotto tickets in crypto.
Yeah, the convexity is.
And then you want to sprinkle on that final, cherry on top for leverage. Go as far out as you really can in MSTR calls.
And it's just a vol play.
It's a vol play, but it's a delta play. But you're playing for the
gamma,
as you talk about the God candle.
Yes.
Right. That day that is up or down 20%.
Volatility explodes.
That's kind of what you're playing for. That's not priced into the market right now. But again, it's a lotto ticket. But that's how I think about structuring these positions in terms of volatility. It's the same thing with gold and gold miners and then junior miners, right? So we've got Bitcoin, we've got the crypto companies or the miners, and then we've got some of these other more levered vehicles.
Yeah.
And then you can get the leverage on top of the levered vehicles via the derivatives.
Yes.
So of course, I've got
leverage on leverage.
Yeah.
How far out do you go? On a MicroStrategy, do you go real far out and real tail, or do you go to I was mentioning somewhere in January, a January 300 strike call or 350, something between $500 and $1,500. Those options can 3 or 4x on a $10,000 move in Bitcoin, assuming you get that same sort of $40, $50 move in a MicroStrategy. Do you go to a January, or do you go to next year, 2027?
I mean, to some extent, I think you have to think about it the same way you would in terms of your timeline for just Bitcoin price action.
Yeah.
So, okay, do we rally into year end? Sure. Then put your position on in January, but also, run the numbers and understand, am I buying something that's really expensive? Even if I think this is going to happen, do I spread it off? How do you, think about cost basis reduction? So yeah, I look at it that way, but I also believe you got to be a little crazy.
I agree.
I also think that you can go in and knowing that you have a 1% chance, right? But you've got to go in there, and I like to carry a little bit of 100-point wide, 1,000 strike and up MSTR 1 month out. Now, 1,000 strike MSTR is $400,000 Bitcoin. That's extremely unlikely.
Yeah.
But there are a couple situations or things that could possibly in some reality happen that you would want to just have that thing on where I paid $10 for it, 10 cents, or I can do it 10 times for $100, right? I think you want to just carry that, knowing that it's a negative cost to carry, but whatever, make up for it in another trade.
Yeah.
Because if the Chinese come out and say we're going to buy 1 million Bitcoin for a reserve, it's going to 400,000.
Oh no.
Oh my God, I love it.
So I just like to have a little bit of crazy in my portfolio.
I think I mean. That's you're taking the tail risk, and I like that, the upside tail. But I think to the point,
it's people buy lotto tickets.
You scratch off.
I got $5 in this trade.
Yeah. I think the point of just where volatility is right now and the price of Bitcoin where it is right now, there is that upside play is really, really cheap right now relative to what it has been. And so I think that's the point you're kind of making, is that these cheap upside shots, wherever, if you're playing for the super tail or just a move back to highs, they're relatively cheap right now. And as an asymmetric bet, it's interesting right now.
Oh, absolutely. I mean, think about a couple of weeks ago, we talked about the $130,000 price in Bitcoin is about the 75 strike in IBIT go out to November, and I was talking about you can buy them for 40 cents, right? Well, you can buy them for 10 cents now.
Yeah.
So to your point, that got a lot cheaper right? Volatility hasn't really exploded that much, even on this downside move. And I think if you really want to play for that, which it's possible, I mean, look at the delta of the option. It's not a high probability, but we went from 126 to 98. Could you go back from 98 to 30 in the same amount of time, like 130 in the same amount of time? Yeah, I think it's feasible. So if you want to carry some of that or spread it off, you could do that too. But yeah,
a lot of people are thinking you away. I mean, MSTR calls over puts right now are 5-1. So
that with IBIT as well.
Yeah. And IBIT was one of the leading option volume trades yesterday, which is rare to get that from a crypto.
But the same thing would occur if there was a 30% down move in the market or a 20% down move in the market. Like people would be grabbing TQQQ. It's on our list every single day. It's the same thing.
Yeah, the interesting thing about this is there's not really downside vol to sell, where typically you'd come in then in the S&P and you'd want to sell those really rich puts. What I say, vol it's like 47.
Yeah, and the skew is all...
It went down 25%, and the volatility didn't really change.
Yeah.
Now, I'm going to bring us back to reality here. I think we're in a trader's market still, so I think you're going to get plenty.
I think if you want
to of these,
you trade, you buy those calls, you buy those MSTR calls.
And if you want more dose of reality, you can come to Austin this weekend on Friday, November 7th.
And nobody sells 50-cent puts like Tom Sosnoff.
No, I make him do live trades. I make him take a lot more risk than that. We're going to give you at Anton's Nightclub. Antone, sorry. Bring your own bottle. It's BYOB. Friday, November.
It's also 8 in.
Professional time.
Yeah.
November 7th, this Friday. Doors open at 8. Show starts at 9. Doors close at 11, but from 10 to 11 and from 8 to 9, we're in the audience talking to you. We would love to see you. Still got seats available. Go to tastylive.com/events. I'd love to see you. Ryan, can I bid you adieu? E-mini S&Ps are up 20. NASDAQ's up 118. Volatility 19, off its lows of 1885, well off its highs last night of 2065. I don't think we'll see that today, but I think you'll see volatility close over this 19 handle today. I think you get a little bit of back and forth action here. We'll take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. A peace.
Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. A wacky and wild Wednesday on the SIBO floor, Jenny Andrews.
It is. It's a busy day. We have SPOOs up 22. There's a lot of commotion on the floor right now. It's been a crazy week.
I was on last call with Bat yesterday, and I said, "Can AMD save the market?" And he said, "I don't think so. I think it might have saved the market." I'm just kidding. AMD was down 5% after hours last night.
It's up $1.
$1 is not saving the market.
No, SPOOs are up 21, but they've been bouncing around. I think when I walked on the floor, they were only up 10. We've seen them, I don't know, in this range, up 10, up 25, up 12. Like it's a pretty tight range. For those of you in the zero DTEs, we're all out already.
I wanted to have a discussion with Tony last night on last call, but I couldn't get a word in edgewise about it doesn't have to be an up day to get out of these zero DTEs.
Yeah.
Even on those really bad down days, we put them on and we got out.
Hey, I put mine on at 9:03. I sold the put side, I sold the call side separately, and then two different GTCs. And by the time we sat down in these chairs at 9:30, they were just about off. Oh, busy.
I don't know what's happening, but no idea. I wish I was a little bit farther in the pit. Maybe Matthew can move our set back a little bit tomorrow so we can find out. I did fail on my mission, by the way. I'm sorry. I meant to go venture into the SPX pit.
Into the VIX pit.
I was having some technical issues, but today is VIXpiration.
Why don't we go on the platform?
Let's check it out.
VIX right now is trading 1786, but when Liz said VIXpiration, the VIX expired in the morning. There was an AM settlement, and that is VRO.
VRO. This was told to us by some Taiwanese source last night, Jenny.
1917 was the morning settlement price. So, kind of like at the end of the month with SPX, you could look at SET to see what the settlement price was, or the morning. That's on the morning expiration for SET.
Yeah, that's SET.
VRO is the VIX morning settlement price.
Okay, do me a favor and go to the trade page, because the old trader trick to find out where the VIX is trading, because the VIX is a different animal, is you look at where the calls and the puts are the same price.
So here, this November 5th 0-day AM. That's the one that settled to that VRO price. They're to the VRO price. If you're wondering where VIX is in the 13-day, I know the spot price right here is 1789.
It's gonna be a little higher.
It's 19.
I'd say like 1879.
No, I think it's even because look, the 19 calls are almost $1.48, and the 19 puts are $1.40. It's over 19.
I can't see that far.
Yeah, it's over 19. The 13 days pricing at over 19.
So this is the old trader trick. I was talking about this on the show with Tony yesterday. Old traders only need the option chain to tell you where the VIX is.
Yeah, right.
That's all you need.
That's all
you just
we
need the option chain. So wherever the calls and the puts are the same price. Now, with our standardized option, you can see where that line is. That's where it's trading, where the at the money is, but that is not true of the VIX.
But here, I could go to like /VX, and you've got VX, VXF, VXG. So you have the different symbols here. So here, look at this. This is VXF 21.
Dun dun dun.
Dun, dun, dun. And if I'm like, oh, what's F? I think I could just go to ES and see like where does F take us to? Is it all the same? Is it all the same? You know what I mean?
Are you in ES?
Like if I go to ES.
No, you have to, like every time it changes colors, you see where the new last print is? All those are the one. And then scroll down. You see where it switches? That's where the next one is.
So then we've got H.
And you can see the last print. So H, see the last print at 60 something there? And then it switches to the next print, then the next print. So that's the last, and they stay in those alphabet ranges.
Here's my question. Here's my question for you. Is H, if H for ES is December through March, and then March goes to M, and then U is like, is it always the same for all the different futures?
I don't know what you're asking.
Like, is H?
No, they're all different, Jenny.
Is H December through March for all the futures?
I think you are asking the wrong person. I suggest you put a pin in this until TP comes on Monday with you, because he's going to be on Monday's show, because I will not. Taking a birthday day off.
Because I thought that like H was this period of time, G was this period of time. Or
I love you thinking. Let's go to the expert on Monday.
I don't know. I'll ask him. We better write this down, because if I don't write it down, we don't remember. We can't remember. We were looking at a trade we had in here.
You know what? I'll put it on Twitter for you to ask TP on Monday.
All right, and I'm gonna do one check. I'll do one other check. So here, if we have H that's going December through March, I'm gonna go to another. Give me another future. Give me something else.
I don't know. Go to the NQ.
NQ.
Just go to the next one in the list.
And then we've got H, NQH, December through March, same H.
I don't know what you're trying to accomplish here.
I was trying to see, like, so if I go to VXH to see what is pricing December through March, I go to VXH.
You're not seeing them on the volatility future sheet is what you're trying to say. You're trying to correlate E-mini S&Ps.
Right, like the time frame. When we pulled up that one VIX and it was like VX.
I didn't know where you were going with this.
And I was trying to see the time frame. So if I go to VXH and it's 2185, we're thinking that's December through March.
Yes.
That's what I was trying to look at, the time frame.
I don't know, but the TP will be able to help you with that.
Yeah, no, I think I got to figure it out.
Good job.
I think I got to figure it out. Okay, breaking news.
What's your breaking news?
We are going to Texas today.
We are leaving for Texas tonight. Yes, we are, for At Work by 11. Austin, Texas, here we come. I got a cowboy hat and cowboy boots. I'm packing for 2 separate cities, even bringing boots, and I'm only bringing a carry-on.
And a hat.
And I'm only bringing a carry-on, Jenny Andrews.
Cowboy hat that
Please tell me you're not checking. You're going to be there for one night.
I'm all set. One little carry-on, and it's pretty small. You'll see. I have a new one. I used to have a nice little tastytrade carry-on. It broke.
So you downsized your carry-on? I know why you downsized, because you check every time.
I don't know. I didn't bring my tape measure. I just went to the store, went to the Samsonite store, bought a carry-on, and I didn't measure it. And when I got home, I thought, this is smaller than
my
last.
You got to see my fancy carry-on I just got for my birthday.
Really?
Oh, yeah, super fancy. It's a Noble, N-O-B-L. This show is sponsored by Noble. I'm just kidding. I'm trying to get a cream one as well. But it's red on. I have a red bag with a red thing.
Nice.
It holds it's like the phone can sit on there. It's got its own little thing. It holds my laptop in it. It's really good.
And that was a birthday gift.
It's a birthday gift. And the wheels spin very nicely.
Love it.
Yeah, love it.
Love it.
You're going to see it.
Oh my gosh, can't wait. But yeah, so At Work by 11, if people did not sign up yet and you're in the Austin area, we can see it right here. You can sign up at tastylive /events. I know it's full, but we do always have people, we always have some no-shows.
And I'm not trying to say it's a star-studded cast because we're going, but it's a star-studded cast because everybody else is going to be there. It's out of the bag. I can confirm this. I think you let it out of the bag. Frank the Great will be there. Jeff, your nephew's going to Austin with us.
Yeah. We're leaving for Texas.
We'll take a family photo with him.
And Frank is coming with us.
Yeah.
So it's going to be fun. It's going to be lots of fun. You can find me poolside. I'll be poolside all day tomorrow.
I will not. I'm going to wander around Texas, maybe get some barbecue, get my nails done.
85 and sunny.
Yeah.
I hope you packed a bathing suit.
I'm going to Florida after that, so I've got it for Florida, not for Texas.
So, super excited for our trip to Austin, but we will be on this afternoon for last call. And some other scheduling news is that tomorrow, these seats here in the SPX pit won't be empty.
No, immediately following our show, we're gonna be filming from our hotel rooms in Austin. But after our show tomorrow, we have got Options Trading Concepts Live. Nick and Jamal and Mike.
Yeah,
Jamal and Mike Butler. You have to pause in between Mike and Butler, because there was one time when Jenny kept saying Mike Butler, Mike Butler, Mike Butler, Mike Butler, and I got so many emails being like, Jenny has a butler? Because they thought she kept saying my butler.
My butler. Mike Butler. He'll be on with Jamal every Thursday. They're going to be here live from the pit.
Butler.
It's going to be fun.
Yeah,
I hope the guys treat them well.
I do too. They got trading jackets. They're trying to be like, listen, Jenny, we got identical trading jackets. Maybe the four of us can wear them all one day out. Remember when the floor traders, and I feel bad that I'm making fun of them right now, but you remember when we were really on the floor as traders, and like those people, they'd go out in their jackets, like to the bars.
But just to the bars here. So there was a bar called Cactus right across the street. Everyone would go to Cactus in their jackets because you would just like walk out and go.
Oh,
maybe.
No, I've been all the way as far as like the Merc, and those Merc traders always wear their jackets, and you're just like, oh, please.
I mean, you would wear them out to like lunch in between the trading floor, but we had our jacket people. I always turned my jacket in.
You were a normal person. Those guys thought it was like cool to pick up chicks in their trading jacket.
I'm embarrassed.
And I can say this about them.
I don't want to say embarrassed, but like I don't want to be. I think it's weird to wear these. Like if I have to run to the grocery store on my way home, I take my jacket off and leave it in the car.
Once again, you're normal.
Or to the UPS store. I take it off.
Normal. Well, you're not normal, but normal in that capacity.
Normal enough, I guess. Okay, we are also taking live tweets today. Send us tweets, include the hashtag LAZJNY. We've got a busy Twitter community already.
Would you like to jump into Twitter, or would you like to do something else first? You're guiding today.
No, I was just, should go ahead and pop into Twitter for a minute. I mentioned a lot of people are out of their 0DT SPX already.
That was
and
yesterday.
Take a look. He got out. He got out for $220 in his pocket. But I think we've got Happy Wednesday, Blue Wackadoo. He's got his on. I think a lot.
Currently losing on this climb.
Oh no.
That's what I'm saying.
Screws up 19. So they were up 17 at 9:05. So maybe he put it on early.
I don't know, but nonetheless, we'll keep an eye on these. Blue Wackadoo is great. We can't wait to meet him. He's also going to be in Texas, and so we will be seeing him in Austin, and we'll discuss it with him.
So if you are on Twitter, just put the hashtag LAZJNY. That's what we're looking at. But speaking of the 0DTE, we've got a really great study today by Jacob. It's part 3 of the 0DTE Impatient Bulls Selling Put Spreads.
We are finally going to answer the question, or maybe get closer to the actual answer, if double dipping on the 0DTE SPX makes sense or not make sense. So I'm kind of excited for this one. Are you ready, Jenny?
I am very excited for this. Jacob's been amazing. So here we have it, part 3, selling 0DTE put spreads. He doesn't give it away, but we're looking at double dipping.
Double dipping. All right, let's hit it.
Okay, key advantages of managing winners early with longer dated trades is the ability to redeploy capital.
Yeah, the 0DT options market, the underlying such as this liquid, active, from open to close.
And so we'd say this often with our longer term trades. We'll say, oh, well, we only made 10 or 20%, but we'll take this off and put the money into something else, or take this off and maybe get back in at a later date. And so with the 0DTE, if you're taking a smaller percentage, can you get back in?
Do you redeploy the capital? Does it make sense? So that's the question we're going to answer today, and they're very loud today. Okay, let's go to next one.
All right, the study using 2.5 years of data in the 0 DT SPX.
We've done this over and over. It's always 2.5 years of data, and it's every 10 minutes because it's just coming in blocks, so it's okay.
Yeah.
It's a good data.
Yeah. Okay. Began each day selling a $10 wide put spread at 9 a.m.
Done.
At the money, short strike. And those days when this trade reached 10%, just 10% of max profit, closed it, and then sold a fresh spread with adjusted strikes. That's what the study's looking at.
Yes, and then and analyze the performance of these second trades only. So we're not even going to talk about the first. It's the second trades only when we're going through this.
Right.
And we repeated the analysis looking for 20% of max profit instead of 10. So the first ones were closed either 20 or 10. So we're only looking at the second trades of the day.
And then they also looked at $20 wide put spreads with short strikes at 25 delta. So we're looking at $10 wide at the 50 delta, $20 wide at the 25 delta, and the results are only the second trades of the day.
Correct.
All right. Here we have the $10 wide at the money. Now these are the second trades. Win rate, high.
The win rate is very high across the board, I would say, right? Mm-hmm. But what they did is they broke it out by time, which I like. So you've got it at before 10, 10 and 11, 11 and noon, afternoon. All the win rates are very high. You can see that all these are pretty good. My eye line, though, Jenny, goes to your sample size. Look how many more are in the placed before 10 a.m.
Meaning that sample size, sample size, all trades, placed before 10 a.m., 415.
Yeah, 415 were off at 10% and then on before 10 a.m.
But think about this. If
10% is so easy to get. 10% is so easy to get in an SPX trade.
Right.
I did it today at 9 o'clock. I collected $380. If I wanted 10%, it would be $38.
But you know what else catches my eye is later you've got that small sample size, which to me means if yours doesn't come off for a win by 10, most of the time it's not your first trade. If your first trade doesn't come off for a win by 10, most of the time it's not coming off for a win after that.
That's why we said close it at noon. That's what we're springboarding off here.
So maybe, honestly, after looking at these results, if it's not closed at noon, it's closed at 10.
But my I don't know if it's before 10. Maybe it's
you see between 10 and 11, the sample size is so small.
Get out before 11. You could put it on at 10 o'clock. So when I look at this, my takeaway, and like I said, these are menus, but my takeaway is if I'm asleep, which is never going to happen, in the morning, and I wake up at 9:37, and I was like, I could put this on because I could look at this as a standalone. There's so many sample sizes. That's my takeaway from this.
Right. I agree. My takeaway isn't necessarily, I've got to put on one, take it off for 10% and put on the other. It's, okay, if I didn't get it on 8:30 and I was doing something, I can still put it on a little later and there's still a nice success rate.
And so what is, and there are more slides, we're going to go through these, but they're all profitable and they're all high percentages.
Yes, that's true. They all are. Yeah. And this is only looking at the second trade, assuming your first trade closed at 10%.
10%, okay.
Here we have the $10 wide at the money short closed at 20%. And this is just the second trade.
And once again, the only one that is not profitable, this is different. So I think that if you're putting on a second one, 10%. The farther you go, you got to lower your bar, right? Because you got to put, there is a negative here.
Right.
There's one negative, and it's between 11 and noon.
Right.
But there's only 34 sample size, which isn't a lot.
Right. So you do get you've got the much higher sample size early on.
Yeah.
I think, meaning, I like these trades earlier. We've seen this. Our studies have shown these trades, 9 o'clock is the sweet spot for putting the initial trade. And then if you get out of that one and you want to put it on again, I wouldn't do it too late. I wouldn't do it too late.
No, I wouldn't either. All right, let's keep going forward.
All right, here, now we're looking at $20 wide at the 25 delta. So you're starting your short put at the 25 delta, making a $20 wide put spread. And this is taking 10% out of it.
So taking 10%, you can see here, the 10% seems to be the key. There's no losses. But once again, your sample size is so much bigger. That's what I'm looking at. Your sample size is so much bigger with a high percentage rate before 10 a.m.
No.
I mean, it really drops off between 10 and 11.
It really does.
Really, in all the examples, it drops off.
So the win rate is very high, right? 97, 98. And the previous slides with the 50 delta, the win rate's slightly lower. I'm just curious, if you start with one trade, could you switch to another? Let's say I start with 30 delta, $10 wide put spread, and if that comes off quickly, then switch to another type of trade that's coming in as my second trade.
Well, I mean, you could layer these studies on top of each other and look at what you want to do. Once again, I think these are all kind of good results because you're looking for very short pops. With these, we're not saying, SPX needs to be up on the day. We don't care if it's up or down on the day.
You just need a quick pop to get out.
Quick pop. And they're kind of building, because the one study a long time ago, and this has nothing to do with this, saying that at 9 o'clock there's more up moves than there are down moves. And that's what's saying. Before 10 a.m. they're already off, and you have 488 occurrences.
Yeah. So, and then now we've got one more, I think, $20 wide put spreads, $25 short strike, and taking 20%. You can see your average P&L goes up, and the win rate is still high.
They're still high, but it's still the same. To me, I see the same thing in all these. It's got to be before 10 a.m. because your number of occurrences really drops drastically.
Right. So I think takeaways. Well, and we can see what Jacob's takeaways are. Our takeaways are: if you miss it at 9 o'clock, don't feel like you completely missed it. You can still put it on a little later, and that would be the initial trade. If you want to put on the first trade and take a small win, and then the second trade and take a small win, fine. I think I still prefer one trade for a bigger percent. I put my trades on this morning and tried to take 35% out of them.
Yeah.
And were you trading to take 35 or 50%?
50% out of the ones that were at the monies, and 35% of the ones that were farther out of the monies.
So, but as far as commissions go, a put spread, it's just 2 legs. So it's not like you're dealing with an iron condor where it's 4 legs and you've got 4 legs of commission. This is just 2 legs.
It's just 2 legs. Let's see his takeaways. Okay, being directionally correct is an advantage, and there have been very few poor ways to sell SPX puts recently, but that shouldn't stop us from looking at the best. I like that.
All right, when winning credit put spreads came off before 11, starting another trade was an effective way to increase daily profits. But again, this study is lowering your profit target on the initial trade.
And your second trade.
Yeah.
On both, because 10% or 20% is low for these, as we've established in the last weeks.
I think I still prefer just the one trade with the higher percentage, but everyone could choose what they want.
And then every trades placed later in the day, however, were less successful as there was very little credit left to sell, especially out of the monies.
Right.
Yeah, especially the out of the monies, the 20 deltas.
Right. Every day is a new set of opportunities for 0DT traders, and when those opportunities pay off, especially quickly, you might even get more than one winner in a morning. Now, I have no problem putting one on, taking a bigger credit out of it, and then if the market moves back down, putting it on again.
And, we've got people like Blue Wackadoo and Jack Tucker, they layer into them.
Yes.
So that's not necessarily getting it for a profit. It's just your strikes are on.
Right, layering into them, starting with a smaller tranche, then adding another as the market's moving.
Yeah,
let's say
I did that this morning. That's what I was trying this morning.
Okay.
Yeah.
Okay, so another great study from Jacob, and you ask, he does it. I know we've gotten viewer requests on what you want Jacob to study, and he's doing it. So if you have any ideas of what you want Jacob to add to these studies, email us.
Yeah, sounds good. All right, well, thank you very much, Jenny. Let's jump back into the platform, I think.
All right,
so kind of take a look. SPOOs are up only 14, where we saw them up as high as...
Yeah, so that's good for Blue Wackadoo. It's coming back down a little bit.
2 things I wanted to manage real quick while we're in here.
Okay.
AXON. Ooh, it's only 77, but it was up higher earlier. Let's close it. It was a what's your assumption?
Oh, yes.
Okay.
So we sold 1 share. This was somebody who was bearish in AXON.
Because it was a $700 product.
We sold 1 share. That's all we did. And it dropped. It got as low as, look at that, like 560.
I believe they said it was going to go down that low.
How do these people know?
Sage.
So we have 1 short share. We'll buy it back.
Yes, we're going to
buy back our 1 short share. Okay. What's the market on here? 620.59 at 621.97.
It's not bad.
I'll just mid-market this. Let's see. Put my bid in. Buy back our 1 short share filled.
Okay.
Okay, so that's in. Let's see. HIMS is regaining what
yesterday.
We replaced it with a naked put, but at least it's coming back. Like it's gaining back what it lost yesterday.
True.
It's back to its, right around 46, kind of where it was before earnings, I think. So at least that's making a comeback. Rivian had earnings. It's up almost $2, which is a big move for Rivian.
That is a big move for Rivian.
Yes.
I did not know that.
Yeah, up almost $2. Do you still have your Rivian?
No, I've been out for a while.
Well, it's we only sold a put. We made 77%. We sold it for 75 cents at 17 cents. I'll buy it back, but that is a big move for Rivian.
That's a very big move for Rivian.
But I think it's been there before. before. So here's the chart. You can see this will make you feel better. I know you don't have it anymore. It's been here before.
No, I don't. I kind of tapped out with some things like this, and I don't even. It doesn't. But I didn't have that much Rivian. I think I had 200 shares. I mean, it's not gonna. That's not sending my kids to college. How about that?
Okay. So I'm going to close that. I'm going to close our Rivian put. If someone wanted to stay in, and this was one that Tim Knight was more bullish on, if we wanted to close that. If we wanted to stay in it, you could roll it to December.
I would go to December.
Yeah, let's roll it to December. So we'll go from the 12.5 put to the 14, but we're getting $1 in the 14 put in December. So we're working that, moving our Rivian put out to December. Still has the 31 rank, decent premium. And I didn't even notice. What's the buying power in here?
Small.
Yeah, $500.
I mean, it's only $500, but it's still a $14 product, so it should be less.
It should be $300. It should be 20% on a $14 product. It should be $300, not $500.
Yeah, so it's higher, but it's not too crazy.
Okay, so working, closing, rolling Rivian. I'll give up a couple pennies.
Yeah, give up a couple pennies.
And that. Okay, there we go. That's rolled. Anything else? Oh, we put on, and I don't know how it looks now, but not as good, but we put on a SPY calendar 2 days ago, just a downside calendar. We had the down move yesterday. I wish we would have taken this off yesterday. We didn't get to it.
This morning it was even better.
Well, I know, but SPYs are up.
Yeah.
SPYs are up, Vol's coming in a little bit, but I think we take the $38 out of it.
I think so too.
I don't know. But yesterday it was a nicer winner. I think we take it off, and
I took mine off this morning for like a $70 win.
Well, I know it was better, but it was better when SPYs were down 80 yesterday, and it was better this morning on the open because
it wasn't that much better yesterday than it was this morning.
No, but because this morning we weren't up 20.
Because I looked at it on last call, and it wasn't any better than it was now.
I mean, you saw the VRO. VIX was 1917 this morning. Right now, the VIX SPYs are up 22, and
let's see what that Wile E. Coyote is doing.
VIX is 17.99.
17.99. I was talking about this with Tony yesterday. It never, like that 20 mark, it never crossed it. It never.
Oh, it didn't?
No, I mean, it wasn't crossing it when we were down 80.
Really?
Yes, which I found fascinating.
Yeah, yesterday.
It got as high, but that was during the day, not
2048. That was during our show.
Not at the end of the day.
I remember during our show saying, like, it hit that 2050 handle, 2048 handle.
Yeah.
But at the end of the day, it was SPYs down 80. But because SPYs were down 80 for a big part of the day, I'm like down 70, 80. It never. Sometimes we'll see, down 30, down 50, down 80, down 100, down 120. Like it didn't keep going.
No, it didn't.
It didn't keep going.
And it kind of rallied back a little bit. But we were down 80 on the close, which I thought was pretty low.
So, what market did I see on the news? Were you listening to the news? What country's market was down like 4 or 5% last night?
I wasn't listening to the news.
I don't know. It was. I can't remember. The news is something on in the background, and I hear bits and pieces of it. But I remember thinking, "Whoa, that's a big move."
That is a big move. That's a very big move.
All right.
I'm just making sure. I'm checking. I was just pushing things out with the new service.
So trying to close that SPY calendar. Anything else that's going in our direction? Yesterday was hurt. We had a lot of red yesterday.
Where's gold? Can we take a look at gold? Like GC, not GLD.
Okay. Gold is up today.
Because we have gold
1%,
versus triple Qs.
And GC is...
I want to see if it's above 4,000. No, it's still hovering underneath it.
Hovering right around there.
Still hovering right around there. So Bitcoin has finally crossed back over. It dipped into the 99s yesterday. Bitcoin.
Under 100, I know.
So now I think it's 102. Can we see where Bitcoin is too? Because I know we have IBIT and ETHA.
Last time I looked at that, it was 103 BTC, 103.7. So it's making a little bit of a comeback.
Yeah, that's pretty. Pretty good. What happened to Bitcoin? What happened to October? And so then now there's like something, I can't remember what they're calling it, something up November for Bitcoin.
Oh, really?
Yes. So we need to get, I said we need to get Ryan Grace and get some answers out of them.
I think the boys were going to have him on today. I think they were going to have him on today because I know a lot of people.
Activity behind us.
A lot of people want to know what's going on or want a professional's view on crypto. But honestly, after trading for decades, we know nobody really knows where it's going.
Nobody knows
where it's going. So if someone tells you, oh, I know where crypto's going, that's not. Nobody knows.
Nobody knows exactly. SPUs are up 30 again. So they've been moving around.
They have.
The last time I looked, and that's why you can hear the low hum start to get a little bit more, and then the floor official standing at attention. He's right behind your shoulder. So when the floor official's at attention, there's something happening.
Yeah. Now yesterday I saw a lot of puts going up on the board, but according to Frank on Twitter, calls leaded puts yesterday.
I thought it was puts over calls yesterday. That's what he told us yesterday.
Well, let's take it to the tape. Here, I'm going to go to Twitter. Okay, I thought I saw him post here 4 hours ago from the SIBO. Tuesday's option volume, 65 million contracts, 9% below recent average levels, with calls leading puts 4-3.
Oh, I thought it had switched. So yesterday during the show, we got breaking news from a Taiwanese source that was puts over calls.
Okay, so yeah, I thought there'd be more puts trading yesterday, but
yeah, only because we talked about this yesterday. Can you go to the SPX 0DTE? And I want to look at volume versus open interest. I think this is fascinating to me because there is so much trading in these 0DTE SPX. So if you go to the 0DTE and go volume,
open
you
interest.
Got it. Great.
Got it.
So open interest is what was there. Volume is what's traded today, and then this will all be gone tomorrow. Look at those at the monies. You're looking at it. Is that 50,000 6800s?
Yeah.
Today.
And what did I just see go up? 66,000 puts. What day is today? November what? 5th. November 5th. I'm just. The 6,900 calls just traded, 1,500 of them. That's today.
1,500. When you're looking at these numbers, 1,500 is peanuts.
Wait, 1,500 of these 6,900 calls just traded.
Yeah, but
that's probably someone buying them back.
And it's a peanuts number compared to 50,000 at the monies.
But why, you think about that. That's 0DTE, 6,900, 0DTE. 1,500 traded. Let's say you're buying them back for a nickel or a dime. That's a lot of, that adds up, 1,500 of them. Do you think someone really thinks we could skyrocket back to 1,600 today?
I think that a lot of these, especially when you're getting in the thousands, like you put a K at the end of it instead of a R1 or 2 lot or your Jack Tucker 25 lot. Do you know what I mean? Those are small fries compared to these. That's like institutional trading. Yeah. And maybe they were hedging their bet. Maybe they thought it was going up. Do you know what I mean? Maybe they're selling back out of them. Because if you were long those thinking you're going to skyrocket, getting 5 cents back 1,500 times doesn't seem that bad.
And here a nickel bid just popped up.
Do you know what I mean? Getting 5 cents 1,500 times. You don't know what they're doing. But these volumes are massive. And the other thing too is the retail trading, which I found fascinating, has taken over the volume.
Oh, I know. More retailers trading at these 0DTEs than institutions. Yeah. So it is crazy. You know what else is interesting? It wasn't that long ago. It was like a week or two ago when we were talking about 7,000. SPU's 7,000.
Oh, that it was a foregone conclusion.
Yeah, that everyone thought it was going to
hit 7,000 before Friday.
I know. Everyone was trading thinking we were going to hit 7,000. Well, that never happened.
Yet.
Well, no.
I gave Tony Batista my pushing over a pop machine. He's like, what do you think the market? He thought it was going to be down today, and I go, I think it's going to be an up day. I think it's kind of got to rock back and forth. This isn't a crazy update. It's not like we're up 80. It's not like we got back everything we gave up yesterday.
Like SPY was 10 points. We were 100 SPU points away from 7,000.
But we're looking at SPX 7,000.
No. When everyone was talking 7,000, it was SPY and ES. It wasn't SPX.
Okay, so ES. I think ES is the fair way to look.
Yeah. So
SPX does not have the dividends and SPY has the dividends, right? That's why they're different prices?
No, I think it was yeah, I guess it was SPY. I mean, SPY was 12 points. We were 12 points away. 12 points, it was 689.70. So 10 points, 10.30. But 10 SPY points would be 100 SPU points. We're 100 SPU points away from hitting 7,000. For SPY to hit.
So do me a favor, only because we talk about probabilities all the time.
It would be
use SPX, use SPY, use anything. Let's see the probability of it getting to 7,000 by December expiration. And how do you do that, Jenny Andrews?
I'm just going to go to. I think the probability of getting there by.
I'm asking by December. By
December expiration.
Oh, I meant the end of the year, but that's okay because there's December 31st.
Oh, by the end of the year.
Yeah, end of the year. Sorry about that. There's December 31st. You go to the 700.
It's going to be very high. Let me change this to Delta.
700, about a 30 delta, 30% chance.
So you got a 60% chance of hitting it. So let's talk about the delta. It can be used for many, many things in trading realm. But the delta, if you double the delta, that's your probability of it touching at some point in this cycle. Meaning between now and December 31st, there's a 60% chance that it's going to hit 700.
Right. So
that's a lot. That's a big number.
And I still feel like I don't know what the market's going to do when the shutdown finally ends, but I feel like it's going to have a big move.
Could have a big move.
Yeah.
Yeah, it could.
We might hit it then.
We could, that's what I thought was fair. I mean, you can look at the probabilities. If you lower the time frame, so say by the November expiration, what's the probability of it?
Which hitting 7,000 is only 12.
But you double it for the chance. So 24% of it touching it.
12%. The delta here is 12. 12% chance it'll be over 700 at November expiration.
Correct.
24% chance it'll touch it between now and then.
Correct.
Yeah. And again, these are all theoretical values, and they fluctuate with volatility, price. They're always changing.
But delta's a good Greek because you can use it for anything.
Yeah.
Yeah.
What's the delta of me laying at the pool tomorrow?
100 delta.
100 delta. 100 delta, I'll be
What's the delta of me drinking Prosecco before I get on the plane?
100 delta. Or something's gone horribly wrong.
Things have gone horribly wrong.
Correct. Things have gone horribly wrong. If we're not having a drink at the United Club before we get on the plane.
True.
That means there's a real backup at TSA.
Yeah, a real backup
okay.
at TSA.
All right. So 10:33, we have a busy day. I'll get to Twitter. I'll get to. We also have to get to what's your assumption.
We have what's your assumption. It is a Wednesday. It is 10:33. We're trying to end on time as well. So what do you think? Want to do Twitter or what's your assumption first? I just want to see if they're doing anything behind us. And they seem to have calmed down a little bit.
No,
Spoos are now in a range of, they're kind of lulling around up 31.
Yeah.
Up 31. Where do you think? Okay. Where do you think we're going to end today?
I honestly think, don't listen to me because I'm
Nobody
wrong
knows.
all
No
the
one
time.
knows anything, and that's why Tony gave his prediction. I gave my prediction. Mine's actually coming true. So
I actually think we're going to be red.
We need to see what earnings there are today because there were some big ones, and I know I've got them. So let's jump
I'm
into
jump
Twitter.
Into Twitter. So
And I did not mean to cut you off. I think we're going to be green on the day, and big green. I think we're going to be up 50 at the end.
I hope so, but I'm afraid we're going to be red on the day.
Ooh, Ekidu's out. 1444
good.
after fees.
Collected 1444 after fees and SPX Iron Condor with MES Insurance.
So he's down 327 on his insurance, but that's fine.
Hey,
great.
Yeah, great. Good for you.
Wait, whoa. Can I read that again? Keep going. Oh, barbecue and mosquitoes. I thought Bob on Fire was coming with him.
Oh, a land of sun. Okay, I hope so. I miss Bob on Fire, and I'm missing his earnings right now. But I think.
So if you want to go here, I'm going to take this off so we don't scroll. Scroll to Bob's earnings from prior because he's got them. If you just scroll a couple days ago.
Oh yeah. Or I could check Tastylive and see what their posts on earnings are.
I like the ones that are in the morning too.
I will find it. So
I like looking at these earnings. I know Robinhood had earnings. I know there's some ones that we have positions in.
Hold on.
He's in there if you want, if it's easier. So we're looking for making sure, I just want to protect our account to make sure that there's nothing in there that has earnings. AMD was the big one last night, and we didn't play it. AMD's up $1, which is a real non-event, so any premium seller would have made money in AMD as of this point, but I believe it was down a lot more on that. But all those stocks, like PLTR is making a comeback as well.
Well, Liz, this is it's taking me a long time to find our earnings list.
Tell you what, I'll find it and I'll read it to you. How about that?
I got it. I'll get there. Because I went on Tasty's site too, and they did not post anything.
No, but I can read.
Tastytrade might have posted it. Here we go. No, is that old?
No, I got it. I can read it to you.
Okay.
So why don't we're gonna?
I'm going to the platform, and you're going to read me the earnings.
Okay. Are you ready?
Yes.
So the earnings for today.
Hood is one on the list, I know, right?
IONQ, AppLovin, Bros, Qualcomm, ARM, FIG, ELF, QBTS, COP, VST, Datadog, WBD, don't know what that is, and Moderna.
QBTS, that's our conductor's stock, our conductor's pick.
Ooh, yeah.
Okay.
And some of them are before
There goes the
open.
vinegar. Did you smell it? There goes the
Vinegar again. What is going on?
I feel like someone keeps a bottle of vinegar and just like sprays it. They're a spray bottle and sprays it when they.
So Robinhood is after the close. A lot of these are after the close. Oh, Snap is after the close as well.
Yeah, but what is Snap going to do? It's $7.
I don't know, but I got 1,000 shares.
I mean, I've got shares too, but I'm just gonna. There's nothing I'm gonna do with them.
I'm selling puts.
I don't know. All right, Robinhood. Here we go. $11 expected move. I have been thinking about my UPS guy because he's got in the money puts in Robinhood. He needs a bounce in Robinhood.
He's short in the money puts in Robinhood.
Yeah, so he must have sold them like at the
That's what I was like. I'm like, hold on, rewind for 1 second.
He's short the one. I want to say they were the 130. So maybe they bounced out of the money. Maybe I was in UPS this day, and he's like, "What am I going to do with my 130 puts?" Maybe they're out of the money now.
So I was talking about a headline yesterday. So, and I'm not saying you're UPS. Hello, UPS person. Hopefully you're watching the show. I'm not saying he doesn't know what he's doing. But so there was this headline yesterday that said this place was putting 80% of their portfolio in puts. And I said, that's the biggest BS headline I've ever heard in my entire life. Are you short puts or long puts? What do you mean? Are you protecting your long portfolio or are you going
they
long?
short? And when they say 80%,
they just said inputs.
And if they say 80%, are they in a cash secured account or a margin account? There's a lot to that.
I was like, this is the biggest BS headline I've ever seen. But if you don't know that, like if you don't know what that means, you're like, oh.
It's tough. Okay, so you guys who are watching, super smart, right? Options are tricky. There's a lot to know. There's a lot with the lingo. There's a lot to know, and we know it's not easy to learn everything, and it's hard for people.
If we can do it, if I can do it, anyone can do it.
But it's hard for people trying to break into this business and start from scratch and trying to learn.
True.
Because I remember, he's like, what do I do with me short in the money puts? I was like, well, you could do a downside.
I would have been like, number one, gold star. Give him a certified badass option trading card because he's short puts in Robinhood.
I just said, put on a short broken butterfly underneath it to try to help you if it keeps falling. And he's like,
I don't understand the words that are coming out of your mouth.
I don't know where that's from. I don't understand the words that are coming out of your mouth. No.
I don't understand the words that are coming out of your mouth. Rush Hour.
No, never seen it. Never seen it.
It's do you understand the words that are coming out of my mouth? That's what they say. Yes.
Okay. And Liz had a very nice video store chat today.
Oh, I did. Another person on the floor had a video store that was right by mine. He's up there. One of these days we're gonna have to get him on.
Yeah.
And did you catch the gentleman's name? Because I was like, your name is Chewy?
And not only did he own a video store right by Liz's video store, he still has it.
It's still open. Yeah.
Yeah, it's still open.
Yeah, those people are holding strong. Talk about diamond hands.
What are they doing in there? Because something
No, it's
tells
retro.
me...
It's retro.
Oh.
Like, it's cool again. It's kind of like albums are cool again. Yeah, it's retro.
Sure, it's cool again.
It's cool again. All right, now let's
Where do you get the VHS player?
Everybody's got them in their basements.
They do?
Oh, yeah. All right, let's jump in the platform. I want to get to these earnings trades.
So a hood is tricky. I don't know what we're going to do in here. What do you think? I mean, you're in hood. I'm not. Unfortunately, I got out of hood at 19.
So
unfortunately.
So let's take a look at the options and see how much juice there is. We got a 30 rank, but that doesn't really mean much.
So,
it's got a $10 move.
Yeah.
Can I see how much the diagonals? Please.
Yeah, sure. I will show you. Okay, so the diagonal, I'm going to go the expected move, 152.5, sell the 2-day, go to the 9-day, and buy the 1.4. So we've got 12.50. This is exactly how they price. You're paying half the width. You got 12.50 wide, you're paying almost $6 for it. That's how they work.
Would you think about a crab here only because you could hopefully take like $1.50 off of it?
You could take some money off of it. So if I go and then sell 2 of these instead of 1, so I'm taking a little bit of money off of it. She's got 12.50 wide.
You're paying $4 for it.
$4.93.
I mean, you take 80 cents off of it. It was $5.80.
Well, you still have profit potential, even if it blows through, because here, let's walk through these.
I would be if we only make X amount and you lose $7.50.
We can't lose.
No, you lose $7.50. You would make more with the diagonal.
No, well, I'm just going to go through what how much we could make. if we have the 140 strike, we're paying $4.93. Our break even's $145, and then our shorts $152. So we could make $750 there, and then $750.
Yeah,
so it's a
that's
scratch.
insane.
It's a scratch.
So the diagonal. I love the diagonal because it gets it to you for cheaper. But it also, if it skyrockets, and I don't think it's going to skyrocket. I really don't. I don't think it's going to skyrocket. But if it did, you wouldn't. Like nothing makes me more mad than a directional assumption and not making money.
That's the problem with directional calendars. Here we could make like 200 if it blows through. It's 516 instead of what was the other one?
583.
Oh yeah.
My voice got real high there. No, we don't have to put 585 into Hood. I just was like quoting it.
Or do we try to just take in $1 on? No, but we have to buy something. We have to. Or the buffer. How far does the buffer? Like, how much room does the buffer give you? So this would give us $10 room to the downside and $500 in profit potential.
It's not bad. It's more expensive though.
I know.
So the buffer
I have a real hard time with Hood because it's gone up so much.
That's what I'm saying. So let's look at App11, ARM, Snap, Figma. Do we still have Fig in here? I think you do. And ELF.
And okay, we can't. Here's what I'm just gonna throw this out there because you may. That's gotta be a big order.
You can't tell from here.
No, you can't see all that.
It's literally like right there.
It's all.
So if I move, it was right there.
I'd love to know what it was.
I don't know what Marty's doing, but
next time Marty walks by, we'll ask him what just went down. Here's what I'm going to say about the earnings trades. We are doing last call today, so we're going to be on from 2:30 to 3, which is a better time to be doing earnings trades, especially with this, volatile market. Better off doing earnings trades at 2:30 than now. So why don't we focus on what's your assumption and then just do earnings trades in last call?
And did you get to everybody on Twitter? Just asking for a friend.
Asking for a friend. Did I get to everyone on Twitter?
Ooh, things just got tasty.
I know because I was searching for earnings.
Oh, here we go. Take it off again.
Okay, Frank, this came from YouTube, from away from the numbers. Could you ask Liz and Jenny about their short call in Target, please? Sure.
Oh, Jesus. Samantha Barnett. That was so funny.
My kids this morning see SPX in the 6700s.
67. You know this, right? Please tell me you know. Please tell me you know what it is.
No, I don't.
Oh, I knew it. Okay, so it means absolutely nothing. So 6'7" means nothing, but they're putting it in the dictionary right now because all the kids, every time people say 6'7", my son is 6'7" tall, and every time I say he's 6'7", everybody laughs.
Why?
I don't know. It's the dumbest thing ever, Samantha, and I understand what you're saying, but all the kids all across America are doing the 6'7".
I don't know.
Yeah, I knew you wouldn't hear it, but pretty
I'm out
funny.
of the loop. I'm out of the
funny,
loop.
Samantha. Pretty funny.
Out of the loop. Okay. So, Target short calls. I don't think we have short calls in Target. I think we have short puts in Target. So, yeah, we have the 85 short put in Target. And I know...
Let's roll that out in time.
Yeah, sure. Roll it to D's. We're probably rolling through earnings, but that's okay. I know this puts down since we sold it, but we're still, the fact that it's the 85 put, Target's trading almost 90, tells me earnings are imminent. So I don't know if we'll roll it. Let's look.
Well, in concept, it makes sense. We'll see. We're already through earnings.
Because here's what I'll look at. Expected move in the 16-day, 936. Expected day in the 44-day, 968. We're not going to get anything for the roll.
Can you open it up so we can take a look at it? I agree with you. In concept, it made sense. Oh, it's still out of the money. I thought it was in the money.
It's still out of the money.
This is our earnings trade.
Yeah, this is our earnings trade. We just leave this.
This is our earnings trade.
Yeah, there's nothing to do with it. If we rolled it, I don't think we'd get anything for the roll.
No, I don't think we would.
If I moved the 85 out to December, 85, 80 cents for the roll. It's not worth the extra 44, extra time. We're just going to leave it. It's still out of the money. Yeah, I think we do nothing. But, thanks for, and we don't have short calls, just that short put. Okay, The Great Gatsby. If you were to start all over again learning options, where would you start? This is a great question.
This is an amazing question.
I was just talking about this with my, going to the stock market club of what I'm going to teach them on their first day.
Well, I wouldn't do what I did. I started my kid with SPX iron condors.
That's where I want to start the stock market club. I
started my kids with 0DT SPX iron condors.
I want to start the stock market club with the 0DT SPX put spreads.
But I also think the level of engagement when you can risk little and make a little bit is how you hook them.
Yeah.
That's the hook.
So then what's the one you would move on to after you completed?
So I think the better answer, what I'm starting with my kids with, because we're actually advanced traders, would be the SPX 0DTs, even the put spreads. I'm fine with that. That's what I'm going to start my daughter with. But there's nothing wrong with, and you bring it up all the time, short puts in low price products.
And that's how I started my son. So I'll pull up an example. You said Snap has earnings, and I said, oh, what's Snap going to do? Is $7.
And he wanted to get into Snap.
And he wanted to get into Snap. So I try to explain this. If you bought 100 shares of Snap, and it's $370 in margin,
and $740 in an IRA or in a cash account, just a little FYI.
And to make, if you have 100 shares of Snap, and Snap goes up $1, you make $100. But if Snap doesn't move, you don't make anything. Or if Snap goes down, you can lose.
Well, and a lot of kids, when they're buying shares, will only buy, and this is true. When my kids are starting out, you look at my son's account, he's got 7 of this or 6 of this.
Right, they're not buying 100 shares.
So in order for them to make the amount of money that you would make with that put, it's glaringly obvious when you're saying, I want to use X amount of money.
Right, because there are some stocks where they'll buy 1 share. So, okay, you want to make $50 on 1 share? Well, that stock needs to go up $50 to make $50
Correct.
on 1 share.
Correct.
Versus if you go out, let's say he goes to December, sells the 7 put for $69, and here
the stock doesn't have to go up at all.
The stock can stay right here and not go up at all, and you're making $70 using $250. And if the wheels fall off and Snap goes down, then we'll work on rolling the puts out. But I use these really low price products for the kids because how it can only go to 0, right? What's your risk if this goes to 0? $630.
And understanding short puts is, I think, a basic building block. I think that's where I really would start. But I love this question, and I know we said SPX. I like SPX put spreads, and that's where I'm starting my kids because it's me and because I'm keeping an eye on them. But I think if it were somebody else, I would learn a short put.
Just a short put in low price products because it can't. So when my one neighbor was learning, he started getting really high flyers and started just getting crazy. Somebody puts in all these big products, hundreds of dollars in these products, and then the stock has a $100 move. And if let's say a put is $100 in the money, that's $10,000. That's $10,000. So these kids with small accounts, they can't risk that. But can they risk, if Snap goes to $6 and they're out $30? Sure. Yeah. They can. So this is where I start new people, just learning the concept of a short put, and then even taking an assignment, taking the stock, learning how that works, selling a call against it, having it called away from them, learning how that works.
But I do think watching the P&L fluctuates as well as a huge building block because what we're saying is that, and it's an interesting concept that people can't grasp because when you say out loud short put, okay, Snap has to stay above $7. It's trading $7.43. If it stays above, and I'll never forget, I think it was your neighbor Bob, if it stays above 7 before January expiration, not for life, you get to keep $70.
I'm in Jan. I'm in Jan. Oh, sorry. I meant to go to Jan.
You get to keep $70. And then Bob was like, Bob was like, how much do I have to pay for that? And you're like, no. You're taking in a credit. But you're watching the P&L fluctuate as the stock moves.
These Snap puts look pretty good. Do you want me to send one?
Yeah.
What do we get in the 16-day? 43. Let's just do 16-day 43.
Yeah, I'm in for the Snap puts. I'm long Snap. You're long Snap.
Yeah, $43. So, and then
Listen, I have like a 100-day streak going in Snap right now.
Oh, look at you. 6, 7, 100-day Snap streak. Look at you. She's like a teenager again.
With both my kids, I have a 100-day streak going.
All right, I'm going to sell these 7 puts for 43 cents. My break even here is $6.57. So you own Snap at $6.57 if you need to own 100 shares of Snap. If you don't want the 100 shares, you can keep rolling the puts.
Yeah. Do you know what was super cute? I don't know if you know this. Scott Sheridan, friend of the show, who just recently is onto something else. He only this is where I got this from. I started snapping my kids when they went to college.
Yes.
Because he did the same thing with his daughter Lila. They never missed a day when she went to college, and they continued it.
Oh, that's cute.
Isn't that cute?
That is cute.
So his is like thousands of.
That's
like
crazy.
1,000. Yeah. So you can't let that streak go.
All right, 10.50.
Okay, do you
we
want
never got in. We never got into.
No, we are going to do. We have 5 minutes left. Do you want to pick while we're sitting here? Do you want to pick your favorite? What's your assumption? Or do you want to jump into Twitter? We have 5 minutes left here. We are on last call today, so if you didn't get enough of us today, you can wait a couple hours, and we'll be right back on before we get on a jet plane.
You know, let's just, Kai sent it. He was worried about us not getting it. Let's jump into what's your assumption. We'll get to one or two. We have 5 minutes. We'll get to one or two. First, what's your assumption is CMG bullish from Roberto. Free money glitch. Fading Dr. Jim, selling at the money put. So,
I will 100% sell at the money put in CMG.
I don't want to fade Dr. Jim, but I will sell a put in CMG. I don't think we have it. No,
it's something that I like looking at. We still have a 30 rank. It's after earnings.
Now that we've had our little 3-day calm down, right? Had that big drop on earnings. We've had that 3-day shakeout. We're okay selling puts.
I mean, it's just to make me feel better, that 3-day rule. But yes, it's a 3-day rule.
29 rank, December.
Yeah, that's not bad.
I think we looked at this yesterday and we're like, that's not enough. But
I don't mind. It's only we were looking at what were we looking at that was $500 for a $14 stock?
That was Rivian.
Rivian. So look at this. You're using $400 for a $30 stock.
Sure. Would I like a little more? I could do.
Bring it in. Do the
kind of a synthetic covered call.
Yeah, go for it.
So 32.5 for $1.79. I like that better. I'd rather use $636 to make $1.79 than $450 to make 67 cents.
Yeah, do that. Let's do that.
Okay, so I'm going to sell this $1.80. Yeah, not bad.
Okay, one down, 9 to go.
And have you been pushing everything out?
I've been pushing everything out except CMG. We're not filled on it yet.
I'll lower this 2 pennies and see if we can get filled. Working. Come on, CMG. There's my offer. 178.
Okay. Well, let's try number 2 while this works. Hood neutral
earnings play. Okay, Josh from
Boulder.
Neutral
to slightly bullish. What about a Jade Lizard?
I'm a little, yeah, sure. I don't know.
But that's why when someone says neutral to slightly bullish, that's what I would do.
Jade Lizard?
Neutral to bullish. Or downside ratio spread.
Yeah. I think that's good. We'll take a look at this on last call. SPX neutral 0DT, perfect setup for SPX Iron Condor today. Jack from Philly, and yes, they've been working for people, so good idea. Target bullish, we have a put in there already.
God, you're doing great.
Look at this. Huh. IONQ.
Earnings.
Jade Lizard. Skewed strangle. And, IBIT. Would you do a strangle in IBIT?
No.
So crypto's been down a lot. We have a Jade Lizard in IBIT.
It holds a lot of capital. A strangle in IBIT holds a lot of capital, which is why it's got legs on both sides.
So we're at the 61.5. That's our short put. We are close. There's a chance this could be out of the money by Friday.
Yeah, there is a chance it could be out of the money by Friday.
Chance could be out of the money by Friday. I still have my puts in IBIT. I don't have any calls. I'm not selling any calls in there.
Well, you can't sell calls against it, even if you have. Well, do you have naked puts or you have a spread? You have to buy something.
No, I have naked puts in IBIT.
They're cash settled. They're cash secured. I'm sure you bought something.
I think I have naked puts in IBIT and ETHA, but I also have shares of IBIT. Like I mean, because I changed my Bitcoin position into IBIT, just so like whatever I had in Bitcoin, I moved it over and put it into IBIT. So you can, but I don't sell any call. I'm not selling naked calls.
Just do me a favor. Go to a different cycle. Go to a different cycle than what we have. I just want to show. It says throw a put in, any put. It's going to be $1,500.
Yeah, they're not cash secured.
No, but it's a lot more capital than a $50 product should be holding up. So if you're going to add a call, that's what I'm saying. Like if you had to put spread, or if you're going to add a call,
it's better now. I mean, a $60 product would hold up $1,200. It would hold up $1,200.
It's better than it was.
Yeah, it's better than it used to be. I think
your margining gets higher as you get near. I think what's happening is we're doing weekly, and the margining in this gets higher as it gets nearer to expiration.
But honestly, IBIT's better. So typical margining would be 20%. So a $60 product would be $1,200. $1,500. IBIT margin is not that bad anymore.
No, it's not. But I don't
want the naked call in
Jenny,
there.
you know how we're in the weeklies? I think it's heavier the closer you get to expiration. Somebody asked Jamal that the other day when he was on.
So 56 put here. 2,000.
Yes, it gets worse as you get closer to expiration.
All right, I think we are done for the day, Liz. We've got to stay on schedule.
Yes, we are, John. Yeah, John's keeping us on schedule. All right, everybody, tune in to Last Call. We will be on it, and then we're getting on a jet plane tomorrow. But remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you later today on Last Call.
See you tomorrow, everybody. Or see you today.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Frequent trips to Vegas, or there was a year I did a couple of them.
What's the most financially irresponsible thing you've ever done in your life? Doesn't necessarily have to be trading specific.
Financially irresponsible, that's a big question. Like people would say like going to college these days. I don't know. Renting, I like renting. I like the flexibility. I don't know. Maybe renting, I guess, by the book is financially irresponsible. Actually, you know what my biggest purchase right when I started my job was $4,000 on a PC setup, which was not a good idea at my salary point.
I mean, anytime you take a trip to Vegas, it's pretty financially irresponsible. I would say that frequent trips to Vegas, or there was a year I did a couple of them, which was pretty irresponsible.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
All right, so I've got some good news, and I've got some bad news. Let's get that bad news out of the way first. You are going to have some losing trades. Like every trade you place, despite your extreme optimism that it's going to work out, it's not going to work out. That's the bad news. The good news is at Tasty Trade, man, we are ready to adjust and defend and roll our positions if that's what it takes. And that's what this entire crash course is all about. A 5-episode crash course all about rolling. So I will see you inside of episode number 1.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Said I'm all about it. Yeah, I'm all about it. Said I'm all about it. Yeah, 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 yeah. Said I'm all about it. Yeah, I'm all about it. Said I'm all about it. Yeah, 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 yeah. Oh, wound up, step out of the way. Louder, get better with age. I'm rowdy, I'm grounded, and I get my way. I'm proud and I'm howling. Wow, what can I say? Ooh, let me see you move your body, see you shake, you make 'em turn it up and drop.
What's up,
At
Tasty
Tasty
Nation?
Live,
Welcome
we
back to
live-
the show. My name is Mike. I'm here with Jamal and Glenn. This is Options Trading Concepts Live. How we doing, boys? Markets green, kind of halfway reversing the move yesterday.
Bad day to be VIX.
Ooh, that's true. Yeah, they've been doing this quite frequently. VIX pops and then it gets crushed the next day. But yesterday's move wasn't really paired with too big of a vol expansion, which makes me believe that this is. I mean, it's not surprising to see this rally today. Is what I'm getting at.
I don't know. Honestly, I'm just really kind of glancing at things. I honestly don't fully know what's going on right now. Seriously, no, because we were only up like 16, right, 20, and then we were fading, and then all of a sudden we just started running. You know, I just noticed bonds are down like almost 1% here, 3/4%. I don't know what's going on. I don't know what that means. I don't know. Is there? I know they're hearing arguments. Is this based on that? It might be.
We had some data today. If you look at like CME, the FedWatch tool, we're getting even more elevated chance we don't cut in December. Perhaps on the heels of, you know, some good employment data and hotter.
Oh, we did have
expected-
ADP today. We had ADP.
And that didn't move things a ton. And then we had some PMI data.
But it's like the only
that
real
also
jobs
came
data
in.
that we got. That's true.
Yeah.
Maybe that's what it was.
So, yeah, but the timing's been a little weird all morning, I think. I expected a bigger move off that ADP. Not too interesting. And then, yeah, some on that. The PMI was at 9 Central, 10 Eastern. So, yeah, I don't know. Then you also have that tariff ruling.
I think that's the biggest thing right now. People are kind of paying attention to. I can't find a date for resolution though. I mean, I even looked at Kalshi, and
It also gets murky because the administration has said they don't care as much what's decided. They'll find a way. So I think they just go back to the rule book and pick another rule, and that's another 6 months of debate. But I don't know what would happen if there's any retroactive action. Like even if they find a new rule and are allowed to impose tariffs in the future, if they rule that this use was improper, will the government have to refund all those billions regardless? I don't know.
I can't lie. I like that. That's how I live my life, Glenn. I don't care what happens. I'm gonna find a way.
No, go ahead. Rule on it.
It's actually the motto of my undergraduate institution: find a way to make one. So I mean, there you go. Find a way.
It's been burned into your soul.
It kind of is. Yeah, we all kind of. It's like a joking thing we say. Yeah.
There might be a role for you in the White House.
No. You don't want me in politics. Not at all. No.
I've been watching the show Diplomat on Netflix.
Yep.
It's pretty nice.
Who's in
I
that?
like those kind of shows where it's like, ooh, what's gonna happen next?
And this one doesn't get, too down the rabbit hole like Scandal. They
Yeah.
start killing people and you're like, whoa.
Yeah.
No one even cares about
Scandal?
I did at one point.
That's awesome. Yeah, I thought only black chicks watched Scandal. Look at you.
I mean, everyone in their Netflix journey gets it. If they push it enough, it's on the front page enough. Sure.
Wait, who's in Diplomat?
Carrie Russell.
Oh yeah. It's funny. My wife was like, "Oh, Carrie Russell now basically plays the same person and everything because it looks like Americans." I mean, it does.
Yeah.
I haven't watched it though, but I heard it's pretty good.
No, it's good, and it keeps it, kind of strategic.
Yeah. It helps offset the door company or the chair company.
Chair company.
Yeah.
Haven't started that.
Oh, you gotta watch that.
Yeah, I haven't seen
Actually, though, or not? Is it one of those like
No, it's
you have
good.
to watch it because everyone's watching it, or
No, it's if you like Tim Robinson, you'll like it.
I hate that. I can't do that. I love that, Glenn. See, that's why Glenn, man.
Like Scandal.
Anywho, yeah, we were talking before the show. Well, actually, the show went live, and we're seeing some comments, and my eyes were like, "Are we live?"
I was not getting agitated, not at all. I was not.
Hey, it happens sometimes. But we were talking about how market's up, but bonds are down pretty big here, and we're wondering, what's the disconnect, or what's being said right now that the market is trying to price in. With the E-minis up 40, NASDAQ up 200, Bitcoin up 3K, bouncing off that 100K mark. But big move in ZB futures. And it just feels kind of odd. Jamal said, not sure what's going on right now. Feels murky. Feels cloudy. But yesterday you had a sizable sell-off, not paired with a vol expansion. There was a little bit of a vol expansion, but if we're still in the teens, I don't really care what's happening. Like, you got to see the VIX at the 20, 30 mark for me to be like, okay, this is actually something.
Yeah.
So yeah, maybe we just get some chop until the government decides what they're going to do here. But Glenn also pointed out, FedWatch tool, now there is a 35% chance that we do not cut in December. And 2 weeks ago, this was a 98% chance that we got another 25 basis point cut. So a little uncertainty there as well. And maybe that's what's pushing and pulling on the bonds and the equity markets.
Got a couple of things going on here. I mean, oil's down too. Oil's down like below 60 again.
Mm-hmm.
Interesting. I mean, this just when you think you figured this market out. No, not at all.
And Jamal talking about the tariff settlement case. Looking at Polymarket right now, odds of ruling in Trump's favor dropped from 40 this morning to now 22%. So not looking good for the current administration on this particular case. But
do you think there's people there that are just smashing the poly markets, just like bid?
Yeah,
probably.
They're in the chambers.
Yeah.
So look, it's we think that the tariffs will be good, but we're just not.
Yeah.
You got to play with it a little bit, right?
Yeah, it's just
compelling argument.
Yeah.
It's just like the NBA, the UFC, the NFL. What other?
The wheel.
Yeah. Ridiculous.
You know what? I've thought about that though. Like, people are all like, okay, Cooper Flag winds up in Dallas just in the same year that they shipped off Luka, right? Like, I've thought about it. There's no legal thing against them doing that.
Yeah, it's like D-Rose.
They own the league, and they can exactly. There's
D-Rose
multiple.
Came to Chicago, I was like, 1% chance.
Yeah.
Show me that ping pong ball.
I know,
Show
right?
me that ping pong ball that gave us that pick.
LeBron, same deal, and it all started in '85 with Patrick Ewing. I mean, there's nothing against them doing it.
Yeah. My favorite thing though is when you really look at some of these tapes. Michael Beasley. No. Not Michael Beasley. There's a different Beasley that was involved in this.
Oh, Malik Beasley.
Malik Beasley.
Malik Beasley.
And it's like 5 seconds left, and nobody's like playing, and he's just sprinting across the court.
Yeah. Get that three, yeah.
Couldn't be clearer.
I know. It's bad.
But yeah, things are crazy in the market. We will field any and all questions that you have in the YouTube channel. If you want to join us live, we're streaming on the Tasty Live channel. I've got the Money Match promo pinned to the top of the YouTube chat. Actually, scratch that. I have the Money Match promo in the YouTube chat, which is for new account holders, 1% cash match on any and all deposits in a 30-day window, and you also get commission-free trading, so check that out. But we did just refresh our referral program with a spicy little twist. So now, if you scan this QR code, you will be brought to the referral page, but now we are rewarding both the referrer and the referral. So if you have one of your friends come in, referee or referral, you tell me.
Referrer and referee.
Yeah. But yeah, you both get $100. Minimum funding requirement is $2K on an initial deposit. But yeah, check that out. I think it's a great timing as well, given the holiday season that's about to come up here. But yeah, tastytrade.com/referral. You'll see our brand new, sparkly, shiny new landing page as well. You can find your referral link in your web-based trading platform or your mobile platform. But yeah, spread the word, grow your trading community, We hear that all the time. Every time we do a live event, people want to be involved. It's like, hey, get your buddies involved.
Absolutely.
Get
Tell your friends. Tell your friends.
Yeah.
Great holiday gift is what you're saying?
Sure. Why not? But yeah, lots of cool stuff going on in Tasty Land. Have you guys traded anything today? I closed that AMD position. So that AMD downside calendar was a winner this morning. It has since rallied.
It has.
It's actually up 2 now. That's crazy.
I know.
It was down like 8 pre-market, but I guess this is the way that the things go here. Tech stock down, instantly bid it.
And I know I didn't close it yet. I'm still winning. I should probably close it, honestly, but because it might just rally from here. We were expecting it to be down, right? Like a lot of these other stocks that we've seen on earnings, and I probably should just close it because it's just I'm only winning because the like you said, the No 7 is coming that much.
Yeah, it's been a wild ride for some of these earnings announcements here, and
out of here.
We have one more today, right? Or yeah, there was one we were talking about.
Earnings wise.
Robinhood is today, and then you have
Robinhood,
Qualcomm as well. So those are the 2 that we were focusing on.
Qualcomm does have earnings. Ooh.
For earnings this week.
Is it weird that I can't even say this out loud, but just for theater, is it weird that I want Robinhood to do well on earnings?
Yeah.
I mean, for the industry, right?
Yeah,
do it for the culture.
One boat lifts all tides. One tide.
I'm just saying. I feel like I can say that.
Lifts all boats.
There you go.
That sounds about right.
I feel like I can say that based on something Tony said when I was on the live show with him the other day. So I was like,
rising tide lifts all boats. Yeah, I mean, big implied volatility there. You got a 11-point expected move on a $140 product, so pretty close to 10% there. And you're still getting a lot of implied volatility through the end of the year. So 11 points for this week, 25 points for December. So yeah, lots of volatility expected there. And then Qualcomm, $180 product, less than a 10-point expected move. So that's way lower implied volatility there. But you're still seeing a good amount in December as well, 17 points. So about 10% of that stock price projected to be up or down by December. So still got some volatility we can trade. But I see some people in the YouTube chat pointing out ZB. This is the chart we were looking at. Just a big red candle today with really no news attached to it. But we are speculating that it could be a result of what's going on behind closed doors right now in government space.
Kind of feels like it. A combination of that and I mean, again, the Fed cut rates doesn't nearly affect the far out that much, but Glenn mentioned the idea of how much that's changed. That could be another part of it too. But I mean, this is a big move.
Yeah,
it's undeniable.
Mm-hmm. But yeah, Glenn is here, which means one thing and one thing only. I get to tell him that I have no losing positions, never have, never will.
Again?
Never. Yeah.
God,
look at that.
Clean slate.
Look at that.
Ate it all up.
Yeah.
Well done.
$10 here, $20 there. It's been real fun.
All in the green.
I love trading FX.
I'm glad.
But yeah, I would love to hear what you are looking at here on the TastyFX platform. If you don't have a TastyFX account, you can open one through the tastytrade trading platform. It's very easy to do, and this will enable you to see this TastyFX information, popular USD, non-USD, other non-USD, some Scandinavian in there.
Scandinavian.
Some emerging USD.
Now you're just getting exotic.
Yeah. That's what I want to hear. What's the exotic pair of the day? Is it ZAR yen?
Wow, you actually nailed it. That's what everyone's looking at. I appreciate.
No.
I appreciate you bouncing around the platform for me. Today, I want to look at why the U.S. dollar is at an inflection point, why it's very interesting at this current moment to look at FX markets amid all the other crazy price action in other asset classes. Outside the TastyFX world, would you pull up the DXY chart for me?
Sure can.
Dollar basket. I don't look at this a ton because I'm looking at all of those spot exchange rates day in, day out. But it is interesting to pull up. It's a nice reference point. This is a historically important dollar index weighted against other currencies, about 50% euro, yen, some others. And right now we are eclipsing the 100 level in this index for the first time, touching it for the first time since August 1. And we haven't traded through it since May, early spring, when we were in free fall down from a strong dollar at the beginning of the year. And looking at the buildup, how we got here, all green candles since the October FOMC. Yep, zooming in there. And so we are on quite the tear for the US dollar. And, you know, this 100 level, while you can't trade this product necessarily, there's some ETFs you can have some exposure to with relative weightings, but it is important because this is a headline number. I'm sure if you type in DXY 100, a ton of Reuters, and everyone's already written about it, I'm sure, and more to come. And so...
written about it in what way, you think? What way? Like, what are they saying?
I mean, just DXY breaks 100.
Oh, okay.
And I don't know.
Well, let me know when we start seeing the headlines that say we need to buy dollar now. But
okay. Exactly. But now this comes back into focus, and more participants perhaps looking at this U.S. dollar as it prepares to mount a comeback or reaches the top of its range. I'm going to talk out of both sides of my mouth right now, just because this story has two real cases for a dollar continuation or a pullback, and I'll take you through what dollar markets may be suited for each from a tape action perspective. First, want to pull up euro dollar here because that is the highest weighting. If you're looking for a trade idea from looking at this dollar basket, I'd look to euro dollar first, just because that is the majority of the weighting of that index, and so you'll see pretty similar tape action. But here now we're in the spot market below 115 for the first time in the same time horizon since that August 1 move, and sets up, if you scroll back, zoom out a little bit, here we're getting a little bit of a nice range where we have hit this 115 level a couple times and bounced back. But also, as you know how we started the year, we've come up from around 105. So a lot of historic tape action for dollar continuation. What's interesting now, though, is I saw something come across my desk that Trump officials are now looking into dollarization, kind of another lens than what we assumed when the administration took over, that they'd want a weaker dollar, and have gotten that thus far. But when it comes to certain environments like Argentina, some of these Latin American countries, they're looking into now why dollarization, pushing that agenda for more countries, just more involvement as a result of not letting China do a similar thing, some kind of national security, some global dominance narrative, whatever you want to insert. But it might be a time when the administration is starting to reconsider, what their efforts are, if they necessarily want a really weak dollar, if they want to kind of bring the dollar dominance back a little bit. So that could be, if that's a pivot from that agenda, then that could be a major long-term dollar catalyst to get us back to where we started the year. But at the same time, I mean, historically, FX markets are mean reverting over the long term, and so you have a really nice historic extreme if you want to play some of this range coming off of 7 positive days in a row for the US dollar. And so this chart's interesting, looking at the dollar Swiss franc. That's another interesting pair that is set up from a tape action perspective similarly, top of its range, just now hitting 0.81 for the first time in a while. And so we've seen it struggle here. And so I'm looking at how it performs here if we trade straight through here, or we start to get some chop, because this could look like the past 6 months of price action, or similar to euro, we could just keep going higher and higher. But from an interest rate perspective, this one interesting as well, because you start to think of the dollar has done super well. Maybe it lets off the gas a little bit. But when we talk about the interest rate picture and the growing chance that we don't get a cut in December, that is, even though it's growing, it's still at around 38-40% that we don't cut. If that is to become an actual reality, then this could theoretically have a lot more room to run if there is no cut. And conversely, the Swiss National Bank is now considering maybe getting into negative rate territory, and they're already at zero, and that opens, expands the lifetime of the carry trade that is available in this pair. Whether that becomes more and more popular, that's kind of how we saw it in the dollar-yen case, is as that becomes more popular, it starts to reflect in price action as well. Here, maybe more of a hidden storyline. But those are the two markets that are really interesting to me. If you're trying to trade the range and say US dollar might give some back, Australian dollar is interesting to me, just because that has kind of a different risk profile than, like the dollar Swiss franc, where the Swiss franc would have also some haven flows. This having some, historic correlation to U.S. equities, Chinese equities, in the sense of risk on sentiment bolstering this Australian dollar. And we've seen this be one of the most mean reverting pairs this year without, as extreme of a dollar fall off. So this chopping around 64 to 66 cents could be very interesting for someone that is trading the range and not necessarily taking a long US dollar position for the short or medium term. That's what I'm looking at today, and why dollar's interesting to me midweek post FOMC as the government shutdown continues.
Bravo.
Nice work, kid.
I have to buy the dollar franc here. Strong swap ask as well. So
Wednesday we're getting a 3-day roll.
Ooh.
So your weekend, these are settled on a T+2, except for the Canadian dollar. So on Wednesdays, you'll see elevated swap bid and ask, as holding this position through 4 p.m. Central Time will factor in those 2 days of interest or overnight financing charges.
Perfect. So yeah, I just got long the dollar franc at 8.1123.
Into strength.
But I think I'm also going to get long the Aussie dollar.
Okay.
So I'm going to be long the dollar franc and short the dollar synthetically with the Aussie dollar pair to kind of soften the directional.
Yeah.
But siphon that swap ask premium.
There you go.
Out of there. And then if you get a continuation in my favor, I'll just close the winning trade, leave the losing trade on, and that will naturally make me more directional if and when that happens.
Yep. Yeah, and you also are now playing kind of similar sides of risk sentiment as well, getting long Australian dollar and not getting long Swiss franc. So very interesting.
So I did have a long dollar trade on from, July sometime. I took it off maybe about a month ago. It was a mistake. And it was a mistake because when I started making tastyfx positions, I deliberately went short dollar, right, against that. And I never took them off. I just let it roll. So I'm down in the tastyfx account. But now that we've gotten back to par, which is where I always thought the dollar was going to go, now it's time for me to go ahead and put another long dollar trade onto this level, honestly. And so I am going to get back in 6E in the euro. I'm still going to keep my short dollar trades on tastyfx. It's time for me to get back in a long dollar trade vis-a-vis doing a long put spread in 6E. I think I'm going to do the 116, 113, low extrinsic on that. It's going to cost me about $1,300. But now, to get to that point, kind of like Mikey said, it's kind of like I'm able to sort of rationalize in my brain all the other different trades around. I'm basically leaning on this long dollar trade once again to be able to do stuff in the tastyfx. So essentially what I'm saying here is that if the dollar starts going down again, it's my fault.
All right. I was looking for a scapegoat.
Yeah.
Thank you for volunteering.
So you're doing 116.
Yeah, I'm doing 116. So the reason why, I'm doing 116, 113. So I'm identifying the 112 level. If you go to the chart, yep, right there. Was it not back there? Exactly. So now that we've eclipsed this August level, the next area is that. And so I'm really identifying that. I could have gone 115, 112 put spread, but there's a little bit too much extrinsic on that. The 116, 113 is better, I think. And I'm going out to Jan, actually, because I just feel like, again, with dollar things happen, even though we've seen a pretty swift move here recently, they do take a little bit of time. I want to give it some time.
Yeah. Perfect. So an at the money put spread, ultimately.
Essentially, yeah. It's a 39% pop. I mean, I don't want to make it a higher pop because that's actually a little bit too much more money than I really want to pay for the put spread if I go deeper in. So I'm just going to go with that 116, 113.
Beautiful.
And we're filled.
Beautiful. Cool. So yeah, we got some new trades on. How about a spicy pair? Non-USD.
Let's look. Let us see what.
That's right. Go real exotic, Glenn.
Just scroll all the way down.
I think, too, it bears mentioning again what you said, the idea of negative interest rates. We haven't talked about that in a while. I just remember first hearing about that a few years ago. I want the opportunity for negative interest rate. I want to get paid for borrowing money. I would love to see how that works. Seriously. Somehow I don't think it's like as awesome as it sounds. I feel like somehow nothing ever seems to be, right?
And you never know until
it actually
until it affects you. Like, man, should have thought of that.
Well,
what's interesting to me, Australian dollar, Japanese yen is interesting, just because it's established on the daily chart a pretty wide range and a pretty consistent range, and now you're getting a better price today on some Australian dollar strength. If you were to get short this pair, I believe it's in popular. It's popular.
There we go.
Yeah, so if you zoom in here, since we had that administration change, or at least the perception of Japanese administration change, and jumped above that 98 level, we've been chopping around 101 to just under 98 here. It looked like it was going to fall off below 100 yesterday. Now we had a strong tick back. Not sure about the fundamentals necessarily, reading into it too much, but if you're trading the range here, then you're getting a better price today than yesterday.
Indeed.
So shorting the dollar, the Aussie dollar yen.
But you don't like that because you're long Aussie dollar already.
I can't do it.
That's fair.
Fair. I can't do it.
Think about that. I mean, also interesting is still euro pound. Pound has not had a leg to stand on.
Yeah, true.
You have some event risk coming in the form of a Bank of England interest rate decision tomorrow. They are expected not to cut. Let's see.
Probably not. Bank of England, right? They're already at where are they at, actually?
They are not expected to cut. They're at 4%.
Okay.
Still, so they're up there. But yeah, we had in the U.S. dissents on both sides for the first time in a while. That's not as popular. Usually, Fed decision makers all move in lockstep, in tandem, and then somehow disseminate that they disagree later or earlier. Among the Bank of England members, it's much more popular historically to have honest and outright dissenters. So we're expecting 2 out of 9 to vote cut, and 7 out of 9 to vote unchanged. Last time we had 3 vote cut, 6 unchanged. So that's what I'm watching tomorrow morning. If there's a surprise there, then we could get some reaction out of this pound market, any pound market. And then, of course, they'll start speaking afterwards, I believe. But yeah, I mean, not as exciting from a U.S. data standpoint. We've got some Fed speakers tomorrow. That'll be interesting, but no non-farm payrolls on the docket this Friday. which I look forward to every month.
You know that meme with Paul Rudd where I think he was on Hot Ones and he's like opening something. He's like, look at us. That is the U.S. and England. Okay, we're both at 4%. There, look at us.
Who would have thought?
That's right. That's right.
Yeah, I'm excited for some data to come back. It's been quiet.
Well, hopefully we'll give you a court decision. That's the best we can do today.
Dude, it sounds like I don't think that thing is expected till January. I think it's gonna be a while. I'm surprised by it. I didn't know it was gonna be that long.
I didn't either.
Yeah, I mean, I've seen that a couple places. When I was looking at one of those Cal sheet, I mean, it was saying it said like that was the first place I saw. It's like January. Like really? They're hearing arguments now. But I guess it totally makes sense. They got to take some time to really go through and parse through and figure it out. So I was under the impression that they were hearing arguments and we'd probably hear something tomorrow, but I don't think so.
We shall see. Yeah. Okay, so we got tree trades on.
One of them already green.
Barely.
Too soon.
Yeah. Everything's red. Long the dollar franc, short the euro pound, and long the Aussie dollar. So
it's pretty diversified.
Kind of offsetting my dollar exposure for a little bit here, but taking the premium from the swap from this dollar franc position since I'm long 250 and this one's flat. So that's always fun. Just kind of siphoning that yield. And then the euro pound, short the euro pound, that's a positive swap bid. So just trying to find directional opportunities with a positive swap. It's my favorite thing to do of all time.
And you've done pretty well at it so far.
Thank you. Appreciate it. Well, Glenn, I guess we will release you to the Greek food with some turkey meat sprinkled on top. I know you love the turkey.
Yeah, no turkey today.
Yeah.
Fine. Chicken's good.
It's going to be good. But yes, thank you for your analysis. Appreciate it. Always a pleasure.
And that's why I do it right there. I only do it for the applause.
The claps.
All right. Thanks, guys.
Yeah. Appreciate it.
See you, man.
Market's up 50. NASDAQ up 210. Bitcoin up 3K. A lot of movers here.
Lots.
Movers and shakers. Gonna pop over to the YouTube chat now. Again, if you want to join us on the YouTube channel, we're streaming live there. Just head to Tasty Live, and we'll get to some trade ideas here. Microsoft sitting out this mini rally. Yeah, down 5. Interesting. Not following suit. Only one green day in the last couple of sessions here. I love this, just a long call. Boom. This is one that was left over from earnings, worthless. Do we get back in?
Yes.
I think so. When Microsoft's
I can't remember
red
if
and
I
the rest
added
of the
this
market's
yesterday or
green.
if I already had it on. This 550. It's a little out of the money, honestly.
Yeah, I think I'm just going to go longer term here.
I got Jandice. That's what I got.
Yeah.
And I have the 550, I think, as of yesterday. I really can't remember if I might have rolled this yesterday. I might have done this yesterday. I traded a bunch toward the end of the day yesterday.
Yeah, I think the Jandice makes sense. Do you have calendar or diagonal?
I have calendar, yeah. But you could diagonal probably works too. It might be better at this point, honestly. I hadn't really analyzed. What are you looking at?
I think I'm gonna
520.
Yeah, I'm gonna do something like this. Just like a 530 calendar inside the expected move in December. So just an inside up move. Not playing for anything crazy. Yeah. But 530 gets you halfway between where it's sold off from the top.
Yep.
And it's a $500 debit. So let's see if we can get filled here. And of course, the more time that passes, the more profit you can get out of this thing. But if we go from 510 to 530, this will be a $200 winner.
I like it because I already have one on. I'm going to add one, but I'm trying to get filled at 5.
Yeah. I like it.
Market moving higher here.
Yeah. Up 52. I mean, they're crushing volatility.
Yeah, they are.
X contract down a point.
Did we get like some data in the last 30 minutes that I don't know about?
I don't know.
It's crazy.
I don't know. But yeah, big move to the upside, reversing half the move we saw yesterday. But again, I mean, we saw the big move, but it wasn't paired with volatility expansion. So I think that will eventually just result in maybe some chop, more narrow ranges, but yeah. Status quo.
And the only reason I'm saying it's a little weird, honestly, is because today it's not like, so yesterday we saw dollar up, we saw market down, we saw gold down, we saw Bitcoin down. Today we're seeing the reversal of 3 of them, but not the dollar quite yet. And so that's why it's a little strange. I'm like, what's going on that I'm missing? Or maybe it's just nothing.
Yeah, I mean, I think the market is digesting something that we are yet to know about, it feels like. Someone wants to see a long bullish trade in live cattle.
Ooh. Remember when we were like looking at it at the time and it was down? I'm glad we didn't buy then.
The screwworm fiasco must be over, given this compression in price here. But yeah, I mean, what we've been doing is calendar spreads. I think right now it's a little tougher because you have the 30-day and the 2-day lining up in this Z contract. If you wanted to go more long-term, you could do something like Feb Jan, or just do like a vertical spread in the 30-day. I think that's really probably what we're going to end up doing here, just because these are much longer-term contracts, not as active. I could throw on a little short put spread here.
Though, man. Some of the strikes anyway.
Yeah.
I looked at.
Yeah, we could do a little something here. So 215, 213, almost $300 in profit potential, $500 in risk. I think that works out for me for this account size. And the 215 brings you below where we've traded since July, even into this big sell-off here. So yeah, I'll bite.
65%, huh?
I'll bite. Why did AMD not do better after earnings? Didn't they beat revenue by 20%? Yeah, this is the oh wow, up 6 points now. This is the issue with earnings. I mean, you can have a stock just report crazy earnings and have the market digest it as a negative because they were expecting more. So we saw that in Meta. Like technically, Meta beat both of their earnings expectations, but or I should say Meta's earnings per share was down, but the revenue was through the roof. And we've seen it before where both numbers are positive and the market tanks. Microsoft is a good example of that. So Microsoft had earnings and we've fallen from grace here, down back to 500. Still significantly higher on the year, but sometimes that's just how it goes. And that's why there's so much implied volatility and uncertainty around earnings reports. Like even if it's a good number, doesn't necessarily mean it's going to move the price higher. AMD's up now, but AMD was down to 240 after hours yesterday. So it's
almost touched 235 looked like.
Yeah, it's craziness.
This is why we put on the put calendar. Honestly, I'm surprised it's actually up. And I actually tweeted. That's why I had to look it up. I retweeted somebody who mentioned this effect that we've seen in some of these earnings, like earnings days move in this quarter have been negatively biased for the average S&P 500 stock, and that was the whole thesis behind the trade, because like Mikey said, we saw it in Microsoft, we saw it in Meta, we saw it in many names. We did not see it in Google. We did not Amazon. I can't remember. I think Amazon went up on earnings.
Yeah,
but honestly, like at least 5 out of the Mag 7 went down on earnings.
Mm-hmm. So yeah, we are just in interesting times, that's for sure. TLT Zebra, long the 90 call, short one of the 91s in 16-day. I have the exact same trade on. So this is not so fun right now, down $170. The short call, I think we can buy back in this environment. So pay 20 cents to free up another 100 deltas. So this will increase my cost basis by 20 cents. I just did it, but now I have possible 200 deltas if we get a rally of 1 point or more in TLT. So I like that adjustment, especially because that short call was originally sold for $120 or around there, and now it's trading for 20. So you've captured almost everything you can out of it, and now you can double your delta on the upside. So I just made that adjustment. we're right there. We just need some bullish moves in TLT. If we get back up to 91 or 92, this will be a net winner. So yeah. And if you want to get long now, I mean, TLT is a low implied volatility product, 12% IV, which is why I like the Zebra. If you just even do like the 88 and 89, same setup, $200, no extrinsic value, and you can get a ton of leverage on a product that's been moving.
Yep.
Let's see. Rivian having a good day. Yeah.
Guess I was wrong on that one. I thought for sure it would not be good on earnings, but, well.
The old Rivian.
Looks like it used some hymns to get a nice candle.
Yeah. Big green bar, up 20%. Pretty crazy move. If you look at implied volatility, there was a decent implied volatility crush, but these options are still doing very well relative to implied move. So nice move there if you were bullish, that's for sure.
Shout out to those who played it.
Trying to figure out why the Russell is running before grabbing some more put spreads again. I mean, the Russell is up more than these other indices. A-mini's up 0.75%, NASDAQ up 1%, Russell up 1.6. So.
Oh, hold on. Somebody talked about cattle being locked down, limit down. Is that real? I mean, it looks like it from the intraday chart. I don't know what limit down is for cattle. Huh. But you can see it's not trading right now.
Yeah. Interesting. I guess it's 3%.
No, right? Is it? It might be.
Huh. But yeah, Russell moving decently to the upside, trying to erase all of the move from yesterday, where NASDAQ is only half the move. E-minis about half the move. But yeah. It's been a long time since we've done a broken wing butterfly in SPX. True. True. Did I lose internet here? No. Let's see. SPX. SPX. Broken heart butterfly in SPX, usually done on big down days. Can you do one to the upside, and what are the risks? I think I need to restart my platform here.
Cool.
My Microsoft computer's crashing.
Yeah, I mean, I think it might be down, limit down. Interesting.
Here we go.
That's wild.
Yeah, LE.
Yeah, I think it is. It says new initial limit, price limit is 0.0725 pound per pound, which I think is interesting. Huh.
Yeah, we'll see. But yeah, I haven't seen that in a while. I wish I knew exactly what the reasoning was for something like that. Okay.
Well, you don't see that often.
Yeah.
Oh, last time I seen anything limit down. Weird.
Supreme Court showed doubt about tariffs. No tariffs good for small business Russell companies.
Well, duh. Actually, you know what? This has got to be what's ripping the market, because look at small caps. I mean, they're up 1.6%. It's got to be some of the stuff that's well, not leaking out. I guess they're live streaming it, honestly.
Yeah. Do we have the ability to switch to Jamal's platform if we can?
Switchy.
My whole computer's freezing.
It happened to me the other day. It didn't happen on the show, but at least you got a partner, and we can.
Yeah.
Yeah, just if we can switch over to me. The broken wing butterfly. Do you pronounce the W, or is it
the broken
silent?
Wing. Yeah. So actually, I misread. Not a broken wing butterfly, a broken heart butterfly.
What is that?
So the broken heart butterfly is where you disconnect the shorts.
Okay. Separate the shorts a little bit.
Yeah. So you have your debit spread closer to the market price, and then you have a wider credit spread. So it's like a condor.
Kind of like a condor. Yeah. Okay.
but doing it for a scratch or a small credit.
In the next expiration, or 0 DTE?
It's the same expiration, so it just depends on how long form you want to go.
Right. I was just wondering what they were asking. Were they asking 0 DTE, or they were just asking in general? The idea of doing one.
But yeah, if we can pop over to Jamal's platform, we can see what we can get here with this SPX play.
Fun believing the market. Yeah, that's fascinating. I mean, I can't tell if that cattle is down limit, but it's still kind of fascinating to some degree. I mean, super interesting.
Yeah. I mean, if it's limit down, I mean, let's see.
If it's limit down, you might want to. I don't even know if your order's out there.
It might have just been swooped away.
Somebody's gonna take it, and then it's gonna
20% price limit, 7% up and down limits. So I don't know.
Unless I don't know. I really don't know. Wait, unless it closed. I mean, unless the regular session closed. I really don't know. I don't know a thing about cattle. Okay, so I couldn't tell you. But it tanked at 11:09 our time, and it's just been sitting at this price here for the last. I mean, there was a few bids, few offers, but it's just sitting here. It's not really even moving. It's been sitting here, and it's like done trading. It's kind of weird.
Yeah.
Hello, you guys hear us?
John, if we can
we switch to my platform?
That would be great.
Hello.
Hello.
Is it me you're looking for? I can see it in your eyes.
Whose platform again? I'm sorry.
Mine.
Jamal's.
Tom's.
My bad.
It's all good. My whole computer's frozen. I can't.
They're eating Greek food without us, Mike, is what's happening right now.
But yeah, there we go. So yeah, Broken Heart Butterfly. We could just do like November.
Regular Nov?
Yeah.
Cool.
So yeah, I would just look at like a 10-point wide call debit spread. They want to do it to the upside. So
upside, okay.
Yeah, like a 10 by 20. So like buying the call at 10-point wide and selling a 20-point wide.
Little out of the money, collecting essentially.
Yeah, you want to pay for the whole thing.
So like how far wide?
It's probably gonna be pretty narrow.
This one? Oh, I thought you said 10 wide.
Yeah, that's fine. And then do like a 20-point wide credit spread above it.
Okay.
And that should yield a small credit.
How about that?
There you go. So yeah, we used to do these into moves, or if we wanted to play it for like a reversal.
Mm-hmm.
One thing about it is because they're so narrow, you aren't going to get that full premium or the max profit, of course, until you get closer to expiration.
Mm-hmm.
But you can still make a couple $100 for sure. And if there's a down move, you can
get to keep all your credit.
Yeah, you can buy in that risk too. So you can move that 20-point wide into a 10-point wide and do it for.
Well, it's tempting given that we're, a solid. At this point, we're solid 100 plus points from this upside credit, the beginning of this upside credit spread. It is somewhat tempting. I do like this. It's just, are we gonna rip? Well, we'll put this on.
Yeah,
I'll put this on. Oh wow! Immediate fill, Mikey. Oh no! Oh no!
It's no good. Any hood earnings trade? Do you have anything on in there?
I don't know. I really don't know exactly what I want to do. I mean, could just go with the same old. But again, I mean, and I know we've largely applied that thesis to the major tech stocks. But again, even the thing I saw earlier, it's saying the average S&P 500 stock, which Robinhood now is. I really don't know what I want to do. I don't know. Should I fade it for the culture, or should I?
For the culture.
I really don't know.
I think
I even looked at a strangle a little while ago just to see. I was curious. And again, Deese is not exactly earnings. I don't think it would come in that fast, but Was I looking at these? I can't remember. Yeah.
I mean, I like these like short-term calendars. You could even do it like just back to the highs that we've seen.
No, for sure. But that's the thing. I really don't know I literally really don't know what direction I want to go. Like normally it's easy, you know. Like there's no emotion around it.
Yeah. It's just like, oh, it's on the upside.
Like, it's a competitor, and it's also, you know, in the same field.
Mm-hmm.
By betting for, I don't know. I don't know. I'm having a crisis here. What were the recent highs?
150.
150?
Right around there.
Yeah.
Yeah, just above it.
All right, I just need to get over myself. 166. That's pretty cheap. We'll do it. We'll do it for 170 and pay up. Bingo.
Boom. Any Marvell trade ideas?
I haven't traded that in forever.
Yeah, they have earnings early December. Seeing a nice 6% rip today. Yeah, I mean, this is if you are trying to play for a reversal near highs. Got as high as 130 earlier this year. And it's been climbing back ever since the tariff lows. So good to see this if you're a bull. I think for me, I would have rather placed a bullish trade into a sell-off like the day before or yesterday or a couple weeks ago. It's hard to go bullish into a 6% move. But if you think this is just the beginning, then so be it.
I mean, this is still a chip company, right?
Yeah.
I mean, how come it doesn't look like the others? How come it hadn't?
This one doesn't look like the others.
I don't even know if I would play it for earnings. I would play it for when they're going to get some news about OpenAI, honestly. I don't know. It's just my thought. It's either just hasn't played catch up yet, or there's something different about it compared to the other tech names. And I'm not even talking of the Meta, the Apple of the world. I'm talking like even AMD, even Qualcomm, even Micron. Micron, by the way, I am so glad I got out of my strangle on Micron yesterday that just hadn't been working. God, I'm so glad, because I would have been so pissed today. Up $18.
Yeah, this is another weird one.
No idea.
This is like everything's IBM now, where it's like you gap down, make lower lows, and then everything's reversed. You're back to all-time highs in one day. Crazy market we're in here.
Mm-hmm.
But yeah, seeing a lot of bullish moves across the board. We'll see what happens. All right, one more here. Let's see if we can get one more. Can we explain Microsoft again, please?
Explain what?
We're just doing the 500, the 530 strike call calendar. So we're buying January for $1,300. We're selling December for $850. So we are trying to take advantage of the near-term implied volatility in December, inventorying delta in January at a slightly lower implied volatility, and we're just playing for a move from 510 back up to 530. And if we get that, we'll probably see a $200 profit. And that can grow the more time passes, because time passing means short option decay and less sensitivity to a market move to the upside. So, yeah.
Yeah, long story short, I mean, we could do a short put spread, but there's really not much volatility in here. And so you can see these call options are expensive. Like Mikey said, $1,300. So we're using the D, upside to offset it. We'll see if we get filled.
Yep. But that's it. Thanks for tuning in. Once we're filled on that Microsoft trade, we will post it to the Tasty Trade follow page. That lean hogs position, probably not going to work out. I have it routed as a spread, so it won't fill unless both legs are filled anyways, but we'll see what happens when the market's open, if they do. But yeah, if you want to reach out to us on Twitter, you can. I'm at Trader Mikey B. Jamal's at Jamal Chandler. Check out the links in the YouTube chat. We got the tastytrade.com/referral program, the /money match program, a couple of nice opportunities for you to grow your trading community. But yeah, stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. We'll see you same time, same place from the CBOE floor tomorrow. First time. It's going to be amazing. Don't miss it. 11 a.m. Central. We'll see you then. Peace.
tastytrade's Money Match event, unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
I think I went down the typical path of investing in stocks, and I was really frustrated in the sense that it was a buy and hope type strategy. And so I was looking at, different ways to learn about options, and I saw Mike and his whiteboard, and it all made sense. There's another world out there with options. It gives flexibility. It's more capital efficient. And tastylive does it again. They teach it in a way that is fun. It's easy to understand, and you're learning from people that have done it for 40 years.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
What is going on, everybody, and welcome back to another Risk and Reward. Today's Wednesday, another volatile day in the market. We're getting a little bit of a recovery here. We'll get into all of that. We should have some more exciting news later today. I think Trump is speaking on the markets too, so we might get a little bit more volatility. Before we get into that, I hope everybody's doing well. My brother Gus, how we doing today?
I'm doing good. A lot better than I was yesterday. I appreciate Dan Cecilia stepping up to fill in for me there. I don't know if you informed the people at home or not. I am playing hurt here. I got a back situation going on. Had me pretty much completely immobilized yesterday. Getting around a little bit better today. But if you see me, thank you for the sympathy, FX team. But yeah, I'm nursing this. So if you see me hitting any weird faces or moving at any weird angles throughout the course of the show, just mind your business. All right, I'm figuring it out. We're working through things.
Oh, good, brother. We got a cane waiting for you. We got a cane.
Yeah, that's true. Yeah, maybe I could break out the cane, top hat, maybe a little monocle, change up the whole look of things.
I like the vibe. Yeah, I like the vibe. Other than that, I know it's Wednesday. It's been a little volatile in the market. We've been making some lows. Before we get into all of that, my brother, how we doing? What's new? Any new company headlines sticking out? Any new crazy marketing videos? I know over the last day or two, my girlfriend and I, we were scrolling. We had found more companies doing some insane creative ways of marketing, like little skits and things of the sort. So what's new, brother? How we doing?
Yeah, there's nothing that I could think of off the top of my head, but I do think that you make a really good point there with marketing just getting a little bit more unhinged. I think that the Sydney Sweeney thing and subsequent drama, and the fact that it all wound up working out for American Eagle kind of has really fundamentally changed the way that marketers are thinking here, and they're willing to take some more risks and do things that are maybe slightly more controversial, where feels like we're returning to this earlier 2000s era of commercials where commercials were like insanely unhinged. There was the Doritos Super Bowl commercial where they put their fingers through a glory hole in the wall and then some guys like sucking off their finger on the other side. Yeah. I remember the Skittles commercial where everything the guy touches turns to Skittles, and it's just like this sad saga of this man who can't do anything in his life because he can't touch anything and it'll turn to Skittles. I like it. I like that we're getting back on this unhinged wave. As far as market action and company headlines, Rivian is my big one for today. They just blew everything out of the water in their earnings call before market open this morning, gave really good guidance for the rest of 2025. Stock's trading up almost 23% right now. As you all know all too well, I've been deeply long Rivian for some time, and it loves to play with my feelings. So I'm not exactly buying into this little big move that we're catching today. I've seen this story before. Okay, I've seen Rivian test 17. I've seen some things. Yeah. I've been around this company. So until we can actually get a confirmed break of 17 and go higher and quit channeling the way that it has been since I opened the position and for the year leading up to that, I'm not going to get too excited. But it's nice to have that move in the right direction for me.
That's completely valid. Almost as valid to the fact that your hair is glowing right now. You got a comment in chat, and then I looked. I was like, bro, your hair is lush right now. You got some new conditioner. Put us on to whatever company that was, because we need to see if they have options traded on them.
Well, I appreciate the compliments. I don't have a new conditioner company going or anything. The thing is, I woke up looking like this today. I would typically take a hair shower before I go on air, but roll out of bed and just kind of had it going on today, which is very fortunate. This is usually not the case. I look much more like a wet raccoon, but I appreciate the kind words. I'm trying to think about what conditioner I even use. I think I have I have Redken. I have Redken Extra Care Curls. Okay. It's a little pricey. I think the bottle that I have is like $60 for 12 ounces or something, but hair care gets a little crazy.
You know what's so funny? I learned about Redken the other day. So my girlfriend got her hair done not too long ago, and she's trying to figure out decent products to keep it well maintained. And Redken was one that was brought up, right? It was thrown around. I was like, this is a better quality product. And I learned about that within the last 7 days. So when you brought up Redken, I was like, I know exactly what you're talking about. I might not use it myself, but I'm on board. We do have a question about Gus Arrow. I'm holding a Tesla put calendar 450 strike, December, January. Currently have a small profit on it. Wondering when is the best time to close it. Curious to see what you got for that contract as well. We can pull up Tesla here, take a quick look. I know this was on the no trade list for some time, but IV rank's up on it. We're trading near the highs right now, about 25 IV rank. 45 million shares traded on the day. Tesla's always a pretty active stock to get involved in. Wonder what these premiums are looking like. No earnings in the way either. You said it was Rivian you were looking at yesterday, right?
Yeah, Rivian's what's been catching my eye this morning.
Yeah.
As far as this on Tesla, I'm looking at this trade here, trying to visualize this a little bit better. Redken's nice. It is. My stylist recommended it to me. She told me I had to grow up, so I said okay. But I did.
You put
Shout out to
down
her
the
though.
6
I know a
and 1.
stylist. I know a stylist has my best interest in mind when they say don't buy it here though, because I know that they're getting commissions on that, and if they're going to save me the $20 not buying it in the store and lose out on their commission just to give me a better price recommendation, that's the kind of person I'm looking for.
100%.
So shout out to Amy. I haven't seen her in a while. Actually, it's getting a little long on me.
I think it was time we put down the 6 and 1 though. I think it's
it was never 6 and 1. I just leveled up from $15 a bottle Tresemme into the nicer Redken stuff now for both the shampoo and conditioner.
So we got no earnings for Tesla, but stakeholder meeting is this Thursday after hours.
Yeah, is that stakeholder meeting the one where they're going to make the final call on this Musk pay package deal? I know that's been kind of a hot topic for them upcoming, but I don't know if that's their next earnings call or their next stakeholder meeting, but I know that's right around the corner.
Yeah, I'm not exactly sure when they're going to talk about those topics, but let's look at the implied volatility and see where it's getting a little bit more volatile for these premiums. It's looking like, obviously this morning we had a little bit of a sell-off that popped the premiums up a little bit now here. It is interesting. Tesla's rallying to the highs right now. We have implied volatility rallying alongside with this. So we'll keep an eye over here on Tesla. I mean, the options chain is very liquid too. You can go pretty far out without being too close to at the money. But we can circle back around to Tesla. As for the
pay decision is Thursday.
Is it Thursday?
Yeah. Okay. Yeah, that'll be a big one. I mean, that's obviously going to be quite consequential for them, that pay package decision. In response to the original question, though, wondering when the best time to close it, I have a small profit on it right now. Yeah, Tesla, I mean, it's just, this stock just scares me so much. It's like hard for me to even evaluate what the best course to take could be because, this Thursday meeting could go one way or the other and we could moon or just return right back to the, this like high 300 sort of level. This thing is so volatile. I mean, we're talking... Yeah, I mean, it channels and then it just moves. I don't know. Tesla really scares me.
Yeah. I mean,
I guess I would say I don't know that I would want to be holding through that Thursday meeting with all of the uncertainty that could bring. But if you have different convictions that suggest that the Thursday meeting might not actually have that tangibly big of an impact, you could go a different way. But I think that pay decision is going to be a big one, and it's a highly controversial one as well. I actually saw the other day that there's some group. It's called like Just Stop Tesla or Just Stop Elon or something, and they have spent a lot of money to lobby with Tesla shareholders to try to stop this pay package. And I think that's a very funny way of doing things because you could just spend the money and then vote if you wanted to. But instead you're going to spend the money to lobby with the people who can vote. That's how stocks work. Just put the money into Tesla and cast your vote. Anyway.
Right. I mean, putting your money where your mouth is pretty much the voting power there too. So I get that. Yeah.
Yeah, I feel like it can't be as efficient to take a lobbying angle with shareholders. I mean, I guess how much equity can you really get? There's different angles there, but I don't know. I think that whole topic is very nuanced. But yeah, if that fails sell off incoming, yeah, I agree. But that's the thing is like if it fails, I agree we definitely sell off. If it goes through, what happens? Have we already priced in that going through? Would we see a considerable leg higher? I think that's where the nuance really starts to come into play for me.
100%.
But yeah, if you're sitting on a profit, no one ever went broke taking profits. So that's where I would stand on that one.
I like it. As for that, I've been trying to get out of Unity pretty much all day today. It's not as liquid to get out of. We had a pretty big move. I opened the portfolio today. I was like, yo, what's going on in here? I'm almost at a 100% return on the capital, and I was like break even a day or two ago. So we got a massive move in Unity software. Still looking to get out of that one. It's pretty illiquid, I will say. We'll try.
I always think that's so funny when your thesis goes too well, like to the point that you actually extend so far above the level that there's just no liquidity to get out. I've had that happen to me a time or two.
Yeah, it's a good problem.
And it's like you're suffering from success. Yeah, exactly.
Yeah, suffering from success. There we go. We'll go up like 5 more pennies, and then I'm gonna leave it at that. I'm not gonna chase it too much. We'll go there. Because I'm sure if we leave it in, we still have, 16 days left to expiration. So such a massive move, we're highly probable to make 100% of the credit received on this position, but I don't want to hold through the next 16 days. I don't want to hold through all that uncertainty. So if we can get filled today, that'd be great. Markets are a little bit wide. We've been talking about this one for like the last few weeks. And then gold. Gold has been a little bit more quiet over here. We have some long and short delta on gold, slightly skewing to the downside, just slightly. You can see I have a negative 1.32 negative delta on this gold position. But gold hasn't really went anywhere. Do you have any thoughts on the metals so far, Gus, before we pivot from there? It's been a lot quiet since we got the decent pullback on gold and silver. We haven't really done much since.
Yeah, I got too aggressive on silver. I'm becoming increasingly less confident that my silver trade is going to be able to manifest in the time that I have left. I mean, I'm still 56 DTE on this, but
56 DTE, you might.
We have time, but I would need continued bearishness, and it seems like we may have found the bottom, and that's what's kind of starting to scare me. Is we found a pretty definitive bottom. Did a little bounce, which I would generally class as a dead cat bounce, but then we retest the bottom and we're a little bit higher. So I don't know. I mean, maybe the things turn into a bear flag here, and obviously technicals apply a little bit less to metals or broader commodities like this. But I don't know. These levels are starting to get a little bit dicey for me. It seems like we tested the exact to the penny what I need and rejected it. So we will see on that one. So that's my thoughts as it pertains to my personal position. And then I guess that also extends to my broader thoughts. I think the bottom could be in here. We'll see. We obviously could consolidate for a little while and go lower. I'm still interested to see what the implications of the government shutdown ending eventually. It seems like that should happen sometime, are going to have on the metals.
Yeah.
But until then, I don't really know that we're going to get another big bunch of bearish action coming through here.
Yeah, I hear you. It's been a waiting game on gold. It does kind of feel like it's in the queue right now. Like it feels like we're in the elevator kind of just waiting for the next move on gold. But it's been quiet. We'll see what we get. We'll circle back around to it. Any trade ideas
on
pins?
Pinterest? This is Pinterest, right? I'm not mistaken. Yeah,
Pinterest. Yeah, Pinterest. So we gap down. It looks like
I assume that this is an earnings move this morning, or some other kind of very bearish news, which means that my immediate gut reaction is always get long.
How does Pinterest make money?
Earnings miss, week forecast. How does Pinterest make money? That's a good question.
They've been around
Pinterest
for some
Pro?
time.
Do people sell things on Pinterest?
I
Do they
know.
own the images?
Pinterest, in my opinion, I think is one of the best applications to gain creative, artistic inspiration from, whether that's in a fashion sense or any creative outlet. I think Pinterest is one of the best places you can do that. But I'm pretty curious about how they actually make money because they've been around for some time. I mean, I think that's one of the applications that's been around since I was like 12, 13, 14. As we begin getting older into the technology era, Pinterest has been around and they've been doing well. So
Yeah, this really doesn't even seem like nearly bearish enough news to constitute this move. It's down 20%. They've given back their gains for the entire year, calendar year. EPS came in at 38 cents when 42 was expected, and revenue came in right on the number at 1.05 versus 1.05 expected. Sales growth up 17% year over year. Net income of $92.1 million, up 201% from a year ago during the same period. Yeah, this doesn't seem this bearish to me. What am I missing here? Average revenue per user was $1.78, 1 cent less than $1.79 expected. This seems like they very narrowly missed expectations and have just cratered. That feels like too much to me.
yeah, and I mean, they're cheaper underlying. So once we digest this earnings a little bit, I think this is going to be one that we can put on our radar. Maybe we could even throw this one into our watch list so that we do circle back around to it. I know IV's been crushed a little bit, especially after the earnings, but I think it's worth putting it in the breadbasket.
Pinterest makes money through advertising, selling promoted pins and other ad formats to businesses.
So
they have 600 million active users.
Okay, so I assume they did advertisement, but I just think like how profitable or lucrative is their advertisement? Like who's actually paying for ad space on Pinterest?
Well, that seems really logical to me for a lot of people because like if your Pinterest is like an inspiration, like especially for like DIY stuff, like Home Depot could easily buy ad space on
100%.
some DIY thing that you make with lumber or something like that.
Fashion, clothes, anything artistic that's in the niches over there.
If there's like an IKEA bookshelf that happens to be in a picture for like some room inspiration, you can be like, here's this exact bookshelf on IKEA, things like that.
And now that we're kind of talking about people purchasing and some of the commerce on the application, so I do know there's a lot of attached links on Pinterest. Like whenever you're looking for something, sometimes it'll be like, oh, this thing in the back, and it'll link that specific item. Ad space for sure. I'm just like, dang, are they for? I just thought they would have had another model at the same time. I don't know. Pinterest is one that had just kind of surprised me. It's kind of on the back burner, but it's doing its thing, no doubt.
Yeah, screw the watch list. I think I'm going to put this in my portfolio. I want, can I do like a 27, 28 short put vertical? Like, I feel like that's really conducive here. What if we go...
What expiration are you feeling right now?
Earnings today, earnings in 3 months. That'd be January, that would be November, December, January. Yeah, so I guess beginning of February. So I'm thinking January 16th, 26 expiration. That might be a little bit aggressive. That's kind of tight. But yeah, what if we do this 27, 28 short put vertical? 34 of buying power for 66 in credit. Yeah, that feels really, really good to me. And that wouldn't take that much more upside. Guess we just dropped back below 26. I'm doing it. Give me 3 of them.
I'll take 14 of them. Put a bottle of sauce. 14
Sending
of
it
them.
through. We'll see. This is pretty wide. Yeah, let's see if I can get filled at 62. There it is. Ding, ding, ding.
Filled right there?
Yeah. So got those open. This is just the exact. I love this spot. These are the kind of spots I. Thank you for going crazy on the soundboard. Whoever's doing that, I love this. This is like my favorite kind of spot to trade. Just I feel like this is a real overreaction to the actual core numbers that have been reported here, and yeah, this is a strong company. I mean, 600 million active users. Revenue isn't that bad. Growth prospects are really good. Net income is up 200%. I mean, that's a 3x. I'm here for that.
No, I love it. I love it. Massive gap down, and then the market has done nothing. And it's a cheaper underlying, too. Pinterest is only trading for 25, 26 bucks right now, so you can get pretty creative in there. Don't tempt me with the zebra now, Gus. It's a cheaper underlying, all right?
This is the classic Errol zebra spot. This is the Gus calm aggression, and then Errol's like, let's do a zebra.
I mean, $25 a share? Sheesh. LMD up on the day, breaking out to the upside, holding most of its gains. 10 million shares traded on the day. 31 IB rank. Zero post-earnings play in LMD. It's on its way to the moon. It's already achieved that goal. It is at the moon as we speak, it's looking like. But let's bring this down to a smaller time frame and see what they've been doing intraday. Okay, climbing as it's making new highs all day. Kind of reminds me of NASDAQ a little bit for the day. NASDAQ has been extremely aggressive to the upside. We've had brief pullbacks, and then now we're trading at the highs for the day as well. So got a lot of strong movers in the market. LMD. We got earnings before the bell today.
This is, yeah, I Lemonade, this company, I was kind of high on them when they IPO'd, and I've never actually gotten involved. I'm seeing that they actually missed earnings, so they must have given some freaky good guidance.
Yeah, just taking a look here. I mean, we're running out of strikes to the top end. LMD is something that I'd personally be a little bit more patient on. I know we're at the highs right now. You know, if you want a little short-term play to the downside, maybe. But the positioning is going to be a little bit more difficult just based off of the limited strikes that we do have.
Yeah, so they hiked their guidance a lot. Like, they hiked their guidance in every single sector, their EBITDA.
Lemonade Incorporation. Are you familiar with this company, Lemonade?
Yeah, they do insurance. You've probably seen their commercials before. Like their rental insurance is like their bread and butter. That's what I always see them advertising. They do they got like a cute, like I really don't know a better word to describe it than kind of girly art style, like line art and a lot of pink coloring going on.
I got you.
But yeah, I mean I considered them when I was getting rental insurance here, but I found a better deal with another provider. But this is their brand recognition is really good. There's actually
Guess you can get some better quotes, guys. Pump the brakes.
yeah, you can. Yeah, you don't just gotta go with the company you've seen on TV. I did find better myself, but I'm actually most brand aware of Lemonade because they very sharply have put a gigantic billboard right on my commute to work in the smack dab middle of my residential area here. It's really, really good real estate to have a rental insurance billboard.
So you're seeing the billboards
I drive under it every day.
of this company. This is a big company.
Yeah, no, they've been expanding out. I remember when I first started to just see their commercials trickle in, and yeah, I've seen some advertising for them around the city and stuff. But yeah, in my experience, not the best rates for me. I can't really speak to it any more than that. I can't say what situation they might be better for. Just try them all. That's what you got to do when you do insurance.
Well,
just try them all.
If you listen,
insurance companies, they think that they can win by having this giant brand recognition battle. Oh, I think of Flow. Oh, I think of that little gecko. It's all a ruse, okay? Just shop every single insurance, including the ones you've never heard of before, because it's going to suck if you get in an accident anyway. So you might as well just get the cheapest one.
Look, guys, I'm sure if you would have listened to the previous shareholder meetings, they might have said that the increased premiums relative to their competitors gets paid back via the shares themselves as we're at all-time highs. So you got to think that one through. It comes back around. No, I'm just kidding.
Well, then they better give me some shares when I buy a policy.
Facts. As for the portfolio, Nokia's been a little bit quiet. It's been a little bit of a slower mover. We did the zebra in there, and not much since the aggressive pullback off the top in there. Baidu, still a break-even trade right here. This has been an extremely volatile trade. Now we're kind of trading within a range after pulling off of its highs. Kind of same story as Nokia, funny enough. And then we also have QQQ. This is one of the out-of-money call spreads that we sold. We sold the 623 strike Market is having a pretty insane rally today. If we can go over here to QQQ quickly. So this position has pretty much flipped. We were pretty weak into the close yesterday, and we got a couple more days on that. So we'll see how the market handles itself today, whether or not this is going to be a dead cat bounce, or maybe we're going to reclaim some levels to the upside, or maybe we sell back off and take out the lows before the weekend. We don't know, but we'll manage accordingly. There was a couple of different QQQ positions that we had put on yesterday. We were actually getting kind of cute with it yesterday, Gus. I'm not gonna lie. Yesterday we bought a put, we sold an out-of-the-money call spread, and then also we sold a futures contract. So we kind of used 3 different vehicles to express the same trade idea. After the first move down, we took off the put just because time is working against us on that one, but wanted to take advantage of the small capital that's needed for something like buying a put. So just taking advantage of that, the risk reward with those puts, and then also the futures contract, not having to worry about time. So we took those off whenever we got the down move, but we still wanted a little bit lower. We really wanted that gap close from not last weekend, but the weekend before that. We had a really big gap up. So we were holding for that directional move to the downside. We got it overnight, flew past our target, and then it also recovered and rebounded before the market opened today. So the goal was to hold it to those levels, but the market, when volatility picks up, it picks up in both directions. So now it's kind of bouncing back up against this position a little bit, but we sold the call spread so that we can be a little bit more patient, more from kind of leveraging time a little bit more in this sense, and not trying to have the need to time this one, I guess. Kind of said the same thing in 3 different ways, but just kind of sitting on the sidelines now at that position there, Gus. And then
that's understandable.
Yeah.
I think it's funny, and obviously there's good reasons to do it, but I always think your reasoning for choosing between just broader Nasdaq futures and then the Qs is interesting.
Yeah. So one thing that I've always been a proponent of is, I think for short-term directional trading, I do think, and this is what the next YouTube video is going to be on, but I do think that you can get the best risk reward using the 0 DTEs. And I know when we hear 0 DTEs, we think gambling, we think YOLO, we think let it rip and let's turn this portfolio. But I think 0 DTEs is just another vehicle that we could take advantage of if used in the right way. So it's like if we're using some of these futures products and we're trading pretty directionally with them, right? I mean, again, 1 micro takes $2,000 to $3,000. $2,000 to $3,000 for 1 micro in your account, right? Like that's a chunk of change, and that's a very tiny product that you're trading. And then if you were to take about $2,000 to $3,000, or even maybe just $500, and you were to be trading directionally with the 0 DTE, if you don't have experience, don't do this because you have to learn how to manage your risk. But you can get larger returns on the 0 DTEs if you're trading directionally, because 0 DTEs, right, they're dangerous because there's a time component, and if time expires, your options expire worthless, yes. But if you're trading directionally, you don't even intend on being in this position past 20, 30, 40, 50 minutes anyway. So that time component is kind of out of the window. So if you are trading those futures directionally, you can get better return on capital using the 0 DTE options. Managing your risk is a difficult part. And if you do use 0 DTE options for directionally trading, I would highly recommend using stop losses. So for this next YouTube video, I had recorded 2 0 DTE trades. I took 2, it was in the same 40-minute video. I took 2, the first one got stopped out of, and then the second one ran a profit. But in the video, it just shows how quick those premiums fluctuate. I mean, it's so nice when you're on the right side of the move, but good Lord, some of those 0 DTE options could just drop 30, 40, 50 cents in the matter of just like the snap of a finger. So that's kind of my take when it comes down to some of the 0 DTEs, or choosing between the futures, just kind of that time component. And depending on the trade idea that you got in mind, you can be a little creative with it, I guess you could say.
Well, yeah, and I think that's let me choose my words carefully here. I think that's the beauty and the fear with 0 DTEs, right? It's like it can be such a powerful vehicle if you are right, and in turn, if you know how to manage your risk and make smart decisions over the long term, it can be a very profitable vehicle. But it's also a very scary vehicle. I always make sure to jump in with a warning, because I was one who started trading 0 DTEs way before I was equipped to be able to do that. And yeah, it can be incredibly penalizing. I mean, I'm talking get up to go refill your water bottle, sit back down, and the position has moved 60% penalizing. Yeah. So it's a aggressive thing, and you gotta do so with a great deal of care if you're going to. But like I said, that doesn't mean it can't work. That doesn't mean you should be scared away from it. Just 100%. Make sure that you have the right mechanics in place to do it.
100%. Because another point to that too quickly is, as some of the top firms too, with their newer traders, they don't start them out trading, buying the options specifically, right? That's why we focus a lot on selling the premium. But a lot of the times, if they don't have a great direction where they're heading with their trading performance, you don't get to utilize the options yet, because typically buying the options is going to amplify everything you're already doing. So if you're headed in the wrong direction and you're trading options, it's just going to get you to your destination quicker. If you're headed in the right way, it's going to get you to that destination quicker. So it just amplifies something you're already doing. So obviously, there's some leveraged products. But I digress. AMD with a strong comeback today. Wow. AMD. We'll check out NASDAQ here in a moment, but what a ripper to the upside on AMD.
Yeah, it has come soaring back. Good day for them. Is that just some market-wide sentiment that they have news today?
Let's double check. Let's see when the last one was released. Today, November 5th at 12:08 p.m., AMD rallies near record high on strong AI chip demand, upbeat Q4 revenue forecast. AI.
Oh, they just reported?
Yeah.
Yeah, just you gotta say
and
AI.
then AI, right? So back towards its highs. Let's check out how NVIDIA was doing. I know the CEO of NVIDIA was out this week and getting some chicken, right?
What'd you say?
I said CEO, right? NVIDIA out getting some chicken this weekend. Seen a lot of posts about that. Apparently,
Yeah,
a
I
lot
did
of
see
those
that.
other
He was,
companies
he was
doing well.
buying drinks and chicken for the whole bar, and he was having a grand old time. He's a happy guy.
Yeah. I heard some stocks were doing well after, just the photo op with the chicken. So he was sitting right next to the glass. So I'm like, was this his boy's chicken place? Because it was like a perfect photo op situation. I know they had some beers kind of tying their hand around there, just celebrating a lot of the news that they got going on over there. But I can't imagine being in his position. I mean, bro is the CEO of NVIDIA. Like, your company was, I think I was looking at the valuations from like even the early 1990s. And it's crazy how the valuations of NVIDIA was still pretty high even before they skyrocketed even more, within the last 5 years.
Oh, yeah. I mean, they were always a very staple graphics card company there forever. It just wasn't until AI created such insane demand for graphics cards and their chips and everything else that they really took off. But yeah, I mean, it's funny, like just, 5 years ago, I guess, pretty much 5 years ago on the nose was around the time I was building my PC when I first got started at college. And NVIDIA and AMD were viewed as like fairly equal. NVIDIA maybe a slight tick above in terms of like brand recognition and everything, but they were both distinctly just, computer parts companies. The AI fact thing wasn't even a factor, and you never would have considered that either of those companies could become the biggest company in the world.
Insane.
But it's just, the right turn of events, and Jensen Huang was brilliant very early in seeing how necessary these GPUs were going to be in AI once it took off, and he was already making the right moves as early as like 2010 to 2012 to kind of, push the company in this direction.
100%.
Chicken at Wingstop? It's up 9%. Is Wingstop up big? That's funny. Wingstop, I mean, they've really been taking off. If you want to move into a broader food service discussion, McDonald's also, I wrote an article about McDonald's earnings call this morning, and while I was working on it, I realized just the real doldrums that McDonald's has hit. They're up roughly 1% since the start of 2024. Pretty much just been moving completely sideways, and conversely, you have companies like Chipotle, who are totally tanking, and Wingstop, who has actually been having some good back-to-back years. It seems like there's some turnover going on in the brick and mortar food space.
A little bit. Again, to the point that we made the other day, though, again, you go to Chipotle, you go to Wingstop, you could just go to a sit-down restaurant for the same price. I rest my case. So I see why some of them are taking a little bit of a hit. But again, prices are the same as a sit-down restaurant. I don't know if maybe that's exactly what's correlating to these brick and mortars getting hit a little bit more.
I think Wingstop is just in a really good spot as far as like the convenience that they offer, and the price point is a little bit higher, but I think that they've gone with the takeaway model from the very beginning, and wings are sort of something that you're not expecting to get like the greatest deal in the world on wings the way that you are with a burger or a chicken sandwich. And I don't know, they have a really, really good niche that they have carved out here.
No, we do. We're just taking a look at NASDAQ right now, looking at some of the levels that we're going to keep an eye on for the rest of the next 2 days of the trading week. And I will say last week was super boring. This week, it has given us a handful of opportunities because of the volatility that we've been getting. So let's keep an eye on some of the other opportunities that we're going to keep an eye on. I know yesterday we were keeping an eye on the gap close from not last weekend, but the weekend before that. I believe it was the October 26th weekend, and that filled overnight. Not only did it fill overnight, But I believe the market thought it was a little bit of an overreaction. And especially because we were selling off later in the night too, Gus, I was like, man, we haven't had any type of significant bounces as we put in this entire down move. We could get some type of bounce soon. And I remember saying to myself, man, I hope we don't get the bounce. I hope that we don't get the bounce until the market actually opens up. But we started bouncing pre-market. Now we're rallying towards the highs and still trading at all-time highs right now. But the first objective that we had on Monday was met today. We were just aiming to get that gap closed. And the reason why we started to have those convictions came from our first value area that we were marking off earlier this week. So if we mark this off from here to here, this is the all-time highs, and then this is going to be where about 70% of the price action occurred around that all-time highs. And this is a volume profile that I also like to call top heavy. I think this is something that I tweeted out on Monday or last Friday as well, that the market was getting a little bit top heavy. And what we mean by that when we're talking about top heavy in the eyes of a volume profile is just take a look at this distribution. Look at the distribution of trading activity. Top heavy is kind of fitting, right? It's a little bit top heavy in terms of where most of the trading activity occurred. So that could let us know we have potential room to the downside if it wants to give it to us. So if we started to see any weakness near that value area low, we were going to potentially trade for a breakout to the downside. Now, that was kind of the trigger for us to formulate a trade idea, right? The volume profile, seeing value building at those levels. You can use other tools like order flow if you'd like. That's extremely helpful, I will say, if you're a futures trader. And then on top of that, we had a rational profit target to attack. So not only did we feel confident to take this short, but the other reason that made us more confident was the fact that we also had a profit target that logically made sense to us. So we were just attacking that gap close. We had other levels of value to the downside we could target. But because the gap close was closest, it was like the highest probability target. Obviously, the further profit target that you try to reach, the less probability it's going to have. But that was pretty much the whole reason right there. And I think right now the main target is going to be back at this value area low where we got that initial breakout. So if price comes back to these levels, we're just going to watch to see how price responds. Maybe we get another opportunity to get short again. And if that does show itself, then we will then retarget these lows and this low down here. If we get that, if we get a reclaim, personally, I'm going to be patient. I'm not going to be touching the market. We might chop around a little bit in here, but from there, I don't know if the market is going to make the decision to go then and test the all-time highs, which I believe is pretty likely if that does happen. But the way that I'm viewing things right now, guys, I'm looking at the 25,988. If sellers are still present there, we'll pull the trigger on it. And until then, we'll be a little bit more patient. But gap close is just always one of those topics that is highly spoken about in the market. And it's kind of cool. We have an actual example to kind of go off of right here.
Yeah, they really do always have to get filled, man. It's a matter of time, but that seems to hold up pretty much all the time. And I'm sure. Good question here. It goes along with that. Is there a fee to carry futures contract overnight?
Is there a fee to carry futures contracts overnight?
In notes, overnight in notes is the exact vernacular used here. I'm not sure what the notes part necessarily means.
Yeah, I can't give you an exact word for word answer on that, but we'll get back around to that for you, brother.
And then in response to the Wingstop 20 boneless wings with fries for $23 is awesome. Eat it for 2 days. Costs more than that for a single stop at McDonald's. That's exactly my point. Yes, and I couldn't agree more. Wingstop, the bundles that they have that one. They got the $30. There's like a very similar one. I think it's $34 for 30 wings. But yeah, they have all sorts of big bundles like that, and that is a strategy that I've implemented a number of times. Yeah, do that for a college football Saturday or something, and then you're still got wings to eat on Monday. And yeah, last you a while. And as you said, a single trip to McDonald's is going to cost me $15 somehow now. So if I could do that, or I could pay $23 and have good food for 3 days, why would I choose to do the latter, or the former rather? No fee on futures overnight. Thank you, Tom. Appreciate it. Raising Cane's is the best. Boneless wings are just chicken nuggets for adults. 2 things to attack. Raising Cane's is very good. I'm in that camp with it. Love me a Caniac. Maybe a box if I'm not feeling as crazy, but Caniac combo is good stuff. And then boneless wings are just chicken nuggets for adults. Agree. I definitely see the point there. I still think they're tasty though. I think it's 2 separate arguments. Is it a wing? Is it tasty? It's definitely tasty.
Is it tasty? Looking at crypto a little bit here. I know they've been reaping havoc over here on crypto a little bit. Dan and I kind of was talking about some levels over here on crypto. It's a very similar story, honestly, to NASDAQ right now. Like, usually the analysis isn't as spot on. Like, it's not usually going to rhyme like it does with NASDAQ as it is now. So I would take that with a grain of salt. But some of the levels, some of the ideas is lining up pretty on par with what crypto is doing. So I'm thinking right here, too, if NASDAQ reclaims some of these levels, it's probably likely crypto could do the same, just because, again, the correlation to them is looking like they're lining up pretty well in terms of their price behavior.
Yeah, I think that's an apt analysis. And yeah, crypto has really just been in this period of stagnation for a little while. I mean, the volatility is still there and it's still moving a lot within this range. But in terms of making higher highs, we haven't really seen one in some time, which is a shame, as I am long IBIT and would love that. But yeah, I got plenty more time to go. But yeah, I have been getting whacked on all my crypto longs as of late.
I got you. Arrow, been using your volume profile technique to build some support and resistance points in places on a few tickers. Nice, Jared. I know I don't use the volume profile too much on individual tickers. Of course, you can use them. It's still a volume profile. It's still data. A little bit more for the futures products. But something that I do like to use if I'm trading an individual underlying at the same time, I'll like to mark out the value areas and use the volume profile, use the analysis on NASDAQ, gauge that market. And then if you're trading a product that trades inside NASDAQ as well, it's like if you recognize, let's say, NASDAQ is on an extreme uptrend to the upside, and you're looking to buy an underlying that you're looking at, and you're looking to buy a breakout, let's say, if you recognize NASDAQ is extremely strong, maybe it's breaking out of a value area, that could give you a little bit more confidence and conviction to then buy that individual asset that you're looking to buy too, just based off of the analysis on NASDAQ. Another thing you can think about.
Oh, well, Gus is not just buying Wingstop, but is instead implementing a strategy. Absolutely. Absolutely. I'm implementing strategies pretty much anytime I go out to eat ever, especially if I'm ordering it on DoorDash. That's sort of my requirement, is that if I'm going to order something on DoorDash, it has to last me more than one meal. Otherwise, it's just not justifiable. But I can do some mental gymnastics and get there if it lasts me a few meals.
Yeah, that's valid.
Tesla really gaining strength for the end of week pull. Oh, Kimberly calling for the end of week pull on Thomas. Or on Thomas. That was the next one that came in. On Tesla, rather. Yeah, I could see that as a likely possibility. I don't know. I really haven't kept up with it too much. I mean, what's the odds that this pay package thing goes through or doesn't? Polymarket's got a market for this.
NASDAQ is genuinely insane right now. This is an extremely strong market we're looking at together right here.
Here we go. Polymarket tells me that there is a 97% chance that the $1 trillion pay deal is going to go through. So there you go. The market has probably already reacted to pricing that information. So in response to my discussion earlier, I don't know that it necessarily goes higher should that get approved. I think that there's only downside to be had as it pertains to this. Downside or stability as it pertains to this. I don't know that we'll necessarily see higher highs if it's that certain. Even Bitcoin looking for 113K before next pullback. I need Bitcoin to go to like 135 myself.
What was the high of Bitcoin? You're saying you wanted at 135?
Not 135 exactly. No, that would be new all-time highs. Yeah, I'm set up. Let me see here. IBIT. My setup is in IBIT, I have the 6365 short put vertical. It's 44 DTE. And then I also have a naked 75 call for June 18th of next year. So that leap, the 75 call, as I recall, I haven't done this math in a little while. The 75 call correlates roughly to 135,000 on Bitcoin. And then I would need something more like 128, I think, for the other two. Again, I haven't run this math in a couple of months, but that's where I'm at. Somebody can correct me if I'm wrong. Gotcha. One of those levels I need 130,000 for. I just don't know if it's 65 in IBIT or if it's 75 in IBIT. The Norway Wealth Fund. Wait, I just had a stroke. I know that the Norway Wealth Fund is telling Elon to pound sand, as in like get lost. Is that like kick rocks? I've never heard anybody say pound sand before. Or is that like good? Are they saying like go after it? I don't know. Pounding sand. We talking like glass here? We making glass? I guess that's a temperature thing, not a pressure thing. I got questions.
This market is wild. I keep saying it, but what an insane market that we're actually trading right now. Have you guys been hearing anything about Trump speaking later today?
I have not. I haven't heard any updates anyway. I'm kind of just, I'm holding my breath here. I mean, this is like going really well. All of a sudden, I was once again in one of these spots where I'm evaluating if we've been proven otherwise and if I need to do some massive repositioning. But if we're going to go right back to highs, I'm happy to just sit here and sit on my hands, and it looks like that's what we're working on. Oh, I see. Sorry, they're voting against his pay package. Must be a generational slang thing. It could be regional too. That's not your fault at all. I was just making sure we were on the same page there. Didn't want to misinterpret you. But yeah, they're voting against the pay package. I see. How much of Tesla does the Norway Wealth Fund own?
How much of Tesla is what owned?
The Norway Wealth Fund, I guess, has a considerable portion of Tesla.
Let's see, guys. Is Trump speaking to...
Saw a pic of him sporting a cowboy hat. Is this bullish or bearish information? I do not know.
So, yes, Donald Trump is scheduled to speak today. Here are the details. He's speaking in Miami, Florida, addressing the American Business Forum. The talk will focus on his economic agenda, international investments, and U.S. competitiveness. The forum takes place on the anniversary of his election win, so timing has symbolic importance. Interesting.
Oh, yeah, I guess it is a year since the election right now. Election day yesterday, obviously. Around the country. Norway is the 9th largest stakeholder of Tesla. There we go. Thank you for the information, DU85. That's really neat. I actually had no idea that Norway was involved in any capacity like that. I knew they had a sovereign wealth fund like that, but I didn't know they were such big stakeholders in Tesla. That's good information. I mean, that's good. That's good information for all sorts of things. I mean, if you're just trying to decide what's going to happen anytime the stakeholders vote on anything, and the 9th largest one is just publicizing what they're going to do out ahead of time, that can help you price in some things.
Most things are green on the day on the watch. Just looking at the largest movers to the downside. We got pins, VIX, pretty big collapse in VIX, especially after this rally. Hum, what is Hum? Humana. We got Uber. LMT, which is Lockheed, Palantir, UNH, J&J. Palantir, and I think NVIDIA was in the headlines a little bit more. Michael Burry supposedly is opening up some short positions on them. And it is kind of funny. Any large position that Michael Burry does open up now is pretty much headline news, headline making news. Or maybe we don't have any headline making news as to why these things make headlines all the time. We got to have something.
That's true. Yeah, there has to be headlines.
Right. The companies, they need something to get out there. So anything can make headlines if it's quite enough. 100% sitting on hands until tomorrow to make sure this is real. Yeah, same here. Really, again, it's really those same levels that going to just keep an eye on when it comes to NASDAQ. Extremely aggressive sell-off that we got. And this bounce, I mean, happened in the blink of an eye. So will the market digest it, or is the market going to continue to condition everybody that we pull back and then make another all-time highs? Because I do believe the one time it doesn't do that, all hell could break loose. Because we have doing that for some time now.
Pretty sure the Norway Sovereign Wealth Fund is the largest in the world. Interesting. Really? They got more money than the UAE? That's very
interesting. Do they really?
That's what I'm being told. I'm just regurgitating.
That's what you're telling me?
Don't quote me.
I'm just kidding. We're playing game of telephone
Gus
right
Downing
now.
says this information. Pound sand equals get lost. Pound sand equals kick rocks. I appreciate the clarification, guys. Yeah, kick rocks is where I win. I've definitely heard people say kick rocks. Raking it in today and Tesla, Lemonade, Bitcoin. What was I about to say? I had such a good point I was gearing up to make here, and it's just totally slipped my mind.
What you got in there? What you got in Tesla, LMD, and in Bitcoin, Kimberly?
We man, where was I going with this? Norway, Sovereign Wealth Fund, Tesla shareholder, Lockheed Martin. Then we were talking Humana. Oh yes, Palantir. I've gotten it. I'm back now. Just there we go. Just wanted to throw out. Yeah, this is kind of exactly what we discussed with Palantir at length ahead of this earnings call. Is that they had this remarkable earnings call. You know, they beat EPS estimates by 25%. Revenue comes in higher than expected, 8% higher than expected, and yet it takes a dip. And it's because when Palantir trades this ridiculously far ahead of their valuation and ahead of what they're actually making, it's not about what actually just happened right now. The market understands that what just happened in this previous quarter that you're reporting, that we're trading way ahead of that. That's all frivolous, essentially. What matters is that you can somehow keep that excitement up into the future and keep doing the next biggest, greatest thing over and over and over, such that that is a sustainable amount ahead of your PE to trade at. And they clearly just did not in this earnings call. I mean, it's pretty black and white. That's what happened. The numbers are great, but we don't care about the numbers. We care about what you're going to do, and if you can continue to somehow justify this massive valuation. It seems that the market may be beginning to react as though they cannot.
I'm excited. I'm excited for Hood's numbers with earnings coming after the bell today. I think when it comes down to like other brokers, I'm like, yeah, let's see what y'all got. Let's see what numbers y'all come out with. But I am excited about it though. Robinhood has definitely gotten to a level to where they have enough funds to pretty much do every and anything, put their hands in every market, test and try every single idea. So with that being said, and then also with the state of just this trading industry and the financial industry, I'm curious to see how these earnings are going to pan out, especially coming into Q4 right here. And on top of that, Robinhood's trading at all-time highs. So you doing anything there for earnings, Kimberly? Hood T equals 182.21. 182. Kimberly's a bull on Hood. No personal bias, but if I do look for a position, I might look for a short position.
Oh, I see they finally touched 150. Yeah, I'm in a obscure Discord server with a guy. I don't even know the guy at all, but I see him pop up in my like online people on the side all the time, and he has his status set to riding Hood from $8 to $150. Yeah. So I'm interested to check on that after this stream and see if he has changed that status to sold Robinhood or something similar. But
he said he bought at $8.
Yeah, $8 is his alleged. And also, I've never fact checked if that's even possible. Were they at $8?
Okay,
Yes.
okay. I was just looking to see where they IPO'd at. I needed to bring the chart a little bit further back. I remember when
they were at and around $8 for a considerable, pretty much all of 2023. That's like the level.
Yeah.
So
okay, so
fair play.
They absolutely fair play. They opened up at around $30, $34, give or take. We had spiked a couple days later to a high of $83. We were pretty much dead. I mean, completely dead during 2023, kind of like how you mentioned here, and then absolute sleepers to the upside. Now we're towards its highs right now.
What did the new all-time high on the NQ chart mean? Was there a new all-time high?
What did the
you would put a note that said new all-time high or something?
Oh, I think this was old, so I haven't even looked at this asset specifically on this chart in a while. So this is actually really old over here. I don't know if you were referencing anything on this end, but we have the all-time high sitting at about.
No, it was definitely the one that was labeled new ATH there. That's a fair question. I didn't even see it at the time, but it makes sense.
Yeah. As you can see, again, market is extremely bullish because we've greatly surpassed that all-time high. So. Hood long 182.206. Earnings Hood will touch 148, most certain. All right, Kimberly, you sound pretty certain with the emojis. I like it.
That's true. Kimberly, yeah, usually not making emoji assertions here. That means Kimberly means business. I'm looking at anything else new that I've dealt with here. Yeah, we opened up Pinterest. My BlackBerry short is not working out. People really like BlackBerry in the big 2.5. It seems shocking. But they do.
The big 2025 471 a share.
Yeah, I got a whole bunch of 450 puts, but they do not seem like they're going to come to fruition. Basically worthless now, so I'm just holding until the bitter end, going down with the ship on that one. And then yeah, what else we got going here? Nokia, you said you still have Nokia open, right?
Yeah, we still got some in there to expire in 16 days. It's been really quiet. It's been a little lackluster. I'm not gonna lie. Very anticlimactic. Should have went with BlackBerry. Old Faithful. Nokia is Old Faithful.
Mine's been just as anticlimactic on my side too. It's it's a boring market. Apparently, the market loves cell phone providers that have been bankrupt for years.
Apparently, because Nokia is trading at $6-7 a share. BlackBerry is trading at about $4.50 a share. I mean, these things are.
I understand they still do telecommunication stuff, guys. Nobody come at me. I understand why they're not at $0 a share.
Our childhood is penny stocks. That's what's happening. What is Snap at right now? $7.46. There we go. So no, it's been tough. We'll see. We'll see.
Snapchat.
Go ahead.
Go ahead. No, you go. Sorry.
No, I was gonna pivot from Snap right there. But yeah, what about
Oh yeah,
Snapchat?
I was just gonna say Snap. This thing, it's so strange that it still moves. It's like it's not worth anything, but it still moves all the time. Like if you catch the right wave, you can still absolutely make good trades on Snapchat, which is so strange. That's usually not something that you expect from a stock that is, below $10 in general, and especially when it used to be huge and now is below $10. Those usually don't give you a lot of liquidity or a lot of volatility, but Snap just continues to do it even at these levels. So shout out to Snapchat for never growing but staying volatile.
100%. Any interest in ARM, IONQ, APP, and FIG? You don't have any of the quantum computing names on anymore, right? I feel like it's been a little bit.
I still have RGTI. Which is. I'm well home on that one. I'm no longer concerned about my Beyond Burger wager. It just keeps making lower lows.
Yeah.
But yeah, RGTI I believe is the only one that I still have active right now.
I got you. So I know you brought up IONQE Media. I'm still not opposed to getting on more short delta in something like this if we can justify it.
Yeah, I'd be inclined to agree. I really think that these are just kind of in an awkward spot that I don't necessarily want to touch. But if you made me trade them, it would be short.
So we have some earnings after the bell today. This is going to be a fun one. After the bell today, November 5th. Also need to call my dad. Happy birthday, Dad. If you somehow see this clip, I need to go ahead and do that too.
Happy birthday, Mr. Coleman.
I actually don't have parents. And so I stick to the market. All right, we got filled on Unity as we're closing off here. So there's a dub for the day.
Still have my Beyond Leap. Me too, Jared. I need something to happen there, but yeah, I still have that on as well. Really not burning me too horribly. Oh yeah, I just went shares. I forgot. So yeah, we're down like 70 cents a share on 150 shares, so it's a hit, but it could be worse.
It's a hit. Anything else top of mind before we start to wrap for the day, brother?
I don't think so. Firefly Aerospace, I'll throw that one out just because that's a niche one that I still have open. Fly is the ticker there. This one, good old rocket exploded and it can't get worse thesis. It's been working really well for me. If a rocket company has their first rocket ship explode, how much worse can things get for the rocket company? See, these are the types of things that real traders are
You just gotta exactly worst case scenario. When you already got the worst case scenario, you're good.
Yeah, they're not going to blow up a second rocket, surely, right? No way. Can't happen. They've shown such a propensity for good rocket launches.
Look, the past is not the best predictor of the future, but it is the best data points that we have to predict the future. So I will put it as that.
It's true. Don't bring your technical analysis astrology into my rocket launches.
Hey, everybody sees
You can't show me a value area on a rocket launch. Can't be done.
Actually, we will circle back around to this conversation. I'm just kidding. No, anything else, brother? We all good here?
No, that's all I got.
Cool. Kimberly, InvestorWise, big deal, my brother. Good to see you as always.
With Jared,
eMedia, Kim, everybody else. Thanks for taking the time to hang out with us today. Be sure to stay tuned for more segments coming on next. Gus and I will be back tomorrow at noon, same time, same place. We'll catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty.
I got a good feeling.
I'm Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Wednesday, maybe Thursday. Let me think. No, Wednesday edition of what it is that we are trying to do. I'm so glad that you are here, man. It was a close one last night. It was a super close one. It did not look good. It did not look good at all. But I don't know if you guys follow Tony Batista on Twitter, but you should be doing this. I think he's just at Tony Batista or at Terrazzo Floors 123. He's one of those two. You should be following him on Twitter because he said that Tom Sosnoff called him last night and said, we're crashing, like it's over, like this is the big one. And that's when I knew everything is going to be okay. Like, that's when I knew, man, all is going to be right in the world. And indeed, the markets couldn't be greener here today. So welcome to the show. I am glad that you are here. If you're watching over on the Tasty Live Network, now we're actually bounced on over to YouTube because you can join the conversation and join the discussion, and you can communicate with your brethren who are also watching the program. You can celebrate if you are a bull. You can commiserate if you are indeed a bear. But it is a good time had by most. So, John, bring us into the market, man. Let's do it. Let's go. Look at this, guys. E-mini S&Ps up 51.5. You got the risk-free instrument, also known as the NASDAQ futures. Extremely high-risk product, at least in theory, up 278. You've got the boomers up 277. You've got the Russell 2000 futures index up 36 on the day. Man, you got bonds are down. You got notes are down. You got oils down. You got UB40 is down. But look at the shifty circling the wagons, up 33 today. Got the Hunt Brothers. Silver up 74 cents. Man, everything is looking good. Everything is right in the world. And so indeed, cancel crash for now the 931st time just this year. And so we are indeed okay. We're in the clear. Speaking of being okay and in the clear, a couple of housekeeping things. So number one, if you have a question for me, drop it in the chat box. I'll try to get to as many as I can right around the second half of the show. Let's see. Number two, tomorrow we are going to do an educational piece to kick off the show. We're going to talk about the power of short premium. So I have three little sub points to kind of go through the power of short premium. Do you think you know what they are? I'm curious. Can you guess what those three sub points are going to be for the power of short premium to kick off tomorrow's show? Again, it'll be quick. It'll be painless. I'll have you out the door in no more than 17 minutes. And by no more, I mean no less. We're going to do that tomorrow at the beginning of the show. Second housekeeping point. So last night, Autumn and I were sitting on the couch. And we were going to watch something. Kids were finally in bed. Like, we were just chilling, just hanging out, whatever. And we're like, hey, let's watch something. And so we were scrolling through the movies and we're kind of getting in like the Christmas spirit, whatever. When we wanted to watch something we hadn't seen before. And in the Christmas movies section, Daddy's Home popped up. The movie with Will Ferrell and Mark Wahlberg. And I have never seen it. And Autumn had never seen it. And so I'm like, well, let's watch this. It doesn't look like it's like a true Christmas movie, but I think it's going to be good. Man, we're like 30 minutes into this movie. This thing is hilarious. Have you guys seen Daddy's Home? Like, this movie is so funny. Like, I'm dying laughing. I'm only 30 minutes in. Like, I can't wait to finish it tonight or 3 weeks from now, like whenever we can get around to finishing it. But that's the second housekeeping thing. The third housekeeping thing, guys. So I thought we had the best flavor ghost. So I thought it was sour green apple. It's not. I thought it was sour pink lemonade. It's not. Guys, take a look at this. The original ghost. This thing is the best flavor by far. I can't even describe the flavor. Like, when I take a little sip, I can't even describe it. It really just tastes like pure joy. It really just tastes like pure happiness. And so if you're out there looking for a ghost flavor, I would go with the original. I didn't even know it was a thing until I went into Vitamin Shop last week and they hooked your boy up with some original. So anyway, there's your ghost protocol for the show here today. And all right, let's go ahead. And again, I'm not affiliated with the product, so buy it, don't buy it, I don't care. But if you know somebody who knows somebody who knows somebody, obviously hook your boy up because I am looking for some type of affiliation and or sponsorship. And so, all right, let's go into. I haven't had any luck yet, but we're gonna keep trying, man. We're just gonna keep on going. So last night, speaking of last night, and speaking of the the markets were not looking. Well, let's actually look at that together. So the NASDAQ is up 270 today. Man, last night, it did not look like this at all. I mean, if we go to, let me bring up the, let's see here. If I go ahead and do, where am I at? No, I don't want to do a 2-minute chart. I mean, I want to get Earl Coleman, the royalties. I guess since we already clicked on it, we're going to get him a little something. Let's go back. Let's do like a 1 hour. Let's do like a 1 hour chart. I want to grab a broader swath of kind of what we've been up against. So yesterday was a little bit ugly, of course. And then last night, you can see right here, right around 9 or 10 o'clock. I mean, I was laughing my behind off watching Daddy's Home, and I'm looking at the market. I'm like, this is not good, man. Like, I'm gonna wake up, Nasdaq down 500, Nasdaq down 600, like again. Like, man, that's gonna be really, really crazy. But then again, I saw the Tom Salznow phone call to Tony Batista, and I'm like, okay, we're gonna get out of this. We're gonna be just fine. But you can see that the Nasdaq was down to 25,282, so it was basically 600 points lower than where it is right now. That's a pretty big difference. Like, that's a pretty big difference indeed. And of course, and this is always the case. This was the case last night. This was the case, for Liberation Day back in April. This was the case, so many different times. When it's happening in the moment, like, when the market is like finding a bottom, whether it's like, the bottom or some relative bottom, it never feels super great. Like, you don't feel all like warm and fuzzy inside. It's like, man, this is amazing. Like, I love my life right now. Like, blah, 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 blah. But then again, that actually was the bottom last night, 25,282. I think it corresponded with almost the exact moment that Tom called Tony. And so that is pretty funny indeed. But yeah, the NASDAQ ripped back. I mean, EMA S&Ps are going to be basically the same thing. They found that bottom right there at about 9 or 10 o'clock, 8 o'clock, whatever. And they were all the way down to 67.48, so 100 points lower than where they are right now with ES right now at 68.50. And then, of course, boomers are going to be similar. Although the boomers, they kind of do their own thing, man. Like, they're kind of, the rogue of the bunch, kind of the outsider, the outcast of the group, of course. The boomers just kind of, they always find a way. They always find a way. Like, everything else can be crashing down around you, but who can you trust? Your neighborhood local boomer. Like, who can you count on to get it done? Your neighborhood local boomer. Like, you know it, I know it. Like, everybody knows it. So you can even see the boomers weren't even really down that much last night, I don't think. And then, of course, the Russell was kind of doing the same thing as the rest of the market. But what I want to look at last night, guys, look at AMD. Man, was this ever not good last night. So I saw the number print, and I was like, there it goes again, man. This is like, it's pretty amazing, like how consistently I'm wrong. Like, you would think you'd have to try to do this. It's actually not that hard. It's actually easier than you might realize. But then this morning, and with the strength of the overall market, it's actually lifted AMD along with it. And so I don't know what the numbers were. I don't know what they came out and said or didn't say or whatever. But you can see AMD is actually up $8 now, up to 258, when last night this thing was all the way down to a low of about 234 and some change. So at 234 and some change, that is not good, man. That is not good at all. But look at what has happened. And so Ordenu, look at our long call spread, man. This thing is cooking. This thing is 100% cooking. So if I look at AMD here, you can see that, both of our strategies are working now. So if I go into this guy, you've got the long call spread right here at 252, 262. You can see we're up about $1 on the trade. Hey, it could be a lot better, but boy, could it be a lot worse. Like, boy, could this thing be a whole lot worse when it comes to, what could have been here. So I will take my dollar and most likely just head for the hills. But let's continue to kind of stretch out this victory lap just a wee little bit longer. If you look at the other vertical spread, let's grab our magenta here. We haven't used the magenta in a while. This short put spread that we also put on is up about 55, about 50 cents on the day. And so this guy is a December trade. There's 44 days to go. It's a lot more strategic, in my opinion, because you're out of the money. Hey, we're going to talk about the power short premium tomorrow at the beginning of the show, so don't miss that. But when you do these more strategic strategies, like I like to refer to them as, then, it's not super uncommon that they tend to perform better than the more directional shots that you might take with like an at the money vertical spread or a butterfly spread or whatever. Just simply because you have more ways to make money. You have more ways to actually move forward. Now, of course, there's gimmies and gotchas. You're risking 2 to make 1. You're risking $1.50 to make $1, whatever. But with the higher probability and the simple fact that you can afford to be wrong a little bit and still make a little bit of money, that's incredibly powerful. Very, very powerful. And so with this AMD situation, because the market is up today so much, and AMD is up too, we're actually profitable on both legs, both sides of the trade package. We're up about $1.40 net together. I think we're going to go ahead and book it. I think we're just going to take it off. I mean, obviously, the 2 days to go long call spread, we could push it. We could push it into tomorrow. We could push it into Friday, whatever. But I actually really like just taking this off. Let's take it off and let's be done with it. Because I thought for sure we were going to be at a max loss on the long call spread, and probably really close to a max loss on the short put spread after last night. So I'm looking at this right now, and I'm like, all right, it probably continues, especially after I take this off, but I really don't care right now. I'll take my $1.50 or $1.47 or whatever, and just be happy with that. So let's close out of AMD here. Let's do, it doesn't really matter which order you do them in, I don't think. We can do the long call spread first. But again, I don't really think it makes it too big of a difference. Let's go for, we'll go for the 507. That's fine. I'm gonna crush the rest of this ghost. Man, that is wow, that is so good. I am gonna start just drinking that, like just for like regular like drinks, like just like throughout the day. Like, you guys have water. I'm going with OG Ghost. Like I'm going with the original Ghost. And sure, my blood pressure and things like that are probably going to take a hit, but hey, it's gimmies and gotchas, man. It's always gimmies and gotchas. We know that. But now let's go to the other vertical spread and let's close this guy down. Let's see if I buy this guy back for, 332 is fine. Okay, let's go 330. Let's do 335. If I can do 335. All right, there you go. Filled on the 335. And there you go. Okay, so AMD over and done with. Let's go to McDonald's. What is going on with McDonald's? They're still doing it, man. They are still, I don't know. I mean, they're just pushing it out there. Like, man, they're just moving merch. They're just pushing product, right? Again, it's the same slop they've been slanging for 47 years, but the people love it. Like, I haven't been to McDonald's. It's been at least 5 years, maybe 6 years. Maybe earlier than that. I don't know. It's not something I go to regularly, although we can all agree. We can all agree. When it's like 2:30 in the morning, right, and you're still awake for whatever reason, right? You probably shouldn't be awake. You should probably be in bed, but you're awake for whatever reason. You're all by yourself or whatever, and you're like, you know what? There's only one thing that can really kind of, I got this hankering for something, to eat something I probably shouldn't eat. There's only one thing that can really kind of, scratch that itch. And we both know that it's a sausage McGriddle when you go to a McDonald's where they have breakfast all night, where they have breakfast all day. That sausage McGriddle, it's a sandwich. It's about the size of a quarter, right? 3,800 calories. It is the best 3,800 calories you could possibly invest in because it's an investment at 2:30 in the morning. And so I really think that McDonald's, they've cornered the market, man. Like, they have absolutely cornered the market. Now, I mean, nowadays, I haven't snuck out of the house at 2:30 a.m. It's been quite a while. I got kids, I got cats, I got wives, I got all these things keeping me on lockdown. And so that's probably not going to happen for me anytime soon again. But for those of you out there, you guys know exactly what I'm talking about. So McDonald's up $7. The Iron Condor was looking okay. And again, I kind of think, man, I just want to take my 40 cents and be done with it. Like, let's take some tiny wins today. Like normally we would hold on to these trades and just kind of like leg them out, which is totally fine, I think. But I'm in a little bit of a mood today. Like, I'm in a little bit of something. I think it's because I've discovered this OG Ghost, and I'm like, man, this is some really good stuff. Let's close out of this Iron Condor. It's economically significant enough for my purposes to close this guy down. 47 cents, 50 cents. That's an economically significant win, especially with no closing costs, commissions on tastytrade. That's really nice, especially for a 4-leg strategy like an Iron Condor, because you have to be mindful of transaction costs when you're talking about, Iron Condors, butterflies, spiked lizards, jade lizards, like these multi-leg strategies where you have, several different legs to the strategy you have to get filled. The transaction costs can really add up. And we've already paid the man on the way in, and now it's like I'm not really going to have to pay him again on the way out. Like, yeah, there's exchange fees and, Range Rover fees and things like that. But it's not nearly as much as it would be if the commissions were in there. And so I think let's close out of this guy and let's move on. I want to do, there's a couple other things I want to do, and I think we've got some earnings tonight too, I think. We got somebody tonight. All right, so we got Phil. 446. There you go. So we got out of McDonald's and we picked up a few pennies. Okay, so let's go ahead. Let's see. I just scrambled. I just glanced at the chat, which sometimes I do. You guys make me laugh so much, like before the show, after the show. It's so funny. So please, I love the participation. I try to engage with as many of you as I can on the show. But I still see it before the show, after the show, and you guys are very, very good for making me laugh. And I see Scramble Everything says, I thought Dr. Jim was on 2x speed for some reason, but it was just the half a can of Ghost that he chugged. I actually only had about a quarter of a can left. And And I know it may seem like I do. I actually don't drink that much of this stuff, at least not in a given day. I have like an open can in my fridge, and I just take a few sips, I guess, I pass by throughout the day. And so it's actually, I'm kind of kidding about it being a lot. And so, anyway, that made me laugh. Let's go into, let's see, we did AMD, we did McDonald's. I want to go ahead and I want to do MES, and I want to do Palo Alto, believe it or not, because let me do Palo Alto first, because we were just talking about this on the show a couple days ago, right? And you can see right now, we're almost at a scratch on the trade. Like, we're basically right there at a scratch on the trade. And this is exactly what I wanted, right? Like, go back and watch the show. I think we talked about this on Monday, actually. So maybe, 2 days ago. We were at 18 days to go on Monday. And I was like, hey, we're inside of 21 days to go. We're breaking rules. We're bending rules. We're doing this. We're doing that and the other thing. Here are all the reasons why Palo Alto has earnings coming up. I'm just looking to get out of the trade and get a scratch. And if that comes my way, like, I'm not going to think twice. I'm just going to be done with it. That's exactly the situation that we find ourselves in right now. Now, I'm still down. Like, let's be fair about this. I'm still down $1 on the trade. And so you may think, Jim, that is not a scratch. Like, I understand that you're a little generous with your record keeping over there, but in no world is that a scratch. And that's fair. I mean, I'm going to mark it down as a scratch. But if you feel that way, that's totally fine. And I'm honestly not going to fight you too hard on that. But for this Palo Alto trade, we were kind of in some hot water with this guy for a little while. We were definitely down multiple dollars at one point, or maybe several different points. And so when I look at this and I'm like, man, I can get out of this trade for $1 loss, small loser scratch. It really doesn't matter in terms of the grand scheme of things. I like that trade, especially given the fact that we're at 16 days to go. Now, if we were at 26 days to go, or 22 days to go, or 31 days to go, it'd be a very, very different discussion. I would be holding the trade. Like, why would I take it off now? We finally got it in a decent spot. Like, let's just sit tight and not do anything. But right now, it appears that there is a fairly clear off-ramp that has presented itself to us. And so I think let's take that off-ramp and let's go ahead and let's move on. So for Palo Alto, let's be done with this guy too. And it was good. Again, I mean, sometimes when you have a trade that's just giving you fits and it's really not working out, the best you can hope for is a scratch or a small loser. And when that comes your way, a lot of times it feels like a winner. A lot of times it feels like, man, like I really kind of got what I wanted ultimately out of this trade, given where I was. So I'm not going to stay in the trade. I'm not going to try to be a hero. I'm not going to go for more than I would have been very happy with just 2 or 3 days ago. And now it's here because we all play that game, right? Like, let me take 2 seconds. We all play this game. Man, if the market, stock, fill in the blank just does X, I'll be in great shape. And this is usually in a situation where you're losing money, you're hemorrhaging cash, you're following my trades, like things like that, right? So things are not working out well for you. And so you're like, man, if this thing could just come back a little bit, I could get out for a $2 loss, I could get out for a $3 loss, I could get out for a scratch, whatever, and I'd be very happy with that. Okay, fast forward, a day, a week, a couple days, whatever it is, fast forward, at some moment in the near future, you actually get what you wanted. And what is the thought that every single one of us has? 100% of us. What if I just push it a little bit more? Like, we've done so much work to get to this point. Man, let's just push it just a wee little bit more. Nothing crazy. I just want another 75 cents. Like, nothing crazy. Let me just get another $1.90, right? Like, I've got modest expectations. I've got this, I've got that. We all play that game with ourselves every single time. And I'm kind of going through it right now because I'm like, man, we're in a really good spot with Palo Alto. Like, this is what we've been waiting for now for quite some time. But when you get in that spot, you've got to zoom out and you've got to remember, okay, the way that we trade and kind of the structure, like the foundation, right? We're set up to have a good number of winners. That's just the way that it works. That's what happens when you sell out of the money premium. That doesn't guarantee you're going to make any money. Like, you still have to have strategies. You got to have mechanics. You got to have a plan for when things don't go right, whatever. But we are set up for things to be fairly easy a lot of the time. This is one example where it was not easy. And so in my humble opinion, when you have an example or a position where it was not easy, if you are able to get out for around a scratch, and that's what you told yourself just days before that you'd be happy with, it is a big big mistake to actually deviate from that and call the audible when you get the opportunity to do exactly what you wanted a couple days prior. And so I just wanted to point out something that I know there's 500 people watching the show right now, 530 people watching. 570 of you have had the exact emotions and the thoughts and the feelings that I just described, because that's just the way it is. Like, that's how we think as traders. And it's, it's a lot of things. It's emotions, it's greed, it's hope, it's overconfidence. I mean, it's a lot of things we have to battle on a daily basis. But let me close out of Palo Alto. We're going to free up a ton of capital too, which is super nice. And then the last thing I want to do, because I do want to trade, isn't Qualcomm tonight? I think Qualcomm might be tonight. Are they still around? I'm not exactly sure. We'll find out here in a second. But I thought I saw that they're reporting earnings tonight. Maybe it's their bankruptcy news report. I'm not sure. But there's something happening with Qualcomm tonight, so we'll take a look at that here in just a second. But if I go into MES, I also want to close out of MES because we've got 23 days to go, and you can see that we're almost at 50% of max profit. We're very, very close. I'm kind of in a little bit of a mood today. I'm kind of in a little bit of a something today. We got AMD, we got McDonald's, we scratched Palo Alto. Now we've got a nice little winner in this MES triangle. Man, let's take this guy off too. Like, let's 100% take this guy off too, because you can bet your bottom biscuit, I got cases of this original ghost on the way. You think they're going to pay for themselves? Like, you think these things are just going to show up and the man doesn't want to get paid? Like, that's not how it works. That's not how it works at all. And since I have cases, plural, coming, we're going to need a little capital here to pay for those. So let's go ahead and let's close out of this MES strangle. And we can be done with this guy too. I'm just going to close it down for whatever. It doesn't matter. I want to get into this Qualcomm trade because we might be doing a little bankruptcy binary event. That would be kind of fun. Let's see here. All right, so we're out of MES. We ended up getting almost 50% of max profit. Not quite. Okay, I think it's Qualcomm. It's Qualcomm, right, guys? I see you guys in the chat. I see old Two-Face saying, Dr. J, what are we thinking about Qualcomm? I know some other people mentioned Qualcomm too. Kimberly's giving us some Qualcomm data. Appreciate that from both of you. Okay, cool. Up $8. Wow, this company's doing quite well for itself. What do they sell again? I think they just sell hope and dreams, right? They just kind of sell the dream, right? They sell the vision. And so it's working out pretty well for themselves. And so they're up $8. Let's go into Qualcomm. I kind of think, so I'm going to throw everybody for a loop here. I know what you guys are expecting. You guys are like, Jim, I'm looking to make some money today. I just need to know which side you're on so I can be on the other side. You don't have to tell me the strategy. Just tell me which side you're on so I can make some money today. Listen, I have made you guys so much money in the previous couple of weeks. You probably could have even made money this morning on AMD if you were bearish, if you got out on the open, because it was fairly weak on the open. And so you probably still made money even though it ripped higher eventually in the afternoon, and we were able to somehow escape with a profit. But here's the deal. We're actually going to be strategic with this. I'm not going to take a directional shot. I'm going plain vanilla, chocolate chip cookie recipe, Betty Crocker style. We're going short strangle in the December cycle. So there you go. We got 44 days to go. You got the stock at 180. I'm thinking we sell a 160, 200 strangle, or maybe even a 210. Yeah, let's do 210. 160, 210 strangle. That's probability of profit 73%, P50 86%, credit collected 491. Max profit is going to be your credit collected, of course. Lots of positive theta. Pretty delta neutral. Buying power is only $1,800, and of course the maximum loss is negative infinity, which is certainly going to scare the new traders out there. Like, whoa, what are you doing? Well, let's remember, in order to lose an infinite amount of money, which literally means you are in a state where you are never not losing money, you would need Qualcomm to print positive infinity. It's been a while since I've seen a stock print positive infinity. I think NVIDIA did it a couple of weeks ago, but NVIDIA is a bit of an outlier in that regard. And so I don't know that Qualcomm necessarily has it in it to print positive infinity, but if that were to happen, positive infinity bid and positive infinity +1 offer, then you will be in a state of never not losing money, and that's the game that we play. I'm willing to roll the dice a little bit. Like, I'm willing to take a chance that that's not necessarily going to happen. And so a better estimate of a more practical amount of risk in terms of worst case scenario risk is the buying power effect. Now, again, to be fair and to be clear and fully transparent, you can lose more than this, and at times you will lose more than this. You do have an undefined and unlimited amount of potential risk on the trade. Of course, you're not going to get to an infinite amount of losses, but could you lose, a significant amount of money? Yes, you could. Depending on your account size, could your account size go to zero? Yes, it could. And so you have to be aware of those things in all seriousness. But a good practical estimate of the actual worst case scenario risk day to day that you're likely going to face is going to be the buying power effect itself. And so $1,800, that's not too bad for a $30,000 account, about 6% of the account size. So let's go ahead and let's do this Qualcomm short strangle. Man, I don't know how you would fade that, but I'm sure you guys can find a way. You guys are pretty creative. You guys are some outside the box thinkers, I think. You guys will find a way, I'm sure. Okay, so we're filled on Qualcomm 485. There you go. We're playing it kind of buttoned up, and boom, there you go. All right, so where are you guys at? Let's see. I see you guys in the chat, man. You guys are just making me laugh. Absolutely making me laugh. Let's see. Oh my gosh, wait a minute. Let me surprise and delay somebody. Where are we at? Oh, here we go. Smack Lovin' in the house. What's going on, Smack Lovin'? I saw Ash Finn say something about Lonnie. We're drinking a Lonnie now, bro? Like, I'm still getting over the fact that we're momentum traders now, bro. Like, if you watch, a little Nick Batista, maybe a little Jamal Chandler, like, we're momentum traders now. Like, this is crazy. Like, once Chris Vecchio comes back, like, it's over. Like, we're going to be playing off of moving averages and stuff. Like, oh, man, like, what are we doing? And now we're drinking Alani? Man, that's where I draw the line. Like, I'll trade a little momentum. Like, I'll bring up a little 9 EMA if you need me to, but I ain't drinking Alani. Like, that's where we draw the line 1,000,000%. So be careful out there, Ash fan. You're kind of, you're towing the line, my friend. But if I go into Smack Lovin', 96.74, hey, Dr. Jim, the implied move in FIG is 15%. I'm thinking about playing a weekly put butterfly in Adobe. Good news or bad news for FIG could be interpreted bad news for Adobe, and premiums in Adobe seem cheaper. All right, interesting. So this is kind of, okay, so you kind of have a little domino effect going on here. Like, you're looking at FIG to then look at Adobe, which is interesting in terms of kind of the sequence of events and kind of, the driver of the thesis here. That's really interesting. You're thinking could be interpreted for bad news for Adobe, and premiums in Adobe are cheaper. So a weekly put butterfly in Adobe. So let's look at Adobe. I haven't traded FIG before. Do they have earnings coming out right now? You've got FIG down $1. Are they just in play just overall, or do they have actually? Oh, they do have earnings tonight. Wow. Okay, so FIG has earnings tonight. I haven't traded FIG before. I think I'm going to pass on that. Hold on. Let's take a quick little look. Just a real quick one. 2-day cycle. Wow. Yeah. Wow. Look at FIG. Man. Wow. This thing is crazy. Yeah. I mean, just look at the implied volatility. I mean, you can see for yourself. This is not my opinion. Obviously, this is an objective fact. The implied volatility for FIG in the 2-day cycle is 257%. That's really, really high. I mean, I don't really know like what the average implied volatility would be for like a basket of stocks, but generally speaking, like, I mean, here, I'll even pull up a couple. Like, if you pull up like, like Apple, it's probably going to be like maybe in the 30s or the 40s. Like, just to show you, Apple 2-day cycle, yeah, 27%, right? If I bring up like Netflix 2-day cycle, what, 40%? Yeah, 36%, right? Tesla, what, 50% maybe? Okay, 86%. That's pretty high. But you can see still, like, all of those are much, much less than FIG there. So FIG, 250%. Man, am I doing something in FIG now, Smack Lovin'? I don't know. You said Adobe, though. You said let's do Adobe. So you're thinking no matter what comes out FIG related, you're thinking that it's going to have a negative impact on Adobe. That's quite interesting. Adobe has earnings on December 10th. And so you want to do, I'm assuming you want to do the front week here with 2 days to go, right? Is that what you said? A weekly put butterfly. Yeah. So this is so interesting because you have multiple pieces here to the idea. But for a weekly put butterfly in Adobe, if I bought a 332.5, I sold a 325, and then I bought a 317.5. That's what, a couple bucks? $1.62. Wow, that's dirt cheap. Wow, they're really just giving these things away. 332.5, 325, 317.5 in the 2-day cycle for Adobe. You've got the stock at 334, let's call it. $1.60 for a 7.5 point wide butterfly. I mean, from a pricing standpoint, that's really, really nice because, if you're only doing a one lot, obviously it depends on your account size, how many contracts you want to do. But this is a pretty good risk versus return. And so for that reason alone, I don't know enough about Fig. I don't know enough about Adobe to comment on kind of, the basis of your thinking here in terms of one affecting the other. But just as a standalone trade, it's an interesting play. I'm going to pass on this though, just because actually, man, I kind of like this. I'm not going to pass down this Smack Lovin'. Hold on, let me write this down though. I'm keeping receipts again. Smack Lovin', Adobe, loser. Okay, so I got that down. So now tomorrow, when we both chime in here, and it's only going to lose because I'm on it now too. Like you would have been fine if I did not surprise and delete you in the middle. You would have been totally fine. So I hope you don't have the trade on yet because you still have time to reverse and play this thing to the upside. But if I do 332.5, 325, 317.5, $1.62, let's do it. This is not even like this is like a second derivative binary event. Like we're actually playing Adobe to play the binary event in Fig. Like this is some next level thinking. And you can only find this on the Tasty Live network, by the way. Like you're not going to find this somewhere else. Like they don't have this on Yahoo Finance. Like they're doing actual analysis. They don't have this on Yahoo Finance. We're doing second derivatives of like one company versus the second company. Like that's some next level stuff, man. So thank you there, Smack Lovin'. I like the idea and we'll see what happens. And so let's see, if I go in here, let's see. I mean, I see you guys, man. I see you guys talking about AMD. I see Jared Kramer, man. I see it. And I see, I missed somebody else. But you guys are just making me laugh. Jared Kramer. I see Danish Dynamite. Man, look at you guys. I'm going to go all the way back to the beginning. Let's get back to the beginning. So, Sam L's in the house. What's going on there, Sam L? Sam L says, happy Wednesday, Doc. The midweek madness is here. Charts are green. P&L open is red, as it always is. The caffeine is low, not necessarily today. And only your B- wisdom can turn this market from upside down. Man, I appreciate you. But just to be clear, it's B- humor. It's C+ wisdom. And then Sam L says, Doc, we forgot about pins. Wow, did we really? Did they have earnings last night? Never disappoints on earnings. Always gets crushed. Are they even still in business? They're just pinning some losses at this point. Did they go down today? That's too funny. Wow, look at that. Pinterest down 22%. And this is their time, guys. I'm really glad that we didn't see this yesterday because we would have gotten absolutely steamrolled. Because you guys know my Pinterest thesis is I have not wavered on this. I mean, I waver on everything else. Sometimes you can't beat them. You join them. Sometimes you can beat them. So don't join them. I mean, it just goes wherever the wind blows us. But Pinterest, man, I've been super consistent from day one, just like my 49ers, right? With Pinterest, I mean, April Pinterest, you don't want any part of that. August Pinterest, no thank you. But November Pinterest, I mean, this is when they shine. This is when everybody is searching for Blueberry Cobbler. This is when everybody is in there saying, all right, how do I make the perfect Christmas quiche? Like, that's what people want to know. And man, they're down 20%. That is not good, man. I'm really, really surprised by that. But again, I'm very glad that I missed it because I would have been bullish on Pinterest 1,000,000%. Half of Z17 in the house, also known as the artist formerly known as Brian Dowdy. Hi, Dr. J. Thank you for the response on eBay. I sold the December 85 call. Very good, my friend. How does Dr. J determine if a call is enough premium worth selling versus a DTE versus capping the upside? What's the general rule of thumb? Yeah, man, this is such a good question. I wish there was a rule of thumb. I don't personally have one. It's kind of a weighing of the different forces. Right? Like, and we'll go through a couple of examples here to at least point you in kind of the right direction. But I'm looking at the three things that you actually pointed out. I'm looking at, the premium them selling, the DTE, and the capping of the upside. But the real thing that's driving my decision making there, which is similar to your trade, I think, if I recall, this was just yesterday, and you said, hey, I don't want to hold the position, I don't want to inventory the stock, I just want to be done with this guy. That's really, really important. Like, whenever I hear that from somebody else or I feel that way myself, now all of a sudden I'm going to put a greater emphasis on collecting more premium because I don't care as much about the runway for the stock because I'm not going to stay in the trade very long. And so generally speaking, if I'm thinking I want to be done with this trade, I'm putting a greater emphasis on maximizing premium. If I'm thinking I want to be in this trade for a long time, now all of a sudden I'm more cognizant of runways and, keeping, some more room for the stock to appreciate and things of that nature. And then when it comes to like DTE, generally speaking, around 45 days to go as my entry point is going to kind of be the tried and true. That's the tried, the true, the tested. I mean, that's going to be kind of the starting point for most trades that I'm going to consider. So hopefully that kind of helps you kind of understand. And you know, as far as I guess I can't really. I'd have to look at a position. I mean, your eBay position was so perfect for the example. Well, actually, let me bring up. Look at Starbucks. Look at Starbucks ripping to the upside. Starbucks up 278. Man, the people have spoken. The people have spoken. And at first, they kind of wavered. At first, they were a little bit squirrely about, some very P- coffee. But now they're like, you know what? It's actually not that bad. You kind of get used to it after a while. Like, sure, we're paying 150% more than we should pay. But, it's kind of growing on me a little bit. And by growing on me, I mean, there's a little bit of mold and a little bit of some other things and, whatever. But Starbucks up 278. Man, that's some good stuff. So if I go into Starbucks, though, and I do, like if I go into Starbucks and let's say that I wanted to sell some premium against my Starbucks position. Now, keep in mind, right? I'm looking to hold this trade for a long time. So I'm going to give you one example that's different from yours, but we went through yours yesterday. And so hopefully that was helpful. And even the comments I shared a couple of minutes ago. Now, this is a different example where it's like, this is something I want to hold for a long time. If I'm in a position like Starbucks that, I paid $92 for the shares and the basis is much lower than that now because we've been selling premium for basically the last, 12 months. Now I'm trying to find a call that I can sell against those shares. Now I'm trying to find a call that, that I can get some premium working for me against these shares. How do I do that? Like, how do I determine which call to sell against the shares? Well, number one, I want to be mindful of my basis, which again, remember it's 92. So if I just put that over here. So the reason why that's important to me is I'm not really super interested in selling like an 85. Like I'm not going to do that. I'm not going to sell a 90. Like I'm not going to sell something that's below my basis on a position that I intend to hold for a long time. Like I believe in the company. I want to leave the runway clear. And so I would much prefer to just hold the long shares, naked, clean delta to the upside, as opposed to selling something that does give me more premium, but it's really now I am capping my upside and I'm capping the upside below my basis. That's the important part. Now, again, I know my basis is below 92, but let's just use 92 right now for the purposes of this example, because I haven't figured out what my actual basis is. If you're going to cap your upside, but you have to do it in a way that makes sense. And in my opinion, capping your upside in a way where you're actually below your basis, that doesn't really make sense on something that you want to hold long term. Again, if I'm just looking to be done with this trade, man, I'm selling a 30 delta or approximately a 30 delta, and I'm just done with the trade. I'm going to try to pick up whatever I can premium wise. I'm going to move on with my life, and then that's going to be that, right? But here, this is a very different scenario. So like when I look at this, and I look at a 95 call for 40 cents, that's not nearly enough. Not nearly enough. I mean, I probably usually want at least $1 out of what I sell. If I'm going to sell some premium against a position, like a long share position, and there's other examples of this, of course, but if I'm going to sell premium against a long share position, I probably want at least $1, if not more. If I'm only going to pick up 40 cents, that doesn't really make a ton of sense to me in terms of, kind of limiting the upside, capping the upside. Even though I am able to do it over my basis, it doesn't really make any sense. And so hopefully that helps you a little bit, Brian. It gives you a couple of things to think about. Let's see. Grumpy Mike in the house. Dr. Jim, is there a clear that you recommend to spray over Rust-Oleum? I need to pay my car. No, there is not. I'm not your guy. I'm not your car painter guy. I mean, I'm barely your trading guy. And I'm only your trading guy when you do the opposite of what I do. And so I'm certainly not your Rust-Oleum guy or your clear coat guy. Like you need a different guy for those things. But good luck to you, my friend. And thank you for being here, of course. Samuel says, look at AMD from advanced money destroyer to advanced money deliverer. Solid earnings, green candles, time for a well-deserved 5-minute victory dance. Don't pull a hammy. I'll pull something, man. Definitely, man. I got injuries out the wazoo. And so, yeah, I'm shocked that AMD came back there, Samuel. That's some really, really good stuff. But Ashvin's in the house. What's going on there, Ashvin? Appreciate you, my friend. Just stay away from those Alanis. Kimberly Thomas says, Amazon is ready to break out all the way to 294. Man, that would be quite a breakout for Amazon. 249. Ooh, man, I don't know there, Kimberly. That's quite a breakout. 294. Let's see. What is the she's saying by 11/14 in 9 days? Man, look at that. So if I click on the 9 day option expiration. I click on a 295 strike. The delta on that strike is only 1, so that means there's about a 2% chance it gets hit. Now, of course, you're not saying this is going to happen. Like, I understand, and I appreciate like all the help. I appreciate all of it. This looks like a pretty low probability play, so I'm already interested. This looks like something that a Dr. Jim would do and kind of sell this as a really great trade. But I don't know. Maybe even this is a bit too far for me. 2% probability of a touch is that's pretty low there, Kimberly. But it could happen. Markets move and things change. There's no doubt about that. I mean, AMD is the perfect example of that, actually. And so let's see. Matt Morris in the house. What's going on there, Matt Morris? Matt Morris says, Dr. J, are you fading bros for earnings? Because you are a Starbucks fan, I need to know if my short trade is going to lose money. Let me take a look at this. Bros, what are they? They're a coffee company? Dutch Bros. It's not paint? I thought this was the paint company. Is it a coffee company? Maybe it is a coffee company. I'm not familiar with this at all, which has never stopped me before. Like, don't let me try to pretend to be somebody I'm not here. But I'm going to pass because we've already done Adobe. We've already done Qualcomm. You know, our plate is a little bit full right now. But if I was going to play bros, if they're a Starbucks competitor, of course I have to be bearish. And again, this isn't even really my own personal thought. Like, this is a marital agreement between myself and my lovely, beautiful, amazing wife, Autumn, right? From time to time, she needs a talking to, but man, she is amazing. She takes them pretty well, I got to be honest. And so from a marital standpoint, none of that happens, by the way, just so that you guys know. From a marital standpoint, though, I definitely can't be playing bros to the upside. So I would definitely be bearish on some bros. But let's see. Orgdenu's in the house. What's going on there, Orgdenu? Appreciate you, my friend. I sent your email back just before the show, so I hope that you got it. Let's see. InvestWise in the house. Let's see. Scramble Everything says, hey, Dr. Jim, blueberries and chocolate is a good combo. Add in some strawberries. And what is that fruit? What is that? Is that a papaya? A mango? I can't tell what that fruit is, that emoji that you've got there. And my multifocal contacts can't even figure out what that is. I think that's a papaya. Strawberry and papaya? And you got yourself a winner? I don't know, man. That sounds like some tuna fish and applesauce type stuff. But hey, again, you do you, boo. Like, that's what makes a market, man. Like, go for it. Samuel Doc, the earnings wizard, not even Big Brother Palantir could not resist the fade doc strategy. I guess you are the real machine learning expert here. Yeah, I don't think I am. But yeah, Palantir is going to zero. So this guy is, look at it rallying back. Maybe not. Hold on a second now. So this morning, I saw Palantir was down to like, 181, 182, whatever. I'm like, yeah, it's over for Palantir. That's kind of sad. But now, look, we have since come back to 189. So that's pretty nice from a Palantir standpoint. And so I'm very, very happy with that, of course. It may be too little too late. We only have 2 days to go. I'm not going to take it off now. I mean, it's only worth 50 cents. It doesn't really make a ton of sense to me to take this guy off. I think I'd rather just leave it on and be done with it. But yeah, so Palantir looks like it may come back. And there you go. So let's see. Emmett Morrison, it's the best time of the day. It's Dr. Jim time, man. I appreciate you, my friend. I'll send you that cash that we talked about for you putting this in the stream at this very time. Thank you, my friend. Sergio's in the house. What's going on there, Sergio? Ryan Johnson, hey, Dr. Jim, are you going to play Qualcomm earnings? They report tomorrow. Yes, we're playing Qualcomm. They report tonight, though, right? Isn't it tonight after the bell, or is it in the morning? I thought it was tonight, but I could be wrong about that. No, it's tonight. Yeah. They report tonight there, Ryan Johnson. So it's going to happen tonight, one way or another. Unless all the purple information on tastytrade is leading us astray, which doesn't usually happen, but I'm sure from time to time it could happen. And so let's see, scrub everything, earnings trade and Oscar. This one won't get you in trouble. Yeah, those are famous last words with the establishment. Yeah, the December 24-14 put. Check out that sweet PPR usage. Yeah, Oscar. Didn't we play Oscar before? Yeah, I'm going to pass on this Oscar garbage because I'm just not going to do it, man. Next thing you know, we're going to be trading Wolf again. You guys are going to have me in GameStop, right? Oscar at 17. Yeah, I'm going to pass on Oscar and just kind of let him, kind of grouch his way on over to the corner. But thank you there, Scramble Everything. So Wolf is in the house, man. I'm just about out of time. And I see DTM Lau is in the house, man. Let's go. Favorite almost hour of the day. Yes, it is the Dr. Jim Power 3/4 of an hour. And it's over now. Like it's 100% over now. And so I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
If you've ever been curious about where to start with crypto, join me, Ryan Grace, for the Tasty Crypto Show. Alongside co-hosts and industry guests, we'll break down what's going on in the market and show you how to take advantage of crypto. No hype, no shills, just crypto know-how. Watch us live, join the chat, and fill your bag each week on the Tasty Crypto Show.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Hey, what's going on, everybody? Welcome to the most dangerous show on the Tasty Live Network. It's Engineering the Trade, and I am your host, Jamal Chandler. Markets are moving to the upside. It's a little surprising, some of the things we're seeing today. I can't reconcile some of it. I mean, for example, I understand that markets are probably bouncing back from yesterday, and that, well, gold is basically doing the same thing. And yeah, even Bitcoin is doing the same thing, right? The thing that I can't really reconcile is why bonds are up so much. I mean, could it be that the Supreme Court decision is having something to do with that, or eventual Supreme Court decision around the tariffs? Maybe it is. So we'll dive into that and take a look at some of the things that are going on today. Some peculiar moves. I gotta, something's on my mind. I gotta talk to you guys about it because it's fascinating to me. I pay attention to a lot of sports. I love sports. I talk about them all the time. Bulls are continuing to win, by the way, looking good. Big game for the Bears this weekend. We'll see if they can make it another win. That would be 6. I don't know how many of you have YouTube TV, but there's a big thing going on right now. It really is interesting. It really is. Forget sports. It's interesting from the standpoint of where are look, there's a lot of money that goes into sports, right? It's clear. It's one of the reasons why I'm fascinated by it, to be honest with you. What goes on with contracts, there's all these different things with, obviously contracts. We talked yesterday about, the Jets and their big trades and what was going on there. And the amount of money that players get paid, I mean, it's incredible these days. Everybody marvels at it, right? And obviously there's a lot of companies that profit off of that. ESPN obviously is one of them. And it's interesting that's what's going on right now. For those who don't have YouTube TV, you probably heard about it, but a lot of the ESPN shows and the ESPN channels are, and Disney, if you will, obviously Disney owns ESPN, have been removed. I sit here and talk about different deals all the time, right? I've talked mostly about the state of streaming and things that are happening. You can see a lot of sports heading towards streaming, whether it's Amazon, whether it's Netflix, things like that. And they're all looking for ways to make money off it because nothing really gets people together quite like sports. I think we can all agree on that. People always, get together to watch sports, and even if you're not interested, you go to a party, right? And where people are probably watching a sports situation. I find it interesting that essentially, for those who have YouTube TV, you've probably seen this notice. I mean, YouTube TV is willing to give you $20 if the fact that they can't come to an agreement if it goes on. that immediately lets you know something that for those who don't know, I mean, basically, let's just call it $80 a month is what YouTube is. And so the fact that they're going to give you 20 means, well, you can just value Disney, ESPN as 1/4 of their package. That will obviously increase if ESPN and Disney and those guys have their way. So it's not about the deal. I just find it fascinating that, we've gotten to the point where sports is clearly 1/4 of probably television. I mean, it's one way you can think about it and put it. And it's just really, this whole situation is really interesting to me. And I'm curious at how it's going to end up, right? It's made me reevaluate. As much as I love sports, how much am I willing to pay for it? I don't know if I'm willing to pay more than $20 on a quarter of a package of $80. I don't know. I really don't. Maybe that's just where I am in life. But all of these things are going to do is just increase over time. You know that that's the case. I mean, it's not going to go down. That's for damn sure. So something I'm keeping an eye on, especially, and I've been keeping an eye on for a while, to be honest with you. I mean, every time I talk about one of these deals, Netflix did a deal with this person, or, Disney bought Fubo. I always say Fubo. That deal happened about a month ago. I can tell you what, ESPN planned this to the T. They bought that Fubo. They made these other deals, and they eventually let it get to the point where it was one of the biggest weekends for sports, where they decided to say, we are not going along with the deal. So something interesting, I think, to keep an eye on. I just can't help it. I can't help it, but thought you guys would find that interesting. Let's pull up the platform real quick here. Some of the things that we've done today, a few trades today. Most of them were a few hours ago, honestly. I should say I did decide at the end of the day, after the reckoning that we saw in the markets, I decided to clean up a whole bunch of stuff. And I think it served me well. What do I mean by clean up? Well, I mean, yesterday, towards the very end of the day, if I can get here, you can see you probably notice it after the show. Sometimes when we're in the middle of a show, it's kind of hard to sort of do some risk management. And there are times where I do kind of wait towards the end of the day, especially a day like we had yesterday, where essentially we accelerated the move to the downside towards the end of the trading session, right? So what I decided to do is just change around a few things. And it's funny, you can see the flurry of trades right after the show here. And so URA was one of them. I had a strangle in there. And I had the strangle that was in Nove. It was one of the few Nove positions that I had left. I was able to roll that strangle out and actually change strikes and collect just a tiny bit more credit, which worked out. There's been a lot going on in this energy space, particularly on the side of the nuclear power names. So I don't know where this thing is. I don't know where they're going, but I know vol is still a little bit high, and this is an ETF. I don't mind being a shorter strangle in here. Doesn't hurt me and doesn't cost a whole lot of money, so I rolled that further out. Jared Kramer joined me in sailing the seas, Jamal. I mean, it sounds like fun. I'd sail some seas. I'd do that. GV, YouTube plus Disney TV suck. You're right. But you know what? I'm giving YouTube TV credit, honestly. Typically, they would have just said, we are going to come to a deal and we're raising our prices. Like, Netflix these other things they just raise their prices, right? HBO, Max, whatever, they just raise their prices. They don't say, well, we're coming to a deal. And they just raise their prices. YouTube TV basically said, no, we know this is going to raise our prices on our people. We're going to hold off on this for a while. I hope they hold off for even longer, because you know what's going to happen. I feel like it's going to happen. They're going to come to a deal, and it's going to go, instead of $20 a month, it's going to be $30 more a month, which is going to bring up the package to $90, which basically makes it at a third at that point, right? Think about that. Goes from a quarter to a third. That's what ESPN is trying to do. And why? So that they can, and I have nothing against these people. I just want to say this right now, but they're only doing it so that they can end up paying Scott Van Pelt more and, Stephen A. Smith more. And again, I have nothing against these people. We're in the same fraternity to some degree. I have nothing against them. It is what it is. What else did I do yesterday? Microsoft was one where I had I moved some calendars. So I had a calendar in Microsoft that was Nove Dees. I moved some of these calendars out to Dees Jan. I think those are a little bit better. And it gives me a little bit more time on the upside, because Microsoft is still kind of weak, as you can see. And as a matter of fact, speaking of Microsoft, I actually, while on Options Trading Concepts Live, try to buy another, the 530 calendar. So I already have the 550 calendar, which again, that's at this point closing in on about 10% away from strike. So I figured being long January 550 would give me some time, right? As opposed to being long December 550. Trying to get the 530 calendar onto the Jan Dees 530 calendar. I've had that thing at $5 bid all day, and it has not filled. It's been between 5 and 505, and they will not give me a fill on that. I'm not budging. Just like YouTube TV, okay? I'm not budging. So did that with Microsoft. Palantir, same deal. Rolled the calendar. After that stock dipped, and it's still dipping again today. And this has been a trend that we've been seeing, right? With Palantir, with Netflix, with Microsoft, with Meta post earnings, they just haven't been able to get off the mat. That said, Meta did make a little bit move to the upside today. So I'm in the 230 calendar in Palantir. I wouldn't do 200 yet. If it dips below 180, I'm going to do the 200 calendar. So I'm just saving capital for that in case it does. And that's not improbable. Basically, as you can see here, the 50-day moving average is 176. I wouldn't be surprised if we eventually go test that. So I'm saving some powder for now before I do another calendar in here because, again, it's still been weak. The other thing I did, Newmont, I had a diagonal in there, and it wasn't working. I mean, obviously with gold down yesterday, it definitely wasn't working. I closed that, and no new position. We're moving on. Boeing, I rolled the calendar. I had a diagonal, 205, 220. I had it with these two D strikes. I just decided to do a 205, 220 calendar with the Jan Dees. Now, I was a little bit nervous last night when I saw that plane crash. I was like, uh-oh, that's not good for Boeing. But it seems as though it seems to be kind of okay today. It's down a little bit, not that bad. Sounds like a terrible tragedy to see. It's the last thing you want to hear. I'm certainly not concerned about my Boeing position when you hear something like that. But just saying, from the standpoint of event risk, it seemed like it was going to be something that was going to affect the stock. And it affected it some today. Boeing, Netflix, same deal. And again, remember the split is coming on the 17th of November. That would be not this Monday, but the week after. And honestly, I'm a little surprised. We haven't seen a lift here in Netflix. Usually when you hear split, people are jumping into the stock to try to get more. There's a lot more calls trading. Full disclosure, I really haven't seen that type of activity here in Netflix. It just seems like kind of par for the course. Maybe there will be more activity post-split. In the meantime, I have the 1200 calendar. And again, I had it in Dees Jan. I just closed out of the Dees Jan and moved it to, I had it in Dees Nov. Closed out the Dees Nov and moved it to Dees Jan. So now I'm short upside, short the 1200 in Dees, long the 1200 in January. Post-split, this will be 10 contracts, right, for the 120 strike. With if we're to close the day and do the split, stock would be 109. So I'd have $11 to overcome as opposed to $110, right? So that's kind of what we got going on there. And let's see, I did that in Netflix. KRE, I guess I'm keeping this on. I mean, these originally I did this a while back during this time period. Remember when there was like some fear a little bit in the once again in the regional banks, decided to put on a zebra, and I had it on in Dees, moved that out to Jan, and I also changed strikes a little bit here, so I went a little bit further downside on this thing, try to get a little bit more long delta in there. So that's what we got going on in KRE. Just trying to explain some of these moves I did yesterday. Spot was an earnings play, didn't work out. Matter of fact, I wonder where that stock is today. Did it bounce? Nope, still down. Closed out the what was left of the calendar call in there. Micron, boy, am I glad I closed this strangle. I mean, I would have been so upset today. This thing just continues to keep moving. I mean, honestly, it almost seems like the call in here is, well, there is no call in here. I was going to say to buy calls, but you're certainly not buying calls in this name. Just this thing is just unstoppable. I mean, this is the most Micron has moved in quite a long time. I had the no strangle on. I mean, Again, I had, what did I have? You'll see. I had the 255, 205 strangle, and stock dipped yesterday, but then bounced back and $10. I mean, I'm just glad I closed it. I don't want to deal with this. It's moving around a whole lot. Well, could I have closed it for less today? Yeah. But still, I just when stock is moving around this much, you're just not able to harvest the volatility. I mean, you're just not. It doesn't come in a whole lot. And again, who's to say it doesn't have another move like this tomorrow and then it's through my strike? Don't feel like dealing with that, so closed it out. AMD. Oh, the AMD was the earnings play. So now we get to today. And AMD was the earnings play. We had the 240 put calendar with the idea that most of the names that big tech names particularly on earnings, they've kind of fallen to the downside on earnings. And this one actually did overnight and a little bit at the beginning of the day, but then it started to rise. I was able to close it out for a very small gain. I'm glad I did because it's even higher now. I am back in the long dollar game, folks. That's right. Good chat today on OTCL with Glenn. We were all talking about the current situation with the dollar, with gold, and all these other different things. And it seems as though the dollar just has no let up in it. And this is one of the bigger things that I kind of pounded the table on back in late June and July when the dollar first started its move up. I held a long dollar position for a while. I was long put spread in the euro, if you remember. Let's see. Let's go to order change. Oh, no, not Dixie. /6E. Yep, I had one. No, not today. Let's go back 180 days. So I had. What did I have? Yeah, I had. Oh, yeah. So initially, we don't have to hash it all out, but I did have a put spread in here, and I had the 117, 114 put spread. That's what I had on for a while. I eventually ended up turning it into somewhat of a zebra, and I think I was. I had a put spread. I did have one of those, 117, 114. And you can go way back here. I mean, this is when I first put a put spread on, 117, 115. That was in July. I took it off about 2 weeks later. But the one main position that I had prior to today, I had the 118, 115 put spread back when the euro, 9.5. This is way back here. This is it. Back here, I had 9.5. I had this put spread on. And I think I held it up until what I decided to do was end up turning into a put butterfly. And so I did the 115, 112, figuring like, okay, at some point this thing would get to 115. Look at that, huh? Look at that. It's pretty good, right? It's pretty good. I only thought that based on this. This was the lower channel of the euro back in August, right? So I figured at some point it would get down here, which it has. And I closed it before that, though. I closed it way before. I didn't have as much patience. If there's one thing that I don't have enough of, I've gotten way better, trust me. But sometimes with patience, it's the thing. And I saw another trade, I think, at the time when I took this off. We could probably pinpoint it when I decided to close out somewhere. What day is this? 9/9. I guess it was 9/9. I put on 9/5. It had this here. I closed it out a while ago. Something must have happened in here that made me get super interested in putting on another trade. And so, it doesn't really matter. We're back in. We are back in now. And now the area that we're going to target is 112, really, is what we're targeting. So in my mind, when I put on the original spread, look, it takes some time here. If you look at the dollar $$DXY. If you look at the dollar, here, July, it took, about a month for it to go to par, and then it faded back down. It kind of treaded water for a while. Well, now it's back here, and I think at some point this could be meaningful, particularly once it gets above this 100 level with meaningful force. I think at some point it might challenge almost 102, which would be the high from May. So that's kind of the area I think it's aiming for. I think with that would coincide with some like we saw here, this 112 level, right? So that's what I'm aiming for with this put spread that I have on in the euro now. I did it in Jan. I want to give myself a solid 2 months of time. But instead of targeting exactly 112, I decided to do the 116, 113 put spread, right? So that's what we're doing now. And we're going to go about it that way, right? And then other stuff, we did this, and I've never really done a trade like this before. This is definitely a Mike, Nick, and Katie special, apparently, with SPX. It's somewhat of a what they call it, an open heart butterfly, I think it is. Interesting trade, though. Essentially, I'm long. It's like having an iron condor, except you space out the other legs a little bit, right? Like a typical iron condor, a typical butterfly would be, well, something like this, that, and that, right? All equidistant, $10 apart, 2 of these in the middle, right? And that's your typical, call butterfly. What we did here is we spaced these out, as you can see. I mean, this is $10 wide, but then there's a little bit wider here to be able to collect a little bit of premium to put this actual trade on, which I did. I collected $1.40, and you can see my it's relying on the fact that if this thing were to fall all the way, if this thing were to fade to the downside, now this is a huge fade, but let's just say for whatever reason we're at 6,800 now. Say we get back below 6,750, and this is where we are at expiration. I get to keep all of my credit. What we don't want is it going too far too fast. But if over these next 17, 16 days we have in Nove here, if we drift higher towards the look, if it all closes out of the money, I keep the credit. Doesn't really matter, $1.40, right? What we don't want, obviously, is just it continuing to move to the upside because it gets a little painful. But the max I lose is $850 because it's still $10 wide between the spreads. Doesn't really matter where you look. Still $10. It's a $10 credit. It's a $10. I bought these for $10. It's $20 credit in between here, but we collected $1.50. The big spread in between is $10, right? And so therefore, $8.50 or $850 is my max loss, and I could be comfortable with that. Doesn't matter where along the curve it would be. It would be $850, considering that I collected a buck. I must have collected $1.50, right? Oh, $1.40. Oh, then it would be $860. Excuse me. Sorry, $860 is my max loss there. So, the one way it really can be nice is if for some reason we make it above. We make it above 69.60, but we never reach 69.80. And I think that's somewhere around, is that the highs maybe? High 69.20. So we'll see. So those are some of the trades that I've done. That was your suggestion, Mike. There you go. See, I didn't know. Mike runs the chat, man. I don't know. I mean, Mikey runs the chat. I didn't see. That was nice job, though. Yeah, it should be. I think I would have to. I mean, I could move the dates out. Honestly, I could move the dates out and model it a little more. But yeah, it should be showing the max credit in between the strikes. But you get it. You get it. Especially since it was your idea. Datadog. Somebody asking about Datadog. I know Datadog has earnings. I'm kind of. I think after this Palantir and this AMD, I'm kind of done with earnings. I haven't been able to get a real read on any of them. But what about a put calendar for Datadog for earnings? I mean, you can't go wrong with it. Again, they're all pretty cheap, right? Depending on what your what's the expected movement here? Probably $14, $15. I mean, you're going to play it down to 140. I don't blame you. I haven't been able to get a handle, and these are a little wide though. That's the one thing. These options are a tad bit wide in Datadog. That's the only thing I would caution you about. Be careful about that. You're not going to probably get great fills, and even if you win, it's probably going to be hard to get out. But as long as you're aware of it, you're good. I'm tempted to possibly do something in bonds in here because this has been an interesting move today that we've seen in bonds. I feel like every time I try to fade a bond move, though, it doesn't work out. So maybe I just wait a little bit longer and see what happens here. But I tell you, it's been interesting watching bonds sort of struggle here today into this move. And right now, I don't think I'm going to do anything because, again, this is a big gap that it filled back in September. 9.5, 9 to 9.8 over that weekend. Huge move, if you remember. I would probably be interested to see if it I don't know. It's already looking somewhere close to these lows from the punch up on September 8th. I think I'm just going to stay away. It's starting to feel like something's going on that I don't quite fully understand. I don't know if it's the tariff situation, because it's really all just came out today as they're doing oral arguments for the tariffs. I'm not exactly sure, but I'm going to leave it alone for the time being. We'll see. I think I had one more trade in here that I did. Oh, yeah, Hood. So I did, I closed out the Kava earnings spread. I think I lost small on that from yesterday. I don't even remember what I put it on for. I put it on for $3. So yeah, I lost 50 cents. I'm cool with that. Usually you lose more in earnings when it doesn't go your way. Hood, we did 2 calendar call spreads. We did one earlier on the 150 strike. I did one on the 160 strike just in case. So that might end up being one of my last earnings I play. We'll see. I mean, I feel like I've been less than 50% on these things for the most part, But yeah, it's been some risk management here. It was basically towards the end of yesterday, a lot of risk management, and we're just sort of riding this move out here in markets. Markets seem to be finding a bid here today and a bounce. I feel pretty good about a lot of the things that I have on. I mean, I really do, and I feel like I'm collecting more than anything. My extrinsic is pretty decent, mostly due to this natural gas, which decided to play along yesterday. It was kind of biting me in the butt with the move that it had, but hopefully nat gas starts to calm down and we can get maybe a 2-day drop, and that would be good for the strangle that I have here. Yeah, that's kind of one of the things that we're really counting on here. But yeah, I know the SCOTUS won't rule probably until January, so it's going to be a while before we get anything out of this. As for the rest of the week, well, it's interesting to me. Earlier in the day, you could see a little bit of higher volatility in these options. This was like a 17. This was a 17. Now they have faded some. I don't really have any real hankering to do anything in SPX. It's really, even for the rest of the week, this expected move of 48 points, seems to be in line for what we're seeing, but it seems like we usually realize more than that. So I guess that's just how the week is going to go. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See ya.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number 1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
New from Tasty Trade. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits when you open and fund a new Tasty Trade account. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius.
Hello, everybody. Well, we got our totally unsurprising bounce day going on. We had a nice tumble yesterday, but there hasn't been a two back-to-back down days for as long as I can remember. You get one swoon, and then the next day, whoosh, up it goes. And weirdly, it often happens after there's a lot of follow-through the night after. Like last night, Asian markets were down hard. AMD was down. Tech was down in general, and then for no particular reason, everything just rallies. And so as it is now, the incur is up hundreds of points. Everything's green. In fact, the only red on the screen right now is crude oil. It's down a bit more than 1.5%, but it is largely up today. I've got some charts ready, and we can talk about them. And let us do so. Jumping into where we usually start is the spider. Now, the point I made yesterday was, pleased as I was about the drop, what I warned about was that we were simply approaching an important support level. And true to form, that support level was not broken. So here's a good example right there. This is the spider. We peaked here, and we've slipped a little lower. We basically unwound a lot of this zeal, because the important thing that happened after here was the whole China thing was announced with respect to, like, we have a framework now. We've got a 1-year hiatus on the rare earth export ban. It's a 12 on a scale of 1 to 10, and so on and so on. That caused a big rally. And that rally lasted 1, 2, 3, 4 trading sessions, and then sort of disintegrated after that, bottoming yesterday. So we're kind of back. Yesterday, we were kind of back where we were before the whole China is solved thing was announced. And we're beginning to push back now. So we're seeing that in a lot of different places. That's just an important example, because the spider's the big boy of the ETFs. Here's IWM. A little bit more hazardous, because in this case, we have broken the trend line from April 7, and we fell hard yesterday. We've undone all of yesterday's loss, and we're pretty much back to where we were here on Monday, or I guess Friday. Losing track of the days. So yeah, there's that right there. Actually, let's see. Yeah, no, today's Wednesday. So this is Monday right here. So we basically unwound to the start of the week. Yesterday didn't happen. The diamonds, DIA, are up about 0.2%. Here too, we approached support yesterday, but did not break it. So it's still just a waiting game at this point. It seems to toggle from day to day sometimes. For myself, my own style of trading, I just tighten stops where needed, take profits if targets are met, and in some cases get boinked right out of stuff if I'm stopped out. Now, the cubes are especially strong. They're up over 1% right now. We are pretty much past earnings season at this point. But in this instance, as we zoom in, this level approximates support. And we had our, as I said, China is solved rally here. And it unwound most of that as of yesterday. We've got a bullish engulfing pattern now here. But the thing is that for the past 1, 2, 3, 4, 5, 6, 7, 8, 9 trading days, it's just been grinding around in this range. The last big news, of course, was the China deal, and there hasn't been much to chew on since then. So there we have it. Jumping overseas, EEM, the emerging markets, this trend line has not broken. The anchor points are, of course, down here, back at the April 9 bottom. And here, the other anchor point is this kind of one-day threat to China slump. You may remember that, the threat of like 145% tariffs or something. That was on a Friday, just freaked everybody out in the late hours of the day. Those are the two anchor points. We've been above that trend line for these many 7 months, and haven't cracked it yet, as you can see. Got within spitting distance yesterday, but it didn't happen. As far as bonds go, these continue to be really weak. Bonds are getting weaker, interest rates are going up, and this has been sinking steadfastly since Powell spoke and are approaching what should be a support level here, but we'll see. Bonds, of course, have been in their own bear market. for years. They peaked way back in March of 2020, and I've been slaughtered since then, and I've been trying to hammer out a base down here. The slaughter ended pretty much in late 2023, and it's been just trying to consolidate in this zone with varying levels of success. Now, Palantir was very much in the news a couple of days ago, a couple of evenings ago, really, because we had our lifetime high here on Monday. Earnings came out, and as I said, it spiked to 222 after hours and then completely fell to pieces when news came out, ostensibly, that Michael Burry has a huge put position on Palantir. He's got a very large bearish position. Most of his portfolio is oriented toward being bearish on Palantir, which Alex Karp took kind of personally. CEOs don't like short sellers, and so he's been lashing out at Mike Burry for that. But it fell quite hard yesterday, and even with all this green today, it's still down. It was weaker earlier, and we are well below this this breakout point. But yeah, looking pretty ugly there for Palantir. As I said yesterday, this is a very nice cup with handle pattern, and it went zoop above it like so, and it was rendered moot as of yesterday because it violated that pattern, and we can see just continuing to sink under there. But interesting that such a famous investor, the Big Short lead, has taken such a public position against such a big stock. The big news yesterday evening was AMD. And so they came out with their earnings, and the stock did nothing. And it slowly began sinking. And after hours, it got down a good almost $20. It has completely shaken that off. We are up now 3 1/3%. We are getting close to those lifetime highs that were established last week, but a pretty big reversal on AMD from much weaker performance. In turn, the semiconductor ETF SMH is also rallying. It had an opportunity to break this trend line. If AMD had stayed weak, it didn't. But instead, it's been rallying up to this price gap. So that price gap was established between Monday and Tuesday, and we're just about sealed it. It's getting quite close to it like so. And as I said, this is still bullishly configured. Not once has it broken the this uptrend since this bottom right here, April 7th. What else is cooking? Well, this was a good one. You may remember Axon, AXON. Now, this company, formerly known as Taser, TASR was their old ticker. I actually remember this is an old company. I remember I worked at Montgomery Securities back in the early 90s, and TASR was one of the hottest things out there. So decades later, here we are, but under the name Axon. And this has been, over these years, in a sweeping uptrend. And recently, like so, based on the political winds blowing, it had a tremendous time because last year it rallied mightily higher and higher and higher based upon the idea that there'd be lots of people to tase and lots of people to body cam. And so Axon's prospects look really bright. And I shorted this thing, I don't remember exactly when, but at a lot higher prices than this. And I was pleasantly surprised because, as I said yesterday when I mentioned this position, it wasn't a big position because it's kind of a crazy stock. And of course, I wish it was a bigger position when I saw this thing completely collapse, but it fell from the 700s to the 500s. And I got out early this morning, and I might just get back in again because we've rallied nicely to a potentially really good looking pattern. On the one hand, this gap is now resistance. It might not get that high because if we look here, right along like so, this may well constitute the new top. I don't know, but I'm glad I got out because it's been undoing a lot of its loss from earlier today, but it's still a kind of an interesting looking creature. So anyway, Axon worked out. Another short, IRM, Iron Mountain. This one has had a crazy day. Look at these candlesticks. These are called shadows, these long lines. So here's the open, here's the high, here's the low, and here's the current price. So just swinging all over the place today. Tremendous range. But I'm short this. It's down 2.44%. And so sticking with that one. I was not in this, but I wish I was. But, you know, to be fair, there was no reason to go into it chart-wise. But Pinterest, P-I-N-S, getting zapped, down about 23%. And this is at a long history. Back in the day, 2021, this was tremendously successful stock, and it undid all that. Since then, it's been having a rough go of it, certainly. But yeah, today alone represents an undoing of many months of hard-won progress. So we're basically back to where this thing was last April. It had recovered, and now that's all gone. So Pinterest getting nuked. Another interesting critter here is Oklo, O-K-L-O, which I believe Sam Altman is the chair of. I may be wrong on that, but this is hammering out a very interesting topping pattern like so. Pretty risky gamble, but a pretty cool little pattern there and very richly valued. So food for thought, OKLO. It's a nuclear energy company. Another thing I've noticed lately is that anybody that sells food is not doing well. Restaurant chains have been doing just horribly for whatever reason, increased costs or something. I don't know what it is, but universally, restaurants just stink. Kava used to be just a white hot stock, and look at it now. This thing has descended. It peaked right here a year ago, almost to the day, getting up to almost $180 or so. Now we're down to 50. So this has been a long, hard slide with no relief in sight. Another one, very well known, Cracker Barrel. This, of course, was very much in the public space earlier this year. There was because they changed the logo and everyone got upset, and then they changed it back, and didn't make it much difference because the long slide is still very much intact. This has been grinding lower, as you can see, for years and years. And look at this. I mean, is that amazing? We've gone from 200 down to about 30. And the most recent brouhaha, I actually did a post on the 27th of August, right there. I did a post right there. I think I called it Short Uncle, I forget what they called the guy. Basically, it was Short Cracker Barrel. So that was well timed because that was actually the peak. And that's been just withering away since then, down over 50%. Since I did that post. Uncle Herschel, that's the guy's name. So yeah, Cracker Barrel, just like everybody else, falling hard. Jack in the Box, another one. This one was especially cool because it had the prettiest little head and shoulders pattern. But I think you're getting the idea. You know, casual dining, fast food, what have you. For whatever reason, the restaurants are just doing terribly. One last one, not as well known. I've eaten here a bunch of times. Sweet Green, nice place, nice food. Stock, not so nice. And it's been a wild run as well here too. And it had recovered nicely, but as you can see, that's been all unwound. And we're now near those lifetime lows. So even in the context of this very powerful bull market, that is one sector which is quite weak. Gold is having some strength today. This is GLD. We're up about 1.25%. I don't think it's out of the woods yet. This still seems very prone to, I mean, sure, maybe it'll rally back up to resistance here, but there's an awful lot of white space here, just beckoning for a fall. So I don't think this has been battered nearly enough. The miners reflect that as well. Here's resistance up here. And yes, it's recovering. It's up nicely today, 3.65%, but I don't think it's an all clear sign at all. Having said that, continue to watch palladium very closely. And as I said, my dream price is down here. If gold and silver and miners all slip hard, like I think they might, I don't think palladium's going to weather that storm by itself. And XME, as I mentioned yesterday, this is my shame on me thing because it's been a terrific short. It's probably it's rallying a little bit right now, but it's pretty busted at this point. So if it does rally, I think this gap right here would be pretty decent resistance on that. You know, well, how should we end today? Because I think I'm going to say hi to Liz and Jenny in a minute. Why don't we just jump down to the RTY, the small cap futures. Same idea. On the one hand, it's rallying, 1.78% gain, bulls are happy, etc. But on the other, this wedge is broken. I think that matters, and I think it needs to be respected. If it gets above Monday's high, maybe this was just a quick shake-off. But as it is now, undoing what happened yesterday, I don't think this is an all-clear signal at all. So anyway, hope you're doing all right. And I think I'm going to stick around here and say hi to the show that follows, and then I will truly disappear until tomorrow. So see you soon. Bye-bye.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
It's the day that when you write dates in the American system of month, day, year, which is a little bit funny, looks like 3.14, which is one of our better approximations. And actually, this year is even better because it's 3.1415. I've never before, but this year, there's a couple other math people who just got a pizza oven, and so they're bringing everyone over. We're gonna make a bunch of pizzas. It's one of the few very important transcendental numbers, right? I mean, 0, 1. There's a lot of good contenders for most important number. Anytime you have anything that's circular, you're going to wind up with pies. Anytime you have a pie, you should sort of expect there to be something circular. I can do one more than the date on Saturday. I can do 3.14159. Irrational numbers are fractions, and pi just is not a fraction. 22/7 is pretty close, but that's not what it is. It's the ratio of a circle to its area, right? And so that's not an integer ratio. It just isn't. Oh. Pumpkin. No, just circles are great.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Hello, everybody, and welcome to Last Call. We are so excited. It's Wednesday, and we have Tim Knight joining us. Tim, thank you for coming on.
We've got Tim and Duke joining us. How is Duke doing? Crowd favorite. Everybody wants to know.
If he comes back, Dookie, come here, good baby. Duke, touch. Thousands of dollars of training, it still doesn't work. Come here. If he wanders over, I'll give him a lift up. Perfect. Hello. We got to see
him before. Otherwise, you're going to not be able to lift him up soon.
Yeah, I know.
I have a question though. Since you talked about training, thousands of dollars of training, Liz and I have used dog trainers. We have dogs, and we've had our share of good dogs and bad dogs, or I shouldn't say bad dogs, just dogs that needed extra training. What type of training do you do over there? Is it like clicker training? Is it?
Yeah. Well, I mean, I'm probably exaggerating with the amount spent, but it's. So Dookie is different because we've had a lot of dogs. I mean, I've lost count. He's probably our 6th or 7th dog over the course of life. But we got him as a true pup instead of like a rescue.
Yeah.
I mean, he's still a rescue, but he was a baby. And the other rescues, you kind of don't know what their history was. And so some of their odd habits, we couldn't really account for. But in terms of training, there's a small chain called Zoom Room that we go to. And it's just kind of the basics, but he's by far the best dog we've ever had, and we get a lot of compliments. He eats out with us every possible opportunity, and a lot of people have come over to say nice things about him, which is for us is a weird experience because our dogs usually are completely unacceptable in public. So.
Well, and it's funny you say the rescues because you do never know what you're going to get. Like Will Ferrell is the devil. I mean, I love him, but he's my devil, but he's a jerk.
Mm-hmm.
Well, and he was living on the street, right? He was on the street.
All my dogs have been living on the street. Sully lived on the street for longer than Will Ferrell, but yes, we're rescues. But
yeah. Well, listen, I want to. I noticed. I'm looking at your screen here. I must say that last week when we spoke, I think you put me on the spot and asked me for my highest conviction trade, and I actually said Axon. And I immediately regretted it because
it was you.
I was thinking
we sold the share.
Well, go ahead.
Yeah, we sold a share. It was just one share, but it was down huge today.
Yeah, but the thing is, after I said that, it's like, it's not the cleanest chart. It's really thinly traded. It goes spike higher. So I was immediately, I was thinking that could have been a better answer. But this morning, I'm like, hey, that was a good answer. So it fell hard.
Oh, yeah. This morning, I rubbed my eyes and I said, that's our number one winner today.
But Tim, you've been on fire. You were bearish on Intel. It went down. I can't remember. There was whatever you said so far on the show. You've been right. So let's see what this streak.
No, once again, we understand this is nothing to do with earnings. But where are you long term on Hood?
On Robinhood?
Yeah, Robinhood. HOOD.
Well,
and you don't even have to. I just didn't know if it was something that you look at or not.
It isn't, but let me just take a look here since I think my screen. I don't think I'll mess up your screen at all. No. Well, that's awfully impressive. Yeah, I don't. I don't really have much of an opinion on this because when you're looking at something that's gone up that much, it's kind of hard to say, get in there.
Yeah.
It looks very richly valued. I will say the only thing I can say in my defense on Hood is that I did talk about this a lot back in like 2022, 2023. And it sort of like Rivian now, it based and then didn't go anywhere. Then it based and it didn't go anywhere. Then it based and finally it went somewhere because it had these 3 almost identical rounded bottoms, which just flamed out every single time. And finally, in February 2024, that was it. And it was like, wow, off to the races. So it went from 13 to it's like 10 times more now. And yeah, if you want my sob story, we were talking about Rivian last week, and I'd said of the EV companies we talked about, Rivian would be the one. And so let's see.
And this is another one that you were right on.
Well, yeah, but here's my sob story. So 2 days ago, I finally pulled the trigger and I bought some. And then yesterday, and they had earnings yesterday afternoon, yesterday during the trading day, from a charting perspective, it was not doing well. I was just like, took a small loss on it. And then today, it gapped higher and went shooting higher. I don't blame myself for getting out. What I do blame myself for was not getting in immediately this morning because that gap up kind of negated the nastiness of what the chart had been doing. And because even at today's open, it still just kept flying. I mean, it only opened like a little above 13 and it's up like 24% today.
Yeah, 20,
so,
yeah.
Anyway, Rivian's working out. I'm not in it. And I'll just torture myself every time I look at the price. But yeah, that's that. And again, as with Robinhood, maybe this is just the 9th time that Rivian looks like it's breaking out and it just like flops again, but Hood didn't do that. It finally took fire.
Now, when you look at something and you think, okay, this chart looks bearish to me, do you set a profit target in your head of I'm going to get out when it's down this percent?
No, I don't. I just kind of like update the stop along the way. If it does something crazy, like Axon did this morning, then I will usually just say thank you and just get out of there. But normally, if it's just kind of plodding along, I'll just sort of like keep inching that stop down to try to track it down. So when I go into it, it's not like, okay, I think it's going to go to X and I'm going to hang on till then.
So we don't need to pigeonhole you, but any more locks of the week, like Axon last week?
Oh, goodness. I mean, I should quit while I'm ahead or ask for very selective memories. Well, the only thing I would say is, I mean, just getting back to my thing with Palladium, I think Palladium is a great buy. What I don't know is if it'll get one more smackdown in some precious metals route. And as I've said before, it kind of doesn't matter because as well as I think it's going to do, whether you get it now or like, or you save 5 or 7% by waiting, it probably shouldn't matter. But if it's like, tell me something to buy now and you got to hold on to it for a year, I would say PALL, Palladium.
I like it. You're pretty stuck on your convictions on that, and I like it. I just put a little bit more extra in my account.
Okay.
Palladium, I'll have to add some because they don't have options, right? I think all we could do is buy it. Oh,
They do have options and they stink.
No, they're closing only, Jenny.
Yes.
It's like, I took a look at them and it's like volume and open interest are pretty much zero across the board. So
Yeah, and here it says set to closing only. So I think that's why we looked at this before and we thought our only option is buy it. And Liz bought some, I'll buy some, but just to have it in our show account here, I'll buy, this is small, this is our show account, but maybe I'll just buy 2 shares of Palladium. That way we'll keep an eye on it in the show as well.
We'll think of you every time we see it, Tim.
Okay.
Yeah. So also, Tim, I wanted to know, what do you think of crypto? Like, what are your personal thoughts on crypto?
Well, here's what I think. As an instrument or as like a trade?
As an for people who are investing in crypto, what are your thoughts?
It's very odd to me because I don't. I've been persistently negative about it as a concept, and of course, it's hard to be negative on something that's gone from 1 penny to $126,000. But if there comes a day when people sort of blink their eyes a couple of times, be like, this is useless, and it starts to like fundamentally fall, it could be a very meaningful event in the global economy because there's so much, there's trillions of dollars of writing on that. And I've struggled with this for a long time because I'm here in the Silicon Valley. I've tried to be on top of technology my whole life. I'm usually an early adopter of everything. Never did that with crypto. So it's sort of like, well, am I old and I just don't get it anymore or what? But I finally found a happy conclusion, which is I've accepted it as a gambling token. That is to say, it's a great way to speculate. As a chartist, I love crypto because it's a very organic market. And so charts work better with crypto than equities. So on that, I give it a big thumbs up. But in terms of like, is this going to change how we live and how we operate as an economy? And I don't think so.
Well,
that's a long answer.
No, it's good.
yeah, I like it. I just was curious what your thoughts are because I do think there are a lot of people who I think like the down move, gets them nervous and they're thinking, oh, should I be in this? Should I have this much money in this? Should I stay in this or put my money in something else?
Well, it's a great psychological barometer because when I saw last night Bitcoin slip briefly under 6 figures.
Oh, yeah.
That was important. But if you look at the chart, it's kind of oversold because it's lost like 1/5 of its value in just a few weeks' time. And so that's one of the reasons it's not a surprise to me that we're rallying today for assets in general, because Bitcoin tends to ape sort of like the animal spirits out there. So it's also helpful in that respect.
I like it. All right, well, Tim, thank you so much for joining us today. We really appreciate you giving us some of your time because we know we're quadrupling. Well, actually, we're doubling your show because you're on for 15 and we keep you for 15.
It's
you're
okay.
working 100% more than you were.
I've done my show by myself for like 11 or 12 years now, so actually having somebody to talk to is not a bad thing. And if Duke gets near me next week, I'll lift him up and say hello.
Yeah, we got to see him. We got to see him. All right, well, Tim, thank you very, very much. And we will see you same bat time next week.
Okie doke.
We'll send symbols too.
Bye, Tim. Bye, Tim. Thank you.
Bye.
Oh, it's always so nice to have him on.
Oh my gosh, he's the best. Yeah, and he was the Axon last week, and we made what? Well, I think it was down a little bit more when we took it off. We only made $80 on it, but I saw us up as much as like 140 this morning. Can we
You can see it went down to 560. It's almost 630 now. So it's down quite a bit on the opened near the low. It's 563. Crazy.
Yeah, absolutely.
Crazy. And this is the old taser. Remember that?
Oh, it is?
Mm-hmm.
I guess I didn't realize that.
I didn't realize it either, but I was listening to Tim before we came on and he was showing this chart and he said it was he said this is the old taser.
And you know what? I'm going to ask the chat and send us emails because we're trying to lock Tim in. My favorite is Tim is great. Pay that man more money and get him on more. That was my favorite quote of the day. He's wonderful. And we were trying to learn about technicals as well. So if you guys have any questions, we're trying to be respectful of his time. So if you have any questions for Tim, we'd love to have you email us or tweet us and we'll ask him live on air.
And Liz, I know you have Palantir. He said, Palantir, this is a cup with handle. Again,
what does that mean?
What does that mean? I don't know.
What does it mean?
I know. So anywho, we like having him on, even if it's only once a week for 10 minutes.
I'd like to lure him on for the whole show, but then we'd be making him work 200% more because his show is only 15 minutes and we've got a 30-minute show. So we're trying to be respectful. We're trying to be respectful.
I know. Okay, so there are a lot of earnings today. As far as things that have happened, in between our show and right now, Ethereum is up 8%, almost 8%, which is a really big move, almost double Bitcoin because IBIT is only up 3%. So yeah, more than double.
But it's a tale of two cities because yesterday Ether was down double what Bitcoin was.
If you take a look at the charts and look at it's basically rallied back to yesterday's high. That's how IBIT is. And again, IBIT and Ether start when the market opens at 8:30 and close when the market closes at 3:00. So there's you're going to see maybe a different day than like BTC and ETH because those are going, all hours.
Yeah.
So IBIT is back to yesterday's high and Ether probably the same. Not even back to yesterday's high.
Yeah, because Ether was down when I was doing the last call with Tony. Ether was down like double what Bitcoin was.
Yeah, because we've got Ethereum trading.
But so take a look at this.
Almost 3,500.
But the market seems to be pulling back. You've got SPOO's only up 38. The Nasdaq's up 222. You know what I mean? The Dow's only up 3. What is the VIX doing? Because that's what my cursor is. Is the VIX?
If it's below 1759. I was down $1.40. I mean, but I feel like a lot of the big earnings are over. So I know we were seeing VIX like 18, which seemed high for me. 1750. We do have a handful of earnings, but I feel like a lot of the big dogs are over.
There's quite a bit today. Do you want me to tell you what's on deck for today, and we can kind of take a look at it?
Sure.
So in earnings for today, Jenny Andrews, where is my?
If you say one that I think we'd look at, I'll open it up. Like I'll just ramble through the symbols and I'll.
Okay, Hood. I'm just gonna be. I know we kind of avoided this, and that's kind of I did ask Tim about it, but I wound up doing the diagonal in my account. But what Hood, IONQ, app lovin', which could be a big mover.
Yeah, but that's expensive.
It's very expensive, but I'm just saying it could move the market. Qualcomm is one that Vanetta has been talking about all the time because it's kind of back. It's like a retro one.
Yeah.
So we can take a look at Qualcomm too. ARM, FIG, ELF, QBTS, COP, Datadog, and Moderna.
Okay, so Qualcomm, and this was, there was some news and Oh, finally out of that spy calendar that we tried to close this morning.
That's what that was? I was like, what did this get filled on? I was like, what are you secretly trading in our account? Hold on, I'll push that through.
So that's crazy. Okay, so you saw like the day that this news came out in Qualcomm, it went from, the day before closed at 168 and rallied all the way up to 185.
Yeah.
Which is a crazy move for Qualcomm. Let's price out a diagonal. I didn't think it'd be that too expensive in Qualcomm, and especially if
And it's only got an $11.5 expected move.
If I go up a strike to the 182, it'll be cheaper. Let me see. If I can I make this $10 wide? 182, 192. $10 wide for 393.
That's a number I can live with.
That's not bad.
Yeah, that's a number I can live with.
Yeah, that's not bad. Now I'm gonna double this and make it a crab and see how cheap it can get. $1.90. So we're gonna look at
technically, can you take it to? Oh, never mind.
What was it? $3 here, or what was it? $3.90 something.
Yeah.
Not much difference. To your point, if it's not much difference, just do the diagonal.
388. Because you've got a lot of profit potential with that. That's 192.
That's $10 wide, or you could do 750 wide for 350.
That's not bad.
I'd rather do $10 wide for 380.
I would too, just in case.
Now, this is a bullish trade. If it doesn't go up, we could lose 380.
Because we have 8 days for it to come back, but
yeah.
Oh
yeah, 8 days, and I keep thinking, who knows? But if the shutdown ends, maybe the market will have a big rally. And
I'm just parroting this. I don't know if there's any accuracy behind this, but the prediction markets are saying like after November 16th. I don't know.
So then after November 16th, I wonder, would you put your diagonals further out, like 16-day, 2-day? Maybe.
You could. You're going to pay more for them.
Right. I got filled on that Qualcomm diagonal. It was cheap enough. I figured worth the risk.
I mean, we're not in much, so that's okay. Like we did quite a bit today, but we're not in the earnings. I mean, they're kind of fringe players. I'm in them, and I am in. So I have Snap. I sold additional puts. We're in Snap. I think we just have puts in it, don't we?
What? Snap. We sold puts in there today, but I think can they already come off? Like I sold some puts today that could already come off, and I don't remember what it was in.
It wasn't in Snap.
Oh, okay. So yeah, we have the 7 puts in Snap. Just the 16-day. I think it's CMG puts. I think those. I don't know what. I don't know. Can't remember what it was that there was something puts came off in a day, because we've had some decent moves today.
We have, but I mean, we're not closing on the highs. I mean, I think the SPOs were up 50 something today is the highest I saw, and now we're only 37. So we're kind of limping into the close a little bit.
It was, it's Rivian I'm thinking of, because Rivian was up $1, then up $2, now up $3, because we took off our 12.5 puts. And then today we sold the 14 puts in December for $1, and those are already up 35% today. So I think
take it off.
Take those off.
Take that off. And then Jenny, I know we're trying to close on time, so we've got a couple minutes left. Okay, I'm trying to keep everything pushed out too. Nothing else. Is there anything else you manage in there?
So all we did was a Qualcomm earnings trade. Anything else on earnings that you want to do?
No, I mean, like I said, you don't want to do hood, and I get it. Like, I'm not saying that in a bad way. Like, you don't want to do hood. IONQ, it's not there. App Lovin is a very, very big mover and shaker. Bros Coffee, ARM, Fig, Elf, QBTS. Those are the ones that I was thinking.
Oh, wait, is that, what's the coffee? BROS?
BROS, yes, it's the coffee.
That's Dutch Brothers. Is that the Seven Brothers, or is that different?
No. 7 Brew is what you're talking about. 7 Brew is not a public company. I Googled that today.
Okay. So,
I Googled that with our train conductor.
What's App Lovin's symbol?
APP. Yeah, you know me.
You down with APP?
Yeah, you know me. App
Lovin is expensive. $6.19. It's expensive.
That's what I'm saying. Look at that. That went from 200 to 600, and on this chart from April April Fool's Day all the way up to 600 and almost 700.
I know. This is my friend. My Finnish friend. Her husband, like he works for an investment company, and this was his big claim to fame this year. He got put all of his people into App Lovin, and he's the hero in the office.
Hey, it's better to be lucky than smart, right? Better to be lucky than good.
Okay. And so we've got Qualcomm and Hood. You did the diagonal.
I did the diagonal, but we don't have to put that into our account.
No, and the thing is, Hood is only $1.43, but I see we are running out of time. As far as when you mentioned things to take off, we've only been in this 6 days. We put on this Starbucks Jade Lizard. I know we had some questions or emails on it because Starbucks dropped through the put. Starbucks is having a rally today up 340. So I don't know if people were nervous about this. Our trades are not trade recommendations, but if I was nervous about this and thought, oh, this is a big loser, and now it's not, I could take it off. And now it's a very small.
You got it back. You got back today what you lost yesterday. How about that? You know what I mean? So it's pretty interesting, and that's not a bad close because there's 16 days left. It didn't do what we thought it was going to do.
Yeah,
and then that two-way action.
And maybe I just close it, and if we want to have something on in Starbucks, we would go to December.
Yeah, do it. It's so funny though because Starbucks has. Oh, I was just listening to this. They're doing. I forget what day it is, but all their employees are boycotting.
Well, I honestly, after our discussion on the train about this, what is it called? Seven Brothers?
No, Seven Brew. Seven Brew.
After our discussion on the train with our conductor about Seven Brew, I think I might take off my Starbucks positions.
I mean, I do think things have their time and their place, and I think Starbucks Day in the Sun might be setting.
Yeah. I don't know. Maybe the line at Seven Brew is crazy all hours of every day.
Like I said, my brother's got the plumbing contracting for it around here, and he can't believe the amount of money that they're making.
Okay. I'm not getting filled on this.
It might be wide markets. That might not actually be a real profit.
I know. I'm just, you know what? I'm not, let's just.
The mid market was 94 and you're trying to pay $1. That's weird.
I know.
Yeah. 19 cents at 39 cents. That's too wide of a market.
I'm not getting filled. I'm not going to.
You're not going to jam that in.
All
right. So the other thing that I want to take a look at, just because it's a good market recap, gold is up today. What did oil do? I think oil is down, isn't it? So bonds are down, oil's down, ZB, ZN, and CL is all down.
I think we're out of time. I know we have to go so they can get the next show starting on time. But bonds, I think, are really taking a hit. Look at this move.
That's a big move for bonds.
It's a big move for the day, for sure.
That is a big move for ZB. Check CL before we and our parting words, and then we're getting on jet plane, Jenny, and I will see you at the airport
if I make it. I gotta hop in the shower. I don't.
All right, we are out of time because we want to make sure that the others are starting on time. So, Jenny, I will see you at the airport, and I'll see everybody in Austin, Texas. I cannot wait to see who shows up. Remember to trade small, trade often.
Laugh with us, learn with us, and watch. I always want to say watch the Liz and Jenny show, but thanks for watching. Let's call everyone. Stay tuned for the boys.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
I had to rewatched that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Grax, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots.
Okay, thanks for the heads up.
Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Got the need for speed? No problem! At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move. Got the need for speed?
shaky, shaky, shaky. Come on, let's play. I got a good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad, mad hatter. Call me one of a kind. I'm a true believer. I got a good feeling.
And we are back. This is Overtime. I'm Milius Pivac in San Francisco. That's Dylan Radigan in Milan. Our returning champion, Mr. Mike Butler in Chicago. Gentlemen, the stock market has found its legs today. So is it over? Are we good? Can we get back to not thinking and buying dips here?
One might assume.
Get back? What's with the get back to? I mean, when did we stop?
I mean, it's been since last Wednesday that the market has had a meaningful rally.
Listen. You can't make it through a few. I mean, if there weren't dips, when would you buy? I mean,
fair enough.
You're going to need some down days to get in here. I mean, the thing that I think, like, if we want to sort of take the more sort of agitated, concerning, aggravated point of view, I mean, and this is maybe not any grand revelation. It's just been brought to my attention a bunch of times in the past, 30 hours, is the incredible concentration of proportionate representation in the S&P 500 of NVIDIA, Apple, Microsoft. What I'm saying is the S&P 500 is presented as a measure of the aggregate enterprise value of the 500 biggest or most important or most substantial or most relevant companies in the world. And it's not. It's like something like 20% of the value of the S&P or more is in 3 or 4 companies. And so I guess it's a way of my saying, if you're looking for a point of concern here, I would point to incredible concentration of wealth and incredible concentration of performance in just these few names. But even that hyper concentration honestly does not give me reason to abandon my basic principles, which is because again, when you start going on and analyzing concentration of performance, concentration of wealth, concentration of index weighting, all of that just stinks of thinking.
Yeah, it most certainly does.
It smells like all sorts of thought, maybe even a touch of analysis, which
God forbid.
None of which results in larger trading accounts. And so I just think that you're much better off really sticking to our basic principles here, which is buy the dip and don't think.
I would say I am not looking at concentration as a reason to worry, or any one thing or another as a reason to worry. For me, what's happening is more of a sentiment kind of a situation, and doesn't necessarily lend itself to this or that kind of reason as such. There will be no shortage of reasons for whatever occurs once it occurs, but I do think that since Wednesday last week, we had a kind of pricing for perfection that met reality. where we started last week, clearly big gap higher on the big indexes. Everything was fine. The Trump-Xi meeting was going to be cool. It was essentially pre-announced by Bessent ahead of time. The earnings were going to be fine. We're through them now, and they were, for the most part, fine. Meta was a little bit of a letdown, but for the most part, fine. And certainly tech is growing leaps and bounds faster in terms of earnings than is the average market, the average sort of name in the S&P. And that growth isn't bad. I mean, the Q3 average for the S&P so far is 10.7%. And for tech, it's 26.5%. So it's not like earnings are an issue. And then there was the Fed and the 2 autopilot cuts that everybody was geared up for. And Powell threw a grenade out there. So the pricing for perfection that the markets were holding ended up with a reality that wasn't as perfect as they wanted. And since the Fed meeting, you've had a sentiment washout. Now I think we find if the sentiment washout is done or not. My suspicion is the answer is probably no.
Yeah, I mean, you had a big move in the bonds today.
Yeah.
The dollar has had its like 5th or 6th green day in a row. And to your interest rate point, we were looking at a like a 98% chance that we would get another 25 basis point cut in December. And now it's a 60-40 split. 60 leaning towards a cut, 40 leaning towards staying where we're at. So,
and this is the lowest in a few days. It was 70-30 yesterday.
Yep. So yeah, definitely some interesting movers in the market. And to Dylan's point in concentration, like you've had, and by the dips, I mean, AMD basically opened at 240, we'll call it. It was at 240 in after hours yesterday after earnings, and just immediately skyrocketed back to 255. Same with Micron. Like Micron gapped lower to sub 220 yesterday, and now we're at 240. So, and then you have Microsoft who can't buy a bid. So it's just very odd market we've got here.
Mm-hmm.
But I mean, because I guess I wasn't here yesterday, but we talked about this, Mike, on Monday, and with Microsoft being one of the more appealing. You know, I have my Mag 7 trading theory is look for the weak hand in the bunch and buy them, which is why I was Amazon for a while. It took its gap. That one worked well. And that Microsoft is the weak hand right now, and that's where marginal risk should be accumulated. That we had a long discussion about both Microsoft in that context as well as Meta.
Yeah. And I mean, obviously Microsoft isn't going anywhere. And if you're looking for a bullish case in a Mag 7 product, like Microsoft is certainly screaming at you at these price points. We do have NVIDIA in 2 weeks, which will be interesting.
Yes.
Another one that's having a hard time staying bid. But, I mean, you got to imagine that the numbers they're going to report are going to be astronomical. And it's just whether or not the market wants more astronomy or if it's on par.
Mm-hmm. Yeah, I mean, the kind of interesting thing here is really how the Mag 7 and the overall market did out of an earnings season that gave us pretty good numbers for those concentration leaders. I mean, again, Meta, strange. Big miss, okay. But that's 1 out of 7.
Yeah.
The numbers for Google were good, Alphabet. The numbers for pretty much everybody, I mean, even the Microsoft numbers were not bad. Amazon, great. All the sort of usual suspects did reasonably well, barring Meta and barring whatever weird thing Microsoft is doing despite solid results, which frankly, I mean, it's not down all that much. But Tesla did fine. I mean, just down the list. Palantir this week did fine. AMD did fine. No real kind of big glaring things. And yet, looking at the Mag 7 ETF, the Mags that I look at just as a kind of barometer. It's too thin to really participate in, but it's a nice kind of overall measure. Not great. So for now, at least, it seems like the earnings story is not the front burner.
For sure not. I mean, the only story is either momentum in the Mag 7, one way or the other. But the Mag 7 stocks all trade effectively as a sentiment indicator, with financial performance being secondary. I mean, look no further than all the carrying on around ChatGPT, where they're talking about $1 trillion here and $1 trillion there, and their revenue numbers are pennies on the dollar relative to their valuation, talking all this jazz. And so I do think that the only thing that exists that is of consequence is I do think that the adjustment of rate cut, the cost of money, and fewer rate cuts sooner, I think is relevant. And then other than that, I think it comes down to basic momentum as it relates to the big tech names. I mean, not to sort of jump to a totally different topic, but I just feel like there's been a sort of smattering of headlines around residential real estate in the United States in terms of transaction volume and pricing that all look pretty discouraging, in the sense of being still a pretty frozen up place, and sort of validating the hypothesis that people don't really own houses, that they own low rate mortgages, that the assets, and that because you can't get back into the financing terms, obviously, that a lot of these houses were entered into, that the market continues to be pretty lousy and slow and all that stuff. And I just wonder if there's a point where the U.S. residential real estate market is an indication of anything beyond itself, particularly insofar as that market drives a lot of consumption, new household formation, all the consumption that goes with new household formation, all the renovation, blah, 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 blah. Again, much more boring conversation than the momentum in the Mag 7, but it is something that I've sort of been... If I was to make a bear case, I would say, well, you've got incredible concentration of wealth, hyperbolic expectations for technology. At the same time, you have, little to no jobs growth, a technology that is very anti-job and AI, a housing market that's sort of sluggish or even worse, and rates that are not going as low as they might have gone, as soon as they might have gone there. And so, again, were I to get lost in thought, I could make a whole story, which is why I try to stay away from thinking, because it's a much easier way to make it.
Well, before we jump into these snap earnings that Mike was just looking at on the screen, one thing I'll say there is we have U.S. consumer confidence data coming up on Friday. And while we have this government shutdown, we have few and far between releases as far as third-party economic data. By the way, today was one day, and part of the move in the bonds, if not most of the move in the bonds and in stocks today, was a very chipper service sector ISM number. But on Friday, we get consumer confidence. And one of the interesting things there is it's been deteriorating for 3 consecutive months now, despite easing inflation expectations in that survey, which has not been the way that thing has worked since 2021. Back to 2021, it's been inflation expectations up, consumer confidence down, consumer confidence up, comes with inflation expectations falling. Consumer confidence started to deteriorate again at the start of this year because, of course, the tariffs gave us a big scare on inflation expectations. But since that has eased, consumer confidence still deteriorates. And Friday, it continues to, according to expectations. So if ever there was a reason to be concerned because consumption, the biggest component of GDP, is weak, here we are. And of course, housing is a direct extension of that.
That is a good point, though. I have some friends that were fortunate enough to get that shiny 3% rate, and I'm just like, you can't ever move. Like, there's just there's no replicating that borrowing at such a low rate.
Yeah.
So, yeah. The 3 big earnings that we looked at today. Robinhood down a little bit, 4 points after the close. That's well within the expected move. Qualcomm, similar story here, down 3-4 points. That's also within the expected move. Snapchat, though, up to 9. That is
big move.
Well outside of the expected move to the upside. I wonder what, I mean, it's just a big, massive data source, but I wonder what is driving this move here. Somehow I have 100 shares at 969, so that's fun. Probably from a short put that I sold and then forgot about.
So looking at the results here, I mean, they beat EPS by 50%, but that's because they lost 6 cents a share, whereas they were expected to lose 12 cents a share. Revenue, 151 billion versus 149 expected.
Yeah, it's always funny when they still lose, but they lose less than the market expects, and therefore stonk must go higher.
Yes.
Yeah, this one's
big beat on a small number.
Yeah, I mean, this one's been in the dumps. So this move is pretty substantial, though. If we open at 9 tomorrow, that's a huge move for sure.
Yeah.
Bitcoin bouncing off that 100K mark. Not too surprising. I think that's kind of a subconscious narrative for people. If it drops below 100K, smash the buy button. We'll see if it holds, but yeah, I mean, big sell-off into the close today in the NASDAQ specifically. If we look at the 1 minute, we were up 100 points higher and then sold off in the last 30 minutes of the trading session. So I think there is a little bit of a reluctance to buy in a big way here. But one thing that it was interesting to me yesterday was the lack of volatility pop into the sell-off. We had like a 60, 70, 80 point move in the E-minis and a 400 or 500 point move in the NASDAQ. Didn't really move the needle from a vol perspective. Got a little bit of a reversal today, but I've just been looking at volatility as kind of the driver of my decision making. And until I see a big vol pop on a sell-off with a flattening forward curve in the VIX futures, it's kind of just, continue to buy the dip where I see fit and do it in a small way. But Microsoft,
what do you consider to be a meaningful red flag again in terms of volatility, Mike? Say that again.
So like looking at the vol futures here, I just have these laid out in chronological order for the expirations. So right now you can see we're in a pretty steep contango with 1895 being a point under 1975. And that's a point under 2095. So this is like your normal point between each contract contango curve. But when we get into true turbulence, you'll see all of these numbers flatten out to a similar number. So kind of what you're seeing here in the G and H contract further out in time. If we see these spike to 20, 21, 22, and they're all the same number, or if we see backwardation where the near term is more expensive than the next, that's a red flag for buying the dip, at least at that point in time for me, because when the markets do correct 10, 15, 20%, we will more than likely be in a backwardated vol future state. You're just not going to see that move in a contango state. You'll see the reversal, but for me, like I look for backwardation to play for continued downside moves or to just take my hands off and see where things go.
So amazingly enough, right, the last time that we were in backwardation for just front month and then 1 month out, just very near term VIX futures was October 15th. Shock of shocks, obviously. That was the big holy moly last month. What's interesting is that the contango in front month and then 1 month out, just continuous contract, first and second, that's been easing. Probably the steepest contango we had, maybe going back, let's see here, going back like a year was in August. And since then, it's been kind of slowly easing. So closer and closer toward backwardation. If you look at the way it's kind of inched, and last month it actually spiked there. Obviously, it's come off. We're back to contango now, but the trend, such as it is, has been toward contango unraveling for a couple months now. So a few months. So one wonders if you're sort of gathering into a sentiment extreme of some kind, and this is just another indication of, okay, maybe we're not at the top, but we're gathering for something.
Implying what? That there's evident that there's cracks in the armor of the buoyancy of the year. Is that where you're going?
That you're just getting exhausted from a very intense speculative run-up, that the essence of that run-up, in my opinion, has been baked into the market. Not that it's wrong, not that the essence of the run-up is wrong, and not that you can't at all times find 90,000 things to hate about everything. You can, and it's not wrong. But the degree to which the markets care about these things is largely a function of sentiment. And sentiment feels like it's reached some level of exhaustion. And we are now
as expressed by what? The intraday behavior of index. Where do you see what would you point to as what's your evidence of exhaustion?
Well, let's say, for example, the response to the Fed announcement. The market did not meaningfully adjust policy expectations for next year. The market knew that the Fed was not endorsing this much easing, but not for one dot on the dot plot from the president's favored new governor, Stephen Miran. The Fed's been saying 2 cuts all year long, but for Miran's dot. So, which has happened once in September. So, that the Fed is not sure whether it's going to go in December ought to have been such pedestrian news that nobody ought to have responded with that level of violence. I mean, this was the first uptick since a week ago of any sort of consequence. So it seems the market has discounted all the goodness and is now hypersensitive to anything that isn't its Panglossian dream.
Yeah, I think with the way things are moving now, today specifically, just looking at the NASDAQ's range today, we are higher, but we were significantly lower earlier today, which is interesting. But you had a bunch of tech stocks kind of reverse their course on the day, but still, we're still not seeing the vol pop that I would expect to see into a chart like this, especially yesterday and the wide range today, like a 500-point range in the NASDAQ futures, 600-point range. So, yeah, I don't know. It's an ominous time where we're seeing the moves, but we're not getting the vol response. Maybe it's because we're chopping near highs, but
I mean, I think that's the thing. It's sort of like I feel like the market was at this level within a week or two, and everybody was, popping champagne corks, and now we're basically at the same level, and everybody's wringing their hands. And it's sort of, it's like, what's the S&P right now? 6,700 or something like this.
6,800 in the futures.
800. And where was it 2 weeks ago? Same number, probably.
Yeah.
Yeah, I mean, this is
the psychology 2 weeks ago, and the psychology now. It's now everybody's like, I don't know. This thing.
We're basically back to where we fell from that October perch.
Yeah.
Then we recovered it, broke higher, and now we've basically come back to retest. I mean, thinking aside, if you wanted to be totally ticker agnostic and looked at this as purely a price action thing and just looked at the chart, this would be very bullish.
Mm-hmm.
Because what you've had is a pullback to former resistance becomes support. October 9th, or October 14th, rather, would be the former resistance turned support. You've come back to retest it. This would be the place you'd be a buyer. Under normal circumstances, you would go, okay, we've pulled back, we've retested, here we go. Next leg higher. I think if you zoom in on, let's say, a 4-hour chart on, and ES will probably give you a cleaner view, but if you zoom in on, let's say, a 4-hour chart, I think there's an interesting thing, sort of intra-day that pops up where you see where the bounds of the range you broke yesterday are, and you got rejected there today on the rebound. So what today's move looks more like is a retracement in a down move, not unlike what we saw last week, rather than the beginning of an up move. And again, if you look on the daily chart, you can completely slice it a different way. So for me, I'm not taking my shorts off, the ones that I put on in the wake of the Fed last week. I'm also not putting anything new on because I might be pulling the plug on them tomorrow if this thing gets through this immediate barrier and starts to push up toward kind of the Fed area highs. Goodbye. I'm out.
Yeah, I see what you're saying here on this 4-hour chart. Drawing the line in the sand right here.
Yeah.
Some people in the YouTube chat saying Snapchat had a Perplexity AI deal announced.
Ooh.
I don't know if that's
Perplexity AI, Stan Druckenmiller's favorite AI thing of all the things.
Indeed. Some people also saying we're seeing some big probability moves in the Supreme Court arguments.
Yes. There were some headlines out there saying the tariffs look likely to get overruled. That the Supreme Court does not want to perhaps give the president what he wants here.
Yeah, in the last
Tariffs, you mean? You're talking about the Supreme Court tariff discussion?
Yes. So the question here is, will the Supreme Court rule in favor of the president in terms of his ability to use IEPA and say that what we've got here is a national emergency, and whether the court lets him say that. Because most of the tariffs that the president has done unilaterally without Congress have invoked that power. They're mostly on national security grounds. Not all of them. Some of them are kind of market specific, like the aluminum and steel tariffs don't have to do with a particular counterparty. They have to do with aluminum and steel. And that's a different sort of justification. But the sort of blanket foam board liberation day, I can do what I want, and this is my negotiating chip now with everybody, that is contingent on IEPA and contingent on the president being able to define a national emergency basically as he wants. And the Supreme, and he's been sued, and it's gone to the Supreme Court, and from the looks of what the betting markets think, it doesn't look like he's going to get his way, or at least the likelihood that he'll get his way is dramatically diminished just in the past 24 to 48 hours.
And what is the market concept? Let's assume that the Supreme Court goes the way you're talking. In meaning against the president, basically.
Yeah.
Right? Where does that leave the market? I guess a couple of things. Does that actually mean that these tariffs will actually get withdrawn, considering Trump's general history of not caring about law or rules or anything?
I don't think so. I think they're going to have to find a new justification. And because the president is not in the habit of not getting what he wants, and this is obviously a big pillar of what he wants. I think they're going to try to go and try to justify it on other grounds. But what that means is a period of relative chaos about the tariff regime, which we've just spent the better part of 7 months kind of acclimating to. This entire rally since early April was all about, okay, he doesn't really mean it. Okay, they're amenable to market discipline. If the bond market freaks out, they'll stop. They'll give us a 90-day pause. They won't implement everything, et cetera, et cetera. And that's what we've seen. We've seen that the White House is amenable to market discipline, won't do things that upset the bond market ultimately, et cetera, et cetera. So we've just spent 7 months basically acclimating to the tariffs are not that big of a deal. But if you throw the entire system back into chaos and go, well, we don't even know what the new system is now because they're going to probably pursue tariffs by another means. What are those means? What's going on? Do we even know what the commercial order is? That's an issue, I think. I don't think the markets love that. Not because they like the tariffs, which, by the way, be ready. If the market doesn't like the outcome on uncertainty grounds, the president's going to come out and go, see, told you the tariffs were good. You canceled the tariffs and the market's freaking out. Well, it won't be because the tariffs were reinstated or taken away or anything like this. It'll be because chaos was created.
Uncertainty, just mega uncertainty is back.
Yeah.
I mean, where is the sell-off if let's say tariff uncertainty becomes the central discussion in a few weeks from now?
Sure.
Is that just is that a NASDAQ? Is that an index sell-off, or can that be more isolated? Is that steel stocks? Is that
my opinion?
Rally and Nike.
In my opinion, this again goes into the kind of pile of priced for perfection, right? Like the market is built on a series.
So it's an index vulnerability at the end.
Yeah, it's an index vulnerability because you go, well, the Fed's going to do XYZ thing, and the trade thing is going to be that, and this is going to be that. Okay, we know what's going on, and then Powell goes and kicks out a pillar. Oh wait, the Fed's not what we thought. Okay, and by the way, Powell said maybe not for good reasons because growth is accelerating. Yeah, they don't care. You kick out a pillar, then you kick out the tariffs kind of détente. I think it's a sort of generalized. Okay, this is not what we thought. Let's sell, wait, see.
Do you think this plays a role in any of the commodity sectors?
Sure.
Gold, silver, platinum, copper.
It's interesting what it might mean for gold. Tough to say, because gold, as I think we've been talking about, is, in my mind, not really behaving as its normal self. Like the dollar is rallying, it should be falling more.
Maybe it has a secret cocaine habit it hasn't been telling us about.
I think likely.
Led to a
likely
personality change.
Maybe even a fentanyl habit, and maybe the precursors are coming from China
that we don't know about.
Yes.
Anyway, sorry.
Yes.
Give me my.
It's huffing multipolarity by the pound. It seems like, because that's the only explanation I've landed on. That essentially the reason gold is able to do what it's doing, even though the debasement trade is obviously nonsense in its current form, because the dollar is rallying and so are bonds. Despite the sell-off today, the trend in bonds for months now has been up, for dollar too. So obviously that's not what's going on. Okay, if it's not that, what is it? Is it that interest rates are or were being revised lower? Well, no, it's the other way around. So it's weird what gold is doing. But the only explanation then that makes sense is gold was a kind of hedge on deglobalization and the siloing of the US and China and just the general unraveling of global, kind of globalized norms into something that demands a neutral go-between from one kind of zone of economic activity to another. And so it's interesting to think about what the tariffs would do for gold. I mean, ostensibly, that kind of use of gold would be diminished were you to cancel the tariffs, because there would be less of a deglobalization thrust. But I'm not sure that that's likely to hold, because the president's not going to take the decision lying down. He's going to go find other things, other justifications, other laws. He's going to try to do what he's doing. So does it rally on uncertainty? Maybe.
I mean, I guess the other thing is like, what does uncertainty really mean, right? If you look at least through the lens of tariff uncertainty as it was laid out this spring, and what it really means is some version of accelerated imports to try to get through some window of pricing that is, whatever it is, or a hiccup in the supply chain or availability of product, particularly going into Christmas, with issues at Long Beach, issues at Newark, issues at Oakland, at the big ports coming out of China. That basically that the flow of goods is in some way altered because of the uncertainty. Boats are hanging out offshore. Nobody knows what the actual price should be. Like, no one knows what to do. I mean, if you're in a situation where we've just gotten to the point where customs with the de minimis stuff, and I just lived through it, owning this little European sneaker company where it's like every time we send a pair of sneakers to America, it's an extra $80 or something, right? I mean, it's even in these nickel and dimey kind of situations. And then up to these gigundous boats full of cars, or full of whatever coming out of China or Asia. Because let's say the Supreme Court says that you can't do this. Then what is that immediately? Do the tariffs get waived at that moment? Probably not.
Probably not.
So then does it mean that the tariffs then get scheduled to be waived to come into compliance with the ruling at some point? Probably. And then is there some sort of madness in between the ruling and that deadline, like there always is with these things? Certainly there will be. Anyway, I'm not even trying to predict the future per se. I'm just trying to game out whether in fact there's anything on the margins from a trading perspective outside of maybe some index pessimism, call spreads on the NASDAQ, whatever, that ties more directly to shipping or the ports or trucking or railroads, anything that all the sort of the skeletal system of trade.
Well, part of the reason is you wouldn't know, because we don't have a government shutdown and no economic data. How would you know?
That goes to the Silicon Valley. It's better to have no revenue.
Yeah.
Better for your valuation to have no revenue. Like, it's better for the market and the economy for there to be no economic data, because then it can be whatever then you can just sort of go with however you feel.
Yeah.
When you have actual data, then you're stuck with like the data.
Yeah, I mean, like at the beginning of the year, all those things you're describing, you could see, right? You could go to the PPI data and go, the wholesalers are passing the costs on, or no, they're not passing the costs on. Okay, if they're not passing them on, it's probably temporary. They're not concerned. Oh, they are passing it on? Okay, this is real. This is going to be an inflation scare, et cetera, et cetera. How would you know?
Do you think the delay in the data that we are not seeing could result in kind of an instant shock to the market if they're like, ooh, we haven't been reporting this number, and boy, has it been bad for the past couple of months?
Yeah, I mean, the thing is that the wider you kind of pull the rubber band here, the more you run the risk of seeing something that all of a sudden turns out to be like, wait, what? Sort of like the Fed and the annual NFP revision where the number was cut in half and the Fed goes, hold on a second. This is not the labor market that we thought we had. We got to get some rate cuts out here, stat. So is it possible? Sure. But unless the market starts to freak out in some sort of meaningful way, we wouldn't know, right? We would need the bond market and the stock market and currencies and commodities to perceive something in the economy that was untoward and to show us that through the price action, because the data isn't going to, because there is no data.
Mm-hmm.
Craziness
So,
indeed.
I mean, at the end of the day, I still like Microsoft. I don't care what any of this, whatever happens. I still like the dollar.
Mm-hmm.
Whatever happens. I still have no idea what to do with gold. Probably never will. But I do like that anytime Bitcoin at 100 grand, just as a speculative act of madness. I do like. I also like this picture we're looking at, sort of peaceful.
Yeah.
Different than I'm used to seeing. Some sort of paraglider situation there. I don't know what's going on. Is that somebody's screensaver?
That's my
Serenity now.
That's my desktop app or my desktop. Pure Serenity.
Are you a paraglider, Mike Butler?
But it's funny you say that because the computer that Nick uses or Jamal uses now on the show, it's just the Three Musketeers. So sometimes if the platform like moves down or moves away, you just see the flash of the Three Musketeers momentarily.
And in your case, sort of paraglider paradise in Norway or something, whatever. Was that a Norwegian situation there? Like a fjord or some such thing?
Yes. It looks like it was. It kind of reminded me of Alyeska in Alaska, but I think it's probably some Norwegian picture.
Some sort of Fjordian situation.
Yes.
Not to be mixed up with Freudian.
Correct.
No. Wholly other thing.
But yeah, I think Microsoft is certainly interesting here. You haven't seen this big of a sell-off since the initial rally to 550. Maybe this is the froth zone in Microsoft where it's like, why is this so elevated and it just sells off immediately? I don't know. But a lot of buying at this 500, 505 price point here. So we'll see.
There does seem to be a very clean range there. So if you were a bottom fisher in one of these names, Microsoft has a really clean spot from which to do that.
Mm-hmm. But yeah, speaking of Microsoft, I did get into a 530 call calendar spread. So I bought the January call at 530 and I sold the December at 530. So just basically playing for a reversion halfway through that price point there. 530 is like right around here. So we'll see if we get there. Small trade if we don't. But yeah, lots of opportunities in a lot of these high-flying tech stocks that are not participating in the broader move. And I mean, I think Meta's really interesting. The continuation is really interesting to me. Because we saw the big fall from earnings, and then you saw it continue to sell until today. You had a tiny bid here, but where do we go from here?
That's actually a very interesting observation because I'm a big watcher of kind of news flow relative to price action, and when those things aren't connected, that's usually a pretty good signal. And obviously you default to what the market's telling you. So if something is happening despite what you would expect the news to do, market's probably right. The dollar has been a great example of this. The dollar has stopped falling and set a low back in July. And everybody's, rate cuts and what has the dollar done? Anchored and started rallying. So the price action here was very telling of what was about to happen after we kind of based at that June low. We tested it again in September, rather. Incredibly, right? That low is September 17th. That's where the Fed starts cutting. As if the market goes, right, we sold the rumor. Now it's time to buy the fact. We spent 6 months waiting for this and bashing the dollar's head in. Now it's go time. It's over. They're actually doing it now. It's priced in. So, similar story, maybe, in a whole kind of range of other places. Meta, I think, is a great example. Here you had a great rebound today. Meta can't be bothered. That looks like a stock that has more room to go. The price action's probably right here. This is probably not the dip to buy. There's probably a deeper pullback here. Just looking, again, ticker agnostic, just looking at the price action. NASDAQ had a good day. Other tech names had a good day. This one can't find the silver lining. Something's wrong.
Yeah, that's kind of why I went with a calendar spread in Microsoft to keep the risk really small, because it's like, if Microsoft can't find a green day when the rest of the market is green, what happens if the market's red?
Right.
You know, it's like, it's hard to imagine Microsoft catching a bid when the NASDAQ is down 200 points. But I did put on some currency positions today.
What do you got going there, pal?
One of my favorite things of all time. I'm long the dollar franc here. So this one is my long dollar position. Interesting one about this is you have a really strong positive swap ask. So you get paid to hold this position. And then I'm long the Aussie dollar. So short the dollar in this pair, but kind of a flat swap ask. So really just I'm trying to capture the swap, but wait for a continuation of a move. So one of these is going to be profitable when the other is not, and I'll just close the profitable one and hold the not profitable one, which will make me naturally more long whatever pair that is. So
right,
I'm assuming it will be this one that comes off first, the long Aussie dollar, and then I'll be just long the dollar franc. But if the opposite is true, then so be it. And then Glenn brought up the euro pound, which is another interesting range. And this one is kind of sitting at the highs that we've seen as far back as March of 2024. So just shorted that as a price extreme play, but all these are really small positions. But the TastyFX platform, you can get exposure to literally whatever you want. That's liquid at least.
Yeah, I mean, one of the really interesting things now is, and I just discovered this the other day. If you go to the regular charting that we always use for the indexes, whatever, you can now type directly into that ticker EUR/USD, USD/JPY, and get spot charts in the same place where you get everything else, which is magnificent. I love it. I think this is a much more convenient way to do it. Everything's kind of together now. Very, very useful. Obviously, I trade spot all the time. That's kind of my first love as far as trading. So this is great. It's very convenient.
I did not know that.
You can even look at spot Bitcoin here, BTC/USD.
Look at that.
Continuous charts, by the way. No gaps, no weirdness.
Love it.
I wonder, actually, let's do a live test here. Can you type in XAU USD and see if we can get spot gold?
Don't think so.
No, not yet.
You can see the FX symbol here if it's there.
They show up now. Yes.
But yeah, that's cool. It's great.
Not full IG CFD pricing, just TastyFX pricing, because of course CFD is unavailable in the United States.
Correct. But yeah, craziness wherever you look, I think is a good way to put it. But when you look at like SPX, so the expected move for The rest of this week, 55 points, nothing too crazy. But if you go to next week, 120 points, decent. But you can see there's mounting implied volatility as you go further out to the end of the month.
Yes.
Which is, I think this speaks to potential government reawakening, for lack of better words. And what happens with that, really. But yeah, we will see.
They might just turn it back on.
Turn that thing back on, get the money printer out, make it go burr.
I mean, can I introduce? Can I interest anybody here in a long bond or a longer bond position?
This is this has been a source of annoyance for me because obviously I'm already long, and this thing is basically pulled back to around where I'm long. But I am unbowed. For now, anyway. I'm looking at this and going, okay, well, it's pulled back to the place where it last based. Would I be a seller here? Like, if I had no position on, would I sell right here?
Mm-hmm.
Definitely not. I would be looking for reasons to buy. So if anything, I'm looking at this and going, okay, let's let this thing find a bottom. Let's let it have some kind of sign that it's anchoring again, and then buy more.
Yeah, I was long. I'm still long TLT.
That's the way I'm doing it. Is I'm long TLT call verticals.
Yeah. So I had the zebra here. So I had 2 of the 90s, sold 1 of the 91s. The 91 is essentially worthless. So I bought that back today, actually, which uncaps my extra 100 deltas here if we do rip higher. But for a new position, I do like the idea of doing something like a zebra in a shorter term cycle, because this implied volatility is just so low. For an $8,000 stock or almost $9,000 notional value for 100 shares, you can rent 100 shares with $200 and get the same profit potential to the upside here. So I love this strategy in TLT and anything that has sub 20% implied volatility. You just get so much bang for your buck if you're trying to catch a falling knife and play the upside here. The return on capital on a $200 zebra, if we get a move back to, let's just say 92, which is where the top was, you're looking at a $300 profit on a $200 debit versus a $300 profit on $4,000 in margin buying power if you bought 100 shares. So it's a no-brainer if you're trying to catch the falling knife that we are clearly seeing here in TLT.
Yeah. Another interesting one. I mean, I'm certainly on the lookout for another TLT long against perhaps my better judgment, because I've already let a profitable trade unwind on me here, but I still think it's fine. Is crude oil, which seems to have punched through the underside of its range today. I've been short. I'm not maybe adding quite yet. I'm doing it through a USO put vertical, but it does look like it's trying to reverse course here and trying to maybe expose the way down. The initial lows here would be if we kind of came all the way back, maybe around 56, but even just a pullback to 58, 57. That's already an idea that seems to be kind of looking more like a promising thing versus, say, yesterday when we were kind of clawing at the bottom of that range.
But I still think of everything we've talked about, I'd rather own Microsoft than anything else right now as a marginal. I'd rather own Microsoft than Bitcoin or the bond. I mean, I know I respect what you said, Mike Butler, regarding the if it can't get a bid on an up day, what's it going to look like on a down day and all that jazz. But
Well,
I have more
I hear
faith
you.
in my Mag 7 sort of take the ugly duckling of the Mag 7 and buy it and don't think about it too much. And I just think we have a new duckling in town.
Yeah. And no, I totally hear you there. I'm thinking more of like a short-term idea. Like if I'm trying to buy this dip for a return for next week, I think it's harder to do when the rest of the market is green and Microsoft is red. But if you're looking to acquire shares or have a longer term position, like putting on a leap today, I really like something like that. Like, because we've already seen this thing go to 550 twice. Do we think it's going to go to 550 again in the next 10 years? Of course. Like I don't see a reality where that doesn't. So yeah, I'm totally on board if it's a longer term play. I think just
You're
for like
saying for the next 10 days, if you're going to put nickels around town, maybe is a better place than this.
Exactly. And maybe if we get a red day and we see Microsoft get down to like sub 500, now I think I would be looking to get involved there. But longer term trade, love it. Short term trade, I think it's tough when you have this disconnect between the NASDAQ and then a single product that's down 1.5%. But longer term, it matters less.
Yeah, but your rationale in the short term makes tremendous sense as well. So we're going to agree.
Perfect.
I like it. And on that happy note, overtime is out of time. We're going to get back into this conversation in a mere 23 hours. In the meantime, stay right where you are. Just seconds away, I'll be back with Macro Money. We'll dig into this ISM data, why it moved markets today, what's coming next, and how to make sense of all of this. So be where you are. We return shortly.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table.
If you had to swap jobs with anybody in this office, who would it be and why?
I would like to swap roles with Vanetta for a day, just so I can, talk smack about Tony and Tom for like a full hour in the morning. That would feel kind of nice. Just like a roast to start my day off.
Oh, God. That's a good question, actually. For a day? Forever? Forever? Oh, no. I mean, Tom has a hard job. He's got to wake up really early. But he gets the privilege that he gets. He gets to break as many computer mice as he wants. He can just smash as many as he wants on the table. He can pretty much yell at anybody. He gets first dibs at the lunch line. I think I would, maybe Tom, but I probably wouldn't last very long, yeah.
Probably Dylan Radigan, because he lives in Italy. And I live here in Chicago. So, yeah.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
this sell-off already over? That's the question that we're no doubt asking ourselves today when the market finds a little bit of relief after what was a very ugly day yesterday. And not surprisingly, the sort of natural inclination to buy the dip that's been the story for the markets for so long is understandably back at the front burner. We're going to dig into this and see if this is just another one of those, or if there's something more that's maybe starting to brew here. As ever, of course, this is Macro Money. I'm Ilya Spivak, head of Global Macro here at tastylive. And we'll start with a look at the price action, what we saw over the past day here, and see if we can't make sense of that and go from there. Looking at the way that things performed here, we can see a slight upswing for the S&P and NASDAQ after yesterday's brutality. About 0.4% for the S&P, 0.6 for the NASDAQ. Not too chipper, but nevertheless a big swing. And intraday, the swing was ultimately more impressive than these numbers would imply. Because at one point, of course, the sell-off, let's say in the S&P, looked like another big decline. Overnight, futures were off almost 0.8% in the S&P, and that's after a big 1.2% sell-off yesterday, which was itself the worst since that big shock lower on October 15th, where the market fell, S&P fell 2.7%. So, yes, we're only up a little bit today, about 0.4%, but the actual intraday swing from the low to the high was a much more convincing 1.6%. So it was indeed a vigorous buying of the dip, at least for U.S. markets here. And it seemed to line up nicely with the economic data, which we'll dig into momentarily. We do finally have a little bit by way of economic data. And it's not government data, but did give us a little bit of a run across markets today. We'll take a look at what that was momentarily. Of course, that same story around this surge in yields. They continue to march higher. 10-year up almost 2%, 2-year up 1.7%. Interestingly, gold bounces despite the fact that we have higher yields, and despite the fact that the dollar is at best a mixed bag. The euro not really managing to rally, but stopping to fall, up 0.1%. The yen, though, definitely on the chopping block as yields rise. That's typically what happens. Yen is a very yields in the U.S. sensitive kind of an animal. It's down 0.3%. Bitcoin, everything's orderly there. It's basically mirroring stocks. Stocks went up, so Bitcoin went up more. Typical sort of risk on high beta behavior, up almost 3%. Crude oil back to doing its own thing, down 1.5%, scratching at the bottom of its recent range. But really the story here, crude oil aside, and perhaps gold aside as well, because its upswing kept it within its consolidation range where it has remained for quite a long time. I mean, it's basically been anchoring going back to before the Fed. Kind of fell into this range right under the 4,000 figure on the eve of the Fed meeting last week, and has been generally oscillating around that level, around 3,900 on the downside and maybe 4,100 on the top side of the range, maybe even a little bit narrower, something like 4,070-ish, 4,060. So gold, yes, there is an upswing, but yesterday we had a downswing of 1.8%. So this is just range-bound behavior. But those things aside, the big story was the dollar, Bitcoin, NASDAQ, S&P yields. And that largely came from this data here. This is the ISM service sector report. Of course, we got the manufacturing numbers earlier in the week. They were a little bit soggy. As ever, this is done in the logic of PMI data. So 50 is neutral. Above 50 is growth. Below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So when we got 48.7 on the manufacturing number earlier in the week on Monday, that was a faster contraction than the expected one at 49.5. So the manufacturing sector shrank and shrank faster than anticipated. That was not the story for the service sector today. That was, of course, much of why we ended up seeing the price action that we did. We can see 52.4 is a much stronger pace of growth, much faster expansion than 50.8, which was the expectation. That's after 50 on the nose in September, which basically put the service sector at standstill. If we consider here what this generally means, and consider, let's say, that the spread between the service sector and the manufacturing sector is something like, let's say we ignore agriculture. It's more like 70% services, 20% manufacturing, 10% ag. But let's just forget about ag for a second and keep things simple. So if we're looking at a 70-30 spread, where most of the economy is services and a smaller share, a 30% share in this sense, is manufacturing. So if we consider that and kind of do the math on where we are, seemingly, it's something on the order of 51-ish, give or take. 51.2, maybe 51.3, something like this. So the overall economy seems to be growing. The pace at which it is growing seems to be relatively modest, but it seems to have increased from the prior month. And what we're looking at seems to be then, at least in part, the logic that the Fed was invoking when it was saying last week, hey, we seem to be looking at economic activity that's accelerating even as the labor market is weakening. So we're cutting to backstop the labor market, but we're not going to jump in front of the inflation story in an accelerating economy. So this December cut that you all seem to think is for sure, it's not that. It's not a foregone conclusion. Looking at the details of the report here, we can see the price component in particular, and this, of course, would be why the Fed wouldn't cut rates necessarily. It's back to its highs here, so inflation's still running very hot, multi-year highs, as we can see here, in the service sector. We did get a welcome pickup in new orders, but employment continues to shrink, sub 50 here, albeit at a slowing rate. So obviously this number further out below 50 speaks to faster contraction in employment than these numbers here. So for the past several months, we've lost jobs, but at a slowing rate. Now, if we take a look at both of these surveys now and just look at the Fed story, we can kind of get exactly what the Fed is looking at. Employment in both the service sector and the manufacturing sector is contracting. It's doing that at a diminishing pace for both over the past, let's call it 3 months, but nevertheless, there it is. And we've seen this deterioration first in the pace of hiring, then with the shift toward contraction, we've seen the trend here continue now for really a few years. But from the Fed's perspective, the issue is that when you then look at inflation, you saw inflation radically slowing over the front part of this. So while this employment situation was getting slowly cooler, inflation was getting a lot cooler in a hurry. Again, this is the service sector and the manufacturing sector. You can see, at least for the manufacturing side, inflation has been cooling off a little bit after some peaks earlier in the year, but the trend certainly still not a friendly one. And for the service sector, which is a much bigger part of the economy, the trend hasn't even turned. So this is really the Fed's conundrum. Inflation is elevated, employment is shrinking. And so this is how you end up with what you see now in Fed policy expectations as the highest possibility that we're not going to get this rate cut in a few days. So we're about 60-40 now, a little bit over 60% chance that we are still going to get this cut, and a little bit under 40% chance that we stand still. But as you can see over the past several days here, I mean, this is yesterday, this is a week ago, and this is a month ago. Now, of course, this already, because a week ago looks back to Fed Day, this already gives you this big adjustment. But the day before this, and you can kind of see the reference point a month ago, well over 80 and approaching 90, the day before the Fed, this was in the high 90s. And we've swung now to the low 60s. So the adjustment has been huge. And what the markets clearly seem to be attempting to make sense of here is how much this is an issue. And of course, what we learned in the wake of the response to what the Fed did, and in particular to what Chair Powell said about this, is that this is quite a significant issue. Because this, what we saw today, is the first meaningful uptick for risk since that Fed policy announcement. So to put this in context, it was not the world's biggest rally. Again, ultimately, I think we end up with settling around a 0.35% rise. That's still the smallest rise that we've seen since October 27th. That was the gap that we had at the start of last week when we learned that the situation with U.S. President Donald Trump and Chinese President Xi Jinping was probably going to be okay. That was when the Treasury Secretary, Scott Bessent, came out and said, hey, we had some meetings over the weekend. These guys just have to rubber stamp agreements we've already made. Everything's going to be fine. That, of course, was a meaningful gap. Before that gap, the last kind of big move was the Friday before, October the 24th. That was a gain of almost 0.8%. But the move today, pretty soggy by comparison, and sellers really coming out in force into the close, such that what we end up with, very interestingly here, ultimately on the day, is something of a letdown, perhaps. We've erased maybe about 40% of the intraday rally just in sort of the 2 hours, give or take, the last 2 hours of the day. So it would seem as though the markets are still unhappy with this Fed adjustment. And looking at the policy expectations here, we can see we continued to narrow in now the remainder of this year and next, adding up to 65 basis points, of which most clearly are centered on next year. Now, it's certainly the case that the Fed is still less dovish than even that. The markets are out by a fair amount here. The Fed has only baked in a 25 basis point cut for all of next year, whereas the markets are still at least 50 and about 50-50 chance on a third cut. So we're 13 basis points into a third cut here. But it does look like there is some degree of indigestion, because as we get this adjustment, as we get this pullback in dovish expectations, yes, the S&P bounces today, but the overall trajectory here is clearly some degree of the brakes being applied on this rally. Meanwhile, if we look at the US dollar, it's a little bit less vigorous today, but the change in expectations clearly helping it move along. And we can see that actually it has started to rally since these rate cuts began. Here's the September move. Here's the October move. Ostensibly because it had already fallen enough to price all of that in. And so once speculation becomes reality, it's time to go the other way. And so the dollar here is heading higher. The last sort of bit of data that we know is happening this week, we were supposed to, of course, get a jobs report this week, but with this shutdown now the longest on record by a day, doesn't look like we're going to get it. Instead, we're going to get U.S. consumer confidence data. And here, things are interesting in that really going all the way back 4 years, the start of kind of the post-COVID inflation kerfuffle. The story has been when consumer inflation expectations in this University of Michigan data rise, overall sentiment declines. So consumers are primarily worried about inflation. Not surprising. So here we go. Here's the start of 2021. Inflation expectations are rising. Sentiment is cooling. Going into early 2022, the Fed gets religion on this. Of course, by June of 2021, they're already saying, listen, we're gearing up for a rate hike cycle here. Buckle up. By the beginning of 2022, in March, they start that cycle. Inflation expectations peak. As they start to come off, sentiment improves. This continues all the way until the beginning of this year, where the tariffs obviously give us a big spook in inflation expectations. Sentiment duly weakens. It starts to come back as inflation expectations cool. This is the peak around April and Liberation Day. And of course, since then, the administration has softened its stance by a good bit. We still have tariffs, but they're not as bad as the foam board would have had us think. But what we see now is, for the past 3 months, inflation expectations have been easing, but sentiment is easing and getting soggier anyway. And so perhaps the narrative is changing here and the consumer is getting more defensive, and cooling inflation expectations are just not enough to get them happy. Perhaps they're cooling for the wrong reason, at least in the minds of investors. So this will be an interesting thing to watch at the end of the week because, of course, it'll be a referendum on consumption. Consumption is by far the biggest component of GDP, 68-ish% of the total. And so once we kind of take away all of the many things making this year's GDP numbers fuzzy, be it wildly swinging inventories and import numbers around the tariffs, first the front running of the tariffs, then the passing on of tariff costs to consumers by wholesalers, taking all of those gyrations out of the way because, of course, they're headline grabbing, but they're not the biggest influence on overall GDP, not by a long shot. It's consumption. If consumers are getting defensive here, then there's a larger story. And in fact, tighter Fed policy is a bigger sort of concern than meets the eye, not just for the markets from a speculative perspective, but for the economy. Perhaps the Fed is wrong about this reacceleration. Certainly, though, the economic data that we've seen come out in recent weeks, though, looking at this this Atlanta Fed GDP expectation here, it's mostly favored the top side. We can see, of course, not only is the nowcast basket moving in a generally sort of positive direction, where we can see the data that's coming in that's feeding this model seems to be GDP positive, in that what data flow we have, we are getting a push higher from it. The interesting thing is that's already spilling over even into the consensus view, such that the estimate here of what sort of the analysts' baseline for the third quarter look like, that's been pointing higher. And so all of this sort of taken together seems to be suggesting that what we're looking at is at least economic data that's biased towards surprising higher. It kind of implies that whatever analysts have in their forecasting is probably more pessimistic than it ought to be. Because at least at this point, we've had this justify a revision in the expectations, and clearly whatever is coming out is still meaningfully higher than that. And so there's some kind of wedge here, despite the absence of economic data that suggests things are upbeat. So if sentiment holds up, the real big question will be, well, is that in fact good news? Because if it holds up, then there's less scope for rate cuts, and then this issue continues. Now, if anything, what we saw today was an arresting of the sell-off after a big down day yesterday. In fact, the worst since that horrible day on October the 15th. Is this the place where sentiment is going to turn? Well, maybe, but I don't think what we have here is confirmation that the underlying logic of the sell-off, that is, that the markets went into last week priced for perfection, expecting the Fed to be non-controversial, expecting the Trump-Xi meeting to be non-controversial, expecting the earnings front to be non-controversial. They got the Trump-Xi event risk right. They got the earnings right for the most part. Meta was obviously a big miss, but other than that, things were generally good. And of course, looking at the way that earnings have performed more generally, it's about a 10.7 earnings growth rate, 10.7%, according to the latest numbers from FactSet. And of course, everybody's favorite sector, the tech sector, is outperforming that and is the best performing of all the sectors. No big shock there. Earnings growth for that space, 26.5% in the third quarter. So that seems to have passed without too bad of an outcome, despite some sogginess here or there. But the Fed clearly did not deliver as the markets wanted. And since it has not, things have been soggy. So I, for one, am not convinced that this is the dip to buy, at least not yet. Perhaps this is merely a correction on the way to a down move that's still developing. Markets don't move in straight lines after all. And so with that in mind, the exposure I have here, largely unchanged, still short a little bit of gold. That took a little bit of a knock today, but the range holds. And so for now, I remain. Same thing with the other way I have this exposure, which is through selling a call vertical. That's actually doing a little bit better than the outright futures because vol has eased a little. Still very long the US dollar, short the Aussie, pound, euro, and the Canadian dollar. That continues to work. Still short risk And so a little bit short Bitcoin, a little bit short the S&P through IBIT and SPY put verticals. Probably the biggest pain point in the portfolio today was this surge in yields. I'm still long TLT, so buying the long end of the yield curve. It hasn't crossed any Rubicons yet, but it's getting a little bit hairy, and so I'm watching this closely. It's right around the levels where I got in, maybe a little bit higher, and so I'm looking at this closely to see if maybe I need to pull the plug or instead add to the position because it's going to bounce from these levels again. And short a little bit crude oil, which is working a little bit more today than it has in the past several days via a put vertical. And we'll see how that develops. Maybe some legs more here on this move after the range break today. And that is macro money for today. As ever, we are here Monday through Thursday after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, usually looking at the Wall Street close and where things may go therefrom. I'm also writing for the News and Insights portion of tastylive.com, commenting at Ilya Spivak on Blue Sky and on former Twitter. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Hey, welcome back to the Tasty Crypto Show. I'm Dan Cecilia. Today, I'm joined by Kyle Samani. Kyle's the co-founder of Multicoin Capital, one of the largest crypto-focused investment funds, and he is also chairman of Forward Industries, a crypto treasury company established to become the largest public holder of Solana with over 6.8 million sold tokens held to date. Kyle helped lead the seed round of Solana back in 2018 and has been actively investing in crypto through Multicoin since 2017. Hey, Kyle, welcome to the show.
Hey, Dan, pleasure to be here. Thanks for having me.
Yeah, thanks for joining us. Really excited to talk about this. You know, Solana has been in the news. These DATs have been in the news. Forward Industries, I think you guys, have recently raised that $1.6 billion PIPE investment. But I want to start at the beginning. I want to learn more about, your start in the space. And I know early on in your career, you were working in software sales, co-founded a software firm in Texas. How'd you decide to pivot into crypto, and what led you to the Solana seed round in 2018?
Yeah, appreciate the chance to be here. I kind of found my way into crypto over the course of 2016. I discovered Ethereum in March of 2016, and I looked into the API and how to program it. And at the time, the term DeFi didn't exist. The term permissionless finance didn't exist. But after looking at the API, I kind of understood those core seeds of those ideas, even though we didn't really have the vocabulary at the time to describe them. And that struck me as very important. And kind of from there, fell down the proverbial crypto rabbit hole. By early 2017, I had developed a full-time internet hobby and kind of made the decision to launch Multicoin in May of 2017. We launched on October 1st of 2017. So that was the first part of the question. And what was the second part of the question?
Yeah, I want to know how you came across Solana. Like, how'd you meet Toli and some of the early co-founders and ultimately lead that seed round?
Yeah, I had a chance to meet Anatoly and Raj for the seed round. At the time, I was very actively looking at alternative L1s. I was very disenchanted with Ethereum. Ethereum was my first true love in crypto, and I've obviously done a full 180 at this point and really don't like it. My kind of moment when I flipped was DevCon 3 in November of 2017. It's about 6 weeks after Multicoin launched. And I've been following Ethereum at that point for, call it 18 or 20 months. And I started to go very frustrated. I was like, hey, you guys have been talking about scaling this thing. There's a lot of research papers and ideas, hypercube routing and sharding and state channels and plasma chains and all these different things. And I was like, cool, what's the game plan? And obviously it's hard to appreciate this, but just how much Ethereum was the star of the show in 2017. Ethereum went from $10 to $1,000 in 1 year. And if Ethereum was the fastest asset in human history to 100 billion in market cap. And so it was, what's it called? It was the fastest asset in human history to $100 billion. the chain was not performing particularly well. Every time there was an ICO, the chain would get congested, transactions would drop, fees would spike. When CryptoKitties launched, same thing happened. And I was like, all right, well, it's your annual developer conference. You're literally the star of all of finance. Like, obviously, this is when you've been doing all this research in public for 3 years. Like, tell us the game plan. And like, DevCon comes and goes. Vitalik gives a keynote. He shares some research ideas, but like does not lay out a game plan. And I was just so flabbergasted, because I was like, how could you possibly be, not only could Vitalik be in the position he was in, but then all of the people around him who were advising him, and to go into your annual developer conference and not have a game plan. And I was totally baffled. And that's the moment I gave up on Ethereum. And I set out to go find alternatives. And ultimately that search led me to Solana. And Anatoly really stood out to me for a handful of reasons as a founder. The most important was he was focused on a use case. At the time, he was calling it blockchain at NASDAQ speed. That kind of core idea has now evolved into what we call internet capital markets. But he understood intuitively, even in 2017, 2018, that these blockchain systems were going to be first and foremost trading systems. And he made all of his design decisions focused around that. And all of the other L1 founders were just like, oh, I'm here to build a better blockchain without like a use case focus. And so a lot of things stood out, but that was probably the biggest.
Yeah, so I think that's a great story. And I think, I was early in the space. 2017 is kind of when I got in. I was out here in Chicago working in brokerage industries, saw that spike in Bitcoin to 20K. CME launched the futures and the bubble kind of deflated. And, that led me to look for alternative use cases as well. So I kind of echo that sentiment where, there needed to be an alternative. There needed to be something that was usable for useful for users, that could build performant apps on it, low fees, and scalable, right? So, I definitely echo that story, being in the space at that time. So fast forward, walk us through the forward industry story. You recently closed that $1.6 billion PIPE financing led by Galaxy, Jump, Multicoin, heavy hitters in the space. You have 6.8 million sold tokens on the balance sheet. What's the flywheel for forward? How are we generating cash flow here?
Yeah. So in terms of how forward came to be, people have been asking me to do this for about a year, and I kept on saying no. And then what caused me to change my mind was a speech that SEC Chair Paul Atkins gave on July 31st. In that speech, he announced Project Crypto, and he said unequivocally, we're going to move U.S. securities markets on chain. And when he said that, I was like, you know what? I actually think doing a DAT is interesting, because now it allows me to basically operate in the domain of U.S. equities, and then to try and advance the interests of Project Crypto even faster than they would otherwise move. So that was kind of my impetus for getting this thing off the ground. In terms of like what we're looking to do on a go-forwards basis, we want to be doing things natively on the Solana blockchain. We've already started that by staking. Today we're staking the vast majority of our Solana tokens. And we've talked about this already. We very much intend to deploy our balance sheet into DeFi. You can think about the balance sheet in two segments, dollars and SOL. On the dollar side, we can borrow today at roughly 7.5% to 8% from various crypto lenders. And we can deploy that on-chain on Solana in the 12 to 20% range. So there's a nice kind of cost of capital arbitrage there. It's not risk-free by any means, but we feel that like given the intrinsic risk profile and mandate of this entity, that is exactly the kind of risk that our shareholders should want us to take as management and as board. So we'll be doing that soon. And then the other side of the balance sheet is Solana, of course. We are seeing all the SOL, and there's a ton of vaults you can deploy into, so you can earn incremental yield on top of the staking yield. So you should expect to see that stuff start to ramp up in the fairly near future. I'm excited to talk about it when it becomes available. Beyond that, we have aspirations to get even more advanced on chain. I can't quite share those details yet, but I do think I'm optimistic that Forward is going to be a pretty active participant on chain, both directly and through vault products.
Gotcha. Yeah. And, I know I was reading a bit into the company and some of the press releases, and I know you've acquired some validators, so you're participating in the ecosystem. You're obviously staking in DeFi to sort of generate that yield. So it is, in other words, this SOL is being productive, right? The SOL is being productive for investors. You're contributing to the growth of the Solana ecosystem. In some ways, you're working with the foundation to do some more, staking DeFi support, essentially support Solana. So you recently released a press release around your deal with Superstate. So this idea of tokenized equity, this idea of tokenization, right? We've heard it in traditional finance. Our viewers, our retail traders, Robinhood's been talking about it. Obviously, the big banks have been talking about it. So you announced this partnership with Robert Leshner's Superstate. Can you give us an overview of this deal? Like, what do you believe the deal unlocks for your holders?
Yeah. So look, our as part of Project Crypto, like we look at our job is to accelerate this transition to moving U.S. securities markets on chain. We realized very quickly we can obviously issue forward industries equity on Solana. I've known Robert and the team at Superstate for a number of years. I consider Robert a friend. He's obviously a well-known and successful crypto entrepreneur. So called Robert and was able to get to a deal very quickly with Superstate. As part of that deal, Forward Industries actually secured a right to get a substantial equity stake in Superstate for no cash consideration, but for being kind of like a flagship customer. And what I mean by that is, step one is tokenizing our equity and putting it on chain. Fine, whatever, that's easy. But like beyond that, like we want to be able to prove that you can run all capital markets operations on chain. That includes shareholder governance. That includes future fundraises. That includes dividends. That includes mergers and acquisitions. That includes stock splits, all of these other kinds of things. And if we're going to move U.S. securities markets on chain, then someone needs to be first and just like do all of that stuff.
Right.
And we clearly view it's in our mandate to be the guinea pig and to do all of those things first. So part of our deal with Superstate was not only are we going to tokenize our equity, we're going to raise our hand and do all of these things first so that they can prove it out. And then obviously for then all of Superstate's follow-on customers, there's a known and proven path.
Gotcha. Okay, cool. And as part of that, like you said, the tokenizing the equity, that's easy, right? That's kind of table stakes, but you also plan to allow forward stock or forward shares to be used as collateral in DeFi protocols like Jupiter, Drift, Camino. Do you see an appetite for that? Is this just something you're kind of testing? Like you said, you're trying to be the first, trying to prove this use case. Like, how does that work briefly?
Yeah. So as part of our announcement with Superstate, we also announced our intents to work with specifically the three large borrow lends, Drift, Camino, and Jupiter, to make sure that they can support forward equity as collateral in their respective systems. So I'm optimistic that will go live when in a couple of weeks when all this happens. The intent here is obviously like assets are objectively more useful if they can be used as collateral than if they can't be. And obviously those are the three major borrow lends on Solana today. So it was just kind of natural to call those guys and make sure they have the technical integration ready to go. Obviously, the other benefit here now is for companies 2, 3, 4, 5, 6, 7, 10 who follow in our footsteps. They'll know that again, all of the technical integrations are ready to go, right? So someone has to be first. Someone has to call all these guys. We're very fortunate that we have pre-existing relationships with all of these teams, so we can pick up the phone, call them. And they'll get the engineering work done that they need to.
Gotcha. Yeah, and I think you made a really interesting note, especially for our users, our investors, traders at the firm here at tastytrade. It's useful, borrow lend, using collateral to go out and do other things in the space, right? So most retail traders here, they're familiar with MicroStrategy, they're familiar with iBit, right? Trading options on iBit. Bitmine, Tom Lee launched a DAT recently, so. I kind of want to know, how does Forward set itself apart from these other retail accessible vehicles, that retail traders are familiar with?
Yeah, I mean, we look just like issuing security. Common shares and buying SOL is like good and interesting. Well, obviously, we have an ATM. Bitmine has an ATM. MSTR has an ATM. We have that, but like that's not what's interesting here. What's interesting here is our ability to be capital allocators and to produce cash flow and yield for our shareholders. Step one is staking. That was the easiest step. We're already live with that. We're staking the vast majority of our SOL today. Step two is participating in DeFi, and we're now getting all of the infrastructure in place so that we can do that at scale. I'm optimistic that Forward is going to be one of the largest, if not the single largest entity on chain in the not too distant future. And so we want to be a part of the Solana ecosystem, and we want to produce as much cash flow for our shareholders as possible. And I believe we are in a position to do so by leveraging our scale, by leveraging our brand and our relationships. Moreover, in addition to just like deploying capital on chain, we've actually been able, we're working on negotiating deals with these various DeFi teams so that we can actually earn tokens from them for participating in their respective systems as one of the largest on-chain players. And so by doing all of this work, again, by leveraging our scale, our relationships, and our network, we want to be able to do all of that and then drive even more value back to our shareholders at Forward.
Gotcha. Yeah, it's interesting because you look at MicroStrategy and what Saylor's been doing, who's pioneered this. He was the first, right, to kind of move into this space, and he has these ATM vehicles, he has these preferred share vehicles. But like you mentioned before, and in other interviews I've watched, Bitcoin doesn't generate that much yield, right? There's not really a lot you can do with it. It
generates zero yield.
Zero yield, right? So to be a productive asset, I think your bet is Solana, right? And you're not only just buying it, like you said, and holding on the balance sheet, but you're moving into DeFi. You're allowing this yield to be generated. You're running infrastructure. You're doing things that turns this into a real viable business. And also with your scale, with your partners, allowing other projects to kind of, piggyback off this. So this DAT craze has really blown up over the last couple of months. Obviously, we know BitMine, Tom Lee, he's on every single, major media network, doing it for Ethereum. There's a bunch of others. I did an Athena one the other week. There's 40, 50 of these trading right now. So I'm wondering what your thoughts are on that. Is it a crowded space? Is it in some ways maybe not a bubble, but could use that term? Do you see an opportunity for consolidation, and how are you positioned for that?
Yeah, look, there's always bear markets in crypto, and then I think in DATs that we'll have a bear market. And look, in a lot of ways, the bear market is already here for DATs. A lot of the DATs are trading well below 1x MNAV. I was actually looking this morning. One of the Bitcoin ones is trading at 0.3x. There were a bunch trading in the 0.5 to 0.6x range. So that's already started to happen. There's going to be a shakeout in this industry, in this space. It's inevitable. The world does not need 13 Bitcoin DATs. The world really only needs one Bitcoin DAT, and it's obvious which one that is. Strategy is in a league of its own. The world, I think, only needs one Ethereum DAT. As of now, it does not appear that SBET versus BMNR is in any way differentiated. Again, that may change, but so far they haven't done anything to differentiate. And then you look at the Solana DATs. Right now there's 7 or so, roughly.
Yeah.
I don't think the market's going to sustain 7 of these things, and we're doing everything we can to differentiate. We started step 1 with Superstate. We have a bunch of other stuff in the works, and I'm excited to share it when it's ready.
Great. Yeah. No, I think it'll be interesting to see how this all shakes out. I think a couple of the other Solana ones like UpXC, and I can't even remember, but there's not a lot of information on them. So I think Ford's well positioned in that regard. So I want to get into something a little bit more specific to Solana, a little bit more specific to you. It's this idea of internet capital markets, right? If you've been in the space, if you're a crypto native, you're familiar with last cycle, kind of the ETH maxis kind of yelling about, ultrasound money, right? There's always these narratives and stuff that pop out. And one thing that I think is admirable about you and Multicoin and what you've done is you had conviction, right? And you rode the Solana, you saw it early, you got in, you held your conviction. We went through that 2022, 2023 bear market, and we came back out, and now we have awesome applications, Pump.Fund, we have Jupiter, we have Camino, we have Meteora just launched. But I want to specifically focus on this narrative and your thesis around internet capital markets. Can you explain this? Can you just give a brief overview of what that means?
Yeah. At the highest level, the idea of internet capital markets is quite simple, which is any person anywhere in the world should be able to trade any asset from just their phone and having an internet connection. And that's it. And if you think about it, it's like a shockingly simple concept.
Right.
It's very libertarian, kind of naturally. And it's just what you would kind of assumed like, well, yeah, why isn't that the way the world works? There's no obvious reason why the world should not work, but as a practical matter, the world does not work that way. And in fact, it's still probably many years away from working that way. So that's the basic idea. As I think about the internet capital markets thesis, I think about it kind of through two distinct lenses. One is the simpler lens, which is just like, let's take Apple and Google and NVIDIA and all these things and like trade them on chain so that they're 24/7, so that you have DeFi, you have programmability, you have all these other things. You have access, making it easier for guys in the Philippines or Argentina to own these assets. That's kind of the obvious side. And I think when you see Larry Fink going on TV talking about tokenization, I think that's primarily what's running through his head. The other side of internet capital markets is the stuff I spend more of my time thinking about, which is this idea of embedding trading as a new modality in new contexts. And what I mean by that is, for the last 35 years of the internet, finance has lived in its own little bubble on the internet, and then there's been everything else. You can go read on the Wall Street Journal, you can go learn about something on Twitter or in Telegram or whatever. And then if you want to go and trade, you go to E-Trade or Interactive Brokers or Morgan Stanley or Coinbase or Robinhood or your Phantom wallet. And all of those things that I just named, the user interface is exactly the same, meaning the homepage is your portfolio. There's a search box at the top. You type in a ticker or a contract address. You go to the asset page. The asset page is a price chart and a buy and a sell button. And like that organizational system literally has not changed in 35 years. And it's not a bad system. It's intuitive, and there's a reason why it is what it is. But my point is that it just lives in this little isolated bubble. And the other vision of the other side of internet capital markets is embracing this idea of finance as a internet native first-class primitive. And what that really means practically is bringing finance to new places around the internet. The first real version of this was actually the Telegram bots, which launched in the summer of 2023. And for the first time ever, when you were trading out of a Telegram bot, the trading UI did not look like Phantom or Coinbase or Robinhood, right? It looked like Telegram. And that was the first time ever there was finance in this kind of new context. And we have the single player Telegram bots. There's now multiplayer Telegram bots, meaning you can add a bot to a group chat with your friends. And then naturally, the obvious actions are if you make a trade, it'll broadcast that to the group. And then obviously your friends can either copy trade you or counter trade you, right? And there's a lot of kind of fun social cohesion that comes from that. I expect, in the not too distant future, if you're reading the Wall Street Journal reading an article about interest rates, obviously at the top of the article, it should not be a screenshot of the Kalshi market. It should be an interactive widget with a buy and a sell button. Right. And if you're reading about Apple's earnings, let's say earnings are coming up, there should be a prediction of, is Apple going to ship more than 1 million iPhones or whatever? Is Apple going to beat earnings estimate EPS? This is like very obvious that you should be able to embed prediction markets on media, all sports media. I mean, if you have a football game coming up and you're reading about something, clearly there should be a prediction market on the game, or if the guy's going to score this many points or whatever it is. So I think we're about to see finance really permeate its way all over the internet. In the presentation I gave at the All In Summit a few weeks ago, I provided some more examples as well. I'll give one more here. I mean, every podcast, you host a podcast, and if you're talking about a ticker or an asset, clearly there should be a buy and a sell button for that asset overlaid on top of your podcast, right? Like, it's just obvious.
Right.
And it's actually crazy that the internet doesn't work this way, because it's one of those things that, like, once you see it, you can't unsee it. So I expect all of this is going to kind of happen over the fairly near future. And this is really the vision of internet capital markets.
Gotcha. Yeah, I think that's a great explanation. It's the most in-depth explanation I've heard of it so far, and it's easy to envision, right? And I think we're already getting there. You mentioned the Telegram bots. You mentioned Kalshi prediction markets, which has kind of been hot in the retail space recently. Obviously, with some of these big investments into Polymarket, into Kalshi. Real quick, I know we got a couple minutes left. I want to touch base on this idea of like entertainment finance, right? The Solana meme coins that sort of led the revival of Solana, I think, back up to over $200. We had the Pump Fund. Bags app, these launch pads, right? And now we have streamer coins. And, I kind of go around the office and I talk to a lot of people on our trade desk who are familiar with derivatives. They're familiar with interest rates, whatever, Forex. And I'm like, and I kind of give them the analogy and I'm like, well, let me, who Mr. Beast is, right? And some of them do. Most of the younger kids do. And I go, what if you could have bought a token on his stream when he launched 10 years ago and held that, right? And I think when you give that analogy, people sort of begin to understand that there's value here, right? Like you said, I host a podcast, live stream. We're a financial media network tied to a brokerage. Shouldn't I be able to value the attention that this gets? Shouldn't I be able to value the attention that I can create here? And I think that's what some of these launch pads are getting at. So I just want to get your commentary on that, the meme coins and, the trenches, some of that.
Yeah. So really glad you used the term entertainment finance. Quick history lesson. Most of your viewers, I'm sure, will be appalled to realize that the godfather of entertainment finance is Jim Cramer. Yeah. But like when you pause and think about it, it's like he was first. Right. Really, no questions asked. He was first. And that's boomer entertainment finance, obviously. Right. I think the kind of entertainment finance 2.0 started during COVID, and I think it was kind of led by first Dave Portnoy when he did Daily Day Trader Global. He had his green hammer. Yep. And then kind of Roaring Kitty. Right, I think they were kind of like the kicking off point of entertainment finance 2.0. Today, I think we're like squarely in the phase of entertainment finance 3.0, which is shows like yours, but there's plenty of shows where guys are pulling up charts and stuff and with their viewers and such. And then you're starting to see, I'm not sure that's what I would call 2.0. I think the 3.0 version is what basically is starting on Pump, which is you are doing a stream and then there's a token tied to it, right? And specifically in the context of trading, it seems very obvious that a streamer should go long or short something on stream, and then their audience should want to copy trade or counter trade them, clearly. Right. And then maybe you create some token tied to whatever the trading profits around that or something, right? So that seems very obvious. The Pump guys are obviously running a lot of experiments in here and trying to kind of figure all of that out. But it does feel to me like we're kind of on the precipice of entertainment finance 3.0. Maybe the Pump guys pull it off, maybe they don't. I don't think anyone has quite cracked it just yet. But certainly it feels like there's a lot of brain power and experimentation going on in the space. And I'm pretty optimistic that this is going to become a major new subset of the internet.
Yeah, I think it's one of my big theses too, is like creator coins, and there's indexes out there that are beginning to track it. If you look, and I know, Pump is the major platform, but I think Zora is kind of capitalizing on this a little bit. And you're beginning to see some of these creators pop up, some of these newer media models pop up. I'm not sure if you're familiar with Coinage Media at all, but you're able to own pieces of these content creators, these streamers. Like you said, copy trading, what's live is a big thing. So I'm excited to follow it. I think it's a narrative that's going to catch fire over the next couple. Maybe it'll take a year, maybe it'll take a couple months. I don't know. But it's something to pay attention to. So I really appreciate your viewpoint on that. So we got a couple minutes left, and I just ask all my guests, what's your bold prediction for the next 10 years in crypto?
What's my bold prediction for the next 10 years in crypto? I think 6 million Bitcoin will be stolen by quantum computers.
Okay. Interesting. That's a good one. That's a really good one. I'm gonna definitely a polarizing
I think that will
topic.
happen well before the 10-year mark.
Okay. All right. Great. So last thing, where can our audience find you and follow along after today's show?
Yeah, I'm super active on Twitter. My handle is just my name, Kyle Samani, and I always have a lot of fun there. You can learn more about Multicoin on our website, multicoin.capital. And then, of course, I think we have here Forward Industries on the website here, too, on the stream. And it's just forwardindustries.com.
Great. Well, that's all we have today. Thanks for joining us. Kyle, thanks again. Really interesting conversation, and appreciate you being here, and we'd love to get you back on soon. Good luck with everything. Peace.
Dan, thanks so much.
Yep.